Osama was died on the Sunday night, and Monday morning, silver and gold opened 10% gap down. That could be another scenario where this can go anyway. So my suggestion for the market to stay calm, do not do any kind of volatility trades. Just stay put. If the market corrects, it's a good opportunity to buy again for the long run. But for short run, maybe speculators can trade on both sides. The market can trade on both directions. But
Dharmesh,
for the oil, I'm really bullish.
First of all, it's great to hear things are, business as usual, and commendable that UAE has given the sense of safety to its citizens and the way those missiles were thwarted. On Indian equity, what's the view right now?
I think Indian equity should panic. There could be a panic situation where market can open with a gap down, especially on the oil segment. You can see market will show some kind of rejittering, and you can see market 5 to 7% gap down on the Nifty side. I'm not bullish on the Indian market. Again, the reason is oil, again gold, and the second is rupee. I'm expecting rupee to devaluate more. All the currency around the world has started devaluating against dollar, and you can see rupee maybe 91, 92 is a level where market will stable. But again, for the long run, 93, 94 can be a minimum level to see on the INR side. So that could pressurize the Indian market for the first week of this month.
The first week of this month. I mean, we were talking about frightening February. We'll have to think of some other word for March.
Manic March.
Manic March it is. Dharmesh Bhatia, thank you so much for speaking with us. Across the NDTV network, we're getting you reports from every side of this conflict. And our senior executive editor, Aditya Rajkol, is reporting now from Israel.
There have been at least 6 alerts that have been issued. There have been 6 rounds of sirens that have been sounded across Tel Aviv, across Jerusalem, and other parts of the country. This means that the Iranian attack is imminent. This means that the Iranian missiles have left the base in Iran and could anytime be coming to Israel or any other country. So they do not obviously have the location of where exactly these missiles are going, but these are precautionary measures that have been taken. Most of the population all across Israel is under the bunkers right now. I'm myself inside one such bomb shelter, taking cover because there are 6 alerts that have been issued. For the first time this morning, the alerts were issued in Jerusalem as well. Usually this doesn't happen in Jerusalem. It's mostly safe, but Tel Aviv and other parts of the northern and south Israel is where we have regular, drone activity or missiles that are thrown from the Iranian side. As of now, people are stuck, people are stranded. As I said, last night there was impact very close to where I am right now. At least 1 woman was killed and there are 15 others who were injured in that kind of an impact. Since then, there hasn't been any kind of an impact. But yes, there have been 6 sirens that have been issued. Even now, just moments ago, a fresh alert was sent in by the Home Front Command. And a statement by the IDF and the Israeli Air Force says that missiles have been launched by Iran and we are waiting for and bracing for impact.
Okay, so, all of our correspondents across the network, we obviously want them to stay safe. It's quite something. And, Neeraj, from the perspective of Dubai, Devina spoke about it and Mr. Bhatia spoke about it a bit. But the way Dubai has positioned itself for those in India seeking to grow their businesses, started with the crypto bros heading there. A lot of startups are over there. The Golden Visa program has made Dubai very, very attractive. And the sense was that nothing could have happened or shaken that up. So much of Indian investment in Dubai real estate as well.
Big time. And so many Indian companies having those operations. Sobha, for example, having operations in Dubai too. So you are absolutely right. In fact, if you look at the population of Dubai, right, 1 million Emiratis, 4 million Indians. So in some sense, it's that big, the largest population is of Indian origin in Dubai. So certainly this one hits. We feel sorry for every other country which is facing this, Bahrain included, etc. But just that, back home, I think a lot of people would be disturbed by what's happening in Dubai. But it was interesting to hear the Emirates NBD guest speaking about it. And Samir Arora tweeting in the morning with the image of the Burj Khalifa that's sitting peacefully and having my breakfast.
Yeah.
It's quite something.
Yeah, so that is also the way that they have managed to foil and counter all of those attacks is also really commendable. As far as markets are concerned, Monday, of course, Neeraj and I will be back to take you through what we'll see Monday morning. But brace for impact. It's going to be tough. And the broad sense seems to be that there are enough pockets in the Indian space that are relatively safe. Yeah. Your financials, a lot of your infra plays. I mean, nothing is happening there.
Or the Zomatos and the Swiggies of the world. I mean,
Yeah, the price of the fuel to run those bikes, a lot of them are e-bikes right
e-bikes.
now, will go up as well. But yeah, crude is going to be an iffy situation. Even on crude, I kind of agree with Devina. And oversupply has been the problem so far.
And OPEC Plus has said that they will amp up the production in which
to
ways.
follow suit. So let's hope. I think this is more right now geopolitical crisis than anything else. But yes, Monday is going to be tough. We might bounce back better than other markets is the hope. But we'll be back to guide you through it. Thank you so much for joining us on this special broadcast.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice.
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me.
While pledging to avenge 3 American deaths after the joint US-Israeli strikes on Iran, US President Trump warns the losses could rise as war goes on for more days to come. Israeli Prime Minister Netanyahu, on the other hand, said strikes on Iran are set to intensify in the next few days. Meanwhile, Iran has appointed Ali Reza Arafi as the jurist member of its temporary leadership council following the death of supreme leader in Iran, US-Israeli strikes. Now, the appointment will be in place until the Assembly of Experts selects a successor. Stock futures, meanwhile, tumbled in overnight trading after the US and Israel attacked Iran over the weekend. Futures in all 3 US indices trade almost 1% lower, even as other global markets trade under pressure. Meanwhile, oil prices surged as war in West Asia threatens to disrupt energy supplies. Shipping through the Strait of Hormuz, a key artery for global energy, has halted after insurers threatened to cancel coverage and hike premiums. Gold as well jumped on the back of safe haven demand. And Nifty and Sensex declined on the final session of February, dragged by all counters barring IT, with the key support level now near 25,700 and looming extension of the US-Iran war. The investors eye another volatile trade setup in the truncated week. And after the arrest of MD Rishi Gupta by Directorate General of GST Intelligence, Fino Payments Bank appoints Ketan Merchant as head of the organization to carry on and oversee day-to-day operations. Company to address concerns in a con call today. morning. You're watching Markets Today with me, Shreyanti Singh. And over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. And it's a very complex setup that you're looking at this morning. Let's break it down. Take a look at the tensions when you come to West Asia first, because West Asia, of course, is on a knife's edge right now. You do have Iran unleashing its most expansive counterstrike in decades, firing missiles and drones not just at Israel but at US military bases across Kuwait, Bahrain, Qatar and the UAE as well. And you do have this particular war that is widening beyond Tehran and Tel Aviv at this point in time. The strikes come in direct retaliation for joint US-Israeli attacks inside Iran, a dramatic assault that's also killed the supreme leader when you talk about Iran and several senior commanders. Now, this has triggered mourning and celebration in parts of Iran, but in terms of the immediate impact of the conflict, Gulf airspace is now closed, markets are rattled, regional militaries are on maximum alert, and the conflict has officially spilled across borders. US President Trump also is saying that there will likely be more US casualties as well during operations in Iran, as military activity in the region will continue until, and I quote what he says here, all objectives are achieved. You do have Netanyahu as well also saying that strikes on Iran will be intensifying in the next few days. Many other nations have also condemned the strikes, while the UK has opened British military bases for US defensive strikes on Iranian missile sites as well, but will not be joining the offensive action at this point in time. And that's also what the UK PM also broadly had to say. Meanwhile, PM Modi chaired a meeting of the Cabinet Committee on Security, the highest decision-making body on security and strategic matters of the country. So that should give you a picture in terms of the India reaction as well. Let's also listen into the word coming in from the man of the moment, because you do have US President Donald Trump saying that he will avenge the deaths of 3 US service members, and also said that the combat operations in Iran that began on Saturday will continue. The president's comments come as Iran's retaliation is intensifying at this point in time after US-Israeli strikes killed their supreme leader. Let's go across and listen into his comments as well.
Over the past 36 hours, the United States and its partners have launched Operation Epic Fury, one of the largest, most complex, most overwhelming military offensives the world has ever seen. Nobody's seen anything like it. We have hit hundreds of targets in Iran, including Revolutionary Guard facilities, Iranian air defense systems. Just now it was announced that we knocked out 9 ships plus their naval building, all in a matter of literally minutes. And sadly, there will likely be more. Before it ends, that's the way it is. Likely be more, but we'll do everything possible where that won't be the case. America is now, again, the richest, most powerful nation in the world by far.
All right, then there you go. That's the word coming in from Trump as well. But let's take a closer look at the potential market reaction then. Let's talk about futures, because you do have futures on the Dow Jones that have in fact dropped over 500 points. Let's take a look at that picture as well. There you go. That's US futures for you right now, hovering. You do have that downside across the board coming in. So about a 0.6% decline coming in as far as Dow Jones futures are concerned. Previously dropped about 500 points. Right now down about 300 odd points. When you talk about S&P 500 as well and NASDAQ, you're seeing quite the slide coming in when you talk about futures. And the backdrop that all of this is against, of course, we've set up the entire context when you talk about West Asia. But when you talk about the US market action on Friday as well, let's quickly take a look at that as well. So it's a sea of red across the board. Even when you talk about the market action on Friday, right before all of this even started in the first place. Now, after all of this has really unfolded thus far, let's also quickly take a look at Asia in terms of the picture there. And that's also, no surprises there, a sea of red that you're seeing even as far as Asia is concerned. So the markets are clearly rattled, as you can see in Nikkei. That is down about 500 odd points right now as we speak. Hang Seng down about 300 points. And just a little bit of a drop coming in as far as Shanghai is concerned, but keeping up with that negative bias very clearly. So that's the Asian picture for you. But what's doing well right now is oil prices that have jumped more than 10% at open after that wave of attacks against Iran largely. And the conflict, just for a little bit of background, threatens to massively impact the world's oil artery. And I'm talking about the Strait of Hormuz here. which impacts about 20% of the world's oil. And that's something that you're looking at the broader context right now. Meanwhile, when you talk about gold prices, they're also jumping over 2% in Asian trade. And you do have investors flocking to safe haven assets. So the risk off mood is very clear at this point in time. With that in mind, now you have West Asia on a knife's edge, you have markets rattled, and the impact beyond the headlines is what we're going to be getting you insights on right now, because David Roche, strategist at Quantum Strategy, joins us right now, as well as Seth Freeman, Senior Managing Director, Glass-Stratner Advisory and Capital Group. Thank you so much, gentlemen, for taking time out this morning. And it is, you know, a very interesting setup that you have right now. You do have West Asia on a knife's edge. You do have a barrage of headlines that you're looking at right now. But against that backdrop, Seth, I'm going to come to you first, because the risk of trade is very clearly, it seems to be gaining momentum right now. What's your first take when it comes to this particular conflict?
Well, I think it's definitely going to be risk off, and we're only seeing the beginning impacts in the marketplace and the impact in the broader impact of higher oil prices and supply constraints. We have yet to see that, given that 99%, I think, of Iranian oil had been going to China.
No, absolutely. And David, I also wanted to take this across to you. When you talk about oil, having no oil to export, that would also motivate the Iranian, the country to, disrupt oil supply. When you talk about the rest of the world, how are you looking at that particular development? Because right now, it is not business as usual at all. It is not the main supply-demand fundamentals that you would typically be looking at. You're looking at a full-blown war right now.
Well, I think that's the key point. You just made it. The Iranian strategy has changed from previous wars. They're now in the business of causing maximum damage to everybody else and maximum damage to world oil supply. So it's really a totally escalated endgame, which is different. So here's my take. It looks to me like, from the satellite photography, though this has not been confirmed by the military sources to me anyway as yet, that the Cork Island facility for exporting oil has been pretty well wiped off the map. If that is the case, then you're going to lose approximately between 1.6 and 1.8 million barrels a day of oil exports, principally to China. But if China is not getting them, then China has to buy them someplace else. So basically that comes off world supply. That's about 1.82% of world supply of oil. If you put that into your little models, which deal with history, and history may not be a reliable guide, given that the oil price is extremely, the oil supply is extremely inelastic to changes in the oil price, that sort of drop in the oil supply would dictate an increase in oil prices of someplace between 10 and 20%. So to put that in perspective for the average punter, that would mean that Brent oil would be selling at $85 to $90 rather than $72, $75, which it is today. So I concur with my fellow wise person on the program today, that I think you haven't seen anything yet. You've just seen the risk-off gut reaction. What you have not seen is a reflection of the fundamentals, which a more prolonged and more damaging war would cause through the channel of the transmission of oil prices.
Absolutely. And, we're just at the beginning of this. It does look like it's going to be a very long, drawn-out conflict right now. There are no signs of it easing, and the commentary on both sides is very clear on that as well, in terms of the timeline, that it's going to take a while until this very much subsides. But with that in mind, Seth, I'm going to come to you, because historically, if you play the devil's advocate, the markets do shift their attention when you talk about a situation like this. So be it Russia, Ukraine that you're talking about, if you're talking about US, Libya as well, you've seen that there's a reaction, yes, and after that, just before and just after, you do have markets reacting. And then after that, it seems to subside just a tad bit. But that being said, there's a series of global shocks that you're looking at, lots of geopolitical triggers. How are you then balancing it out when it comes to the markets?
To the extent that investors weren't covered, they're going to see some losses in the next couple of weeks. One of the problems is we have yet to hear from the president of actually what the absolute objectives are of this activity. And it can go, as he said at the beginning, Well, it could be 3 days, it could be weeks and weeks. He really has to tell Congress and tell the American people and the world what the final outcome objective is. If it is a total regime change, well, that's going to take longer. There's going to be tremendous resistance to U.S. Boots on the ground, for example, and this is going to this uncertainty is going to continue to influence the markets. Now, oil is just so central, and depending on how long this takes, we could see prices rise in sectors that affect U.S. consumers, especially in agriculture and other imported items. So I think this could have a very broad impact.
Absolutely, a broad impact is definitely something that you're penciling in right now, David. I'm going to come across to you also because, you know, it's very important to take a note of the geopolitical risk premium that you're looking at, both in the near term, but also going forward as well. Because, you know, when you talk about this particular oil export capacity, when you talk about Iran, you could be facing a multi-year outage if, you know, you see those reports of destruction to be true. You're looking at a big scale of damage here right now.
Well, you know, that's dead right. I mean, my oil price at 85 is really based upon that structural damage continuing for, say, 18, 24 months. So that is the economically rational price at which oil would settle if my understanding of the damage already done to Iran oil facilities is true. But of course, what you have pointed out is that is not how the real world works. And Seth has said it too. What the real world does is to react to this stuff. Holy God, they say, you know, I've been short. I've been really short oil. I thought there was plenty of oil around, blah, 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 blah. And all these people have to come into the market and cover those positions. So that's the first thing. So you get a spike and then a return to a rational level. The point I'm making is the rational level is 85. The current level is, say, 75. So there's a huge difference. The second thing I would say is making that remark, taking what you said, the spike and then the settling down to a more rational level, that applies to all the assets to a degree. The risk premium for equities has gone up. The inflation rate has gone up because of oil prices. And of course, the growth rate has gone down. So everything has to adjust according to this. Even sovereign bonds suffer from the higher yields. They'll also suffer from higher defense expenditure if this war drags on. So what I'm saying is we need to split this in two parts. Initial reaction, which is set by people covering or adjusting their portfolios in a hurry. And then you get down to where the economic fundamentals dictate you should be. And the argument I'm making, and I think Seth is making it too, is that first you get the gut reaction, the immediate reaction for putting your portfolio in order. And then you get prices settling down to where they should be. But those prices for everything except oil, for all the other assets, are lower than where they are today. And for oil, they are higher than where they are today. So again, this may be a longer drawn out war, but it's also a longer drawn out portfolio effect.
No, absolutely. And Seth, I will take exactly that point across to you. When you talk about this long drawn conflict, are you looking at it in those exactly two parts, as David also pointed out that you are? I wanted to get a clearer sense of what you think about the long-term implication of this.
You know, we were just beginning to feel some relief over the tariffs and the Supreme Court's action. And then the president applied this 10 and possibly 15% blanket tariffs. That, and we had so much uncertainty about tariffs, and now we add on this war. I agree completely about this notion of achieving sort of the rational price, but I am very concerned about sentiment, and I think that negative sentiment can unfortunately prevent us from achieving the rational price if investors remain nervous, and then we've got these other kind of geopolitical issues that we already had before Friday night.
Absolutely, and thank you so much, gentlemen, for taking time out and joining us this morning. So there you go. That's the potential implication that you could be looking at right now. So a couple of valid points that I wanted to very quickly recap for our viewers as well. One, that it's going to be a long-drawn conflict, and this should be reshaping the way that you look at your portfolio right now. Volatility is the name of the game right now, and that really changes a lot of assumptions that were previously there in the market as of Friday. So you're looking at a completely transformed setup right now when you talk about the markets, and let's also set that context right for you going forward as well, because you're looking at a lot of developments right now, a lot of headlines that you're looking at. With that in mind, let's also talk about the urgent meeting that the government has called with exporters and shipping sector players today in view of the West Asia situation. You do have Rishabh who's joining in with all of those exclusive details.
Right, so you have a very important meeting that is set between the Commerce Ministry as well as various exporters, various representatives of the shipping sector. This is set to be at around 2:30 p.m. today. And of course, what will be on top of the agenda will be the impact of the current situation in the Middle East on logistics. What we're picking up is that there are certain exporters that deal with perishable goods such as fruit and meat. Those have already been hit because there have been a lot of shipment cancellations. A lot of whatever goes to Europe from India actually goes through the Middle East, through the Hormuz Strait, through the Bab el-Mandab Strait, and all of that is now affected. What we're picking up is that when the freight rates for this week, or rather this month, are published today, because they are published every month, the first of every month, what freighters are also expecting is a 20 to 30% hike in those rates. So that is also a cause of concern for exporters that are looking to sort of send their shipments normally. So a lot of very important things to track there as well. What we're seeing is that there are a couple of major shipping companies that have also taken action. So there's CMA CGM. They've already added an emergency conflict surcharge of roughly $4,000. You have the MSC, the Mediterranean Shipping Company, that has come out and said that we are suspending all bookings to the Middle East. So there's a lot of uncertainties that the shipping sector and exporters are having to face. And in that phase, there is a meeting at around 3 p.m. today. You have the Commerce Secretary that will be chairing that. So key trackables there as well.
Absolutely, and thank you so much, Rishabh, for joining us with that update there. But tell you what, with that in mind, let's quickly take a look at the FNOQs in terms of what they have in store for us this morning. And Puneet, there are more questions than answers right now, given the kind of setup that we have. But let's go through the FNOQs then.
Most certainly, and the implied open does indicate where we might be at the start, and there was pressure expected because of what has happened over the weekend, the global key factors. So hence a 167-point downtick is what we are starting with, back again at the 25,100 odd mark, and we have seen selling pressure on Thursday as well as in the last few minutes of Friday. So becomes very important of what kind of support we can have, at least in the near term. But 25,000 becomes a very important one. In terms of the fund flow, we've consistently highlighted that foreign investors were net sellers in terms of Friday session, and 7,500 odd crores, while DIs did try to have some fillip in that sense, and a big DI buying figure, especially at a time where they've been mostly sellers or on the sidelines in the month of February. When you also look at the index longs, you've seen pressure there. So almost from 21 odd %, which we were averaging in the last 1 week, has come down to 18.4 because of the selling figure that we also saw. And the put call ratio has also slipped below 1. So we'll continue to monitor both these numbers, giving inverse reactions as of now, giving that they've cut puts but also sold off in the market as well. In terms of the open interest distribution, 25,500 becomes one of the key marks for the calls, but you've seen cutting of positions across the board over the last 500 points or so for the put investors essentially, and goes in line with the put call ratio that we showed in the last graph. Finally, in terms of open interest gainers as well as losers, very quickly, you've seen some short build-up across L&T Finance as well as Jubilant Foodworks, with open interest change almost 15 to 17%, while in the open interest loser side, we've also consistently seen that trend play out in individual names as well. So if we can move on and show the next graphic, AB Capital, Polycab show the longs as well as short coverings on both these stocks, but post that, not too much change. But overall, it'll be a day of the benchmarks and largely a key one for the markets today.
No, absolutely. That's key to watch. Thank you so much, Puneet, for joining us with the FNOQs there. But let's add something else to your list as well in terms of Fino payments, because that's also in focus right now that you're looking at right now, because you do have the arrest that was carried out by the CGST and SGST Acts, and the arrest that was carried out by the Directorate General of GST Intelligence in Hyderabad. Rishabh, in fact, is joining in with some more details.
Right. You have an update on the Fino Payments Bank case as well. The arrest, what we're picking up from sources, was related to online gaming. And this is, of course, now a banned activity in India. But there were illegal flows that were tracked between Fino Payments Bank as well as certain companies that are related to it. These were, of course, shell firms and non-existent entities that were actually funneling flow of gains from these illegal activities. So that is what is being tracked here. And there is what was the investigation so far had pointed to the involvement of this senior bank functionary, which in this case is MD and CEO Rishi Gupta. That's why he was arrested. So that's what we're picking up from sources on the DGGI arrest.
No, absolutely, and thanks, Rishabh, for getting us all of those details. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
it's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru,
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and it may just be a better morning than expected. Guys, where to start and what all to unpack? Great match last evening. Holi will be celebrated tomorrow, and in the middle of all of this, we're trying to figure out what's happening in the world and in West Asia, which is an extension of our neighborhood.
Yeah, I mean, and the war situation has just continued. I mean, multiple nations fighting with each other right now.
Yeah, but somehow I always believed, even in yesterday's show we spoke about it, that oil is a deep insider of what geopolitics is suggesting, and oil prices coming off from where they were and currently trading at about $70 a barrel tells you that the world is probably not as worried about this conflict as some of the other conflicts would be, as a typical Iran conflict would be.
I think the implied as well, giving us that indication. And you know, if you caught our show yesterday as well, we talked about exactly this, that you might see a bit of a dip down, and then Indian markets are relatively better placed. So you have an implied at 176 odd points, 174 points odd down right now, and that's how the Nifty is going to open. So that kind of a gap down, I would say, on any given day is tolerable after the events of the last 24 to 36 hours. Should we do a quick recap in case someone was, any of our viewers were on this? I don't know where you would have been, where you would have not seen this news. But essentially, full-scale war has broken out between Iran, Israel, and the United States. And this heavy bombing on both sides. The supreme leader of Iran has been killed. The Ayatollah Khamenei, his successor, his interim successor, has already been announced, but the war continues. In retaliation, Iran rained down missiles on various countries in the GCC. So UAE, Bahrain, Qatar, Saudi Arabia to some parts. But what they are saying they are doing is that they're attacking US installations in these countries. A lot of, I would say, high-tech machinery on display right now, which is why you saw Palm Jumeirah in Dubai, Doha, Abu Dhabi in Dubai, all of this happening. Anti-drone missiles have been in action over the last couple of days, which is why you have seen possibly the kind of swings in crude and in other asset classes. Quick recap. I mean, US markets and how they closed on Friday almost becomes irrelevant in terms of everything that's happened. But just for the record, US markets anyway closed lower on Friday after hotter than expected producer price inflation came in. That wholesale price numbers did not really enthuse it. And then, of course, there's the AI fears and all of that happening. So if you pull up the indices from Friday's trade, you did see a downtick across the board and nearly 1% on the Dow. The 10-year Treasury yield also fell below 4% to 3.94% on higher than expected wholesale inflation. But it is commodities and Asian markets that are feeling the heat this morning. Gold and silver spiked over 2% as safe haven demand has, of course, increased. Silver has hit the $95 mark once again. Crude prices is where the action is. Brent opened 13% higher at $81. It's currently trading near the $78 mark. So, of course, it is a huge bump up. It's still 7-8% higher than where it was trading last on Friday. But it has come off in part because OPEC Plus has come and said that they're going to increase production by over 200,000 barrels starting next month. So that has eased some concerns. Let's pull up Asia right now, and Asian markets, of course, opened very weak, continue to trade down in the red. The Hang Seng and the Nikkei both between 2 and 2.5% down as we speak. The implied on India, as we told you, 175 points down. Just going to put out for you the latest statement from US President Donald Trump, who's saying he will avenge the death of 3 US service members and said combat operations in Iran that began Saturday will continue. The president's comments come even as Iran's retaliation is intensifying after US-Israeli strikes killed the supreme leader Ayatollah Ali Khamenei. Let's listen in to Trump's comments.
Over the past 36 hours, the United States and its partners have launched Operation Epic Fury, one of the largest, most complex, most overwhelming military offensives the world has ever seen. Nobody's seen anything like it. We have hit hundreds of targets in Iran, including Revolutionary Guard facilities, Iranian air defense systems. Just now it was announced that we knocked out 9 ships plus their naval building, all in a matter of literally minutes. And sadly, there will likely be more. Before it ends, that's the way it is. Likely be more, but we'll do everything possible where that won't be the case. America is now, again, the richest, most powerful nation in the world by far.
Okay. Let's start the conversation. Dheeraj Agarwal, MD Ambit Investment Manager, is with us on the show this morning. Jonathan Barrett, Chief Investment Officer, ETO Markets, joining in. He tracks crude closely as well. We're also speaking this morning with Dr. Wael Awad, West Asia strategist. Dr. Awad, I hope I'm saying your name correctly. Pardon me if I'm not, but I'm going to start the conversation actually with you. And your understanding of how far do you think this can go from the Iranian side? What is the end date or the possibilities of this conflict ending? Does it end eventually in a regime change in Iran?
Well, I don't think so, because what Iranians have said that to the American and to the Israelis, yes, you have started the war, but we will dictate when the war will be ending. So therefore, you can see the amount of attack and retaliatory measures they have taken against the American installation in the region and also against Israel. It gives you a clear indication that the war will take some more time, and it's a long haul, taking in consideration also the amount of American weapon has been shifted to this part of the world. It's a very complicated situation, and may it go into a regional war.
Okay, and if that is indeed the case, Dr. Awad, then would you presume that this lasts for a month? Because these days conflicts are either very, very short-lived or then very, very protracted. Or do you believe this lasts for a better part of 2026? What's your best guess as things stand?
Neeraj, is not actually the problem here. It's not Venezuela, but the United States wanted to make sure that they wanted to destroy the ballistic missile program of Iran. They wanted to make sure now it is a regime change, because if you see from the targets they have chosen, even President Trump is saying it openly right now, despite the fact that he's saying there could be some sort of a talk if he is open for a talk with the Iranian. But I don't see this happening, because Iran is now attacking American installation in the GCC country. And just a meeting, there was a meeting of the foreign minister of the GCC condemning those attacks. So therefore, the widening of the war is more likely to be seen, because Iran is not a small country as well. And Iran is already prepared for this kind of a war with the United States. And as long as it goes, Iran feel that it's the war is on its side. Unlikely the American, they wanted a short, swift war like the American and the Israelis, but this is not going to happen. Now with the Hezbollah in south of Lebanon also have attacked Israel, and Israel is attacking now and asking 53 villages in south of Lebanon to be vacated. It gives you also that this war is widening, and the Iranian, where the Lebanese, now maybe Ansarullah in Yemen will step in, and Popular Front of Iraq will step in. So therefore, we are not unlikely to be seen that neither a regime change nor an end in the near future.
Okay, so stay with us, Dr. Awad. No regime change is what we're looking at as well. But let's also get in Jonathan Barrett, Chief Investment Officer at ETO Markets also. Jonathan, welcome to the show. Always a pleasure to speak to you. No, we're talking about an extension of what, around 4 weeks, 8 weeks. We don't know what the timelines could be over here in terms of the war. The key factor I want to talk to you about is with regards to Strait of Hormuz. We're talking about nearly 25% of your global shipments that come through this strait. How much of this will now be priced in terms of the crude surge, or where do you see it moving from here on?
Yeah, it's a very good question. At the end of the day, we know that 20% is shipped through Hamas. One of the key issues that I find with what could occur is the less supply forcing prices significantly higher. We had about a 10%, 15% premium. The longer the war goes on, the higher that premium will be. And I think when I look at Iran, what are some major defences, the inflationary pressures as a result of high oil prices will have on the US. And we know the US economy is not as strong as it has been before. And I think the recent PPI and inflation numbers we've had have already told us that inflation remains a problem. And when you see a 10 to 15, 20% rise in the price of oil, that will translate to inflationary pressures. And that's something that the US, or particularly the US Fed, does not want. So if it's protracted, it's more of a concern for general investment, equities and everything. If it's shorter, then it's okay. But the way, and I agree with the doctor, this is something that's not going to go away very quickly. And if people dig their heels in this and they don't come to the table, then this goes on for some time, maybe a month, 2 months. Let's hope that's the limit of it.
It's almost sad, but I remember when we started covering the Ukraine-Russia war, and that was the hope that this is going to be over quickly. It's protracted into this long, painful situation, and then the world sort of develops a thick skin, unfortunately, and especially equity markets. Dheeraj Agarwal, I'm going to come to you on that very question. We already saw Brent cool off, and OPEC Plus saying that they will increase production has possibly helped. Having said that, do you think for equity, it is a risk-off kind of situation right now, especially for Indian equity, even though relatively we seem like a safer geography?
Yeah, but I think we will be very, very sensitive to crude prices. So Brent has certainly cooled off intraday, as you rightly mentioned today, after a 13% gap open. But remember, it's still trading 5 or 6% higher after a 3 or 4% pop on Friday. So in the last 2 days, the impact is almost 10%. And if what Dr. Awad and Mr. Barrett actually feel go right, which is that this war prolongs beyond just a week or two into months, and I'm actually likely or inclined to agree with them that it will protract. The headline war may be actually short-lived because it seems like a one-sided situation, but the simmering of the war may continue. So a little bit of attack here and there, disruption of sea routes, disruption of oil supply. All of that can actually prolong into a few months. And if crude was to tick up closer to 90-95, I think that's a big risk for India. So Tamanna, you also drew parallel with the Ukraine war. So first month and a half of Ukraine war, if you recall, crude spiked almost 35%. That was February, March of 22. And Indian market sold off about 10% during the same time period. And after that, as you rightly said, the world developed a thick skin. We also figured out how to manage the supply chains, especially energy supply. Things cooled off and life went on as usual. So Indian equity markets will be more sensitive to crude rather than the actual geopolitical developments and tension of a war. And that needs close watching.
Yeah, Dheeraj, but presuming, WTI was up some 14%, it's now up just 4%. So in some sense, crude prices have come off. Could it be that a protracted conflict, but the world developing, as we said, a thick skin around it, mean that the risk premium on the war comes off and therefore we see a day or two of a sharp downtick and that's about it? Could that be possible?
Anything is possible at this point, Neeraj, but this area is far more sensitive to crude supplies than, let's say, Russia-Ukraine war. And remember, during Russia-Ukraine war, the Russian supplies actually continued till very recently when US actually clamped down on India buying Russian crude, whether it was through the back door or whatever the case may be. So the world crude supplies did not get impacted because India and China continued to buy Russian crude at that point of time, and the crude prices immediately cooled off. Now, this area is a lot more sensitive, both from the point of view of crude production as well as the sea passage for crude trade. So, I'm not saying crude will or can go one way up. This will be volatile. So, immediately as a response, OPEC agreed to increase the oil production last evening. That has obviously had an impact on cooling off the crude prices today. It will be volatile, but if it's a protracted war, my fear is crude can take higher or sustain at a higher level. And given the slightly fragile state of Indian economy at this point of time and corporate earnings, that will be a shock will be difficult to absorb.
Jonathan, I'm going to come to you on what's the view from the Indian equity side, emerging markets and Indian equity especially. Because in that sense, yes, the crude hit is hard for India from that perspective, but geopolitically, we're not in the thick of things. And that is a huge relief. We have our own fundamental story going on.
Yes, I think that's like a lot of other regions as well. At the end of the day, it is all about the supply chain. OPEC can increase their supply. There's no doubt about that. The key is if the Straits of Hormuz is closed, then that becomes, yes, oil prices, we know it's coming, but is oil actually being deliverable? So back to your question, how does this look from a domestic point of view in India? I think it really is looking at the price of the inputs, because you have India, which is reliant on imports. You have China. You also have Japan. So the discussion and the strategy from the states is trying to get the states to be, and Donald Trump said it, to be the number one in the world. So this is more, in my mind, a strategic move for Trump to become and maintain number one, and also to deflect interest away from the US domestic market, where we know there are problems. So protracted supply, Straits of Hormuz closed, this will go on for some time. And as a result of that, then you'll see investments and equities start to have a concern and have a turn. Mind you, it's probably not a bad buying opportunity because we are on dizzy heights at the moment. But yeah, I think equities could come under pressure if this remains protracted.
Right, Jonathan. Dheeraj, let me come to you in terms of the action that FIs could look at as well in this kind of a scenario, because 6,600 odd crores is what we've seen in terms of the last 1 month where FIs have pulled out. Now, with this new escalation, which is accelerating, what is that kind of trend you see when it comes to the, a capital flight for FIs? What we saw in 2025, do you think there is a repetition of something like that? Or you think this is a year where, in spite of all of these geopolitical issues, we will see India as a flight to safety?
So, FIs will react more to corporate earnings rather than events like this. And I think, as you pointed out earlier, that the world has learned to develop a slightly thick skin with respect to geopolitical situations. As I often say, even if markets are not immoral, we are certainly amoral. So we don't take a moral call or humanity call on these things. Everything which actually impacts earnings is the only variable which is relevant. This is a very different world from, let's say, 10 or 15 years ago. So if crude price sustains high, which means the fragile recovery in earnings that we are seeing in the December quarter may come back under pressure again. And if we actually drift down to single-digit earnings for FY27 as well, FIs will continue to pull out. So India, at this point of time, while macroeconomic-wise we look fundamentally very strong, we are actually missing the levers of the current global bull market. So in my career, just to put things a little bit into a protracted perspective, we have seen 3 or 4 mega bull markets. So mid-90s to 2000 was .com, IT. We had a representation in terms of software services. 2003 to 7 was commodities and infrastructure. We had representation in that asset class as well. The current bull market is all about semiconductors, AI, chips, RE, EV. We just don't have a representation in the large cap space in that segment. So, which is why India has been underperforming last 12 or 18 months. And if because of crude, our fragile earnings recovery comes under pressure again, I fear FIs may continue to pull out in 26 as well.
Yeah, the case to come in is getting weaker because of the events of the last 36 hours, I suppose. Thank you so much for speaking with us this morning, Dheeraj, Jonathan, and of course, Dr. Awad. Thank you for coming in and putting this big story into perspective from all the angles that we can think of. Before we get to our regular setup for the day, just cutting in quickly to a con call that is going on Fino Payments Bank. The CFO, Ketan Merchant, is addressing concerns after the MD and CEO, Rishi Gupta, was arrested over the weekend.
Mutually exclusive. That was in context of some of the points which the bank has been working. That was regarding to the bank's GST compliance. and nothing to do with this. Here, in this context and in this regards, as I mentioned it earlier, there is no liability on the bank to monitor GST. So these are mutually exclusive things. This was, as we understand, because of the GST evasion of a program manager and the duties of which, as Shailesh just explained. Thank you.
Thank you. You may please press star and 1 to ask questions at this time. The next question is from the line of Ashish Kumar from Infinity Alternatives. Please go ahead.
Hi, thanks for the call, Ketan and team. 2-3 quick questions. A, what is the proportion of the business which came from this program manager? B, can you please confirm, because there's been lots of news rumors around, that the bank has stopped doing any business with online gaming in line with the ban from the government entities? And C, in terms of the correspondence with RBI, has the regulator raised any concerns at all in relation to governance or the SFB process or any other thing that the regulator could be concerned on? So maybe if you can answer on all three.
Thank you, Ashish. Let me take the third question first. As regards to the SFB planning and any concerns coming from the regulator. See, let us all understand, this is something which is not a normal scenario where a MD and CEO of the bank is alleged for some actions of the program manager. So in this regard, there have been various meetings which have happened across all the levels in the Reserve Bank of India. In our stock exchange disclosure as well, which has gone out early this morning, we have clarified this point, stating that as things stand now, there is no impact whatsoever which we've been made to understand on our SFB plans. We continue to operate on our preparations on an SFB plan, for which we've got a regulatory timelines of 18 months, which came on 5th December onwards. As regards to any other regulatory concerns, I would just like to highlight that despite this news coming across, our liquidity has been intact. I earlier mentioned it about our number of accounts being opened through our channels. This weekend we had slightly ahead, more impetus coming across as well. So all of this has been, RBI has been monitoring. And one thing which you essentially clarified and to the knowledge of RBI, which they are also cognizant of, that this was something which was pertaining to a particular program manager. So all of this taken together, as things stand now, whilst we continue to proactively engage with the Reserve Bank of India, until now we've not seen any kind of messages or something which should concern us in our normal banking operations, and that's how the banking operations are going.
All right. Well, that's Fino, and of course they are giving out the clarifications. Let's see if that too much like the markets has a iffy start and then a bit of bottom buying. Remember, none less than the finance minister has on the social media platform X said that she will check into a complaint, I think, or a sort of a complaint by Mohandas Pai on Twitter. A pretty interesting exchange that. Okay, let's get to the trade setup for the day today. Just feel that during times of geopolitics, because oil is such a deep insider, for the benefit of our viewers who are tuning in right now, oil prices, WTI, which had rallied all the way to 76, is now back to 70 or just sub 70. Brent is at $76 per barrel right now, which is up just about 3.5%. The last time I checked, which is at about 7:30, 7:40 a.m. IST, just about 3.5%. So nothing dramatic in terms of oil price reaction. Maybe it is to the enhanced supplies, but maybe it is also an indication that oil knows something that a lot of the people don't know about the nature of the conflict and how protracted and deep it could be. Remember, they've nearly erased 70% of their opening up move. So keep that at the back of your mind. I'm not saying that's a sufficient condition, but certainly a necessary condition. Equities are poised for a gap down opening today, But could the second half be different? As difficult as it is to predict, you could probably watch out for that. And various notes out there, I think during the course of the show, we will talk about a lot of these as well. But Tamanna, I don't know if you're taking the Jeffries note or no.
I have referred to it, but please go ahead.
Okay,
That's fine.
just the companies that Mahesh Tendulkar and team have put out, which was interesting, that some of these Middle Eastern exposed companies, so L&T having 25% of the EPC order book, Newgen 30% of revenues, large exposures, and companies like Dabur, Titan, etc., have fairly large exposure to the Middle Eastern region or West Asia region, and therefore these are the names that you want to keep at the back of your mind. Some of these might have an impact, some of these might not. We'll probably hear statements from some of the corporates as well during the course of the day, and we invite some of them, by the way, to come to NDTV Profit and try and talk about that too. So just this seems to be the basics right now.
Yeah, no, I agree. So Iran supplies nearly 3% of global crude, and what the latest reports are saying that they have 2 ports where they have major supplies going in. Remember, supplies from Iran are restricted in most parts of the world. Their biggest buyer right now is China.
Yeah.
So they have 2 ports where those supplies go from, and the latest satellite imagery is indicating that those 2 ports have been bombed and are shut for business. Now, as far as the Strait of Hormuz is concerned, even if Iran is saying they've not blocked it, for all practical purposes, it's blocked. Because if there is firing happening and then there are some oil tankers that have been set on fire, there is no safe passage. Remember, passing through that strait is also a perception of safe passage. You have to be insured and insurable to pass through. So that is pretty much shut down right now. And that's where the pain is going to be. So I agree with you, Neeraj, that, crude has come off, but I feel it's not really the end of the story in terms of how crude will react.
Entirely possible.
I'm seeing a report that there's an AWS center in UAE that has been bombed. And this is now a shift, because so far it was US military establishments and assets which were being targeted within the Gulf region. If it's going to be American companies and their assets as well, then this becomes another scale. At last count, Iran has so far used only a fraction of its entire stockpile. And there is a nothing to lose kind of a momentum. So we might see more, is all I'm saying.
And Tamanna, just to add to this, I think the way we'll have to look at crude prices also will be as soon as that demand-supply mismatch starts to happen. I think that's when that major impact on crude will start coming.
You mean there are enough
as well.
strategic reserves as of now?
As of now, for example, like India, you're talking about a 70-75-day reserve. Other countries are sitting on some reserves.
Or wouldn't prices react in advance?
Exactly. So the moment you start seeing them react after a couple of days is when they know that this war is not ending.
Yeah.
And it's going to impact demand and supply.
So could be more protracted. Now, the global shockwaves, of course, will see tremors in Indian markets too. We're expecting a gap down opening, but you could see some recovery ahead in the day as well. So be aware of that. Non-export, non-crude, and I may add non-AI sectors is what offers some safe harbor. So we'll have to really look for those safe spaces. A couple of notes I thought we'll talk about. Rahul Bajoria and his view on the BOFA India watch is interesting. He says West Asia conflict puts a shadow on near-term sentiment. India has an estimated 9.7 million, that's 97 lakh people working and living in West Asia, and gets at least 35% of its remittances, that's $132 billion annually from West Asia, according to RBI. The number is likely to be north of 40% given small economy exposures. India also imports 45% of its energy from West Asia, bulk of it from GCC economies. India is currently running with roughly 3 weeks of oil inventories, a $10 per barrel increase, which is pretty much what we've seen in that range. Of course, it's come off, but $5-6 dollars a barrel is right now what we're seeing. That kind of an increase adds to $12 to $15 billion per year on current account balance and 25 to 30 basis points to headline inflation for India. India has exported $67 billion to West Asia in 2025, accounting for 15% of overall good exports that India did in 2025. This includes gem and jewelry, plant and machinery, refined petroleum products, automobiles, and food products. Watch out for the basmati exporters. A lot of that goes to the West Asia region. The Mahesh Nandurkar point that you were also making, Neeraj, he's saying Middle East conflict impact is likely to be short-term. India's economic links with the Middle East are strong, with the region taking 17% of India's exports and providing 55% of its crude oil and 38% of worker remittances. A prolonged conflict alongside a large jump in energy prices would be a major macro negative. However, recent regional conflicts have been temporary and a dip could be a buying opportunity. And of course, some of those names that we have discussed as well. In terms of safer names, maybe some hospital chains, 8 to 10% revenue from international patients. I mean, those which could be hit actually would also be something to look out for. Though, you know, I don't know how you guys see it. The conflict in itself is shock and awe, but the kind of attacks on that GCC region makes it more worrisome from the Indian perspective, I feel.
Yeah, I think, you know, Devina Mera made an interesting point yesterday that from Iran's perspective, they are attacking high visibility targets. And, you know, Burj Al Arab per se has no other economic significance, but it's one of the most iconic symbols. So you do that, you do Fairmont and the Marina, which is such a popular region, etc. And therefore they are making those very targeted attacks. But the question only is that we've seen the first wave of attacks from Israel and the US, and there are some conflicting statements coming in wherein Trump has said that he's going to have conversations, and the Israeli PM is saying that we are actually escalating the conflict. So it's very difficult to call it right now, guys.
And difficult to call it, and I think what they're looking at is as they want GCC to come in and say, guys, stop.
Maybe.
And I think probably that's the angle where they're looking at it. The moment we look at these regions, they step in and they say, guys, just stop. Let's just
but do they have enough? Do they have enough of that persuasive power to get
with
them
Donald
to
Trump,
stop with Donald Trump and with Israel? All right, stocks this morning. We're talking about Fino Payments Bank. You heard an assessment or actually a clarification in the conference call from the CFO, but this is what's happened. Their MD and CEO Rishi Gupta was arrested under the CGST, SGST Acts. That's section 132(1)A as well. The CFO has now been appointed as the head. The investigation relates to business partners of the bank, and the allegation really is on that what really has happened with GST evasions. Presently, there is no impact on the bank, is what the bank is saying. So just watch out for that. CBIC, meanwhile, will be evaluating the matter after the finance minister has taken cognizance as well. Adani Enterprises is the other one that we're looking at. It's a thumbs up. Its arm, Adani Defence Systems and Technologies, will be acquiring 14.2% stake in Airworks India Engineering, and it's executed the business transfer pact with Punj Lloyd. It will transfer defence unit of Punj Lloyd and Malanpur to Adani Defence Systems and Technologies. Standard disclaimers here. You're watching this news on NDTV Profit, which is a subsidiary of the Adani Group. Now, TVS Motors is the third one on my radar this morning. A whole host of auto sales numbers have come. So watch out for the entire pack, but I'm picking out TVS because this is one of the 2 or 3 which has beaten expectations in terms of Feb sales. Total sales up 31% at 5.29 lakh units year on year. Two-wheeler sales up 30% at 5.09 lakh units year on year. And motorcycle sales were up 25% at 2.4 lakh units year on year. Scooter sales were up 34% at 2.2 lakh units, and three-wheeler sales were also up 77%. In fact, total exports were up 27% year on year for the month of Feb. So I think auto overall might be something which is going to be interesting. Some impact because again, shipments getting stuck is a bad sign for this sector as well.
Yeah, so mainly, your Tata Motors, Maruti, these are a few of the names who will be majorly impacted when you talk about shipments. So, and Bajaj Auto, if you have to look at the two-wheeler space, Mota Moti. So that's what you're looking at in terms of impact. But on my list, we have Bharti Airtel. They had an investor meet now. Very interesting takeaways coming in there. What they've said is that they're progressively increasing their dividend from here on, and they will invest in data centers. The initial plan is to expand to 1 gigawatt and then beyond. And they're saying that 20,000 crores is going to be sufficient to scale up the financial services business. Now, the first year capital outlay is likely to be around 10 to 15%, and they will gradually scale up from there. And they're aiming to acquire a strategic stake to run business and not a financial stake in Africa. In fact, Bharti Enterprises' stake in Africa is at around 16%, and this could be transferred to Bharti Airtel. they've not really given any timelines in terms of where the African business stake transfer could take place. In terms of the ARPU, they're saying that they would move towards 300 in the near term and 350 is the goalpost that they are aiming for. Interesting comment in terms of Vodafone Idea is what they've made. They've said that it will be difficult for Vodafone Idea to gain market share where the sector growth itself is 8 to 9%. Let's see, along with the Bharti Airtel, what's going to be the reaction on a Vodafone Idea on the comment coming in there. From the broader markets, Rain Industries reported numbers. They've seen an improvement in terms of profitability on a year-on-year basis, but sequentially there has been a decline. The advanced materials segment is the one which has faced significant headwinds. The adjusted EBITDA over here plunged 60% due to seasonal softness as well as higher energy and labor costs in Europe. In fact, in terms of cement segment as well, the volumes fell around 5%, and this is on the back of extended monsoons in South India, which actually impacted the revenues. In spite of this, year-on-year revenues are up 17%, EBITDA up 111%, and margins at 11.7 versus a 6.5. Net profit at 13 crores versus a loss of 161 crores. But sequentially is the weakness that we are seeing. And very lastly, pipe companies like Supreme, Astral, Prince, Apollo will all be in focus because the DGTR has initiated a countervailing duty investigation into imports of PVC suspension resin from China. Now, this action actually comes following complaints that were made by a lot of other domestic manufacturers. So, sentimentally, this will be somewhere positive for plastic pipe manufacturers. So, watch out for these companies in trade. And the petition alleges that Chinese exporters are the ones who are benefiting from various subsidies that are being provided by the Chinese government, adversely impacting India's domestic industry. So let's see how this space also reacts in trade, Neeraj.
Yeah, independent of what crude is doing right now, but you would suspect that all marketing companies will see a bit of a pushback today. So that's certainly a negative. Defense names may be a sentimental positive. So that's the set of names you do want to keep an eye out for. Bharti Airtel could be a stock to monitor because the con call takeaways were positive. So you might well see. And remember, telecom doesn't really get impacted materially because of the conflict, right, per se. So you might well see this one have relatively a better outing today than maybe some of the others. So keep them in mind. And Muthoot Finance, Morgan Stanley has upgraded the stock to an overweight and said that it's a tactical buy for 60 days. So keep an eye out for that. Guys, slightly longer term, slightly medium term. Long term is too long these days, but slightly medium term. There are calls of a strong summer and shorter monsoon. I wonder if it has an impact on some of the consumer durable air conditioning companies. The only reason why I didn't think of talking about them too constructively today is because some of them have exposure to the Middle East, particularly Voltas. So you don't know what business impact therein comes in. But non-Voltas companies which don't have the Middle Eastern exposure, a stronger summer might mean good times maybe for a Blue Star, maybe for the EMS players, Amber example. So maybe those stocks to
possible.
be kept on
In
radar.
fact, just at the start of the season itself, I think on India Market Open, all of you guys have spoken to Blue Star, and he has indicated that probably this is going to be much better, and the base is also lower.
And the inventory has been cleaned up.
So I think what you're saying absolutely correct. In fact, Voltas, Rishabh spoke to the Voltas management a couple of days ago, and they've also indicated that they are seeing a lot of strength this summer.
Yeah, so you traditionally had farmers waiting for a good monsoon, and then you have air conditioner makers
waiting for a good summer.
A not good monsoon and a better summer. All right, quick word on Fino and what you should do with the stock if you own it, or is there an opportunity there after the arrest of the bank MD and CEO? Rishi Gupta by the Directorate General of GST Intelligence. The bank has clarified that the probe is linked to a program manager and its officials had no involvement in the actions under investigation. What does this mean for Fino Bank? Aditya Shah joining in to break this down for us. Very good morning, Aditya. Quick word from you. I mean, does this really mean that the GST department who conducted this arrest did not really have any idea if there's one program manager that has done something wrong? Why have they gone and arrested the MD and CEO? Or to your mind, is there more than meets the eye?
So good morning, Tamanna. Today morning, I'm reading an article in a newspaper saying that this is related to online gaming, gambling per se, which absolutely is now banned in India. and there is some shell company formation which is linked to GST evasion per se. I think there is more than it meets the eye. GST department does not particularly arrest the MD of a company if there is a simple GST evasion. There are notices sent out, and there is a process that is followed. So from my perspective, there is more than it meets the eye. From my perspective, there was no clarity on the call that just was conducted by Fino Payments Bank. Right now, I would be cautious on the stock. We will need further clarity on what is happening. Only then you should do something on the stock. Mind you, Fino Payment Banks does have a very different model from all other banks. They have program managers who tend to go to small merchants, and from there on, they do their customer acquisition. So if program managers are involved in some bit of evasion of tax, one should be really very careful on the stock market.
So if you are an owner of the stock, if you own it, this is a sell as markets open?
So I don't think there's too much clarity on what is really happening. So if I were to own the stock, I would tend to now hold on because stock has seen a lot of pain over the last 2 to 3 years. So there's no point selling per se. I would wait for clarity to emerge before taking any action on the stock per se.
Thank you for that, Aditya Shah. So that was the quick take. Of course, the management has come out and made some clarifications there. We'll take a very short break. On the other side, we continue our coverage. The implied is showing a knockdown when we start. But are there opportunities there for Indian investors? 180 points down. Will this deepen or will we see some reprieve? All of that on the other side.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan.
back. You're watching India Market Open. We will have a gap down when we open for trade this morning. That's the very least you would expect. So in that context, 172 points down after several nations have seen debris falling over them, attacks, missiles, all of that happening in the region, I would say, in the West Asian region. 170-point gap down is better than what one could have hoped for. The recovery in the crude is also pointing to some of those things. Parag Thakkar and Kush Bora in our studios this morning. Welcome. It's, we come back every Monday and then there's something that has changed the world over the weekend.
From the day I have started coming to media, every day something is happening.
No correlations though.
Correlation and causation is two different things.
Incidental, but
yeah. What is the play today?
So I think, first of all, I'm very sad to know that whatever has happened, so many lives have gone, and so that's a very sad part of it.
Yeah, it's a humanitarian crisis.
Yeah, humanitarian crisis. And I would say that from market perspective, of course, anything which is related to travel, hospitality, anything which consumes crude oil will have some sort of correction. Of course, crude oil is not up that much. It is up 5% only. Even gold, silver has not gone up too much.
Bitcoin is positive.
So basically, I would say that stocks like Bharti Airtel, where there's a clarification coming from Mr. Sunil Mittal on the capital allocation also. Plus, as we know, this telecom business does not get affected by either tariffs, nor wars, nor recession, nothing. It's a most, I would say, most habit-forming business and most essential also nowadays in this kind of environment. So, Bharti Airtel kind of names and some, I think there'll be some, hopefully, IT will also be falling lesser than the markets, definitely, in this kind of environment. Let's see how rupee opens.
Now, the question only is that is it possible to predict that the dip that comes in today is the dip to buy into? I think that's the question that everybody is grappling with, right? Should one buy the dip today? Remember, tomorrow is a holiday for Indian markets, but the global markets are functioning. Kush Bora, would you buy the dip today or would you sit on the sidelines?
So first, very sad to hear about the civilian lives lost, in even the military lives lost with whatever's happening. That is bad in the kind of day and age we live in. Drone se fighting kar lo yaar. I was very disheartened to hear about some of the instances which I wouldn't mention on air right now, but I was very disheartened to hear about that. I sincerely hope all of this comes to an end very, very, very soon. So yeah, about that. But I suppose this is what peak pessimism looks like, right? Everything that could go wrong has gone wrong globally, right? But domestically, if you see, the situation is a bit different. The GDP growth numbers encouraging, revival in earnings very encouraging, GST collections also fairly encouraging, auto sales also encouraging. So the point is that while everything that's happening with the world, is perhaps trying to bring all the markets down, including ours, domestically, I think we are on strong footing. If I talk about data, on Friday, the sell-off that we saw brought the index below the 200-day moving average, right? FII positioning changed suddenly. The long on the index that we spoke of was at 22%. It actually ended up at 18%. So maybe there was some, maybe there was some inclination about, how the weekend might pan out, or at least what the MSCI rejig was suggesting, change the positioning. PCR is at 0.62, and today is the weekly expiry. So I wouldn't say that the markets might end in green, but there is a very stark possibility that where we open from, we might actually end up a little higher from at least those levels. I think the clear consensus on the street is that this is the dip to buy into. I think the jury is out only for the fact that how long will this escalation last. My suggestion, don't be the first one to buy. Let the markets rebound as and when they do. Anyway, buy on dips is something that we've been speaking about for a very long time. This is the clearest and the cleanest of the dips that you can buy into. But like I said, I don't want to be the first one to buy. Let the markets revive. Let them give you that kind of bounce. And then you go out and buy. The risk-reward ratio remains extremely favorable. Near term, 24,900, that's the support zone to look for. And from a positional standpoint, 24,500, close to the budget day's low, is where Nifty could take support.
Kush, we spoke on Friday as well when the markets corrected. Yes. And that time the call we had, you gave was someone who's already invested, stay invested right now because Monday is expiry, there could be volatility. And right now we're looking at buy on dips, maybe once the markets stabilize slightly during the day. In that kind of a scenario, what would your top picks then be?
Sure. So yes, you are right. We had this call when in the last half an hour of trade on Friday when the market saw that massive slump. Right, we said just stay out. If you don't have a position, don't venture. And in a way, glad that that's how it's playing out, at least on open. As far as stock specific action goes, Hiril, I'm very positive even now. Even when I mention these stocks, let me just give that caveat before I mention it, that you don't have to be the first one to buy. Let the stock settle. If the stop losses are hit, don't be adventurous and buy these. Let the stock settle. Let's see where the first half an hour of the market takes us, and then go out and buy. Right. So 3 stocks: Lumax Auto, Thangamil Jewelers, and RR Kabil. These are the 3 stocks on my list. Monday, a weekly pick, but again, I will reiterate, don't be the first one to buy. Good traction on this one. It's been gaining grounds consistently, and I think the positive, auto sales numbers will also give it that boost. 1840, 1925, these are your targets. 1675 is where you keep that stop loss. Thangamil Jewelers, we spoke on Friday as well, did well. 4080, 4170 are your targets. 3820 is where you keep that stop loss. And RR Kabil also has been doing phenomenally well. So on this, 1600, 1645 are your targets. 1520 is where you keep that stop loss.
Would you look at defense favorably right now? Seems like a no-brainer that with the defense might display that we've seen across the board. It's only forcing every nation to up its game.
Correct. Yeah. So it is becoming a structural theme now with this kind of geopolitical tensions coming up. The only challenge is to find a stock at a good price in defense. And if you see the numbers wise also, only amongst the PSU defense companies which I track, BEL is the only company which reports consistently good numbers. Otherwise, everywhere there is either execution delay or there is a very lumpiness in the numbers. So I would say that BEL of course looks expensive, but if you have to own something in defense and which is becoming a structural theme now, I think BEL is the stock.
Why not private defense stocks?
So private defense stocks, I don't have a circle of competence to cover them, data patterns and various others. Data patterns has done very well recently also.
There is Zen, there is Paras Defense. Bharat Forge has a large defense.
Bharat Forge has also, Bharat Forge also I track very closely, but that has gone up very strongly, like 35% last 1 month. So I would say that the point is where to find such opportunity. There, the numbers wise, at least I get comfort from BEL numbers.
Okay. So would you look at any of the defense names on charts?
I would look at MTAR on declines and data patterns on declines if we get those. Otherwise, from a positional bet, I think there's a consensus on BEL.
Consensus on BEL, and you might see some kind of an up move on defense stocks. If there are any green spots today, some of them could be from defense. But let me go across to Sumit Sarkar joining us this morning with all the chatter from the street.
Be quiet.
Well, yet another weak trading day is expected, but few stocks that dealers have highlighted in that trade. Firstly, this name that is cropping up is MCX. Now, there are buy flows on institutional desk at lower levels is what dealers have indicated for this counters. Dealers indicate that some easing of margin would be seen on gold and silver side, which could be beneficial for MCX volumes. Second stock on the list is Dixon Tech. Now that stock has been gaining on the back of fresh round of PLI that could come in for smartphones, but dealers still indicate that large HNIs have been exiting or selling at higher levels on this counter. To keep an eye out for Dixon Tech as well. And when it comes to Voltas, on a weak trading day, that stock had gained on Friday, and this was largely because dealers were hinting that channel inventories have been on the lower side ahead of the summer, and they're anticipating that the 2026 summer could be on the better side, and there has been some inventory stocking that has been done by wholesalers before the summer season, and they're also expecting price hikes to come in. So that could in turn be positive for Voltas going forward. And couple of stocks that we highlighted earlier. Coal India was part of a segment on Feb 26th where we did indicate that the February volumes will be on the weaker side, and in fact if you look at the volume number, the offtake has declined by around 1.5% on a lower base for Coal India. And Aurobindo Pharma was part of a segment on February 17th where we did indicate that there is a surprise inspection that has happened on the UGA Unit 1. And over the weekend, the company came out with this clarification where they are saying that US FDA inspection had started on February 16th, ended on February 27th, and they have got around 4 observations from US FDA. However, we do not know the severity of the observations that Aurobindo Pharma has received as of now.
Okay. Somit, thanks for that. But while you are with us, Somit, could you just, for the benefit of our viewers, put the crude impact into perspective with numbers?
Well, yes, higher crude prices will definitely impact India given the fact that nearly 85% of our energy requirement is met through imports. However, the intensity of the same has come down over the period of time. Now, if you look at on the inflation part, a 10% increase in oil prices could lead to an increase in inflation, that is CPI and WPI by around 40 to 80 basis points. When it comes to the current account deficit, a 10% increase in oil prices could widen the current account deficit by around 30 basis points, and this is as per the analyst estimates. Now, if you look at the key sectors that stand to get impacted, oil marketing companies could see the most impact coming in given the fact that a rising crude oil prices will lead to lower marketing margins for the oil marketing companies, and every 0.5 rupees per litre drop in the marketing margin lowers the EBITDA for IOCL, BPCL and HPCL anywhere between 7 to 11%. Apart from that, there are a host of other sectors for which crude or crude derivatives are one of the key raw materials. For paint companies, nearly 40% of the raw material cost is either oil or oil derivatives. So that sector could get impacted. Aviation, again, ATF is the major cost. Nearly 40% of the total cost is ATF. And with rising crude oil prices, the ATF cost will also increase, which will impact the margins. For lubricant manufacturers like Gulf Oil and Castrol India, 50% of the raw material cost is crude derivative. For tire companies, synthetic rubber, carbon black and various other chemicals. Now, prices of these chemicals are derived from crude oil prices. So, higher crude oil prices could lead to higher these raw material costs, which form nearly 40% of the basket. Apart from that, cement companies, nearly 40 to 50% of their cost is either directly or indirectly related to crude. There are various specialty chemicals for whom crude or crude derivatives are one of the key raw materials. So, these companies could also stand to get impacted. But on the positive side, oil explorers like ONGC, Oil India, Vedanta, HOEC, they stand to see a positive impact given the fact that higher crude oil prices means higher realization, higher earnings. Every $5 per barrel rise in Brent crude increases ONGC's and Oil India's EPS by around 7 to 12%. However, do remember, to actually realize this impact or to actually realize the benefit of this, oil prices need to remain at the higher levels. Just short-term fluctuations won't lead to big impact on the financials for any of these companies.
Right. Thank you, Somit, for that. This is very interesting that we need to pick. But Akbar, let me come to you on this. Any crude play that you're looking at? Because Somit has highlighted the impact in terms of OMCs plus the other sectors as well, which will see, either gains or losses.
Correct.
What should that play look like?
So basically, see, upstream companies will open gap up. 2.5%. But as Somit very rightly said, this has to sustain, right? There is already oversupply in the crude oil market, plus OPEC is also increasing production. So I would say that I will not be doing that kind of trade, to buy upstream companies or to sell. Of course, I don't hold any OMCs as of now. But OMCs will have a negative impact for sure because of oil prices going up. And of course, companies like Indigo and so airlines and travel and hospitality, those guys will suffer. But I am not looking at today's day as a day to trade in all those things because this will change over a period of time.
If you had cash to deploy, and this is something that Devina Mehra also told us when we spoke with her yesterday, that if you are not fully deployed on cash, maybe it is time to nibble.
Yeah, it is a good time to start deploying cash. And I would say that something like Bharti Airtel, where stock has corrected, right? For a long time, it has not corrected because it is a steady annuity cash flow, right? And that to a EBITDA of 1,23,000 crore, free cash flow of 60,000 crore. And now it is market cap of 10,70,000 crores. So free cash flow yield is around 5.5% for this year. And the market was just worried that whether all this free cash flow which they are going to generate, which is around 1,30,000 crores over next 2 years, where they are going to put. And this 14,000 crore in NBFC came as a I think the market reacted negatively to it. But this 14,000 crore is also going to be put over a period of few years. It is only 1,500, 1,700 crores in this year. Plus, Mr. Sunil Mittal has said that it is a leverage business, so you have to be responsible. And he wants to actually build a Bajaj Finance within Bharti Airtel. So I would say that I would look to put more my money into Bharti Airtel kind of stock, which is not, as I said, there is no tariff which affects it, there is no war which affects it, and there is no recession which affects it.
And just the beauty of Airtel is that if in 2005 to 2015-20, if it was said that HDFC Bank, no matter what you do, it continues to grow 15% every year, independent of growth rates, etc. You look at what Airtel has done over the last 10 years, and if you can bring up the 5-year chart, I think the 10-year chart would be better, but even if you have the 5-year chart, you see that. It's a steady compounder. The 10-year compounded annual growth rate for an Airtel is 20%. Now, that doesn't mean that history may not repeat, but from the con call takeaways, etc., and the valuations and the corrective moves that have happened, Parag Thakkar feels that the levels are good out here. Kush Bora, are the levels good for a trade as well?
Not a momentum play, but a positional trade, most certainly, because the immediate support actually comes in at 1840. That's what the low has been, 1830, 1840, that zone. That's what the low has been for the last about, good 8-9 months or so. And every time it tests those support levels, it tends to consolidate and then rebound from there. So risk-reward ratio is fairly favorable. And I think Parag Bhai has mentioned all the positives that, Bharti could have. So yeah, from a positional standpoint, it's not a bad idea to consider Bharti Airtel.
So here's what Citi is saying on Bharti Airtel. They've maintained a buy with a target price of 2,380. And talking again about the investor day and their analysis, saying chairman's clear strategic vision amidst market concerns reinforces a compelling long-term opportunity. Uncertainty around the timing of the next tariff hike may limit near-term catalysts. They believe the stock's recent underperformance presents an enhanced buying opportunity. Also see the most immediate positive read-through for Indus Towers. Is there more, when you're talking about that category of company, which is what? Tariff-proof, recession-proof, war-proof?
Everything proof.
AI-proof?
You use more mobile whenever there is crisis, whenever there is good news. So everybody uses it. And
so then you should think about that for Vodafone Idea and for Indus as well?
So Vodafone, I have maintained that I think government intent is very clear that they want to revive this company. And so I am playing it through Indus Tower. So again, it's a subsidiary of Bharti Airtel only. So up till now, I was always bullish on Indus Tower, but now after this fall, I have been more constructive on Bharti Airtel also now.
But the comment that Bharti Airtel management made yesterday on Vodafone Idea was very interesting, where they said categorically that Vodafone Idea will not be able to get any market share in a market which is only growing in 8 to 9%. So for a Bharti Airtel, to call it out for a Vodafone Idea was very strong, I think.
Yeah, we should pull that quote up. That is definitely interesting. So Indus Tower, telecom, some of those, I would say, safe zones. I don't know if you should start calling them bunker stocks.
I like that.
Because from the point of view of, you have to head for shelter in the equity markets as well. And it's terrible, we're trying to make the best of a situation. When we're smiling over here, folks, viewers, please don't think that we're making light of pain that people are seeing. That's definitely not the case. But we're trying to find the best solution and best situation for all of you out there.
And we can understand the anxiety of all the families who are here and their people, children
are
in Dubai.
Yeah, everyone has someone or the other who has a Middle East connection. So all of those sensibilities are there. First pre-open rates coming in. I mean, these will settle. I doubt the Sensex is going to open 9% down. This will settle. This is the first flush of pre-open rates that we're seeing. But what are some of the things that you need to watch out for? So markets are closed on Tuesday, that's March 3rd for Holi. And the Nifty weekly expiry has been shifted to Monday, March 2nd. So in that sense, it's double trouble. Anyway, you're starting Monday with very heavy geopolitical news and the impact of that. And then you have expiry, which always causes some volatility. This compressed time frame will amplify volatility and sharp positioning moves. The escalation of US-Iran tensions over the weekend has created a high-risk environment for the Indian markets following the Friday sell-off where the Nifty 50 broke its 200-day moving average. The gap down opening on Monday is all but confirmed. Global cues are showing you what's going to happen, so is the pre-open. The Nifty has decisively broken below its 200-day EMA. This is a major bearish signal indicating that the medium-term trend has shifted from buy on dips to sell on rallies. With a sharp gap down expected, the psychological level of 25,000 is the first line of defense. If that fails, next major support at 24,850. Breach here opens the door to the budget day low of 24,571. Any attempt at a recovery will face stiff resistance in the 25,250 to 25,350 zone. Technical analysts are suggesting staying cautious until Nifty reclaims 25,600 on a closing basis. For Bank Nifty, supports at 59,800, 59,000, resistance at 60,500, 61,000. Bank Nifty is a safer bet though, Kush, you think?
For sure it is. The bias there is definitely positive. I think in a way it's a good thing if we leave out the events as to why this is happening and you just look at the data and the setup. It's a good idea for the Bank Nifty to cool off a little. We were seeing some sort of negative divergences on Bank Nifty, especially on the weekly setup. And remember how we've been speaking about the PSU Bank pack, the entire pack actually being overheated. It's not a bad idea for some of them to just cool off, spend some time, consolidating and then get ready for an, next leg of up move. Plus, while HDFC Bank and ICICI Bank really haven't done much, I think in a way it's a good thing because they're now very close to support levels. If they show any kind of an uptick, the up move in PSU banks after a dip and a consolidation and the private banks, participating will actually take Bank Nifty towards newer highs. So yes, more constructive on Bank Nifty. The levels that I would watch for is, 59,000 close to that level and 59,800. So yeah, those are the support zones to watch for and definitely the stronger of the two indices.
Okay. Well, Kunal Ramya also with us. Kunal, thanks so much for joining in. Are you looking at bottom buying or are you waiting for the dust to settle? And if so,
Good morning.
If you're buying, are you buying the Nifty or are you looking at specific stocks?
Good morning, Neeraj bhai. Thanks for having me on the show. So if I look at the Nifty, certainly, the short-term trend has turned negative, but mid-term and the long-term trends are sideways to bullish. So anything near 25,250 or say 25,300 can be 24,300 to 24,350 can be the good support level to watch out for. I will not be an immediate buyer, but I think I'll play more on the stock specific front rather than looking at the indices as of now. And again, as we know, today is a weekly expiry, so I'll stay away from the indices for now. I'll wait for the dust to settle.
Good morning. You're going to wait for the dust to settle. In that kind of a scenario, what are your top picks looking like?
So I'm looking at the couple of stocks like Natco Pharma and MRPL and Chennai Petro. Now these counters have really outperformed and good volumes have happened on the chart, right? So looking at Natco Pharma, I think this counter can be a good bet from the midterm to long-term perspective with the stop of 970. One can go long on it and the targets can be 1,050. Again, I would advise our viewers to keep trailing the stop loss rather than booking the profits at target. The second is MRPL. The counter was muted in the last week, but overall trend has been really very strong and there was a clear breakout around 185 zone. So keeping the stop loss of 185, one can go long on this counter and the targets can be 210 again.
Okay, first takes in the pre-open, Sobha, just pull up Sobha developers, and just take a look at what's happening there. Pull up insurance companies. It's a sea of red. And that was largely expected. The Nifty 500, for example, has 5 advance, unchanged 4, and the rest 492 are declines. So you would expect that. I want to look at what Home First is doing. I want to look at what all your OMCs are doing. Let's look at BPCL, HPCL. Let's look at your Indigo. Let's look at Apollo Tyres. All your crude-facing stocks are going to see some pain today. I pulled up Sobha because, yes, some presence in Dubai, and that could be something that is looking a bit painful. Go Digit General also seeing a bit of a knockdown this morning as we are preparing to open up for trade. ONGC and Oil India obviously are shining. And you would expect that as crude prices spike overnight. So for these specific companies, that's a good thing coming in. Hindustan Zinc also looking interesting. Watch out for that as silver prices go up, but very, very little that is in the green this morning as expected. But let's go across to the big brokerage call of the morning. JP Morgan has maintained an overweight on Polycab. Mahima's joining in to tell us why.
Right. So, Tamanna, I think probably one stock that could see some relief and, of course, some positive opening in trade today is Polycab because JP Morgan has significantly hiked the target price for this one from 8,900 to 9,600. They say that they remain constructive on this particular counter given the structural trends of electrification and energy transition. They believe the stock could continue to outperform driven by earnings upgrades. They see margin recovery over the next 2 quarters following the metal prices pass through and sustained demand growth. So this could be a potential candidate for valuation re-rating as the export and domestic demand outlook is also strengthening. Lastly, they have said that the positive trigger could be the elevating concerns around excess capacity capacity additions by incumbents and new entrants as well. So this is the overall view as to what makes JP Morgan so positive and constructive on something like Polycab.
Difficult to find. Mahima, thanks so much for that. But just difficult to find too many green candles today in any of the stocks. Never mind the optimism that may stay around the fundamentals of a particular business. I wonder though, ONGC Oil India might just have a half decent start. I mean, Oil India looks like it's starting off on a positive note. Let the rate settle, and ONGC too could have.
You know, what I want to add over here, Neeraj, is when you're saying difficult to find greens on Nifty 500 right now, if you have to see in terms of pre-open rates, you just have 4 companies which have a green: Oil India, ONGC, Hinzink, Muthoot Finance. You're just talking about these 4. So either one is, I mean, either crude beneficiary or a metal or a gold beneficiary. That's what you're seeing.
Not surprised at all. Everything is you could argue the term, use the term bludgeoned if you will, including, I think, if I'm not wrong, Nifty IT2 starting off on a weak footing. So it's effectively a lower tide and a risk off mode right now. Let's see if that were to change. You know, you think of safe buckets. I'm asking the contra. Where is it that the things are looking weak enough because of this and other factors, which should be completely avoided? Parag Thakkar, a lot of people have a tendency of buying a stock by looking at the last high price, and therefore stock wahan se 50% नीचे आ गया तो अभी तो लेना बनता है. Where is it that you would avoid this behavior?
No, I mean, most of the things I think you have to be, you don't have to be price anchored at all.
Agree, but that's the general advice.
But
sectorally, where is it that you would avoid exposure completely?
So nothing comes to my mind straight away right now, because the point is that the current situation itself, how long it will sustain, how serious it will become, it is still a question mark. So I would not go into that right now. Right now, I'll just focus on what I want to buy, which is not affected by all this and which has fallen.
Okay.
So rupee is also opened about 30 paise weaker. Expected to happen as well. So 91.3 is the rate that we're looking at. Right, quick look at the Iran-Israel watch list and what's happening there. Post the pre-open, you have 5 minutes to go for the opening bell. Gold financiers, because gold prices have spiked between 2 and 3%. Manappuram, Muthoot Finance, take a look at those. CSB Bank has is quite a prominent gold book, not working for it. Jewelry-linked names is something we should also look at as gold, silver prices go up. Titan, Senco, Kalyan Jewelers, all down because of sentiment as well. You need to have a positive sentiment to go out and buy jewelry, I suppose. OMCs, that's oil marketing companies, IOCL, BPCL, HPCL, all with deep knocks expected. Paint companies, crude is an important component for them. Crude prices could go anywhere and have already spiked. So you're seeing Berger Paints there with the deepest cut in the pre-open session. Remember, the opening rates are yet to come in just about 4.5 minutes. Aviation stocks, Indigo, SpiceJet, seeing some pain. Hotel stocks as well. Let's look at what hotel stocks are doing. Indian Hotels, EIH, Lemon Tree Hotels among them. And a lot of others will also see some pain, isn't it?
Yeah, I mean, your travel proxy firms like Yatra, Ixigo, Ease My Trip, a few of the names. TBO Tech and Thomas Cook are also in focus on the back of this. There you're seeing these kind of cuts coming in. Now, metal stocks, the play is going to be what happens to the dollar. If there is pressure there, that's when you will see. But right now, I don't think so anything's holding water. Lloyds Metal, Tata Steel, Jindal Steel, SAIL, Vedanta, all of them have been in focus as well. Your specialty chemical companies are in focus. Sun Pharma, with the exposure that they have in terms of Israel, and L&T. That's going to be another one because the order book in terms of
fairly high exposure.
Very high.
If I look at Gulf exposed companies, then Sobha, L&T, one of the KRBL and L&T Foods, LT Foods also, those basmati exporters also might be seeing some pain this morning. I'm talking about LT Foods and KRBL. Yeah, there you go, 5.5% knock. LT Foods is 8.5%. Pre-open rates, these are. We'll see the opening rates in a bit.
Yeah, so the numbers-wise, as per that Jeffrey's note, L&T was 25% and 40% EPC order book. Nugent Software, 30% of revenues from the Middle East. From the West Asia nations. And other companies with meaningful exposure, about 5 to 10% of revenue exposure include consumer companies like Dabur and Titan, and pharma companies like Ajanta Pharma, Biocon, and Cipla. Interestingly, while hospitals would be considered to be the safe haven, 8 to 10% of the revenue comes from international patients, which a lot of them are GCC clients as well.
Gulf, yeah,
They are
come
Gulf
in
clients
from
as
the
well.
Gulf. So you're
So
going to
major
see-
hospital chains too.
Yeah. Anything that would be a candidate to buy with the hope that things will ease up, the whole Gulf Connect will ease up sooner or later. Parag, anything that you would pick at this point?
Yeah, so for example, I saw just Ajanta Pharma is down 5.5%. They have reported good numbers, the commentary is very good, and I suppose pharma will eventually, pharma to log kharidenge na. So the point is that if that falls so much, or and if continues to extend its fall, I think that stock in the affected due to Middle East and West Asia problems, that looks, even Dabur I saw at 500. I think it is not very high portion of their revenues. Of course, it is one of the out of the international business, Middle East is a major one. But I think all those things, like these are required things, right? Pharma or FMCG. If those kind of companies fall, then definitely that will be a good opportunity to buy.
Okay. What about Kalyan Jewelers as well is what I want to add, because 12% of their total revenues comes in from Dubai. I think 50 or 60 stores is what they operate there. I think Neeraj mentioned Titan as well. So if you have to look at these two jewelry stocks, anything on the charts?
I would avoid these Titan perhaps, but I still prefer Thangamil Jewelers, although this is also opening gap down with the rest of the stocks. And honestly, I think the pre-opening and the rates at which a lot of stocks are, this is more like what everyone was anticipating, not the 170, 180 point gap down, right?
You think we're opening 400-500 points down?
I have a feeling we might recover. I have a feeling we might recover from these levels. It's just that if we opened 150 points or 180 points lower and then went to 500 points lower, that'll be more painful. From here on, there's a possibility that we could recover a bit more.
And where is that recovery coming from? Do you think defense, companies are going to lead that recovery? Because you have hardly anything in the green right now.
Yeah, and it could stay like that for maybe initial few minutes and then we see where it goes. I think banking could lead, that rally because HDFC, ICICI are already beaten down quite a bit. Maybe some stability there. Reliance is one candidate which was already beaten down, so some stability there. PSU banks could see some profit booking because overheating, but I think Reliance and your financial pack could perhaps see some sort of recovery and stability.
By the way, MCX is, I believe, not doing too badly. And remember, viewers, for one disclaimer, for all the names that are being mentioned as stocks which could be considered as well, please do your own due diligence. The time horizon and the risk appetite of experts suggesting those stocks may be very different from what your time horizon might be. So please keep that in mind. And also remember, 2% a gash. 2% gash is really not alarming. It's just that the last 12 months have spoilt us for not seeing too many days with such sharp cuts. But let's wait and watch. Do we recover a little bit from this 500-point opening downtick that the pre-open rate was suggesting? Let's wait and watch. This is how we are starting off this Monday morning. 1.8 or 1.5%. Now let's wait. It seems that there is a bit of a recovery from that opening tick, but let's give it some time and see how it does. I mean, don't even look at the market breadth. The advanced decline ratio has no meaning, but the Nifty is just about 1% down. It is not 2% down. Let's see though. Let the first 5 minutes settle down. Banks 0.8%. Mid caps are down 1.6%. You can see it here. And the small cap index will come up on your screen. That will also be down 2.5%. Usually, the mid cap and the small caps tend to fall a bit more during such times. The index is still about 1% lower. Let's get the heat map up on the screen. It shows you the 50 stocks on the Nifty and how they are doing. Very few winners and a lot of losers. I'll start with the winners. ONGC is up 3.5% because oil prices have gone up, and typically the likes of ONGC and Oil India, which are the upstream oil companies, tend to do well because higher oil prices benefit them. BEL, a defense name, doing okay. Pharma, Parag Thakkar was talking about it, up about 1%. So Pharma might be the defensive bet today. Hindalco, again, a metal name. Metals would probably rally, and that's why Hindalco too doing okay. Banks are not doing too badly. You have Axis, ICICI and Kotak. Three big names, less than 1% down. What is down though? Interglobe Aviation, clear impact. Middle Eastern flight revenue gone, and crude price uptick means higher costs. So therefore, Indigo corrects. Eternal corrects, interestingly, 4%. I think Middle Eastern operations as well, but other factors too. L&T, Middle Eastern exposure for sure. Adani Ports, one would presume that some of that Cargo movement for the near term might be impacted, and that's why that stock is down 3.5%. And then Tata Motors, Maruti, etc. So maybe the consumer sentiment impact coming in, because discretionary and staples, most form of consumption, also seems to be down, because you also see Nestle and Asian Paints down in trade. So that's the long and short of it. Fair degree of corrective move, not quite 2%, but not 1% either, about 1.5% or thereabouts. So yes, starting off weak.
Look at the India VIX, up about, spiking up about 15% right now. So that's going to tell you about the nervousness in the market. And no point pulling up Nifty contributors because everything is on one side. This is a seesaw with nothing really to lift. But let's just quickly look at the Nifty contributors before we move to what's happening in the broader markets. And, the kind of pain there, it's these lone rangers really, which is trying to prop up the markets, everything else, and really the heavyweights there that are hurting. The flip side of what's going to happen with high crude prices playing out on RIL as well this morning. Let's look at the broader markets, the mid cap and the small cap. It's very likely you're going to see more pain there. Nearly 2% down on the Nifty mid cap 150, the small cap 2.5% down. And that's really where some of that excitement goes off. The advanced decline ratio here at the bottom is also telling you about how skewed and bearish the markets are right now. Let's pull up the sectoral heat map. I doubt you're going to see anything in the green. Okay, you have India defense in the green, and this is what we've been telling you. As the world gets more and more uncertain, it's defense stocks which are going to see some up move, and that's why you have that sector about 0.5% up. We'll pull up the internals in just a minute. But the fact that the small cap 250 is the biggest loser, I think, is a little concerning. Realty stocks also, because more and more Indian companies now have exposure to the Middle East, to West Asia, and that's why you're seeing some pain over there. But across the board, it is weak. Let's talk about specific stocks, and most of them will end up being in the red. I'm talking about Sobha Realty first. They have business in Dubai, so 2.5% down. But as Neeraj has explained, a lot of that business in Dubai is from their family office. Nevertheless, you'll have some sentimental impact. Fino Payments, the MD and CEO has been arrested. There has been some kind of an explanation by the CFO, who's now the interim leader. Street is not buying it, about 8% down. Crude impact, just going through a list of some of those things, HPCL, BPCL, IOC, all of them. These are the ones where their margins get squeezed as crude prices go up. That's why these companies are all seeing that pain. IOC 4.5% down. For ONGC, Oil India, it's the reverse, right? It's good for them if prices go up. Indigo, again, reiterating how much that is hurting. Same for tire companies, right? Seat, Apollo Tyres, let's look at what's happened to them. Their expenses go up as crude prices go up. That's why 3.5% up there. Let's look at Muthoot and Hind Zinc. Silver, gold prices are up. Are you seeing a positive impact? Yes, you are. So 1%, between 1 and 2% up on both those counters. Some more companies with West Asia exposure. We spoke about Larsen & Toubro, but also LT Foods, exporters of basmati rice, Newgen, Dabur. These are companies which have fair bit of exposure in the region, and which is why you're seeing some of their stocks go down today. Kalyan Jewellers also, if we can add to that list and see what's happening there, because they also now have stores in the region. So you will see some pain in some of those counters. It's very unexpected reaction, I would say, Hiral, on expected lines. Anything with West Asia exposure, crude exposure is going up. Difficult to find safe haven stocks this morning.
Absolutely difficult to find safe haven options, and the obvious ones are seeing some bit of pressure. You talk about all the shipping names as well, from a GE Shipping to any of them trading under pressure as we speak right now. Travel proxies that we mentioned earlier, you have Yatra, Exigo, Ease My Trip, TBO Tech, RateGain, BLS International as well. All of these are seeing cuts in that range of 2 to 8% in today's session. BLS International also 3.5% downtick coming in there. We've spoken about gold financiers, jewelry stocks already. Let's just look at hotel companies, Indian Hotels, EIH, Lemon Tree Hotels. If any impact coming in on any of these hotel plays, I mean, not a major cut, I mean, barely a percent and a half, but it's your aviation stocks, your travel proxies, which are under pressure, your gold financiers, which are seeing some bit of a safe haven bet in today's session. Jewelry linked names again in focus, metal stocks in focus as well. Let me come to you, Parag Bhai. In terms of gold and silver, we've had these conversations in the past as well. But as Tamanna was mentioning, do you think any of these plays could be a safe haven bet as of now?
No, it can be, and now the prices have also corrected. Really, at least for stocks like Muthoot and all, the stocks prices have corrected around 15% or so. So it might continue, and with this risk premium increasing more and more due to this thing. But I think, see, in my view, this will settle down over next 3 to 4 weeks. And then you don't want to end up having something bought at a peak, and after that the situation cools off, right? So basically I would not go there in that space, metal space, at least right now.
Okay, gentlemen, we will leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time this morning. Let's welcome in our next guest, Manpreet Gill, CIO of Africa, Middle East and Europe at Standard Chartered, who joins us right now on the show. Well, he's at the epicenter of it all, literally and figuratively. Manpreet, I hope all is well in Dubai.
Good morning. Yes, no, all well at our end. But obviously, as we wake up to Monday morning, I think the focus shifting away from just the region, of course, to the market impact as well. And you've seen that's something we've been thinking about a lot as well.
Yeah. So Manpreet, I read your note, right? And you clearly saying this, that watching oil prices closely, that's the first thing that came out on the note. And it's clear that that is the thing. Just the point that oil prices started off with a large flare up and then cooled off almost immediately, right? In a matter of 24 months, they lost nearly 60-65% of their peak of the last 24 to 48 hours. Is that telling you a story, or is it too early to call a story?
So I think it's partly about two factors here, right? I think one is, let's not forget that when you look at the pattern of oil prices, we've seen oil prices price in a bit of a risk premium very gradually since the start of the year. So we're not starting, our starting point has not been one of complete sort of non-pricing of the risks. So this has been building for some time. And second is, yes, at the moment, in a rapidly changing situation, I think there is obviously markets trying to achieve a balance between what the headlines sort of tell us from a geopolitical perspective and the fact that we're dealing with an oil market that is still very, very oversupplied at a global level. So obviously something we need to keep a close watch on. It's a situation that can change at short notice. But that is also why we're quite focused on thinking through different types of scenarios rather than reacting in too knee-jerk a manner. It's natural for a bit of sentiment-driven jump, but we have seen this before, in the middle of 2025 as well. So I think it's important to keep a bit of a balance and look at it with a cool head here.
Manpreet, good morning. Hiral on this side. We're talking about, a temporary surge in crude. Now, whether it sustains at higher levels or not is anyone's guess. But in case this is a temporary surge that we are seeing right now, what should the equity strategy then look like if someone wants to hedge against this temporary surge?
I think that, a temporary surge is one where I agree with you. Our preferred approach would be to put a few hedges in place. And there are a couple of different ways to do it, right? Number one is to look for asset classes that are highly correlated to oil prices. The answer would be a little bit different. Obviously, what's available, what provides that sort of hedge in onshore markets would be different to global markets. Globally, for example, we've looked at U.S. energy sector as one sort of sector providing some correlation to oil prices, or inflation-protected bonds, which is really sort of the longer-term route through which risk could feed through to financial markets. But there's a broader universe of hedges outside of equities as well, right? So there's the obvious one, which is gold. We like gold for a variety of reasons, and I think it's done well, because of the broader geopolitical picture, because of central bank demand, and we're seeing that's benefiting to some degree, and that we still think is an attractive, part of multi-asset portfolios. And then, of course, you have a handful of, potential safe havens in currency markets. And again, the challenge is this is not something that, we'll see a big reaction today. This is, what we experienced today has been building for some time. And I think that's what's being reflected in market. But these are the universe of safe havens at least we look towards if someone's looking to build some hedges today.
Okay. So, Manpreet, then from here on, I think the key question is, any indications that you are factoring in when it comes to the length of the conflict, number one. And two, when you're talking about crude impact as well, you're looking at production, you're looking at storage, you're looking at shipping, and all of this, if the Strait of Hormuz shuts down, how are you baking in, those estimates?
So I think that the challenge here, of course, is we don't have to be geopolitical forecasters, but of course, our focus is very much on financial markets. And I think that is why we're thinking through more a scenario-based analysis rather than trying to, focus excessively on just one scenario or the other at this stage. And look, if you think about it, the length of any disruption is really the key here more than anything else. Because to your point, yes, we're thinking about the entire supply chain from, actually output of oil, but also getting it, to the end consumers. Straits of Hormuz is one potential choke point, but, there are others as well. But, there are many, many sources of supply globally, and the context is still one, in our view, of a heavily oversupplied market at a global level. So that's why, to us, it's really trying to get any indicators that help gauge how long any near-term disruptions might last. Obviously, you see mixed reports around what's happening in Straits of Hormuz, but that's natural in these sort of periods of uncertainty. For us as investors, the question we ask ourselves is, what do we do about it, given, we would anticipate quite a bit of uncertainty. And sitting here today, we think the right answer is not to touch quote long-term core portfolio allocations, but instead think in terms of hedges. That appears prudent at this point in time because it is a situation that can change rapidly, into either of, of any of the three scenarios we've laid out. We think that's a more prudent approach, particularly given the starting point, rather than swinging to, expecting either a worst case or a best case scenario at either extreme quite at this stage.
Manpreet, just wondering, the conflicting reports and understanding of what really is the quantum of debris, drone strikes, etc. happening in the West Asia region. Do you think that becomes the key concern from an Indian market's perspective as well, apart from everything that is going on between Iran, Israel, and that part of it? But this GCC area getting impacted is what is giving jitters to global markets and asset classes?
Well, I think this is where it helps sort of step back and sort of get the perspective of what we know from market impact of geopolitical conflicts throughout market history, right? Because what you described is natural, right? At the start of any geopolitical event, it's usually a short-lived and more sentiment-driven reaction, and one that's driven by a wide range of headlines. But I think what's important as investors, obviously, try to look through that to some degree and say, look, where could the impact be a little bit more long-lasting? Or not. And I think that's sort of the separation we're trying to do. And I think, look, no doubting that, from an Indian, perspective, of course, energy supplies matter for external balances, for the rupee, for obviously input costs, for inflation, as it does for many other, oil importing economies. But, as you can see from the oil price reaction, there is some reaction, but it's not sort of, been perhaps as large as some of the fears or extreme views were over the weekend. So at the end of the day, it comes back to a broader point that I think the cooler-headed approach here is to try and separate what we see in the headlines, recognizing there will be some short-term sentiment-related impact on markets, as there generally is in most geopolitical events, but try and separate that from what the demand-supply pictures likely look like on a more trend level. And that comes back to the point why we think putting some, oil price hedges in place, broader sort of, safe haven hedges in place, that we think is the prudent approach at this point in time. And beyond that, obviously, our framework is to keep this various scenarios in mind. I think that's the best tool for investors to obviously monitor incoming developments and see, which of the scenarios we appear to be moving in favor of.
Stay safe, Manpreet. I know you're in Dubai, and like I said, we're getting conflicting reports. I assume things are settling down right now since we're doing this conversation. We wish you well. Now, speaking to Manpreet from Dubai and Samir Arora, also joining us from Dubai this morning, founder and fund manager at Helios Capital. Samir, thank you so much for speaking with us, and we'll talk about a variety of things. I noticed the blinds are shut behind you, but I assume that the view is fine and everything is safe and sound.
No. I didn't want to close the blinds. Actually, behind is Burj Tower, but the light is so strong. Otherwise, I don't want this very boring background that I have. So
you should just open it.
I don't mind opening it.
Yeah, open it. Give us open it and give us at least a peek of what the Burj is looking like.
But you won't be able to see, na.
We'll see it for a second. We're seeing it for a second, and it's good, Samir, because that's what happens in the world of social media, right? Everyone is thinking, oh, the Burj was attacked. You're sitting there with the Burj behind you.
And the Burj is here, and we paid extra for this view. Of course, before we knew, before we knew that this is happening.
I hope your current hotel stays comped, because I believe the Dubai government has done that for everyone, which I thought was a fantastic gesture.
No. It's been done by Abu Dhabi only, not by Dubai.
Okay, you don't need it, Samir. It's okay. You can enjoy the view of the Burj and pay for it. Okay, let me come down to brass tacks. How worried should Indian investors be right now? How worried are you?
I am not worried. The reason is that we have, first of all, I've been doing this for 30 years, and even otherwise, you are most welcome to study it more than having to experience it every time. That all these things end suddenly after a few days, maybe 10 days, 5 days. In this case, I think not more than that. I'll explain. But broadly, then most of these things reverse. Oil prices will rise and then they will fall, and then we'll have weakness in markets and they will correct. And these things don't really affect, unfortunately, you can say if you want, that the stock markets are very cold-blooded and they just recover very fast. And in this case, my simple reasoning is that you means the US and Israel have taken out the top, whatever, 40, 50 of the senior guys and maybe many others in the management of Iran, and you really expect the 55th guy to be as strong as the first 3-5, the Revolutionary Guard head and the actual supreme leader and his first nominated successor, his son-in-law and whoever else, and their defense minister and all that. Number one. Second thing is that and every day they are being attacked. So if those guys had to respond in some big style, they can't keep waiting, because they are anyway being attacked and all their weapons would be affected like that. So broadly, I would think that this will end plus minus a few days, or at least there will be negotiation. And negotiation, I think President Trump has tweeted or said that already, I don't know who, but in the hierarchy, somebody is already asking for a new round of discussions. So I don't feel this is, super bad from a stock market point of view. And if it is bad for a few days, it is very difficult to sell today and then buy back 2 days later or 4 days later. Believe me, I have tried this all my life. I've been a hedge fund manager for 20 years. These things don't work. It looks today, if you short, and then tonight it will look better because you would have shorted when it's down 2% and the market would have closed down 2.5%. And you would say, because you're not getting the whole 2.5%, let the SAP just giving as a number. And you'll be very happy tonight that, you saved 0.5%, and then 3 days later you'll be up 1% and the whole story is over. Just chill.
Just chill. This coming from a man who's just said that he's tried to do this all his life and it's a very difficult thing to do.
Many things work, but this doesn't work.
Fair call. Samir, in the event, so I know the base cases and probably oil markets are giving an indication that this is probably not as grave and protracted. But in the event that this becomes a bit protracted, but the market gets used to it, will it be yet another conflict, much like what's happened in the previous instances, wherein the markets have a sharp downtick and then bounce back? By the way, we don't even have a sharp downtick. We're just down about 1%. This could be any other day.
Yeah, but before that, I have a favorite story. So once I was giving an interview to one of these multiple channels that we have. And in those days, the issue used to be that oil will go up a lot. Okay, it was not going up, but there was this fear, maybe there was some other similar thing. So they asked me, I think I remember the days also, because I was in Bangalore for the World Cup, and so 2011. So that's why I remember that date and time, whatever. I mean, that broad. So the anchor asked, so what do you think? I said, it's okay. What's the big deal? So he said, but what if oil goes to 100? I said, then it will not be okay. But right now it is not 100. So I said, it's like you asking a friend, how are you? And he says, I'm good. And you ask him, but what if a truck hits you? And he says, no, then I will not be okay. But today I'm okay. So if it happens, yes, it will be worse. But generally, as of now, logically, it's not. And also from an India point of view, I thought separate that in Feb, India showed remarkable strength. That even though the IT sector was down 20% and maybe well-deserved as far as I'm concerned, but the overall index was sort of zero or maybe plus little bit. The currency was not down, FI flows were not negative, and other sector indices were up, which is quite remarkable to have one big sector which is supposed to affect so many things down 19, 20, whatever it was down. And in the same month, even though Korean market was up, I think some 15-20%, Korea had FII outflows of $8 billion in Feb. So maybe the momentum for Korea is taking it up, and the momentum for India is maybe taking it down or keeping it down. But one big factor seems to have changed, that the FI flows in that month were minus 8 billion. I just read today morning only for Korea, and plus whatever, I don't know for Friday's number, but plus minus 1.5-2 billion for India. So we have been looking at this, looking forward to FIIs. And then we had this big placement on Friday. And I just saw in one report that some 700-800 million dollars won a deal that Vishal Mega Mart or whatever. And according to that, most of it was taken by foreigners.
But my question was quite the contrary. In that, I'm saying that even if the truck were to hit you or your friend or whatever it is, are you still Teflon coated enough to withstand it? Which means that even if this is protracted conflict, can India still do better?
No, it can do better. I'm saying, so everybody will be marked down a little bit, right? Everybody. And from that level, then we'll have to start. But I'm saying you can't preempt these things. We are more interested in what can we do today.
Okay.
So you can't plan for that. You can't think about that. And if it happens, maybe the answer that day would be that, you already been hit for it. What I'm saying is you can't really anticipate these things, but you can broadly be comfortable that at least these things, which is wars and events like this, don't have a lasting impact. Except obviously poor people die and their businesses may, but I'm talking from a stock market in general.
No, so Samir, we've been having a conversation this morning on what are the bunker stocks, and not to be not to make light of the situation, but if I had to look at it from the Indian point of view, if I needed to find a set of investments which are war proof, tariff proof, maybe AI upheaval proof. Okay, so what am I looking at? What am I looking at? Are there enough safe havens in the Indian equity space?
So first of all, why do we need tariff proof? Because the tariff is now in our favor. We are currently, the tariff from India is 10%. And 3 weeks ago, it was 50%. It is not 15 today. It is only 10.
No, so you can imagine. It's going to change. We don't know when it's going to change.
How does it matter? No. It's like saying that the tariff was 50 and now the discussion is whether it will be 10 or 15 or 10 or 18, and we are worried that, oh my God, how much uncertainty. Will it be 10? Will it be 15? Will it be 18? When we know that 3-4 weeks ago it was 50 and we were celebrating the first 25% removal, so it was still 25. And then we were celebrating and counting that now the Indian delegation is going to US and the US guys are coming to India. So we would have been very, very happy that we would have got 18% from here on. And now for whatever period, we have 10 and it can go to 15. And now most of the countries will be at similar levels, because there is no room for the US president to make it beyond 15 on his own today. They have to now separately have those hearings or whatever, or studies to make it more. And even if he wants to take it back to effective 18, because there is no further tension in the sense that India is not saying, oh, sorry, now everything over and, let's start again. So if the rest of the world accepts, which is what Trump is saying, then we are okay with 18, which will come later. But in the meantime, we are 10 or 15. And how can it be that today and this month, every factory in India which was exporting otherwise would not be desperate to send as much as possible, because as of now it is 10, it can become 15, but it won't be only for India.
Okay, so then let me.
You can't look at negatives like this.
Let me remove the tariff from that bucket.
Okay.
Okay.
Good. So next oil.
Crude.
Next, let's go to oil.
Crude and AI.
Oil. No, AI, we know. I've been saying forever. But let's go to this thing first. Crude. So crude Indian prices are controlled. Control in the sense that you are not passing them through directly to the customer. So as far as the customer is concerned, doesn't matter. Now you will say, oh, therefore we will hit for the stock that I own, HPCL, because they will have to take the hit because the government is not compensating them for the fact that today price will be higher and all that. But the reality is now these things have been around for at least 4 or 5 years or more in this current format, that when the oil prices are down, prices are not reduced so that HPCL and BPCL and others can make up. And when the prices are a little up, then they may be on the margin or in reality not able to pass through. But over any 1 year, 2 year period, it's the same thing. It is just that the volatility is suppressed because it is taken on their balance sheet. But we have seen now for many years, more than 2 years, that when prices were down, HPCL and others were allowed to make. So we know broadly it's a running account. It's basically a running account where somebody is keeping a khata कि अभी बढ़ गया oil तो कोई नहीं मेरा minus चल रहा है. And then after some time when oil is down, you will be allowed to make up for that. So, and even if, okay, you say you don't like and HPCL is down, so which other fellow is affected directly as far as the public is concerned? You are not being given that. And if you say in aggregate, if it is for 1 month or 15 days or 30 days, how does it matter in the overall balance sheet of any country? Okay, the India loses $2 billion. So what happens? I mean, these things are too small. So please take it out. Let's go to third.
Third is AI.
Okay, so AI, what is new this weekend? AI has been around forever. I've been coming and telling you forever.
Friday, 4,000 people were removed by Jack Dorsey. Friday.
Because you guys are late. I've been saying for how many years? At least 1 year, that AI will affect India and it will affect the guys who are using and all these things. And maybe 2, 3 of our companies now, people doubt, oh, car trade will be affected, this will be affected. Their weightage is 5%, 2%, 3% in the market. So AI was there on Friday or Monday, and it was there last month. So please drop AI, because AI has been not a new thing which happened this weekend. So we have no problems. But okay, we can call AI. I think AI is a bigger issue than all these things.
Okay, so AI is the biggest issue. Samir, the next one then should be defense. You know, that should be number 4, and number 5, we should talk about gold and silver.
Okay, so those are all positive things we can talk about. Enough of these negative. So defense obviously is good. And the only thing in defense which we have an issue with is that we don't know, because if you want to buy the large companies have all these orders from government which are, of very large things. For example, somebody is making some, I don't know, nuclear submarine, or somebody is making some planes and fighter planes and all that. And those things are so big and so long term that we are not able to get our hands around it. Because if you give somebody a 10-year order and say develop it in 10 years, then first 3 years you go to them and ask them what is happening, and they say no, we are designing it, and then we are making a prototype, and then 8th year we'll get revenue. So I don't relate to all these, because in time some technology changes, something happens. So I like day-to-day kind of thing which I can understand, and we have only one real stock, which is Bharat Electronics, because you can sell electronics to anybody and everybody needs it, and you're not really committed to success of one big long-term project which is going to be really, the outcome or the output will be seen after 10 years and 15 years. I don't relate to those kind of businesses.
Samir, what about gold and silver? Do you think then ETFs makes the best bet right now?
So I am not a commodities, precious metal fund manager. I'm a pure equity fund manager, but personally I own gold. In my total, this thing might have become 12, 15, 13% because of its appreciation. So, but silver I don't have, and I don't relate to it, because gold is seen as a precious commodity and being hoarded and stored by banks, by central banks and or sovereigns or ETFs or family offices. But silver cannot be hoarded. And so you are just piling on as a poor man's gold and then spinning other stories on it, that it is industrial and it will be used in solar panels and it will be used in EV, and EVs are not really growing. I don't relate to it. So let me not criticize it beyond the fact that I have I have negative interest. No, I don't have negative interest, which would mean I'm short. I have zero interest in it.
You mentioned in somewhere in the interview that the February flows picture has looked interesting to you. You've been monitoring it, etc. Yes. Do you reckon 2026 could be a year of turn for flows or global flows into India?
100%. So actually, I have kept one slide here to read out some numbers to you. 1 second, let me see if I can. Oh, yeah, here it is. Okay. So these are numbers from a Goldman Sachs report dated 1 day ago or 2 days ago. Okay. 27th Feb dated. So I'm starting from 23, just to read out a few numbers. So in 23, India got 21 billion, and the total inflows into these are the countries that they have are India, Korea, Taiwan, Philippines, Indonesia, Thailand, Malaysia, and ASEAN, which they are calling emerging Asia. So India got 21 out of 31. Next year was 24. The total outflows from the region were 23 billion. India had 1 billion outflow. In the next year, which is 25, which is a bad year, India had 19 billion of outflows, but the total outflows from the region were 41 billion. And even Korea and Taiwan had outflows, 4 billion in Korea and Taiwan, 8 billion. So in the whole of 25, India had disproportionate, and people got upset that India has, but Korea, Taiwan also had outflows, although smaller than India. And this year, which is year to date, in whatever 27th Feb, Korea's already had outflows of 8.5 billion, but Taiwan has had inflows of 8. So just to give you some context, Korean earnings growth this year will be something like 100 or 120%. And last year also it was some, I don't know, I don't directly do it, I just read, but it was some 50, 60%. Next year, Korean growth will be equal or lower than India, which will be 14, 15%, because Korea's growth has come from these massive profits in Samsung Electronics and Hynix combined, making more than entire India's profits. These guys will, the two companies will make something like $250 billion of profit. But memory prices cannot go up like that. So they'll become regular growth or whatever. That is the assumption. So next year they'll grow 12, 14%. So obviously, after seeing the stock prices go up, whatever, 50, 80% in 1 month, I think, and broadly, the market is up 190% in 1 year. You tell me if the whole market triples. So what do you think the investor will do? New foreign investor, he will not overweight it, he will trim it. Maybe he had some more things he bought and he will reduce it. It's logical that if the market has tripled in 1 year, nearly, you don't need over analysis. It's just obvious it'll flow. And one more thing is, emerging markets are getting money. I think maybe China is getting, which is not in this number, and other. So overall, India has some 15% share. Okay, so give us 10%. If you get $100, okay, you don't give us 15 because you don't like, so give us 10, give us 5. Why are you taking out from us to fund the balance? It makes no sense unless those markets are booming, which Korea is currently booming or was booming, and maybe even today is booming. But it's tripled the whole market. Although it is basically because of 2 stocks or maybe more, not the average stock. India will be okay, but India will permanently get lower money than they could have got. But right now we are not worried about what could or should have happened, but what will happen.
Perfect. Well put. Okay, Sameer, maybe the truck, I hope the truck doesn't come in, and if it comes, your Teflon coating holds you in good stead. I'm sure it will.
No, it's okay. It's okay. We have Bhagwanji also in our side. Thank you very much.
Thank you, Sameer Arora. Always a pleasure talking. I mean, you get a nugget or 2 or 3. Today, I think we got a lot more.
Yeah. We got visuals of the Khalifa.
Burj Khalifa as well. All safe there.
All safe and sound there. All right, let's move on to more corporate conversations this morning. Brigade Enterprises in focus on the back of their expansion pipeline. The company has partnered with Primus Senior Living to develop 3 senior living communities. They've also launched a residential project in Chennai with a gross development value of more than 1,700 crores. Let's get Pavitra Shankar, Managing Director of Brigade Enterprises, on board to speak about the same. Pavitra, thank you so much for your patience as well. I know we've come to you a few minutes late, so thank you for bearing with us as we've covered all of the elements of the day and what has been happening in the last 24 hours as well. But let me start with what Brigade is doing. And I thought it was very interesting that you are one of the few listed players who's focusing on the senior living market very, very closely. What is the kind of potential that you see there? And tell us a bit more about this tie-up with Primus.
Hi, it's good to be here. Thanks for having me. Yes, we are getting back into the senior living space. We had actually done one project about 10 years ago. It came online in 2017. It was a small project as part of a larger township, but it has done very well. Naturally, over the last decade or so, the demographic shift is only further and further supporting this kind of focus on the senior living market. Today, if you look at the senior living organized space in India today, it's about 2 to 3 billion USD, and that number is supposed to more than triple, almost reach 10 billion by 2030 itself. Even in terms of demographics, the population above 60 years old is supposed to double by 2050 itself. So there's a lot of underlying tailwinds for this sector. It's a sector that's not really been focused on by many large players, organized sector. While it may not, have the same kind of momentum as traditional residential in terms of launches and growth and that kind of thing, the longer term requirement is that this need must be served, not just in terms of real estate, but also in terms of the services and operations behind it. It's a pretty complex space. It's part real estate, but predominantly it's about operations, healthcare. There's a hospitality and wellness element to it. And that is why we wanted to do this in a different manner, which is a strategic partnership with operators. The recent announcement was with Primus Senior Living. They've been in the space for a long time. They're really well known, well regarded. They've done many projects themselves in terms of managing and many projects in which they have done the real estate too. So we're very excited. Since the announcement, naturally, there's been a lot of great feedback, a lot of people reaching out and checking to see when these projects will be launched. So we're looking forward to doing that. We have 3 projects currently that will be launched fairly soon in the next couple of quarters.
What is the pricing like, Pavitra? What is the pricing like, and what is, do you think, the potential to expand beyond the markets you are in already?
So a couple of things there, and I'll address the markets first. First of all, the South Indian markets contribute to more than 60% of the organized senior living space. And that is very much aligned with Brigade's portfolio itself. We are predominantly in South Indian cities. And we felt like this translated very much and could very easily, show the growth within our own portfolio. That said, in terms of pricing, today we are looking at the mid-segment, upper mid-segment, which is not very well served either. So we are looking at smaller units as well. Senior living does well in the 1 to 2 bedroom size units. So we'll be looking anywhere in the 1.5 crores kind of range, which today is again, a very good ticket size in the markets that we're talking about. On an operational basis, there is a slightly higher running cost to these projects. So naturally, the residents would expect to pay a little more than your typical kind of maintenance bills, but there's a lot that comes along with it in terms of healthcare monitoring, activities, wellness-focused, engagement, and so on.
Okay, just to come back on one observation you made, Pavitra, and piqued my curiosity. Why do you think South Indian states have 60% of this market? Is it any reason why it's more prevalent in this space, do you think?
Yeah, I think, tier 2 markets like Coimbatore, a lot of parts of Kerala have already got a very high proportion of senior living. These are some of the markets it's already established in these spaces. I think potentially a lot of the healthcare systems that seem to be pretty well evolved in a lot of these states. So we see it predominantly in Tamil Nadu, Kerala, Karnataka, where there is a lot of existing senior living as well. So I think that's the reason why. That doesn't mean that there isn't opportunity in other parts of the country. Certainly there are. But as of today, it's about 60% of the overall organized senior living space.
Okay. Pavitra, good morning. This is Hiral on this side. So let's understand one aspect of this. Now, this is a segment which is really picking up, and it becomes a part of any real estate company's probably strategy that we're seeing right now, especially for a Brigade. How big a segment is this going to be for a Brigade Enterprises? And 2, what is going to be the strategy when it comes to partnerships? Is this going to be mainly in terms of managing partnerships, or is this going to be something more in terms of equity partnerships that you're going to have with partners?
So currently, the 3 projects that we have spoken about are about 750 crores GDV, gross development value. If we're looking at our current portfolio where we are launching new projects, that's not a large proportion. It's anywhere from 5 to 10% of the GDV that we are looking at launching over the next 4 quarters. But it could become a larger and larger proportion of it. It has very different dynamics, of course, than your traditional residential space. In terms of our current engagement, we are handling the real estate and bringing the real estate to it, and Primus will be managing the properties. So that is the current relationship. But in this space also, like, this is a fairly new thing for us, and I expect the space to be rapidly evolving. So as that goes along, we will see what are the more befitting ways of looking at the space. But currently, this is the strategy we have.
Pavitra, good morning, Neeraj here, and all the best for this. Now, I wonder if companies which are predominantly in the areas where the tech space is there would need adjacencies to come up, because the most common narrative, you've been asked this, I'm sure, 5 times already in the last 10 days, but could a slowdown in IT service jobs, or the growth of them, if you will, impact the demand for real estate? Because I'm sure you have a sense of how much of your total sales in the 3 pockets of growth for you predominantly coming from buyers who are in some fashion connected to the IT service sector.
Yeah, this is definitely a hot topic, and we can spend a lot of time talking about this. What we've seen is that despite all of the net hiring, changes in the traditional IT sector, we've still seen dramatic job growth. We've still seen office space getting absorbed at, record rates in all of our target markets: Chennai, Bangalore, Hyderabad. And it is happening in other spaces as well due to the growth of GCCs. A lot of these jobs have moved from your traditional IT services firms to GCC and gone in-house to a lot of companies as well. So, I would say there's no, panic or reason to really worry about this. This is a long-term situation that will play out and keep evolving. We know recently there are discussions about Anthropic and Infosys doing, partnering together on bringing AI solutions to many companies. So, I think this space is always evolving. There will always be a need to bring technology and AI-led transformation to traditional companies. So there will always be that requirement for IT services, is what we feel. And therefore, we are still very confident about the requirement for real estate, whether it is on the commercial side or on the residential side, which naturally follows from growth in the office space sector. So we're going to see how that evolves and develops. But I'm not negative about the news.
Okay, Pavitra, you may not be negative in terms of the demand, but is there a shift in terms of the residential profiles that must be happening within that space, right? Number one. And two, with that data center explosion that we are seeing on the back of AI, does that become a proxy play for a real estate developer like yours? How are you looking at it? Because high growth asset classes that do come in for developers like yours.
Yeah, so the shift that we saw from IT services to GCC and the quality of the tech services being performed out of India, we've seen that grow over the last few years. And that has been reflected overall, not just in our portfolio, but across the board in terms of the price increase and the absorption of real estate that has happened so dramatically over the last couple of years. Within our own portfolio, the average realization itself has more than doubled since 2022. And a lot of this is based on the capacity and buying power from the customers and people working in the sector. There has been a lot of absorption on the premium residential space, which we're actually starting to see that stabilize a bit, which has also in turn created a gap over the last few years with the lack of focus on, say, mid-segment and affordable housing. So I think there is an opportunity there as well. We are also looking at putting out more mid-segment products, since we feel the premium space has gotten a lot of demand over the last few years and is tending to see some amount of saturation. That doesn't mean these sectors won't grow. It's just the pace at which it has grown over the last few years is probably going to, stabilize a little bit. In terms of data centers, again, that is another growing asset class. The real estate piece of it is actually a very minimal piece. The predominant part about setting up data centers is the power and operating the data center again. So it is a space that is interesting, and we're looking at that as well, but nothing to disclose as of now.
Okay, Pavitra, thank you so much for coming in and speaking to us this morning. And also talking not just about senior living, but what we're seeing with IT hirings. Perhaps the upper end of IT jobs will remain secure. It is maybe the lower ones which will go, but over time it will have an impact because the total number of people who are hired and will need houses and will, grow into the EMI space reduces.
Yeah.
Reduces, and I think probably the profile of the buyer might see a shift as well. Someone who was looking at a luxury might move slightly lower.
No, but then the GCC guys will come in and buy
as well. So we'll have to wait and watch, I think, how it pans out for all of them.
Okay, so just an interesting interview here we want to play out for you. Grow is rolling out a slew of upgrades led by AI transformation. The company is expanding Grow Prime as well. My colleague Mahima caught up with the CTO and co-founder of Grow over the weekend. Listen into a slice of that conversation.
To how is AI, going to be the next phase for this fintech space as a whole, right? How is it going to take over in terms of how different products are concerned, how the way people trade, invest, etc.?
See, in my views, I think there are a couple of ways which we are using, to help the customer using AI. One of them is better research. Now, there are a lot of AI models which are available outside. People can do the research, get everything which is available out in the public, but then there is a lot about their own personality. There's a lot about how they invest, what is their portfolio, what is their risk appetite, what is their income, what is their savings. So being on Grow platform, the AI models that we use, they have more context about the customers, which means this model is more relevant for you. So we today showcased GR1, which is our AI engine behind all this. It answers more knowing more about the customers. It is more relevant. At the same time, because we are into a regulatory space, so it is we have built safeguards in it. It is more responsible in that sense. And as you know, AI can hallucinate. At the end of the day, it's a generative model. Based on the data, it predicts what is the next word to say. In that generation, it can generate something which might not be relevant or accurate.
Correct.
So we also focus on making it more accurate for the customers. So I think people can directly use AI to analyze their portfolio, to do better research, to discuss a lot of other doubts about the financial market. They can learn interacting with it, and it's going to be much more fun. The model that we have built, it is not only serving you the answers in the form of text, it is much more delightful. It has visuals, it has more colors, it has more graphs. So it is much more visually appealing for the customers. I'm pretty sure they will enjoy interacting with the GR1.
Got it. How is your adoption of AI different from what your competitors are doing? Because everybody is doing AI right now, right?
You mean adoption within company or for the customer?
Both.
I think we build everything on AI from day one. See, in earlier days, back in 2016 and 18, traditional AI models were there, but they were under the hood. So when we build our onboarding, the KYC, the entire account opening experience, where you can onboard within 2 minutes, it is built on top of AI.
Correct.
So there were models who are processing these documents, validating them at a faster speed. There are models matching your photos with your face, checking the liveliness. So right from onboarding, then the transaction experience, then report generation, the analysis of the portfolio, all of that were there in Grow from day one. We never talked about, we always focused more on the app, which is more visual and appealing to the customer. But end of the day, we have been very deeply using AI from day one. Now LLMs came into picture when end customers also get a flavor of first-hand flavor of interacting with the AI directly. That is when we also built products which are more customer facing, AI products which are customer facing. Instead of using in just in a subtle way, which we'll continue to use, these are directly available to the customer to use. So GR1 is one such example where customer can interact directly. Our customer support is another example. I don't know if you have seen the demo. They do so well.
Okay, so that was the management of Grow in conversation with Mahima. But moving on, if you have to look at new listings on the block, you have CleanMax. The indication was that the subscription, because it was weak, that it could be a weak listing. But right now, if you see a 13% downtick coming in terms of where CleanMax Energy goes, it's actually listed at 960 versus an issue price of 1,053 is what you're watching out for. Let's see how the day pans out, if there is any recovery of sorts on this one. But we'll quickly slip into a short break. On the other side, more conversations lined up with Mark Matthews of Julius Baer. Please stay tuned to NDTV Profit.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Welcome back. I just want to mark the markets before we move ahead and pull up the Nifty intraday. Let's pull up the defense pack. I mean, I would say there is some extent of a recovery. Still about 300 points down on the Nifty. Not saying that all fears have gone, but even the Nifty defense is showing you an uptick of 119 points. If you look at the advanced decline ratios as well, there is some recovery coming in there. IT stocks are showing recovery as well. So it's not as bad as it was. Of course, it's not as if all concerns have ebbed and eased, but definitely what we've been saying, in fact, since Sunday, that you will see a sharp downtick at open and then some recovery is beginning to happen. There are enough stocks now that are recovering from their opening lows, including the OMC pack. But just wanted to point out a post on X which caught my eye, and I thought this was quite something, guys. This is by Jonathan Karl, who's an American journalist. I think he's Washington bureau chief of ABC News. And he says, President Trump told me tonight the US had identified possible candidates to take over Iran, but they were killed in the initial attack. The attack was so successful, it knocked out most of the candidates. Trump told me it's not going to be anybody that we were thinking because they are all dead. Second or third place is dead. It's just astonishing, the scale of information that they had about who's going to be in that room with Khamenei, and maybe not the amount of precision required to back that information, because if this was a regime change that they were trying to put in place, they have knocked out second and third
as well.
It's just astonishing. Yeah.
I mean, what next is going to be the question what everyone is worried about now.
Yeah, I think that's anybody's guess. But of course, the other big interview is the SEBI chairman conversation you had, Neeraj.
Yes, Tamanna, and of course we'll present the whole interview later in the day today, but here's a small sneak peek into arguably the biggest exclusive, wherein Shrimi and I speak with the SEBI chairman Tuhin Kanta Pandey on various topics, including his tenure so far, finishes 1 year or has finished 1 year, and how does the chairman plan on inviting more FPIs, where he's answered all of it. But here's a small slice of that conversation. When you took over, sir, I would presume that the docket for change was fairly loaded, and you've enacted a bevy of changes. If I were to ask you to think of how would you rate your tenure on the first 1 year, what would you say? One or two things that have been landmark for you, and one or two things that you, on hindsight, you might think maybe you could have done it differently.
Okay, I think first of all, it'll be difficult for me to self-analyze, except to say that the year was quite a difficult one in terms of the challenges that it offered. Normally the markets do require a certain amount of stability of policy. Of course, markets are also used to all kinds of uncertainties as well. But particularly the year gone was particularly beset with huge amount of uncertainty arising out of geopolitical developments, not only the wars and crises, but also tariffs in particularly, which were actually impacting a big deal, vast segment of Indian economy, Indian capital. On top of it, we of course had, as I said, that this challenge of a perception that we are over-regulating, and therefore we also had to really clearly put together a collective strategy of, optimum regulation based on, as I said on the first day, 4 T's, which is transparency, trust, and technology and teamwork. These were certainly enablers to achieve this optimum regulation. And all that I can say is that the teams, that is internally, that SEBI, that we have, and also the teams outside, which is the committees and the market participants in the industry and the investors associations and the proxy advisors, all of them have actually helped to put together a series of reforms, which I can call it, while we had one of the best primary markets in 2025 as number one in the world in terms of IPO, we also have year of reform in terms of regulations and simplicity and ease of doing business.
Just an extension or a related question, actually, wanted to ask that there is a perception that under your leadership, SEBI has taken a facilitative approach, of course, ease of doing business, clearing files faster, but critics, arguing that this may kind of build a latent risk. How do you want to respond to that?
So I think ease of doing business is not equal to more risk. This is a myth. Actually, the risk is the risk. Risk is to be measured in, the way risk is measured. Ease of doing business is where you are trying to achieve the same thing with less friction. So you are not really, reducing the goal. You are only saying that your goal can be very well done by a simpler way. If I may ask you a question, like if you have something overlapping regulations, more intensive, more micro regulations, how does it help risk management? Because you may be only thinking that you are managing risk, but you possibly could be creating more risks. True. Because if you are micromanaging many things, you are not perhaps paying your attention to the more riskier things in hand because you are busy micromanaging.
And don't do that. Well, that, a specific case notwithstanding, I think this interview has a lot of insights into what could the thinking of SEBI be. So, full play out later in the day at 1 p.m. Do tune in for that. Now, markets, at least Indian markets have shown a bit of recovery from the lows of the day. I believe rest of Asia is not doing that badly either. Oil isn't doing that badly either in terms of it's not really rallied too much after having that initial pop. Mark Matthews, who looks at this whole geography and per se the intersection of maybe geopolitics and equities as well, joins in right now on the show. He's head of research at Asia at Julius Baer. Mark, thanks so much for taking the time out and being with us. Yet another conflict, and one which the timelines predicting how long it lasts might be a futile exercise, but it involves a nation which is thick and center of the whole oil trade for the world. How do you see the implications of this near term and medium term? I'm presuming predicting long term is very, very difficult.
If we look near term, you can study what the S&P and the oil price did after the U.S. attacked various countries. And if you go back to the first Gulf War, 1991, strange but true, a week later, on average, the S&P was up and the oil price was down. I can't really explain it, but that's the data. A longer term, if I was to say 12 months out, with these kind of events, really it is about whether they have an impact on the economy or not. There are about 40 major political events that we can study that have happened since World War II. And it's pretty clear that the ones where there was an economic impact, the market went down. And if there wasn't an economic impact, then the market didn't go down. For example, President John Kennedy was assassinated in 1963. A terrible thing. But 12 months later, the S&P was up about 25%. There wasn't an impact on the economy. Now, 10 years later, 1973, the Yom Kippur War, 12 months after that, the S&P was down 45%. Because of the OPEC embargo that followed the Yom Kippur War. So what I would say is the same holds true today. If this has an economic impact, the market will go down. And if it doesn't, it won't. I don't think it will have an economic impact. I have no huge basis for saying that, but it's my strong inclination.
Mark, let's go a little into detail on what the expanse of that economic impact could be on various asset classes. Let's start with crude. That's the front and center and obvious one. Will the fears of oversupply eventually drown out concerns of supply constraints in the shorter term, whether it is with the blockages in the Strait of Hormuz or whether Iran's oil supply going offline is another one of those concerns?
Yes, I think so. I mean, the oil price is already showing you that people don't think this is going to be a long-term problem because, what is it now, $75, something like that? You may recall when Russia invaded Ukraine, it went up to $120. So the market thinks that that the supply is big, longer term. And by the way, inventories are very high in Asia and in Europe. Europe also, through the Red Sea and the Suez Canal, has a direct connection to Middle Eastern oil. The fact that I want to say the Straits of Hormuz are shut down, obviously, but that there have not been attempts by Iran to destroy the oil and gas infrastructure of the Gulf nations in the Straits of Hormuz, and the I should say the Persian Gulf is, I think, a sign that they're not going to. I think they probably would have tried by now if they were going to, and that was the major concern. Less so an actual closure of the Straits of Hormuz, which has never happened before. There's hardly anything going through there now, but that's really because of the skyrocketing insurance prices and not what the Iranians are doing.
Mark, good morning. So we're talking about crude. How are you looking at the resilience in terms of Asian markets, if you have to specifically look at India as well? Because are we seeing a reset and rebalance right now? And is the view going to be that probably then this will be an opportunity to buy on dips and start building from here on?
I doubt there's a whole lot longer term that will come out of this that relates to India, except if, I want to say, and it's a distinct possibility, Iran becomes eventually a U.S. ally and really ramps up its production, which of course could be very big. And the U.S. would be directly and indirectly controlling about half the world's oil output. And Trump wants a low oil price. Then if you have a low oil price, of course, that's good for India. But my sense is that the relationship between the Indian stocks and oil price vanished a long time ago because the country's become much more efficient. The economy's become much more efficient. So I don't see really this being anything that relates very directly to the Indian stock market.
Mark, just one more question. And I understand you might be short on time, but the 2025 and the year thus far of 2026 has been marked by superb performances by the AI-led markets or economies of Asia as well, Korea, case in point. But having rallied so much so quickly, could there be a pause due to valuations or due to hyper growth not looking so strong ahead? And therefore, could global funds move out of some of these nations or go slow into these and go into the other markets which haven't performed at all for the better part of 2025, relatively, let's say, like India?
Oh, the short answer is yes. I think Korea is extremely overbought. The deviation from its 200-day moving average is the most extreme it's ever been. I don't remember the number, but I think it's upwards of 30%. No, much higher than that. Excuse me. I just don't recall right now. But anyway, Korea is extremely overbought. People have lost sight of the fact that memory chips are essentially a commodity. Their prices go up and down. Their prices are up 50% this year, which is why Korea has done so well. Samsung Electronics and SK Hynix, pretty much 100% of their profits are coming from memory chips now. But those prices I don't think can stay high forever because eventually you'll get demand destruction from the traditional buyers like an Apple or a Nintendo or a Dell or an HP. They'll simply not be able to buy so many memory chips, or they'll find workarounds. So anyway, yeah, I think Korea is extremely overbought. And I do think that India's had a nice time to trade sideways and become less expensive. And I just feel that India is a story that remains what it is for many years to come. It's a very good long-term story. So I'm not fretting about it. And yes, I think it can do well.
Mark Matthews, understand we have to let you go, but thank you so much for joining us for this quick but very informed interaction. Really appreciate your time.
Thank you.
Guys, as we wrap up, there have been two big voices today saying that they are very constructive about flows into 2026, never mind the conflict, etc. Simply because of market forces. India is not as expensive now, and Korea and others which have attracted flows are very expensive. And the flows could turn. Could be interesting 2026.
Yeah. And if that flow turnaround happens with FIs coming in, I think that's going to be the biggest fillip that we will see, and a lot of them betting big in terms of India's story for 2026.
Let's hope we have front-loaded all of the negatives by the time we've hit the first trading day of March.
Yeah.
That's all we can hope for. And of course, the way the markets have recovered, not dramatically recovered, but definitely off its lows, is giving some impetus there to that thought. The Nifty still under the 25,000 mark though. We'll take a very short break, but stay tuned. Ask Profit up next, where we answer all of your queries pertaining to your portfolio. Don't miss it.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Rock on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back to Ask Profit right here on NDTV Profit. My name is Puneet Zaveri. With me is Mahima Vajrajani, and over the next hour or so, we'll try and solve all your stock-related queries as well. But important day for the markets, where we've seen correction post the Iran-Israel war over the weekend, and hence stocks are down in trade today. But it's important to focus on one key stock before we go on and solve all your stock-related queries, and that's Mahindra and Mahindra. Now, at a time where the market is looking for some more ideas and some more stability, this company continues to provide that with its robust sales performance in the month of February, up 20%, and the highest in the passenger vehicle space as well. Now, to discuss actually what has led to the strong momentum, will it continue given the strong base? I'm now being joined by Mr. Nalinikant Golagunta. He is the CEO of the automotive division at Mahindra and Mahindra. Mr. Golagunta, thanks so much for joining in today. Largely my first question, because a very strong sales growth, over 20% in this month. We've also seen that momentum continue for FY26. Now, with 1 month to go, you've crossed 6 lakh mark for the first time, on set for 6.5 lakhs as well for this year. Could you give us some perspective of what's leading to that momentum to start us off with?
Yeah, firstly, strong month overall. We delivered slightly more than 60,000 SUVs at about 19% growth. Industry overall is growing about 11% or so, our projections say, and then even SUVs itself within this 18%, so we outpaced that as well. 2-3 factors, of course, GST is a significant factor driving the demand growth as well. But we also had 2 major launches which came up, 9S, which happened in late November, and then we had 7XO in early Jan. Both of them put together was also driving good growth for us in Feb. So we are quite optimistic this growth will continue. We are not seeing any reduction in demand that we see, whether from a Scorpio or Thar or the other products, beyond just the new launches as well.
Mr. Golagunta, that's very strong commentary, of course, but also on the bookings, you almost got 93,000 bookings at the start of January for both the 9S as well as the 7XO. Could you provide an update on where are we with that, if not a direct number, at least some quantification?
Yeah, it's hard to give an exact number because we are also delivering vehicles at great speed at this point in time. So there are lots of ins and outs. I think the way I would characterize it is our walk-ins and our daily bookings, if you look at it, are quite strong. They are higher than what the original 700 was. So definitely there's some upside there from 7XO demand that we see. This goes beyond the bookings that we talked about, which came in the first day or so, right? So the second piece is 9S is doing very well as well. In fact, if you see our EV portfolio, this is the first time we have crossed 6,000 volume. Our wholesale billing was more than 6,500 for the first time. So I think very strong, and that was supported largely by the 9S coming in as well. So our hope is that that this will continue, the momentum will continue on the SUV front. 9S would be a core part of it, but 9E is doing quite well as well, and so is BE6.
So in that case, Mr. Golagunta, let me ask a specific question on the 7XO, because the earlier model, the 700, used to hover around between 10 to 12,000 at the start of when it was launched about 4 years ago, faded down a little bit at the end. But could you give us some perspective if that momentum has continued with this new model launch as well?
Yeah. So 700, if you look at it, we were averaging around 7,000, 7,500 in the later part of the life cycle. Of course, earlier in the life cycle, like you said, we were more in the 8,000, 9,000 range. The capacity is 10,000 at this point in time. Of course, we have shared that some of the capacity with 9S. So overall put together, it's about 12,000, 13,000 capacity between the products. And our effort is to make sure there's enough fungibility between 9S and 7XO, that depending on which way the customer is moving, we'll be able to move that as well. So net, it's about 12.5 to 13,000 capacity between the two of them.
The interesting part about, as an industry is because both are 7-seater models, the 7XO as well as the 9S, you're offering those in the same showroom as well. And very interestingly, in our previous conversations, you have highlighted the fact that there has been a customer walking in for the 7XO, moving into the 9S post a conversation with your personnel at the showrooms. Could you give us some perspective if you see that happening yet as well, and what is it that right now, post both these launches in the month of January as well as in November last year, that you see now with the customer at this point of time?
Yeah, so there's two types of customers walking in. One customer is somebody who was 7-seater in their mind. And a lot of these guys come for the 7XO. And then it's a choice between the two products. We offer test drives of both the products. The teams are trained to talk about both the products so that it's a seamless experience for the customer. And we let the customer decide one way or the other, whichever the way they go, right? So this is generally the 7-seater segment itself, if you look at it. The other set of customers who walk in are guys who have very clear view that they want to buy an EV. They might come to see a 9S or they might come to see a 9E. And then really it's a trade-off between the 9S and 9E. And we are seeing that there are folks who still prefer a 9E given the design quotient of that is higher. It's a product which is very highly stylized. So that happens as well. But there's a set of customers who come specifically for 9S. They want the EV experience at the same time they want a 7-seater and they stay with 9S as well. So it's a seamless experience if you ask me. And all these three products are on display between and the entire team is trained to talk through all these products as well.
Just a quick one on the 5-seater SUV market. Then you spoke about the 9E, but the company is targeting the 12.5 to 20 lakh, that price range in the SUV space. Now you have the Thar there. It has done well for you as well, and a differentiated strategy that you go with there. So is that still roughly 45% of the market, and how well have you done essentially in capturing that at this point of time?
Yeah, I think if you look at it, you're right. I think the ROX taps into that segment quite well. Overall, Thar portfolio itself, we are averaging around 11,000 or so, plus minus 500 this way, that way. And you're right, Star Edition has done well. It's actually gotten good traction. We're in the process of looking at increasing some capacity there as well. So that should help us on the ROX front. But you also have to remember that we showcased a new IQ portfolio in August last year, and that taps into that same 4.3 meter space as well. And that should be up and running in probably the late part of FY27 or early FY28 itself. So somewhere in the first or second quarter of calendar year next year would be a time would be bringing that in, as we have a brownfield capacity being built for that in Chakan as well. So that will tap into that segment as well.
But would it be safe to say, Mr. Golagunta, that at this point of time the market is around that 45% between 12.5 to 20 lakhs, or has it gone above 50%, given that we've seen multiple launches from competitors, from yourself included, as you mentioned as well? So would that be a safe statement to say according to you?
No, not necessarily from our perspective. In fact, what I would say is the folks who are starting to migrate from that segment to walk into the 7XO segment as well. We're seeing a lot more of that. They love the optionality of having a 7-seater and the value proposition they're seeing with the AX5, the AX7 of 7XO is doing very well for us as well. We see some of those customers graduating to B6, for example. That's a very, very strong 5-seater product in the portfolio as well, and the 9E to some extent. So I see it as a customer walking in and trying to see what is the best value prop they want to go after. It is not necessarily the length of the vehicle or the price. It's really what do I get for the price and what's the value I'm delivering, what I'm getting for that. So that's really what they're focused on. So Our view is give the customer the choice and let them decide. We want to make distinctive products. They're not run of the mill in that sense, and each one has its own audience. And we are hoping that at least one of those attracts the customer.
Well, Mr. Golugunta, thanks so much for joining and giving us perspective for M&M in this particular month, and we wish you the best. Always look forward to our next conversation. But that's M&M, very strong numbers, and let's follow the stock as well. It was under pressure given what we've seen in the markets today, down about 1.6%, and the last time it came back to this level, we saw some buying at this point of time. So very interesting. We continue to monitor this as well. But Mahima, over for the market especially, we have seen pressure today and largely visible in the benchmarks as well.
Right, absolutely. I think, but still there's been a cool off since we started. The implied open, of course, was suggesting scary numbers, but right now the Nifty 50 is down by about 1.3%. Of course, this downtick was expected considering the developments that happened over the weekend on the geopolitical side. You have Nifty Bank also in the red, down by about 1.2 times. Let's pull up the Nifty 50 heat map quickly. In terms of where the top losers go, L&T, Interglobe Aviation, of course, on the back of crude oil prices, down 4%, followed by something like Asian Paints, again an ancillary of crude. Maruti Suzuki, Tata Motors, Bajaj Auto are some of the other names. But on the flip side, something that's holding up is BEL, doing fairly well, up by about 2%. With regards to where the sectors go, let's try to quickly pull up that heat map and see as to what sectors are doing right now. All in the red except for Nifty Defence for obvious reasons. You have oil and gas tanking the most on the back of OMCs, auto, followed by realty, PSU banks, as well as the consumption pack. Let's quickly try to pull up the mid cap 150 and the small cap 250, equally under pressure, almost in line with where the benchmarks go. The mid cap 150 down by about 1%, the small cap 250 also down by about 1.3%. So for a change, the broader end of spectrum is not performing worse than where the benchmarks go. So that's with regards to where the markets go, but let's welcome in our guest for the day as well, Saurabh Jain, Equity Head Research at SMC Global Securities, and Miran Vaishnav, CMT at MSTA, founder and technical analyst at Gemstone Equity, joining us now. Welcome to both of you, gentlemen. And in fact, I'll take up the first question on M&M itself. Puneet was talking to the management, and this is from Mr. James, who's writing in from Hyderabad, asking about M&M. He's bought at the rate of 3410. From a short-term perspective, he wanted an advice on this one. Milan, a very good morning to you. I'll come to you on this one. What are the charts indicating?
Yeah, very good morning. Charts are weak as such, but they continue to maintain their primary uptrend. So the best thing that I could suggest here for M&M, that one can stay invested if anyone is invested in that stock right now. But so far as taking fresh entry is concerned, I think we should wait for the stock to go above 3,500, and then we can initiate any fresh exposure into that.
Got the view, Milan, and welcome to the show. But our first caller for today as well, and viewers, you can start sending in your queries on the number that's flashing on the top of the screen right now as well. But Sanjay dialing in right now from New Delhi. Sanjay, good morning and welcome to the show. What's your query?
Yeah, very good morning, and thank you for taking my call. And I was watching every day at 8:55 to your channel, and today morning I heard about one of the analysts was talking about the Bharti Airtel is a very safe bet, and I took 100 shares of Bharti Airtel at the opening of 1850.
Okay.
My term view is for a shorter period, and I was quite impressed by the listening that it is a tariff proof, it is a war proof, it is AI technology proof, and the script is in a bunker which is nuclear bomb proof, I feel so. So I took this trade. Right. And my view is for a shorter period. Kindly do guide me for a 3 months period.
Got it. Well, Sanjay, thanks so much for firstly tuning in the morning as well, and we try to shell out some good companies amidst what we've seen in terms of the geopolitical stress. But Milan, let me come back to you on Bharti Airtel. Do you think for the next 3 months, Sanjay, buying it at 1850 is a good idea?
Yes, it's not that bad an idea, but he should also not stay in that belief that it is nuclear blast proof. So having said that, I would suggest Sanjay ji to maintain his call. That is 1850 as his stop loss, because the reason is that the primary uptrend has got disrupted. The stock may stay under some range consolidation. Therefore, it would be safe if he maintains his cost as a stop loss. Besides that, he can stay invested.
So that's the view coming on Bharti Airtel. The next question is from Sunita Rai, who's writing us from Bengaluru, asking about what is the right levels to make an entry into something like a Sonata Software. Milan, I'll stick with you for this one, and then I also take this up with Saurabh as well. Firstly, the right level to enter, and then I'll go to Saurabh on the fundamentals.
First of all, right levels to enter, I would not recommend entering Sonata Software at all. The reason is that the stock stays under strong corrective pressure. The only thing is that it is slightly oversold and might see some minor technical rebounds. But that reason is not an enough reason to enter into Sonata. So in my opinion, entry is not advised at this point in time.
Saurabh, would you also recommend the same thing from the fundamental perspective?
Yeah, absolutely right. In my opinion, also it is best to avoid company like Sonata Software. I think it is a very small software company, and overall the view with respect to the IT industry is per se negative. So I would recommend I avoid.
Okay. All right. The next question that we have is from Mr. Vishwanatha Reddy, who's writing us from Andhra Pradesh, asking about IOCL. Now, it's the right question to ask, at least for today. He's holding 649 shares at the levels of 61. Shall I sell now, considering the current disturbances in the West Asia? Saurabh, considering that margins will be under pressure for all of these oil marketing companies, of course, this will be short-lived, right? But crude spiking, and considering all of the situation right now globally, would you recommend a sell or be a patient investor and continue to hold?
View is positive on the OMCs. This quarter also, with all the companies reported good set of earnings. There was a margin expansion case also. But yes, with the rise in the crude prices, their costing will be higher, and maybe these companies will face problem with respect to the gross refining margins. But it will be a short-lived. I don't think so. This war will be here for long. I mean, like the war we have seen with the Ukraine and Russia, which is going on since last 4 years. So in my opinion, long-term view is positive. But yes, if you want to book profits in the short term, you can go ahead.
Got that view, Saurabh. But another caller coming in from Amchi, Mumbai itself, and Hitesh has a stock query for us. Hitesh, good morning. Welcome to the show. What's your query?
So it's 3,000 quantity at 700. My buying price is 700.
Sorry, Hitesh, I couldn't get that. Could you try repeating your question once again?
Yeah, I have Solar Industries, 2,000 quantity. My buying price is 700.
You bought it at 700. Okay, so you are you are in gains because stock's trading at over 14,000 rupees right now. Do you mind, Hitesh, if I ask you when did you buy it? Because you're almost up 200, 2,000x at this point of time of your investment.
I know, because 10 to 16, my son was born, so I just kept it. I just want to keep for the long term, basically.
Well, Hitesh, firstly, many congratulations. You're sitting on profits for almost 2.6 crore rupees on one particular investment, and Solar Industries definitely, while an expensive stock, you bought it at 700. So many congratulations. But Saurabh, let me come to you. Solar Industries, as I was mentioning, it's still expensive from the valuation standpoint. But since Hitesh has bought it at just 700 rupees per share, should he continue to hold, book some profits right now? What would you recommend?
I think, in my opinion, I think he should continue to hold. If you look at the numbers are really good. They are posting good set of numbers, and it is the only company which is into the explosive, having multiple sites of operation and supplying material to the different countries. So it has a diversified portfolio with respect to the domestic and international arena. And the possibility of good growth, lies ahead. In my opinion, I think the stock can reach its 52-week high in a matter of year or so. So, in my opinion, I think he should hold.
Okay. The next question is from Satyan, who is writing us and asking about CDSL. He's bought it recently from a short-term perspective at 1326. What he's asking is that it's now trading below 1250. And whether he can shift to something like an ICICI Bank booking his losses, or should he stick to CDSL for the next 1 to 4 months? Milan, what would you suggest?
Yes, I think he should stick with CDSL for the time being. And so far as his current holding goes, I think he should maintain a very strict stop loss of around 1190 on it. And if that gets triggered, then he should make an exit from CDSL and look elsewhere. So as long as CDSL stays above 1190, I think it's pretty all right to hold. At least what I'm expecting that he will that he should get his buying price back. He may or may not make much gains, but I think he should be able to come out with minimum scratch.
Got the view, Milan. But the next question and next caller actually dialing from Tamil Nadu, Nagarajan has a question for us. Nagarajan, good morning. Welcome to the show. What's your query?
Yes. Sir, I bought a stock of RM Drip and Spindles, 2,500 numbers, 20 days back.
Okay.
At rupees 106.
Okay.
Now, every day the stock is 10%, it's down. I'm unable to sell. What should I do now?
Got it. I really doubt if Saurabh's covering this stock, but Saurabh, just trying my luck, RM Drip Sprinklers, do you know what's happening with this particular counter?
Not in coverage.
Milan, I know it's in a everyday downtake, so I'm guessing you might also not have a view, but any view on this counter?
No, it's not about everyday downtake. If you look at the charts, there's pretty much nothing to analyze because from say around 80 rupees to 120 rupees, it has gone up in circuits. From 120 to back to 60 rupees, it has come down in circuits. So it's a typical what we call operator-driven, low float, low volume kind of a stock, something that one should not be holding in our portfolio at all. I don't think the gentleman who has sent us the question will get an opportunity to exit, but if at all he gets, as and when he gets, he should move up from this.
That's a strong conviction coming on the counter. In fact, there was, of course, a corporate auction also for this particular counter with bonus issue of around 5:7 that they had announced over the weekend. But moving on and shifting focus to our rapid fire round, Milan as well as Saurabh, you both know the drill. Try to keep your answers as short as possible to just buy, sell and hold, and we'll try to ask as many questions. The first one is on SBI. Praveen from Hyderabad wants to know if we can continue to hold this for the next 2 to 3 years. Saurabh?
Hold.
NIIT bought at 100 rupees by Manju. Milan, should she continue to hold this counter?
No, my suggestion would be to exit.
Okay, I purchased L&T this morning. Bhargav is asking this question. Considering everything that's happening around the global uncertainty, should he continue to hold or sell? Saurabh, your view?
Long-term hold.
Vedanta bought at 736 million for the short term via viewer. Should he continue to hold these shares?
Vedanta bought it. What price?
736.
Yes, please hold on.
Okay, can I enter into BSC right now? Ishwar from Kolkata is asking this question. Milan, your view on the charts?
BSC, no, I would not recommend him to enter. He can enter only above 2800. He should enter above 2800.
Okay.
Irida bought at 178 by Harsha. What would you recommend, Saurabh?
Try and exit.
Okay, Anantaraj is the next one. Arun from Hyderabad wants to know if he can book or hold profits. His buying price is 557 and 65 shares is what he has. Milan, your view?
Hold on to Anantaraj.
Karur Vyasa Bank bought at 336 but almost 2,500 shares by Geeta. Saurabh, she's currently sitting in a loss. What should she do?
Hold for long term.
Okay, defense as a pack, 5 lakhs to invest in. Miss Venkatramani is asking this question. Where should she go and park her money? Saurabh, your view?
I think you must buy a basket including HAL, BEL, Bharat Dynamics and all.
Got it. Well, Procter & Gamble bought at 12,015 rupees for the short term by Sunny. Milan, what should he do?
He should hang on. He should get his cost back.
Okay, Max Life is the next one. Short-term target for this one. Vijay from Chennai is asking this question. Milan, your view?
Is it Max Health?
Max Life, yes.
Yeah. So what exactly is the question? I missed it. Sorry.
The target for this one from a short-term perspective.
At least 1100 to 1120 is what we can expect.
Savita has bought into ITC Saurabh at 405. Should she average down right now? She's holding 1800 shares.
Don't average, continue to hold.
Okay, Irida is the next one. For a period of 1 year, can Farwan continue to hold this? Milan, your view on the charts?
Well, not for 1 year, but they should hold for a few days, maybe 2-3 weeks. Maintain a stop loss of say around 115 rupees and see how much it, because ultimately they will have to exit.
Got it. Okay, so that's the view coming in on IRDA. But with that, it's time to slip into a very, very short break. But we'll be right back answering all your queries on the other side. So do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Welcome back to Ask Profit right here on NDTV Profit. Well, it's time now to just dive very quickly into the F&O market setup, and largely, if we can pull up the Sensex chart, it's visible that we have been under stress today, led by global factors. So stocks like L&T, Indigo, as well as Maruti are the biggest losers. L&T now down 5% given the exposure to the Middle East in terms of order inflow. Something that we'll be watching out for. But BL, clear-cut winner there in terms of the Sensex heat map. The BankX also provides a similar picture as well, because while it has been an area of strength for the markets, we are seeing a broader market sell-off across key indices as well. Now, HDFC Bank, Federal Bank, as well as amongst the other key banking indexes like Bank of Baroda is also down in trade today. In terms of stocks, in terms of long build-ups, you are seeing the defense plays, so Solar Industries as well as Hindustan Zinc. While Hindustan Zinc, of course, not a defense play, but a safe space to hide at this point of time is seeing long build-ups. In terms of the short covering, we are seeing BEL being one of the key candidates there, and so is Muthoot Finance. Post quarter 3, the stock has been in a volatile space, but coverings of short today is visible in this particular counter, while longs being unwinded in terms of Petronet, LNG, as well as Motherson Wiring. Motherson, hasn't recovered in that sense. So longs had built up on this counter, and now yet again seeing in terms of those unwinded. And short build up definitely on a couple of plays that we just spoke about in the Sensex, both Indigo as well as Larsen and Toubro. So we'll continue to monitor all of these counters and get you more perspective on the FNO setup as well going forward throughout the day. But let me go across and take the next query for now. This one's coming in from Divya. She's bought Suzlon actually at 55, currently sitting on a loss, asking what she should do right now. Should she exit, buy into this dip right now? Milan, what would you recommend? Ajit, sorry, pardon me, Ajit, but we had Milan on the show earlier. But Ajit, welcome to the show. What would you recommend?
Yeah, good morning, Puneet. So what we are seeing right now that Suzlon is gradually drifting lower, and in today's session we have seen a massive break in terms of the long-term moving averages on the weekly chart. So 42, 43 was a zone basically. It's just that we are again witnessing a recovery or rebound attempt. So where we close today is going to be important. Fresh buying, I won't recommend. Existing position also one should not add until we see a sign of decisive reversal. So as of now, indications are mixed, and one should refrain from any fresh position like what we have recommended. For existing position also, 37 on the closing basis should be the stop loss. In case of recovery, 45 is going to be the first area of resistance now.
Okay, all right. So that's the view coming in on Suzlon. The next question is on ONGC. Aditya is asking this question. He's bought at the levels of 280. 122 shares is what he holds. He wants to know as to how long before this touches 300 and also the right level to enter now for more 122 shares. Ajit, what would you recommend on the charts?
After today's uptick, we feel that consolidation is more likely. But yes, the tone is positive, and 300 is just around the corner, because that's the zone basically last time we saw that stock witnessed some profit taking and corrections. So definitely one should consider booking profits around that area. At the same time, adding to your existing position, one should wait for any dip. In case if it witnesses any dip, let's say towards 275, then it's a good zone to enter. For the entire position, your stop should be at 268, and 300. It might take 2 to 3 weeks, probably, in case if this momentum extends.
Got that view, Ajit. But Ajit, coming back to you actually on NTPC, another short-term query that we're getting on this counter. Our viewer, Sujata has bought her at 370 rupees per share. She's been holding on to this counter for a while now, and asking what should be the short-term target, or should she exit? What would you recommend?
So after the initial decline, Puneet, we are again seeing the NTPC is trying to hold the short-term average. This is a good sign. Means this shows that the momentum is still intact and bulls are not leaving this anytime soon. So with stop at 365 should continue to stay put. Upside gradually it can extend towards 395, 400. So in case if we can spend, let's say, around 1 month to 2 month kind of a time horizon, you can continue to hold our positions.
Okay, all right. So that's the view coming in on NTPC. The next question that we have is on NHPC, and this is from Sunil, who's writing us from Visakhapatnam, Andhra Pradesh. He wants to know if he can hold exit from a long-term perspective. He's got 3,200 shares at an average price of 90. Saurabh, what would you recommend? He's sitting on a loss of around 2.8 lakh rupees.
we are positive on the utilities, specifically talking about NHPC. They have good capacity expansion plans. Some of the capacities named Parabati and all will get commenced soon. So part of it has already commenced. So going forward, I think there will be good growth in the top line and as well as in the profitability. On the valuation side, it is on the comforting side, and also it is a good dividend play. My view is hold for long term.
Got that view. Saurabh, the next question that's coming in, and this one we've been getting it quite repeatedly on Ola Electric. Now, Ram Charan from Hyderabad is asking if he should buy into this counter right now. Now, generally at this point of time, Saurabh, I would come to you, ask for a fundamental opinion, but on the stock, the challenges are well known. Do you think that at the current market cap, roughly EV to sales of 2 times, a dwindling market share in that sense makes it a decent play, given the risk reward? What would you recommend?
Betting the odds, there have been several problems with the management and also their sales numbers also, and the profitability is not in sight. So I think the market has given hopes on the stock, and we are seeing continuous amount of selling in the last few quarters and all. So there is no point in chipping it. It's best to avoid.
Got that view, Saurabh, but and definitely a tough one. Down almost 57% in the last 12 months from the highs of 157. I've actually stopped counting the percentage of how much higher it's fallen from, but definitely one which has been a pain for investors. But another counter that we focus on, and this one, a caller now from Tamil Nadu, is the Shri Nathan is calling us for a stock query. Shri, good morning, welcome to the show. What's your question?
Sir, I bought TMCV shares at 460, sir, 950 shares, sir. Okay. Can I hold or sell, sir?
And you bought for the long term, Shri?
Short term, sir.
Short term, got it. Ajit, he's almost in a profit of 46,000 right now. Would you recommend him to exit his position, given that we've seen a massive build up led by fundamental factors as well as the others? But what would you recommend?
So Puneet, it's still holding strong, means we are very close to the record highs after the initial dip. We are again seeing that the stock is gradually inching higher. So this shows momentum and strength as well. So in my opinion, he can continue to stay put. Trail is stop loss to 490 now, and the moment we cross, let's say 510, 512, he can extend his stop loss to 500 levels and keep on trailing the stop losses on rise. Means the moment we see like 3-5% kind of a gain on every uptick, he can trail his stop loss by 2% and continue to ride the rally.
Okay, the next question is on Tejas Networks. Wants to know if I can book profits at the current levels. Is the question from our viewer. He's not, of course, given us his name, his or her name. He's bought 900 shares at the levels of 411. So the stock is currently trading at 492. Saurabh, what would you recommend? The stock is up 30%.
View is negative. View is negative. It is falling. It was falling in the last 1 year or so. I'm seeing this as a bounce because of the war like situation globally and some buying in the defense pack, and that is why the stock has gone up. In my opinion, I think it is an opportunity to get out.
Opportunity to get out on Tejas Networks. Then got that view, Saurabh. But next one, it's on the defense pack. Now this one's a short-term question, Ajit. Our viewer is asking actually if he can buy into any of the defense names, given the comfort that we're seeing in that sense from the war in these companies. But what would you recommend? Anything that's on your radar?
So Puneet, BEL, data pattern, both looks strong. Means in fact BEL, if you see that the stock is currently holding around long-term averages, around record highs as well. So everything looks conducive to this overall positive tone to continue. So with stop, let's say at 435, 439, we can continue to look for fresh long position even at current levels. Above this 460-65 zone, we can inch toward, let's say, 480-85 also. So risk reward is also favorable. For data pattern, a similar kind of broadening formation, the stock has reached to its record high, so there could be a bit of a consolidation. So one can accumulate in this range of 3100, 3200 with stop at 2900 and positional target of 3500.
Okay, all right. So that's the view coming in on the defense pack, but we also have one more question coming on Bharat Dynamics, and this is from Prashant, who's calling us from Bengaluru. Prashant, go ahead and ask your question.
I'm currently holding 375 unit at an average of 1592.
Right.
So my question is, should I buy more to average or should I hold or exit?
Okay. Got your question, Prashant. I'll take this up with Saurabh. Saurabh, he's sitting on a loss of over 1 lakh rupees is what we're seeing. But you did recommend this counter as a basket of stocks of defense, right? Do you think averaging out at these levels will make sense?
Not advise him to average the stock, but at the same time, I would recommend him to continue to hold. I would rather suggest him to buy the some other stocks in the same pack. For example, the companies like solar industry that we have discussed.
Mayank Yadav has the next question for us on WhatsApp on Maruti Suzuki. He's bought it at 15,035. Ajit, he's been holding for the short term 8 shares, but since then we've seen some slight dip. Also today almost down 400 rupees from that point. But would you recommend him to continue holding? Is averaging down a strategy?
Not averaging down, Puneet, but yeah, he can continue to hold because we are very close to the previous swing lows. So probably we may see some consolidation or attempt of recovery also. But in comparison to the other counters in the space like Tata Motor Commercial Vehicle, M&M, TVS, they are comparatively better structured. So in case if it sees any recovery, let's say towards 15,000 mark, he can consider booking position here in Maruti and switch to the counters which we just named.
All right, we've got our next caller. Ram is calling us from Hyderabad. Ram, a very good morning to you. I believe your question on JSW Infra.
Yes. Hi, Maima. Good morning, everyone. So I have a query on JSW Infra. I am holding 4,000 quantity at 250 rupees. So as QIP price is not out yet, I wanted to add more. And the fundamental side with this war movement goes on, is there any impact in this quarter? So I'm a long-term investor on this company till 2030. I'm expecting this investment.
Okay. All right. Saurabh, I'll take this up with you. What's the view like on JSW Infra? I'm not sure if it has any exposure in the Middle East.
I think if you look at all the infrastructure stocks, they are doing nothing. If you see on the operation side, there was no sequential growth or year-on-year growth. I think probably the markets are worrying because of the rise in the material cost, and now the crude is also rising. I think it makes sense that maybe their margins will get squeezed because of the high metal cost and all going forward. And that is why the market is pricing in the same, and these stocks are not moving. I would not advise him to buy more. Rather, I would advise him to get out as he gets the opportunity.
Okay, all right. With that, viewers, it's time to step into a very, very short break, but don't go anywhere. We'll be right back.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Welcome back. You're watching Ask Profit here at NDTV Profit. We've got Venkatesh waiting on the line. Venkatesh, hi. Very good morning to you. What's your question about?
Yeah, good morning, everyone. So regarding HG Infra, so I'm tracking from this last few years. I'm confident about this counter, but only because of this CBI ride and happened, right? Because I need their view how it is. Because I know their execution. I have seen their nearby one, my native. They have done very good job. I know their capabilities and management. But what is the based on this CBI ride happened? So can I accumulate for more? No, because I'm confident. Can I accumulate because now it is correcting very well because of that news.
Okay, got your question, Venkatesh. I'll take this up with Saurabh. Saurabh, you mentioned about how infra stocks are doing nothing, right? Does the view hold the same for HG Infra as well?
Yeah, absolutely. The view remains the same. I think if you look all the infrastructure stocks, they have been doing nothing. I think probably the market is worried about the going forward, what will be the business and how the execution will happen, and probably the problem with respect to the material cost, which will eventually depress their margins. And if you look at the profitability number of the last quarter, there was some kind of a degrowth year on year. So in my sense, I think there is no point in putting money where the sector or stock is in the bearish mode, and when the operational metrics are not supporting the prices. So my sense, it is better to get out.
Got Ajit, actually, if you could comment on HG Infra, because every time we feel that there's a bottom being made, there's a new one that props up, unfortunately for this counter, and it's been a downtick, right, on a one-way down street in since that high hit in May 2025. Any view that you have on HG, because we get a lot of questions on where does this stop?
That's right, Puneet. In fact, in the month of January on 23rd, it was a very strong volume uptakes, and after that we saw that stock rebounded nicely from 550 to 700, but couldn't sustain, and now we are at the new 52-week low. As per the last consolidation zone, so close to around 450, 480 is the zone basically where it consolidated for almost 5-6 months before the strong directional move on the higher side. So probably around that area, buyers may again emerge. But considering the overall tone is still negative, one should wait and see signs of reversal once we reach to those areas, but not at current level. So around 450, 480 is something that we might see a beta.
450 to 480 is the level, so something to watch out for. But thanks for that quick view, Ajit. But the next question that's coming in is from Aniket from Karnataka. He's asking a right time to invest in EIH Limited for at least the next 4 years in the hotel space. Saurabh, what would you recommend?
Quite bullish on the hotel space, especially what is happening on this war side. I think the domestic tourism will get a boost because people will not go, for example, maybe Georgia, Dubai and all. And the inbound tourism will improve, which will eventually help these hoteliers to earn more and improve their average room rent. So my sense is it is better to, you can go for a buy for next 3, 4, 5 years.
Okay, the next one is on Bank of Maharashtra. GK from Bengaluru is asking this question. He wants to know as to what should be my target to sell and exit after 3 years for this particular counter, and what is the upside that I can expect? So it's difficult to give a target for the next 3 years, but what's the overall fundamental view on Bank of Maharashtra?
Who is quite positive on the PSU banks as well as on the Bank of Maharashtra. And I think you can expect 15-20% kind of a CAGR return for the next 3 years because the balance sheet is quite strong, and in fact the margins and all the ratios are quite strong. So my sense, good to hold.
That view. The next one, it's coming in on Inox Wind. Now, a viewer actually bought 907 shares, bought at roughly 113. So currently sitting on a loss, asking if she should continue to hold this particular counter or sell out is what Sankar's question is. Ajit, what would you recommend?
So again, Puneet, extreme oversold position, but still there is no sign of recovery. Since we are very close to the critical support zone, close to around 84, 85, we have multiple supports. So around that area, we may see a breather or a consolidation before we see any decisive recovery or a rebound. So with that as a stop loss, we can continue to hold. In case of recovery, 97, 98 will be the first area of resistance. And in case if it manages to surpass, then probably we may see a decisive recovery towards 113, 120. So as of now, it's on hold with 84 as a stop loss.
Okay, the next one is on Grasim and Godrej Industries. Are these good bets from long-term perspective? 5 to 8 years. Shankar from Delhi is asking this. Saurabh, your view on this one?
If you look at the numbers, consolidated position is quite good with the Grasim. It is a kind of a portfolio stock. Yes, you can hold for long.
Got that view, and definitely the paints business there as well, that gives some comfort to the stock lately as well, but continue to monitor that one according to Saurabh. But the next question that's coming in is on Samvardhana Motherson. Now, Ajit, our viewer Ajit from actually has bought it at 98 from Kolkata. He's holding 750 shares, asking a 6-month view on the stock.
So overall look positive, Puneet, but we are very close to the record high zone, so we may see a bit of a consolidation. So in case if the view is short term, let's say 3 to 6 months, you may consider booking at least partial profit around current area. And in case if it witnesses any dip toward, let's say 115, 110 zone again, he can re-enter.
Okay, all right. The next question that we have is from Vaishnavi. She says that she's holding Geo Finance 68 shares at an average price of 251. Can she continue to hold at the current level? No, sorry. She's asking, can we buy at the current levels? Ajit, I'll stick with you for this one. Do you think that's the right thing to do?
Mahima, tone looks negative to us, means the kind of decline that we saw earlier, and in fact the recovery attempt was also not very decisive. So it seems like that sideways negative bias might continue, and it might again retest a level close to around 230 or maybe lower. So fresh buying, avoid existing position. Also, you should maintain a stop at 240 and use any recovery toward 260, 65 zone to reduce your positions.
Got the view, Ajit, but it's time now for the rapid fire in this edition of Fast Profits. Saurabh as well as Ajit, you know the drill. The first question coming in on Indian hotels. Our viewers is holding at 740. What should we do for the next 6 months, Ajit?
Hold.
So Agility India is the next one. From a short-term perspective, can I continue to hold is the question that Bharat is asking. Ajit, your view?
Hold with the closing stop at 36.
Juniper Hotel, Saurabh, you track this counter is what our viewer Jagmohan is asking, should he buy?
Better go with the company like Indian Hotel or Chalet.
Okay, is this a good time to buy Kotak Mahindra Bank? Sashi Kumar from Bangalore is asking this question. Ajit, your view on the charts?
Accumulate in the range of 410 with stop at 390.
A lot of questions on hotel. Rajesh Mahesh Reddy from Indore is asking on Taj GVK Hotels, Ajit. He's holding at 385, a short-term outlook.
Use recovery to reduce. Indian Hotel looks comparatively better.
KPIT Technologies, Madhav from Hyderabad wants to know if we can continue to hold this for the next 5 years. Saurabh, your view?
Hold.
First Solutions, Saurabh, bought at 297 by Kunal. Should he hold for the next 3 years is what he's asking.
Buy to an exit.
Cochin Shipyard is the next one. The viewer is Abhishek, is sitting on a loss of 20%. Can I average out now, wait to invest in this counter? What should he do? Ajit, your view?
Hold and add only once it crosses 1700.
Transtrade Writing is what our next question is. Saurabh, Kumar is asking, he's bought at 672. Is the pain largely over? Saurabh, that's for you.
This script name?
Transrail Lighting, bought at 672.
Avoid. Sell.
All right, the next one is on Grow. Nagraj from Bengaluru is asking if this is a good hold for the next 3 years. Saurabh, your view? Saurabh, your
Avoid.
view? Okay, sorry.
The next question that's coming in is, on Angel One, bought at 255 by Akhilesh. What should we do with this, Ajit?
Hold with stop at 205.
Okay, Torrent Power. I'm a medium-term investor is what Miriala is saying. Wants to know if I can book some profit at the current levels. Ajit, would you recommend that?
In fact, trade stop at 1485 and hold.
Shriram Finance bought at 602 by Tejas. Should he continue to hold, Saurabh?
Hold for long term.
Okay, Raymond Limited. What is the future of this company? Raghavendra from Meerut wants to know. Saurabh, your view?
Good for long term.
Is it a good time to enter Welspun Corp, Ajit? Because our viewer Ram wants to invest substantially over the next 1 to 2 years in this counter.
Looks strong, 700, 750 strong base. So with that as a stop loss, you can consider.
Okay, Gaudium IVF, the new listing. Saurabh, any view on this one from a long-term perspective?
Won't be able to give.
Well, the next question, that's coming in is on, actually we've taken this particular question, but on SBI, Saurabh, is it a good time to add or should wait for some downtick?
Yes, you can add, or otherwise you can also buy PSU BANPs, in which you will get all these stocks.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. But Saurabh as well as G, thanks so much for helping us solve the 55 queries that we have in this last 1 hour of trade. But that's all the time, viewers, in this edition of Ask Profit. Stay tuned. A lot more stock related queries we will be starting to pick up from 2 p.m. So continue sending them. We'll start picking those up right away. But for now, that's goodbye, and KYC comes up next.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Go get tickets now.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hello and welcome to KYC, that's Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and focus on that one company that you need to have your eye on. It's a recent listing, True Alt Bioenergy as well, and it's an interesting one because, not too much coverage in terms of analysts, but the space that it operates in terms of ethanol as well as the other key factors that the company might go into very soon, and we'll talk about that very, very quickly. But in terms of this particular very, very interesting stock, there are a lot of things to talk about. Now, EBITDA expansion is one of them. There are also multiple key expansions that the company is doing in compressed biogas amongst others that could be a key growth driver into the next 3 to 5 years. Now, ethanol as well as new verticals like CBG, as I spoke about, as well as SAF are some of the ones that the company is expected to be a key beneficiary of with what we've seen currently as well. Now, apart from that, the company's deleveraging roadmap continues to be one of the major things that we talk about because the debt has increased going into FY25 until that time. Now, since they have one of the key factors looked at reduction of debt in this IPO, we'll continue to focus on that with the management. Now, strategic joint ventures as well as newer partnerships, what could be those as well, because the company has struck an important partnership as well, and this will be something that we ask them as well. But largely these are all the factors that we're looking at for True Alt Energy as well. When you move on and look at the other key factors about this particular company, since listing, it has had a difficult time to say the least because there have been some challenges, and we'll put focus on that in just a bit. But the company is engaged in the production of biofuels, with ethanol being one of the biggest factors in terms of the company's growth. Now, we've seen the revenue jump up quite a bit, but the primary focus is on this particular sector, and hence, given the national policies that we've seen, especially on the E20 as well for automotive sector, ethanol becomes a key growth driver, and True Alt, a key growth beneficiary, is something that we look at. The company is one of the largest producers of ethanol in India. Apart from that as well, we continue to monitor the newer spaces that they are going into as well. So compressed biogas is something that we look at, but for ethanol specifically, the installed capacity currently at 2000 kiloliters per day. It becomes one of the highest ones in this space, and hence a lot more to focus and talk to the management on about all of this. Now, largely, of course, we will be speaking to Mr. Vijay Narani. He is the managing director of True Alt Bioenergy, and hence now a good time to talk about what will be some of the factors that we will be watching out for. Now, largely, income statement, balance sheet, cash flow, and if you are a regular viewer, you know this drill by now, and return ratios will be something we'll focus on. Also get you a focus on the shareholding structure, street cred, and unfortunately not very positive on this. Valuation as well as outlook are some of the key factors that we look at for the company at this point of time. But let's start with the income statement now. We spoke about the listing. It's not been too long since the company listed, just the last few months, but revenue accretion has been very, very strong for the company. Jumped from 762 crores all the way to 1900 crores. The EBITDA has also kept pace with growing almost 3x to 309 crores, and profits subsequently have grown from 35 crores to 446 crores. When you also look at the Q3 performance, largely a very strong revenue base, but here you see the concerns. Now, EBITDA hasn't kept pace with the revenue in Q3 of FY26, and hence margins have slipped materially from 30% to 18.8%, while the profits have also dipped, and hence we've given this a neutral rating for now. While the history suggests that the growth momentum should continue, Q3 and the latest quarter shows you some concern, and hence we'll come to that in just a bit. The margin trajectory very visible in terms of the upward momentum, but Q3 should have seen a much higher accretion in that sense. So continue to monitor that and ask the management on the same as well. When you look at the balance sheet as well, let's look at this perspective very quickly, because you've seen that the cash level has been something that the company has been targeting to increase as others as well. So from 23 crores, there's been a 10x jump in cash as well, but the borrowing number has been stable at roughly around 1500 crores. So what could be the deleveraging strategy will be something that we'll ask the management. The company's book value as a whole has grown by 7x, given by new capacity that has come in. So you've seen the revenue jump 7x. You've seen the book value also keep pace with that at this point of time as well. So that's largely on balance sheet. in terms of the book value, while positive, the borrowing number is something that we continue to focus on, and concerns on deleveraging is something that we'll talk about. So hence a neutral rating yet again. But on cash flow, that's the other key aspect. Now, because of the profits that I've generated, that's clearly visible in the company's cash flow from operations as well. So it had that blip in FY24, big jump in FY25 yet again, with a profit of also around 146 crores in FY25, shows you that ratio of almost 200% on a steady state basis. Will this continue? Will be something that we'll talk to them about. Net cash flow has also materially jumped. So clearly a thumbs up from this standpoint for this KYC rating as well. Return ratios is the other key aspect. Now, in FY23, the company's return ratios were around 27 odd percent. That jumped to 28.2%. So hence the return of equity is largely a big thumbs up from this standpoint as well. And hence given this a thumbs up clearly. Shareholding largely stable at 70.5% as well from the management, because we've seen that there was of course the selling in this particular IPO, and hence the shareholding has come to 70.55%, very stable in that sense. But you see that there has been not too many foreign investors who bought into this story as of yet. Maybe a key domestic play, but the domestic institutional investor share also limited, and maybe because the promoter hasn't sold too much in this particular IPO is something that we continue to monitor, because the stock is down 25%, and hence public, the retail investors like you and me have bought into this counter right now. But largely something that we continue to monitor, and hence a neutral rating for now on the shareholding as well. The street cred is what I was talking about. Not too much since the company listed, not too much time that has passed, but stocks down up almost 3% in terms of the 1 month performance. But since listing, the stock's down almost 25%, and hence there's not too much in terms of for us to talk about in terms of the street cred at this point of time. Valuations become key at this point of time for the company as well. Now, it has peers like Balrampur as well as Triveni Engineering amongst others. So for all the three companies, you do see the valuation largely stable at the 22 to 26 times price to earnings, and hence we've given the company a thumbs up on this aspect, because while there has been a 25% drop in the company's share price since listing, now at this point of time with peers and a higher growth, this becomes a very interesting counter is what True Alt Energy is. In terms of outlook as well as the final key parameter is what we track, the company has specifically mentioned in terms of outlook that there are some key things to watch out for. Ethanol business, largely a very steady business. So you will see the all plants of the company are running at a steady state pace, and there will be no new capacity addition. So you should see return ratios improve from this point on as well. When you also look at the other key aspect, which is the compressed biogas, now that will drive the company's growth outlook going forward, and hence you should see those newer plants that are coming in be a next growth opportunity for the company. Apart from that, SAF is a big long-term project for the company. Returns will come later, so you might see that the benefit coming in from the ethanol business might be diluted at this point of time from SAF, but the share of ethanol should continue to boost the company's parameters. Fuel retail, very small business on a day-to-day basis, but expanding at a steady pace as well. So hence, largely is what we see, and profits should improve as plants run smoothly. Time now for the final ratings of what we give it in terms of the KYC. Neutral rating for both income statement and balance sheet, while cash flow and return ratios continue to show that positive momentum. In terms of the shareholding, that's largely stable and neutral in that sense at 70% shareholding from promoters, but lesser in terms of the foreign investors, and hence a neutral rating there. But valuation and outlook, the two big factors that we focus here on KYC, seems to be a thumbs up from that standpoint as well. So overall, we're giving the company a 5.5 out of 8 for KYC's stringent parameters in this show as well. But largely, let me welcome in the guest for today, Vijay Nirani. He's the Managing Director of True Alt Bioenergy at this point of time. Mr. Nirani, very good morning, sir, and thanks so much for joining in today. Largely, let me start off with, for quarter 3 specifically, because we did see that the margins came down in this particular quarter and the profits were impacted on a YOY basis, while the revenue has kept pace with the growth. Could you give us some perspective of where do you see ending in FY26, both in terms of margins as well as in terms of profits? If you can give us some perspective of what investors should expect at this point of time.
No, At the outset, thank you so much for having us and for covering us. We are relatively a very young company, like you said. We just have about 2.5, close to 3 years of existence so far. And I think God has been kind, the markets have been kind. We have a very good business to demonstrate. Energy transition, and again, sustainability through social reforms, that is to empower farmers. So we get to do all of that, which is very, very exciting. So in terms of the company so far, we had only the first business vertical that was in operation, which is manufacturing of ethanol. And in the ethanol space, we had 5 ethanol plants. The fifth one just got recently commissioned. It got the consent to operate as recently as December. So with that, we are now operating a full 2,000 kiloliters per day capacity. And if you remember, in the last Q2 of this current financial year, we had taken a conscious shutdown of the plants to integrate 3 of our 5 ethanol plants into grain field or making it dual feed. Now our capacities are fully geared up to operate on a 300-day basis. That is the expectation. And coming forward, we have other verticals also that should give us a lot of growth momentum. But to your question, sir, on how we end this quarter and how we end the financial year, times have been good for us. The prices of raw material, that is grains, has gone down drastically because of the oversupply of grains and underutilization of capacities across the country. So that is giving us a lot of margin expansion. And we are looking at a peak operating capacity right now, and almost at a rated capacity into 80-85% of capacity use on 90 days is what we are projecting. So that is what exactly we should be achieving this quarter.
Got that, Mr. Nirani, and largely, very well explained as well that, in terms of dual feed, and I'll just come to that in just a bit. In terms of, where we've seen this year, in terms of the revenue profile of the company, you are roughly hovering around the 1,100-1,200 crore mark, and last year you've done 1,900 crores. Now for quarter 4 in March 2025, you did about 900 crores in terms of revenue. So should we expect that this year you should at least end at roughly around 22 to 2,300 crores in terms of revenue? Would that be a fair estimate?
I would say our targets are a little higher than last year, and we are sort of on track to probably achieving that as on date. And we just left with another 30 odd days, and to be precise, 29 odd days, and we should be closing a little over the last year's last quarter mark.
Something that we will be working with, of course. And do you expect that now that all those plants have gotten commissioned, your 3 out of 5 plants have become dual feed as well? Do you see that we could see actually a margin surprise compared to last year, because you were roughly at around in the same time last year 17 to 18% margin in quarter 4 specifically? So could we see that quarter 4 could be a big jump, 25 to 30%, and hence you could see that margin growth for the year come back?
So 2 things. If you look at my last quarter, that is Q3's results, we only operated for about 58 odd days, close to 59 days, let's say. In that, we could achieve a good revenue growth as well as a margin of almost upwards of 15 to 16%. We had a lot of costs that we had to bear during the period, and a few of our capacities were also being commissioned. Now for Q4, all of them are done with, and our grain plants are also in operation as we speak. Especially on maize, the margins are much higher because we usually predicted maize price to be somewhere between 22,000 rupees a ton to 24,000 rupees a ton, whereas the market today stands somewhere around 18,000 rupees a ton. That's a huge delta which we never expected. That is going to demonstrate a big growth in the bottom line on the margin front. Without quoting a number of on what percentage of EBITDA we should be reaching, it should be somewhere on the let's say about a historic EBITDA so far that we've achieved. That's all because of the price of raw material.
Got it. So definitely that 4,000 rupee delta will be a big factor to watch out for in quarter 4. I just wanted to come back to the business now, because we've spoken about financials a little earlier than I anticipated, but on terms of the business, now you spoke about the dual feed aspect. Now 3 out of 5 plants are already dual feed now, as you mentioned at the end of quarter 3. Talk to us about the benefit and what it actually means for our investors, because while TrueAlt, a recently listed company, we've not spoken to you too often. So if you can understand and help us understand the meaning of dual field and what it does for you in the future.
So typically, we earlier operated on a single feed, that is the derivatives of sugarcane, that is sugarcane juice, B heavy molasses, or C heavy molasses. So this is one family of raw material that we used to consume. Now we have added pre-fermentation. We've added a few equipments that allow us to consume rice or maize. So at any given time, I can consume sugarcane juice, B heavy molasses, C heavy molasses, or I can consume rice, maize, or any damaged food grains. So this makes it, the family of grains and the family of sugarcane derivatives are considered dual in nature. So they're two different roadways to achieving ethanol. And we now can do both of them in three of our big plants.
And Mr. Nirani, in terms of the benefit, now you mentioned 3 out of the 5 plants can do the dual feed. So uninterrupted supply of raw material as well as some benefit of the volatility that you might have seen otherwise from just that single raw material, you get that benefit, and that's very well understood. What will it mean for the business in terms of financials? How could, if you can explain us that as well, because how the margins for all commodity businesses is very volatile. If you can give us some perspective of how we should look at that in terms of the benefit of dual field coming into margins.
Absolutely. So what we now have is the possibility to be flexible in consuming any kind of grains. And the biggest opportunity in ethanol business right now in the current framework is that ethanol has different prices and they're fixed for the whole year. So our finished good, there is no dynamics on the cost. So I don't have any, to stock up inventory and sell later. There's no problems like those. Whereas the raw material has a huge dynamic. I mean, there's a huge delta in the prices. Usually during the harvest period, the prices of rice, maize, or sugarcane is quite low. And during non-harvest period, the prices go up. So, and each year, if the rainfalls are very good, then we get good sugarcane and we get good rice. If the rain is less, we get a lot of maize. So every year the dynamics change, and by us being dual feed, we will have access to different kind of feedstock irrespective of rains or no rains, right? So that gives us the flexibility in terms of availability. Now, in terms of the pricing, each of these commodity has a different price structure during different months of the year. And for us to have that assessment and procure the right raw material at the right price is the skill that the operators will really have, because your cost of conversion is almost at a highest efficiency. Your finished good is at a fixed price. All that you're left with is your skill on procuring the raw material at the right price. So that's exactly what benefit that we get by being dual feed.
Got that view, and I appreciate you helping us understand that a lot easier as well. So I appreciate your understanding on that. But on compressed biogas, that's the next big opportunity, right? We've seen one of the leading players in terms of energy and the company with the largest market cap also opening a lot of CBG plants. If you can give us what is TrueAlt doing in that sense, and how far are we in terms of that coming into the revenue? So if you can give us some medium-term projection also, that could be fine. But what is the benefit of TrueAlt entering into this space? Because you have the benefit of the 5 ethanol plants, that's a steady state revenue. You are going into this new venture as well. So talk us through the rationale.
So CBG is the next big disruption that the government of India is fully geared to achieve. And TrueAlt wants to participate in that in a very big way. We have targets to invest close to upwards of about 1,200 to 1,400 plus crores in the next 2 years in the CBG space itself. And we have 2 joint ventures, one with Sumitomo Corporation and one with GAIL, Gas Authority of India. And both of the places where we've already commissioned the construction, 4 of our plants have now begun construction. 6 of the GAIL plants will begin construction as early as maybe last week of March or first week of April. That's the target that both GAIL and us are holding to achieving it. Now, CBG is a phenomenal opportunity especially for TrueAlt. In our perspective is that I have sugarcane press mud, which is absolute waste right now. And I've got spent wash, which is a byproduct of ethanol making. So both of these products give me a lot of flexibility on procuring or buying raw material. And that gives me the the flexibility to run the plant at a big scale, because I have assured feedstock available. And CBG is a very interesting business because we are achieving, substitution of three major products that we import. One, India is a net importer of fertilizers. We import close to 70% of our fertilizers. Through the CBG business, our residual waste after extracting methane becomes organic fertilizer, which we give to the farmers. And again, India imports close to 60% of its gas, and our per capita gas consumption is very, very low. So consuming these organic waste and converting it into CBG and into fertilizers is a very, very important subject for Government of India, and TrueAlt is participating it in a big way.
Got it. So there is, multiples to the steps. So from organic waste, you will be going, of course, into manufacturing CBG, and from there also you can use that residue going into fertilizers. Got that point. How quickly is your timeline of those 6 plants with GAIL as well as the other joint venture as well? So if you can give us some perspective of when is it expected to operationalize, and also in terms of what it does for return ratios, because there will be some hit on the return ratios at the start, but your ethanol plants have also given that benefit and will give that benefit in FY27. So how should investors look at both these aspects?
So on the CBG, good thing for us is that we have been operating CBG since almost 4-5 years now, and we're one of the early movers. And if you look at our compressed biogases the performance in the last 3 quarters, we've been achieving an EBITDA of upwards of 60%. And we've been achieving a PAT of close to 45 to 50%, which is a huge thing, which I would only presume that very few or very limited sectors can actually give. So we had this, the benefit of early understanding on the project. A lot of the companies that are doing CBG, including the one large company probably that you referred, they're still in the learning curve. And we are now replicating the learning that we had in our first plant. So in terms of numbers, we have got 4 plants of 20 TPDs each. That could give us a revenue of somewhere close to about 300 to 350 crores at full capacity on an annualized basis, which will commission by July of this year. That is 2026. So Q2 of this year, we will start seeing some revenues from the 4 plants. These are under a joint venture with Sumitomo Corporation. And the ones with GAIL, these are 6 in number, and we're spending close to 470 odd crores of capex on those plants, and target to achieve somewhere about 400 crores of revenue on an annualized basis. But those will be commissioned only by the Q3 of next financial year, or November of 2026. So we'll have at least about 10 plants that will be commissioned, hopefully within this calendar year. That's the target that we carry. And one good thing here, sir, is that this whole business, the revenue or the capacity utilization or ROE, ROC entirely depends on your skill to sell. Because gas can't be stored. If you're unable to sell it, then you'll have to flare it, which is a revenue loss. So because we've got good partners like GAIL, who is who's the principal of all kinds of gas trade in India, they have assured us the offtake guarantees. So that gives us confidence that we will be able to achieve capacity utilization from year 1 itself.
Got it. So very important point that you talk about, Mr. Nirani, that you have that benefit of GAIL being as a partner. But just very quickly, dissecting what you told me, 300 crores of revenue at full capacity from the Sumitomo plant that will start in July of 2026. So could we anticipate at least 200 crores revenues in FY27 from this plant? Would that be a safe assessment?
So we wouldn't have that high of an expectation, but since it's year 1, we usually plan to have, target to achieve at least about 50% on the remainder days of operation. So, 50% of, let's say, by July, if we commission, we'll have about 270 to 80 days in hand, the number of operational days. On that basis, we would have somewhere about, we should target somewhere about 120 to 140 crores of revenue. That's the target that we would carry.
And when I look at the medium-term opportunity as well, Mr. Nirani, and that probably would be my final question, you've seen a very big jump in revenue from FY23 going into 25, where almost 900 crores. Now, largely a lot of that is coming from ethanol. So when I look at the medium-term opportunity for FY28, would it be safe to say that you will be clocking in at least double of the current revenue that you're doing, or at least a close figure, and margins would subsequently be at least at the level that we've seen historically at the FY25 level, given that you will have a couple of years, 3 years. So by FY28, you anticipate roughly around 4,000 crores of revenue and margins of at least 25%. Would that be a fair assessment?
If you ask the entrepreneur in me, I am really doing this, I would tell you that we've been literally growing at a 55% growth rate since 2023, since our first year of operation. And, from 723 crores in revenue we grew to 1,240 crores in revenue the second year. Then we grew to almost 1970 crores in revenue the third year. So this year also, we were actually in line to achieving that kind of a revenue growth, say 55% of revenue growth. But unfortunately, in the state of Karnataka, we had excessive rainfall during this monsoons. Pre-monsoon, post-monsoon and monsoon were quite heavy. So our construction time on the grain integration, it got delayed by close to 2.5 months. And, a month I can achieve almost about 5.5 crore liters of ethanol. And that 2.5 months would translate into almost 12 crore liters of ethanol. So that, disruption, slowed down the growth for this financial year. But it was again a very conscious decision that we took, and again, it was a one-time delay that had happened. We are sure that the growth rate should be in tangent to what we have achieved in the last 3 years. That is the target we hold. And all these, the new revenue growth, or rather the business growth, will come in from 3 verticals in principle, rather 4 verticals.
Right.
One is capacity utilization in ethanol. 2 is the new CBG businesses that are coming up, almost 22 CBG plants, 23 CBG plants in the next 2 years.
Right.
And we'll have SAF giving us revenue starting FY28.
Right.
And right now we also have the fuel retail verticals. We, in fact, we are one of the, we got authorized as to be called as an oil marketing company.
Got it.
In fact,
So,
we're setting.
Sorry, Mr. Nirani, sorry to interrupt because we are running out of time. So just wanted a quick confirmation. While of course you mentioned about the entrepreneur and you going at that level of 4,000 crores, the possibility of that, does that seem very much likely given all of that is steady state over the next 3 years? Would that be a safe assessment?
I would like to believe that it would be. See,
Right.
one parting word would be, you see what is happening with the crude and commodity right now. Biofuels will take the center stage, and if biofuels take center stage, we are there to thrive. And time and again, we've been reminded, anything happens globally, it is the country.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, No repeats. Go get tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Dark clouds of war continue to loom over the West Asian skies following heavy clashes between Israel, US forces and Iran. And in a strong response today, Iran's top security official Ali Larijani has firmly denied reports that Tehran sought to open talks with the Trump administration, saying that Iran will not negotiate with the United States. Gulf cities face a third straight day of missile strikes as tensions escalate sharply. Air raid sirens blared in Tel Aviv while blasts were reported in Dubai and Doha after Iran launched fresh attacks. Several missiles were intercepted as regional air defenses remained on high alert. Back home, the Ministry of Home Affairs has warned states of possible unrest after the Israel-US strikes on Iran, urging heightened vigilance and monitoring of pro-Iran radical preachers whose inflammatory sermons could spark communal tensions and disturb public order. Meanwhile, the government has called an urgent meeting with the exporters and key shipping sector players today amid the escalating West Asia crisis as concerns grow over trade routes, freight costs and supply chain disruptions. Aviation disruptions deepen amid West Asian tensions. Indigo has cancelled 162 flights, suspending all services to and from the region till noon, including London Heathrow, Istanbul and Manchester. Akasa Air has extended its Middle East suspension till 3rd of March. Escalating tensions are threatening global energy supplies, sending oil prices sharply higher. Shipping through the Strait of Hormuz has stalled as insurers withdraw cover and raise premiums. Gold, meanwhile, is climbing on strong safe haven demand. Markets are reeling under heavy pressure as volatility spikes. The Nifty has slipped 350 points to trade near 25,000 mark, while Bank Nifty is down 700 points. Losses are broad-based, with auto falling 2%. Indigo, Eternal and L&T are amongst the top drags. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's quickly take a look at the markets at noon. Yes, the pressure has been heavy because of the Middle East geopolitical tension. And there you go, Nifty 50 closer to the lowest point in the trading session and also given up that 25,000 level mark long time back. When we take a look at other sectoral indices as well, Bank Nifty also in line with a slight bit of outperformance coming in. 2 Nifty Nifty 50 1.3% down in trade. And when we look at the companies which are really contributing to the performance of Nifty 50, well, Larsen and Toubro, which already had commented about their huge presence in the Middle East for businesses, that has fallen the most. Big boy Reliance Industries as well as the automakers are the top losers in trade today. Some of the ones with a green tinge are ONGC, BEL and Bharti Airtel, also Sun Pharma, and amongst the metal counters, Hindalco. So these are the only ones showing a tinge of green. When we look at the sectoral charts, almost all the sectors are in the red with a downward tick, with autos falling the most, but defense index is standing tall amidst the geopolitical tension. Advanced decline, and no surprises for really looking at that, because it is heavily in favor of the declining ones. Mid cap and small cap index, the broader market is also showing the same amount of weakness as has been evident on the key indices as well. Tejas Networks, one stock which is really euphoric in trade despite the overall pessimism that is seen. All right, Amrish Balika, who's an independent market analyst, joins us now. Amrish, difficult times, and market is also showcasing exactly that. How do you read into this particular situation?
No, I mean, the situation is very fluid. I mean, when the markets opened this morning, there was an expectation that, yes, I mean, it'll open with a gap down, but we could cover that gap to a certain extent. We should consolidate. The main reason being that there was a hope of this war ending soon, or at least, at least for a while, because there was an indication of a request for talks by Iran. But now even that has been negated. And we are hearing President Trump talking about more US lives being lost, the war possibly carrying on for the next 4 weeks. So which means a longer uncertainty for the markets, and which normally the markets don't like. The markets don't like any uncertainty, and especially something like this, which is linked to geopolitics. So I think we could see the markets possibly, seeking lower levels, especially, as far as India is concerned, because, tomorrow is a holiday. So, we don't know as to what can happen over the next 48 hours. So people may not want to take forward positions.
That's right, Amrish. It's a truncated week as well, and there is a fair bit of weakness that is being seen. How would you read into the defense stocks and that particular sector amidst geopolitical tensions resurging now?
See, defense is one of those few sectors where the sentiment would be positive because of the geopolitical issues. But this doesn't mean that it will convert into orders immediately. And like I've been saying earlier, execution has been an issue as far as the defense space is concerned. So I would say that people should utilize any sort of a sentiment positive and upside in the defense stocks, maybe to book some profits there and utilize that cash for buying into other sectors which possibly can perform post the war.
That's right. It's more of a sentiment reaction when it comes to the defense sector, Amrish, as you rightly pointed out, without any material or meaningful impact on the sector immediately. But when we look at the current state of affairs, where any sort of de-escalation is a risk factor currently, and this may continue. So what will be your advice in terms of investment strategy, in terms of investments, profit booking, or is it wait and watch and a cautious stance?
No, I would say possibly wait and watch, but at the same time, don't completely remain on the sidelines. Do some cherry picking. Especially if you're sitting on some amount of cash, do some amount of cherry picking, because the day we hear of de-escalation, the day we hear of some sort of a truce, or Iran possibly having a new regime, which is as per what US has been talking about, you will see that the markets will bounce back very, very sharply. Because if you see that, I think Iran was the only issue which has been there for a while. And if that is out of the way, I don't think there will be anything stopping the markets. And especially I would talk about the Indian markets, because we have been underperforming for a while. And once this is out of the way, we could see a very big spirited rally. So don't miss this opportunity. But at the same time, I would say don't put all your money at one shot. Just keep doing cherry picking, because I think we'll have the next possibly couple of weeks to buy at lower levels. And at the same time, let me tell you that unless something major happens, I mean, if it just continues like this, I mean, what we have seen as far as Russia, Ukraine is concerned, I mean, something similar carries on, I don't think that the markets will crack. I mean, they were settled at low levels, and from there we could see a rally back.
All right. Thank you so much, Amrish, for giving your insights on the market movement. And there is extreme volatility and weakness at the current moment of this ongoing developing global situation. In fact, Prime Minister Narendra Modi has spoken with Israel's Prime Minister Benjamin Netanyahu to discuss the escalating regional situation. In the call, he conveyed that India's deep concern over recent developments and also stressed that the safety of civilians must remain the top priority. In fact, the Prime Minister reiterated that India's consistent position calling for an early end to hostilities and also a return to stability in the region. So that's the word coming in from Prime Minister on this particular situation. Now remember that the government has called an urgent meeting with the exporters and shipping sector players today in view of West Asia situation, and my colleague Rishabh is joining in with all the exclusive details on what's really expected there and what's the meeting all about. Tell us, Rishabh.
Right, a very key update today with the Commerce Ministry. There's an urgent meeting that has been called with shipping sector representatives as well as major exporters. What we're picking up is that around 2:30 or 3 p.m. today is when this meeting will be called. And of course, on top of the agenda will be the impact of this war-like situation in the Middle East on logistics, on the sort of freight costs, on routes, on shipment cancellations. All of these topics will be on top of the agenda. What we're picking up is that this will be chaired by, of course, the Commerce Secretary, Rajesh Agarwal. He will take stock of the situation currently in terms of what sort of cancellations, what sort of routes now exporters will be taking to ship to US and Europe, given that some of the major routes, including the Bab el-Mandab Strait, the Strait of Hormuz, all of them are currently undergoing a lot of security issues. Apart from that, there's major shipping companies like the Mediterranean Shipping Company, which has suspended all bookings to the Middle East. You have CMA CGM, which has come out and put out a $4,000 emergency conflict surcharge on top of their bookings. So there's a lot of fast-paced developments, and with that in view, there is a 2:30 meeting with the government as well, and with exporters to take sort of the stock of the situation and also figure out what is the way out and to not face any disruptions for shipping to these crucial areas.
That's right, averting a bigger impact of this geopolitical situation, and that's Rishabh giving us the update on the emergency meeting by the government to really contain the impact of this particular situation. But we are already seeing the impact. Let's quickly go through the sectors and companies which are getting impacted in various ways because of the geopolitical tension. So aviation stocks, because of the cancellation of flights, because of security issues, Indigo and SpiceJet are impacted heavily. When it comes to the hotel stocks, because tourism takes a hit because of global movement now being discouraged, with Indian hotels, IEH, Lemon Tree Hotels, all on our radar on that one. When we talk about the travel proxies and booking firms as well, Yatra, Ixico, Ease My Trip and the several others will all be a sector to be closely watched out for, as they will see some impact of the slower business and movement coming in there. Gold financiers, because gold and silver prices could see panic buying. So Mallapura Muthoot Finance amongst the mid-cap stocks is one of the top gainers. CSB Bank are on our radar. Even jewelry-linked names like Titan, Senco, Kalyan Jewelers are the ones on our radar on that. When we talk about the metal stocks, because the metal prices are globally linked, so the potential stronger US dollar generally is negative for the metal companies. So Lloyd Metals, Tata Steel, Jindal Jindal Steel, Welspun, SAIL, Vedanta are the ones on top of our radar. But also remember that some of the others like Hindustan Zinc, Hindustan Copper are the ones which are still gaining in trade. Sun Pharma, it has business in the affected areas, derives 5% of the revenue coming in from Israel, and primarily Israel revenue through majority stake in Taro Pharma, and that gets impacted. Larsen and Toubro also gave a comment on 49% of their international order book is linked to West Asia, Saudi Arabia as well as UAE, and that is the top dragger on Nifty 50 today. Kalyan Jewellers, their impact of US-Iran war, well, 12% of consolidated top line comes from West Asia and operates nearly 40 stores there. So that's the entire list of the watch list of the companies which are really impacted because of this particular global tension in various ways. Either it is present there or has a global trade there. All right, so as geopolitical tension in Middle East has really a material impact on the companies that we saw across the sectors, either on account of the presence in the region or business tie-up, revenue generation, or even raw material and supply chain impact, we focus on the global trade of India being impacted. Remember, Maersk has already, a large player in global transportation, has already paused the Strait of Hormuz route, which is the most efficient way for Indians to really do business and transport goods and goods across the border. So that is one particular point to be really taken into cognizance. So this may cause delay, discouragement, and freight costs rising. So let's discuss this with experts joining in. Sunil Vaswani of the Container Shipping Lines Association and Ajay Sahai, who's from FIO, Federation of Indian Export Organizations, now joining in. Now, first, my question to you, Ajay Sahai, do you think that the exporters of India who have already been on tenterhooks, have seen several uncertainties because of US tariffs, now have another big problem to really see, and how are they impacted? What's the word coming in?
In fact, of course, this crisis has come probably at the worst time. We are already struggling with number of uncertainty in our global trade. I think right now the concern of the exporters is with regard to the shipments which have already been done. They want to be sure that these shipments, they reach the places in due time. Secondly, a lot of shipping lines, they have cancelled their sailing schedule also. And that's why they're concerned with the building of the container. And probably if this situation is not resolved quickly, we will have the challenges at the end of the customers also. And since this sailing time itself will go up if we are using the alternate route, particularly for Mediterranean as well as to the east coast of the US, there will be delay in the payment also. And since the liquidity is a key concern for the exporters, probably that will definitely put more pressure on the exporters in this given kind of time.
Right, Ajay, and yes, the worry about the safety of the ships are also one of the biggest concerns coming in. Sunil Vaswani, jump in on this. How is the Shipping Association dealing with this safety and risk that has really come up in global trade?
Good afternoon, and thanks for having me here. First of all, my heart goes out to all those who are stuck in those difficult situations out there. And let's hope and pray for their safety. Having said that, this is not the first time that the shipping lines are dealing with this sort of a situation. If you remember, almost 2 years ago when the Houthis struck, at that point of time also, the ships crossing the Bab el-Mandeb were attacked. And then the shipping lines, because obviously they wanted to continue to serve the trade, they found another trade route and they started going across the Cape of Good Hope. While many of them have continued to do so since then, some of the shipping lines reverted to the old route via the Suez, so as to, because the situation was stabilizing, so as to try to and assist the trade with quicker transits. But unfortunately, now we've had this situation where the lines who even went across the Suez or started going across the Suez have now had to suspend those operations and redeploy the ships via the Cape of Good Hope. So as we speak, the services are continuing, but although that does cause some sort of a disruption. So the services on the long haul destinations, that is to the US East Coast, Europe Med, they will go over the Cape of Good Hope, and services to the Middle East have currently been suspended because of the safety of our crew members, the safety of our ships, and safety of the cargo on board. But currently, that is not the only concern that we have as shipping lines. As far as the trade is concerned, the other concern also is that cargo that has been piling up at Indian ports for Middle East destinations, and containers are continuing to come in. So that's kind of creating a congestion at Indian ports.
Yes.
So we are waiting and watching the situation, and the ports are also working in tandem with us to try and give additional space to those containers which will be coming into the port at Indian ports. And we are monitoring the situation very closely, and rest assured we'll do all that we can to assist the trade.
That's right, Sunil. In fact, port congestion is also a usual problem because of various factors, and this has also added to the trouble. But you said that Strait of Hormuz, while that remains paused in terms of shipment, the rerouting through Cape of Good Hope, what is the impact of that, and is that being deliberated by our shipping companies?
So as I said, that the shipping companies have already had the experience of sailing through the Cape of Good Hope, and very many of them continue to do so. A couple of them, those who reverted through the Suez, have now started going back via the Cape of Good Hope. Of course, that requires additional costs by deploying additional vessels, but all that comes in later. The first is the safety of the crew and the port officials and the cargo. And number two is the transit time. Transit times, of course, will be longer, but at least they would be safer.
All right. So, Ajay Sahai, while safety remains one of the biggest paramount problems, but on the other hand, the alternate route, how much of an impact will that make, and really will that also discourage our exporters?
In fact, the alternative route will take an additional voyage time of 10 to 15 days, and that will entail a cost. We have to see how much will it impact the freight. If the Red Sea crisis has any indication, the freight rate may go up exponentially also, and it will hit particularly the low value, large volume cargo, and in fact, the number of products also, the competitiveness to some extent may be impacted. We have yet to see how will be the freight be fixed in the given situation, but one thing is very sure, that if the ships have to take a longer route and there will be additional voyage time of 10 to 15 days, it will definitely increase the freight in the given situation.
Right. So, Ajay, you mentioned that the freight rate will go up, and that is also an impact and time value of money in terms of the delay as well. Can you ascertain a number in terms of impact? Because crude oil prices going up will also add to the freight cost going up, the transportation cost, and the number of delays because of days that you add because of the rerouting. Both put together, could that be a big amount which will not make some of the businesses or some of the exports viable, you think?
I think for that, for every sector, one has to see what is the cost implication. Some of the sectors are import driven also. For them, the impact will be much higher. Some of the sectors are using energy as one of the main raw material also. For them, the impact will be different. But the short point which we are making is that for all the sectors with the freight costs going up, there will be an impact. To what extent they remain competitive where the import prices move up, the energy prices move up. I think one has to look into the sector. I'm pretty sure that Indian exports are quite competitive. To what extent they are able to take a hit at the bottom line is an issue, but I'm pretty sure that they will be able to manage the situation. They have managed in the past also when the Red Sea crisis was there. And probably we are expecting the situation may not be long lasting, and if it is a temporary one, we will be able to see it through also.
Right, so you're sounding very positive, Ajay Sahai, and of course these kind of situations we have faced in the past as well. While all the measures are being taken, and government is also now calling for an emergency meeting for looking at measures to contain this situation. Sunil Vaswani, final word to you. What are the measures being taken for the shipping and our exports to continue, and also decongestion of ports? What are the challenges and the measures expected?
So the measure that we have taken is that first of all is to redeploy our ships. Number two is, as far as the freight rates are concerned, we do appreciate, but as I said, that there are certain things which can't be avoided, but we do try our best to help the trade. If you recall, over the last 5 years, the freight rates have actually dropped. Even though while we went over the Cape of Good Hope, of course the costs were additional, and initially, of course, there was some impact, but over a period of time, the freight rates did come down significantly. So these ups and downs in the freight rates always do happen, but they were not very significant. And as Mr. Sahai rightly mentioned, that we do hope that this situation is not long lasting, so that the impact also is not very significant. That said, I think that's all that we can say for the moment. Only time will tell. Over the next week or so, the situation will be clearer, and then we can all hope for the best.
All right, Sunil Vaswani as well as Ajay Sahai, thank you so much for giving us this quick perspectives at this particular time to understand the entire situation right now. And we'll keep coming back to you for more perspective on that. As we speak, Nifty 50 has gone down further, 1.8% down in trade, out of time on markets at 12. Thanks so much for tuning in, and keep it with NDTV Profit. Thanks so much.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Heera Aldadia, and my colleague Mahima Vajrajani standing at the NDTV Profit market pit with all the action. Mahima, when we started off, it seemed there would be some bit of weakness, but that mild recovery that started coming in the first hour of trade as well. But now when you see the markets, I think all that recovery has also been given up. What are you picking up?
Yeah, I think when we saw the implied open, I think all of us were scared as to what will happen today in the markets, but it's not that bad. Of course, it's down by about 450 odd points, almost 1.8%, but at least not as bad as what the implied open was suggesting. But the benchmarks and the broader markets both continue to be under pressure for sure. With regards to where the overall market sentiment is looking like and what are the triggers right now that we are looking at, of course the broader end of spectrum is equally bad as compared to where the benchmarks go. The mid cap 150 and the small cap 250, if we can quickly try to pull that up, the mid cap 150 is down by about 2%. The small cap 250 is also down by about 2.4%. The small cap 250 clearly under more pressure as compared to where the benchmarks go. In terms of where the sectors go, of course just the Nifty defense slightly in the green, otherwise all sectors in the red, and that's the kind of sentiment that the market is seeing right now. But quickly, if we can try to pull up the market triggers right now, this is the heat map. As you can see, the defense also of course now has turned into the red, slightly trading flat as we speak for the Nifty defense, but auto losing the most ground, down by about 2.9 odd percent. Infra also down by about 2.7 odd percent. The small cap 250 down by about 2.4% as well. Quickly, the market triggers before I toss it back to Hiral. Defense right now is trading flat. Auto is kind of losing the most ground. Of course, with regards to where certain sectors go, because of crude trading now at $78 per barrel, up nearly 10% from its closing price in the last trading session. OMCs, aviation, tires, shipping companies, all of these baskets as a whole are under pressure. With regards to where the India VIX goes, that's almost up 19.5%, and that is indicating high volatility in the markets going forward in trade today. Long short ratio at that 18:82, indicating high selling pressure as well. So 82 shorts versus that of 18 long is what we're seeing right now. Rupee also trading at 91.24, so again has bounced back to those 91 levels. So this is the overall view as to what's happening in the markets right now, Hira.
Okay, so interesting moves that we're seeing when it comes to markets. Thank you, Mahima, for that. Let's quickly look at the watch list. L&T, that's in focus because of the exposure that they have to West Asia. Top loser on Nifty 50 of oil marketing companies as well. Fuel margins could see a squeeze on the back of higher crude, so that's what is under pressure. However, the premium support is coming in for names like RIL, Oil India and ONGC. Strait of Hormuz tensions are putting pressure when it comes to shipping companies, so that pack is down in trade, and your jet fuel cost could surge, and that's why your aviation stocks are under pressure. Moving on, if you see in terms of the next bit, online travel, B2B travel are the ones which are seeing pressure on the back of Israel-Iran war, and Titan and Kalyan, a similar impact coming in on the back of the war as well because of the exposure that they have to all of these nations. Hinzing and MCX, gold and silver have become safe havens, and that's what is supporting both of these stocks in trade. And your defense companies, amid war sentiment, are seeing some positive up move in trade today. Very lastly, Hindalco, you have UBC scrap prices which have surged they could hit margins, and that's the reason why that stock is in focus. Bharti Airtel as well have said that they've continued to invest in core segment. No major moves there, but in turn, you have a Vodafone Idea which is trading under pressure because of the comment from Bharti Airtel saying that, the company will not be able to garner that kind of market share. Apart from that, you have auto stocks and a Tejas network as well, which are doing pretty well in trade. So that is what we're going to focus on in today's session. But Mahima, over to you when it comes to the rapid fire with Akshay Bhagwat of JM Financial.
Right, and here, the theme, of course, for the day is as to what's happening in, the Middle East, and that's why a lot of counters in focus on the back of that. I'll start with the oil marketing companies because that is under pressure, Akshay, and all of these, IOCL, BPCL, HPCL. What's the view like when technicals are concerned?
Good afternoon, Mahima, and to all the viewers. If you look at the oil marketing companies, most of them have bowed down to the war pressure, and for a short-term perspective, most of these stocks it's advisable to take out your profits. I'm expecting slight downtick in most of the oil marketing companies, around 2 to 3%. Technical setup indicates a short-term downside.
Correct. So margins for these companies will be under pressure. So book your profits is what the technicals are suggesting. The next one is on the opposite of this because oil exploration companies will benefit from this. So Oil India, Reliance, etc. are in focus positively on the back of this. Your view?
Yeah. So for Oil India, it's a positive view. 520 can be the upside. The support is 470. Continue to hold. But in Reliance, it's a neutral setup. So would not recommend any fresh trades in Reliance at the current levels.
Okay, Shipping Corporation of India and G Shipping also in the focus on the back of Strait of Hormuz being shut, and for them freight rates will go up. What's the technical setup looking like here?
So Shipping Corporation is still a neutral technical setup. 250 to 270 is the range. Avoid as of now is the call. And for G Shipping, it's a positive setup. So I think with the support of 1300, a positive view for 1450 targets.
Got it. Aviation is the other pack that is in pressure on the back of crude trading at almost $78 per barrel right now. SpiceJet, Indigo, what is the technical suggesting?
Indigo is in a neutral setup but on the verge of breaking the 450 support. It's an avoid. If the support breaks, expect 4,000 on the downside.
Okay. Yatra, Ixigo, etc. Some travel counters also under pressure on the back of what's happening, and probably because bookings for them, of course, will get cancelled, will go down, will not have bookings. Any view on these travel companies?
Yeah, most of these travel companies have a negative short-term technical setup, so it's an avoid or book out if it's a short-term trading you have positions in.
And any of these, TBO Tech, etc.?
Most of these mid-cap names have a negative technical setup for short-term, so it's an avoid or exit.
Okay, Hinzink as well as MCX will be in focus because of gold and silver prices going up because of this geopolitical uncertainty. Any view there?
Metals might do well, maybe a bit volatile for short term, but right now Hinzink 640 and 580 is the trading setup. Avoid as of now. Nalco is the better in the metals name. MCX is a positive setup, but again, let MCX cross 2550, then there is a buy trigger on the technical charts.
Tejas Networks is the other one which is seeing strong moves in trade today. What is the technical setup looking like here?
Technical setup, short term, it's more of a pullback bounce, which can go till 550.
All right, so that's the view coming in on the trending stocks and of course the buzzing ones in trade today. With that, back to you, Hira.
Thank you so much for that. In fact, let's look at the stocks which are trending on Google as well. I mean, it's going to be interesting to see what the searches are indicating as we speak. If we could just get that one on the screens. BEL, obvious reasons why that stock is, and along with that, a Paras defense as well, because volumes are strong. These are beneficiaries when it comes to war-like situations. Yes Bank is interesting to see how that stock is under pressure, along with the Suzlon, which is down in trade, and Interglobe Aviation, we know what's happening. Akshay, on the charts, if you have to look at names like a BEL, a Paras defense, which are seeing some strong moves, would you be a buyer at current levels?
Yes, for BL, it's a yes, but not for intraday. You have to give some time. 430 is the support for BL. It's been in a range for long, not broken down as yet. That's the positive thing. But technical trigger for buying is above 460. Fresh buying recommended only above 460. If you are holding the stock, 430 is your stop loss. But overall, if 460 breaks, I'm looking forward for targets till 480 to 490.
Okay, how are you looking at a Yes Bank? Because interestingly, that stock is also down 3% in trade. Any momentum play?
So it's broken a technical support today at the levels of 20.5. So there's a short-term negative technical setup which I see in Yes Bank, which possibly hints that 18.5 to 19 can be the lower end which Yes Bank can move towards to. So avoid buying as of now. 18.5 to 19 is the time when you can review it to buy it again.
Okay, so that's with regards to the stocks that are trending on Google as well. But thank you so much for joining in, Akshay. Always a pleasure to speak to you. Now, what's happening with, US, Israel and Iran? That is the key talking point today. That's one of the trending stories as well, because the kind of impact that we're picking up across sectors is pretty large. In fact, let's first hear out what Samir Arora of Helios Capital believes when it comes to West Asia tremors that will not have a long-term impact on the markets. Let's listen.
The stock markets are very cold-blooded and they just recover very fast. And in this case, my simple reasoning is that you means the US and Israel have taken out the top 40, 50 of the senior guys and maybe many others in the management of Iran, and you really expect the 55th guy to be as strong as the first 3-5, the Revolutionary Guard head and the actual supreme leader and his first nominated successor, his son-in-law and whoever else and their defense minister and all that. Number one. Second thing is that and every day they are being attacked. So if those guys had to respond in some big style, they can't keep waiting. Because they are anyway being attacked and all their weapons would be affected like that. So broadly, I would think that this will end plus minus a few days, or at least there will be negotiation. And negotiation, I think President Trump has tweeted or said that already, I don't know who, but in the hierarchy, somebody is already asking for a new round of discussions. So I don't feel this is, super bad from a stock market point of view.
Okay, so that's the voice, of course, the viewer coming in from Samir Arora. But, Jonathan Barrett also said the same thing, that crude tensions are likely to continue, considering the kind of war that's going on in the Middle East. Listening to exactly what he had to say.
Looking at the price of the inputs, because you have India, which is reliant on imports, you have China, you also have Japan. So the discussion and the strategy from the states is trying to get the states to be, and Donald Trump said it, to be the number one in the world. So this is more, in my mind, a strategic move for Trump to become and maintain number one, and also to deflect interest away from the US domestic market, where we know there are problems. So protracted supply, Straits of Hormuz closed, this will go on for some time.
Okay, so that's the word coming in when it comes to, crude and the kind of impact that we're seeing as well. But now defense stocks are in focus as well, from a Bharat Dynamics to a BEL, HAL, all of these counters are in focus. In all our conversations that we've been having this morning, everyone is very positive when it comes to Bharat Electronics as a stock from the defense pack. The stocks are seeing gains in that range of 1% to 6 to 7%. Let's pull up the defense index as a whole, because with the kind of gains that did come in terms of today's session, that's some little bit of cooling off that's happened. If you can just get an intraday chart of Nifty India Defense, because that will tell you what that story is. There you go. From the gains, we've seen that sector actually come off, and we're almost inching towards the lows, now seeing cuts of around 0.2% on the sector. Let's get in Tapan Doshi, CA Tapan Doshi from www.catapan.in. Tapan, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question coming to you is multiple sectors that are seeing reaction on the back of the Iran-Israel war right now. Let's first pick up defense as a pack that we've been talking of. Yes, this is a sentimental up move that does come in warlike situations. But with the way stocks have been moving in the last couple of days, how are you looking at the sector and any topics coming in there?
Yeah, of course, Cyril. Good afternoon. Yes, defense is a topic now, because at the end of the day, what has happened in the Middle East, that will push more export from India, because if you see, the Middle East countries are being affected and they need defense system, good defense system. And one of Indian companies may provide that. So as you told just earlier telling about BEL, of course, I'm positive on that stock also, and HAL, BEL. and even of course BDL is little bit expensive, but overall I think more orders we can get it from Middle East also. Already all these companies have a good order book. The only thing is what type of execution, how speedily execution will happen. They have to build up the capacity, but I think initial 2-3 years there was they were not able to cope up with the demand, but I think slowly and gradually last management committee what I heard from BEL and HL, it's much better. And I think if you talk about the valuation wise, I think BEL is available at a good valuation, that and also HL. Even another company, if you want, you can check about Mazagon Dock also. That is also available at a good valuation. So these are some of the companies which I'm positive about it. And it's a multi-year bull run in defense. So yes, one has to invest in that. Slowly and gradually they can invest in these stocks also.
It's not just one sector or one specific area that hits, right? Because of the war, there are a lot of ancillary sectors that get hit, and travel is amongst one of them, because Dubai International Airport has kind of, sustained the damage because of the Iran attack. There's the airport of Abu Dhabi and Kuwait that is also damaged. Thousands of flights across Middle East have been kind of disrupted, cancelled. At least 8 countries shut their skies as the entire conflict has erupted on Saturday. Iran, Israel, Iraq, Jordan, Qatar, Bahrain, Kuwait, as well as UAE, all have declared their airspace being closed. Now, Gulf region is primarily the corridor for linking India to the Middle East, Europe, as well as North America. In FY25, the total movement that we saw was 74 million passengers flew from and to India in various cities. Nearly 36 million passengers, that is 49%, were from Middle East nations like UAE, Qatar, Saudi Arabia, Oman, Kuwait, Bahrain, Iran, Iraq. So because of this, we're seeing all of these travel companies under pressure. Tapan, I'll quickly take a view on all of these travel companies, namely Ixigo, there's Yatra, there's Thomas Cook, all of these under pressure as well.
Well, no, we have to wait for the things to get settled down, because I think there will be a pain, and I don't know up to what period this war may go on and this conflict may go on. If it goes on for more 1 week or 2 weeks, they'll be affected. Again, there are some insurance issues also, and lot many passengers have still been halted in many airports. Again, lot many booking will be cancelled, because normally if this type of thing happen, people will refrain their travel for the next few months also. So yes, I think one should stay away from all this stock. They will be in a pressure. Again, we have to see what type of profitability hit will be there, and then in this quarter will be coming. So there are lot many questions will be raised for all these companies. So I know some of the companies has ran up a lot. So I think better to stay away and wait for the clarity. And again, unless this conflict gets settled down, I think one should not get into it, because many of these companies are having an international tours, and they're almost having a good chunk of their profitability also.
Okay, all right, so that's the view coming in on travel companies, but Bharti Airtel is on the counter that is in focus on the back of its analyst meet, and Somit is here to give us the key takeaway. Somit?
So yes, Sunil, Bharti Airtel in fact at this closure meet with analysts, and they said that they will progressively increase their dividend payout going forward, and they'll continue to invest in their core segment, that is broadband, mobility and the enterprise segment. When it comes to investment in data center, they said that the initial plan will be to expand to 1 gigawatt, and beyond that they will take a call at that point of time. But they clearly clarified that data center investment will not be in GPUs, it will just be on building the core infrastructure. The 20,000 crore investment that they're doing when it comes to the financial service building will be sufficient to scale up the business till one point of time, is what the management said, and their initial target will be to reach around 100 million subscribers, and the first year capital outlay is likely to be around 10 to 15%, which will gradually increase going forward. When it comes to expansion into other markets, they say that they're looking to expand into African market and global market in general, and their aim will be to acquire strategic stake to run the business and not any financial stake as of now. When it comes to Bharti Enterprise stake in Africa at 16%, it will be transferred to Bharti Airtel, is what the chairman said, but they have not given any timelines on that front. When it comes to the promoter stake sale in Bharti Airtel, the promoter will offload close to 8 to 8.5% stake. Again, no timelines given. They have said that this will happen over the medium term, which at least means that nothing on the near term is expected to happen when it comes to the stake sale from the promoter side. On the ARPU, the medium term target now is 300, and their aim is now reached to 350. They aim to take the ARPU number to close to 350 going forward. And lastly, on Vodafone Idea, this could be the reason why the stock is also down nearly 4% odd in trade. They said that for Vodafone Idea, it will be difficult to gain market share, and this is because the position of the incumbents, that is the other players, that is Bharti Airtel and Jio, is quite strong, and sector growth itself is just at around 8 to 9% currently.
All right, Swami, thank you so much for getting us those details. A lot of key takeaways coming in from the Bharti Airtel analyst meet with regards to ARPU, competition, as well as how the stake sale will happen. Tapan, your quick view on this one?
Yeah, Bharti is in a very, very good position. As Somit already told us, the tariff may go up to 300 rupees, which is one of the highest among the telecom. And no, they have already done a very good 5G investment, and now they are going to reap benefits about that. Also, the 15 to 18% EBITDA will be there. 5G monetization, I think, will accelerate over the time. And if you see, the ROC is also improving around 18% and out. So all these things are good. And again, the commentary of the management is also good. So, but as around 1880 something, the stock is fully priced. I think maybe if you are getting 5% below any deep coming, I think one can buy as in a SIP manner for the long term.
That's with regards to where telecom companies go. One quick follow-up I want to take, Tapan, with regards to Bharti Airtel. The management made a comment when it comes to Vodafone Idea, citing that it's going to be impossible for Vodafone Idea to garner market share in a market which is only growing at around 8 to 9%. And I think that's one of the reasons why you're seeing that downward pressure that's coming in on a Vodafone Idea. If you pull up that stock on the screens, you'll see pressure versus a Bharti Airtel, which is trading absolutely flat. A quick view when it comes to Vodafone Idea?
Well, even I think so that Vodafone Idea is not going to gain customers from here. No, they are going to lose customers as such. And if you see, they already have a 2 lakh crore liability. Again, if you see that EBITDA loss is more than their revenue, and all this stuff is not helping Vodafone Idea, even though government may came to rescue them, but I think they are on ventilator. Honestly, that is what I feel always. I think one should stay away from this stock. Even it is just because of government, this company is there. Otherwise, if they lose customer and if they are not going to increase the revenue, how they are going to pay off all the debts they have? So that is a bigger issue. So that's why my stance is to avoid Vodafone Idea.
Okay, so that's with regards to Vodafone Idea as well. But moving on, we're talking about aviation disruptions as well. They've been deepening amid West Asian tensions. Indigo has actually cancelled 162 flights, suspending all services to and fro from the region till noon, including London, Heathrow, Istanbul and Manchester. Akasa Air has also extended its Middle East suspension. Let me first get in my colleague Danish for more. Danish, what are you picking up? Because it's a double whammy when it comes to aviation companies. One, flights are being cancelled, so there is a revenue loss that comes in over there. And secondly, with the surge in terms of crude prices impacting jet fuel prices, they're going to see escalation in terms of costs as well. What are you picking up?
Well, that's correct. We are seeing that the entire global aviation industry is impacted because of the airspace closure over key parts of the Middle East as well as certain other areas. So because of this, like you very rightly mentioned, that it is a big double whammy for the Indian Airlines, not only for the global airlines, but if we talk about the Indian Airlines specifically, on 1st March, we saw that in fact the ATF prices have also been increased by 5,000 rupees per kiloliter on an average. So much before the overall impact of the crude as a whole, we are seeing that already the ATF prices have started to go up. But as far as diversions are concerned, over the past 2-3 days, Indian Airlines have cancelled over 1,000 flights. And if we talk about a specific few airlines, for example, Indigo has not only cancelled its operations to and from the Middle East, but also on select key European routes like London and Istanbul. Similarly, Air India is also cancelling certain key European routes as well. So one of the reasons why this is being cancelled is the fact that because of the whole Russia-Ukraine crisis, already the airlines were using another route to go towards Europe, but even that is impacted because of the entire Middle East tensions that we are seeing. So due to this, we are seeing that it is a very huge impact for the airlines. And as far as passenger facilitation is concerned, airlines are doing whatever the best they can. They're trying to accommodate passengers in hotels, but it is a big impact for the Indian Airlines, because if we talk about India, Indigo and Air India, these two airlines have big, deep aspirations to become global global carriers, but their global expansion is happening at that point in time when there is a lot of airspace closure. And let's not forget that the airspace closure between India and Pakistan is also there. So because of that, it is a huge challenge for the Indian Airlines. Over the next few days, it is expected that the flight cancellations are expected to continue. So it's a big problem for the entire global aviation industry.
Issues there. Tapan, any view when it comes to aviation companies? Would you advise to book profits now if someone is already there in it? Because if you see the YTD charts as well, I don't think so anyone's really made any money in terms of SpiceJet or Indigo. 12 months, again, pretty flat. Where they started off last February, that's where they are. And likewise, this year, 10.5% is the kind of downtick that's coming on this one as well.
Yeah, I do agree with you. If you see double blow is that, as you told already, and no, even though I was not earlier also bullish on aviation industry and also on Indigo after that fiasco what happened earlier, but here now again because of this crisis, because of this conflict, now what will happen? We don't know what up to what period this will go on. 1 week, 2 week. I don't think it will end soon. And as already the Russia-Ukraine route is closed now. If this route is closed, many of the airlines have to cancel their flight and all that. So again, there will be a margin pressure. Again, because of currency volatility, forex issues will be there. Again, airport charges also we have to see because flights will be stuck at many airports and we have to see that also. So lot many things are there to be seen, and for aviation industry it is a double blow. So I think better to stay away, and yes, if someone is having a profit, better to get out from these aviation companies, whether it's SpiceJet or Indigo. I think things are not looking so great, at least for 2-3 quarters more.
Mahindra Group has decided to kind of rationalize its portfolio, the group portfolio as a whole, and Danish is here to give us more perspective on this development. Danish, over to you.
Well, that's correct. Mahindra has announced that it will be exiting from the Mitsubishi Mahindra Agri Machinery, and this was a JV which was set up almost 11 years back. It was formed in 2015, and Mahindra holds a 33% stake in this particular company. But company sources are telling NDTV Profit that the company has decided to cease operations in a controlled way from the first half of FY27, and the customers will not be impacted. Whatever warranty and the other customers are there, they will be providing those warranties, they will be providing those replacements till the warranty period is there. But one of the reasons why the company has decided to exit from this particular JV is the fact that this was not viable from a very long time, and this was initially set up in order to cater to the Japanese market and the nearby areas. But over the past few years, the competition had suddenly gone up, and the demand production pattern and the demand expectation was also very different. So looking at all these factors, the company has decided that it will cease operations, and it will be happening in a very systematic way, and they have targeted to cease operations from the first half of FY27. But if we look at the overall farming angle for Mahindra, it is one of the strong plays for the company, and in order to ensure that the overall business is not impacted and the value keeps on going up, so that is why the company has taken this decision to exit from this particular joint venture, and it will happen in the first half of FY27.
Danish, thank you so much for getting us those details. Of course, stock slightly under pressure, down by about 1.9%. But with that, we're completely out of time in this edition of Trending Stocks. Tapan, thank you so much for taking out the time. From here on my side, thank you so much for watching. Stay tuned to NDTV Profit for more news and updates.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
New year, new power panel. India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having
One year at the helm of SEBI, and Shri Tuhinkata Pandey has enacted changes that a lot of street would have been hoping for or waiting for, and I'm sure there are many more in the offing. So here we are at Team NDTV Profit at the SEBI headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today.
इसी उद्देश्य से आज हमने इंडिया कनाडा डिफेंस डायलॉग की स्थापना करने का निर्णय लिया है. फ्रेंड्स, पीपल टू पीपल टाइज हमारे संबंधों की असली ताकत है. आज हमने इन्हें और मजबूत करने के लिए कई महत्वपूर्ण निर्णय लिए हैं. एआई, हेल्थ केयर, एग्रीकल्चर और इनोवेशन में आज कई यूनिवर्सिटीज के बीच नई पार्टनरशिप की घोषणा हो रही है. हम कनाडा के यूनिवर्सिटी द्वारा भारत में कैंपस खोलने पर भी सहमत हुए. इंडिजिनस और ट्राइबल कम्युनिटीज हमारी साझा सांस्कृतिक विरासत का महत्वपूर्ण हिस्सा है. सांस्कृतिक आदान प्रदान बढ़ाने के लिए दोनों पक्षों के बीच आज एमओयू किया गया है. फ्रेंड्स, भारत के लिए कनाडा इंडो पैसिफिक में महत्वपूर्ण साझेदार है. इंडियन ओशन रिम एसोसिएशन में डायलॉग पार्टनर बनने में उनकी रुचि का हम स्वागत करते हैं. इससे हमारे मैरीटाइम सहयोग को नई गहराई मिलेगी. हम सहमत है कि टेररिज्म, एक्सट्रीमिज्म और रेडिकलाइजेशन दोनों देशों के लिए ही नहीं, पूरी मानवता के लिए साझा और गंभीर चुनौतियां हैं. इनके विरुद्ध हमारा करीबी सहयोग वैश्विक शांति और स्थिरता के लिए अत्यंत महत्वपूर्ण है. विश्व में चल रहे अनेक तनावों को लेकर भारत की सोच स्पष्ट ही है. हमने सदैव शांति और स्थिरता बनाए रखने का आह्वान किया है. और जब दो लोकतंत्र साथ खड़े होते हैं तो शांति की आवाज और भी सशक्त हो जाती है. पश्चिम एशिया की वर्तमान स्थिति हमारे लिए गहरी चिंता का विषय है. भारत डायलॉग और डिप्लोमेसी के माध्यम से सभी विवादों का समाधान का समर्थन करता है. इस क्षेत्र में मौजूद सभी भारतीय नागरिकों की सुरक्षा के लिए हम सभी देशों के साथ मिलकर काम करते रहेंगे. एक्सेलेंसी, आपकी यात्रा से हमारे सहयोग के हर क्षेत्र को एक नई ताकत मिली है. भारत के प्रति आपकी गहरी प्रतिबद्धता और दूरदर्शिता के लिए मैं एक बार फिर आपका हार्दिक अभिनंदन करता हूं। बहुत बहुत धन्यवाद।
Thank you, sir. May I now request the Right Honourable Mr. Mark Conry, Prime Minister of Canada, to give his remarks to the media.
Thank you very much. I will make my remarks in English and in French. And may I begin by thanking you, Prime Minister Modi, for the generous hospitality that you have extended us here in New Delhi. You've extended my ministers as they've visited, and the spirit of partnership with which you've approached our relationship since we first spoke in my capacity as Prime Minister last June. And as you mentioned, a few weeks later, you made time to come to the G7 summit in Alberta, Canada. 5 months after that, we met in Johannesburg at the G20. And now, today, the first bilateral visit of a Canadian Prime Minister here in 8 years. In the intervening months, our foreign ministers have been busy. They've met 5 times. 4 of my ministers have led delegations here to India. Provincial premiers have been here, including today. There has been more engagement between the Canadian and Indian governments in the last year than there has been in more than 2 decades combined. So, this is not merely the renewal of a relationship. It is the expansion of a valued partnership with new ambition, focus, and foresight. A partnership between 2 confident countries charting our own course for the future. In the last decade, let's just reflect on what's happened. In the last decade, under your leadership, Prime Minister, India has become the fastest growing economy in the world. Per capita incomes in this country have risen at a pace never seen in history. Seldom in human history. The most ambitious projects in clean energy, in the digital economy, in biofuels, in the next generation of artificial intelligence talent are all here in India. Prime Minister, Canada shares such ambition and your sense of purpose. Comme l'Inde, le Canada voit un monde en profonde transformation. Comme l'Inde, nous savons que les certitudes qui ont structuré le commerce, la sécurité, la finance et la diplomatie pendant plus d'une génération ont été renversées. Et comme l'Inde, nous reconnaissons que le système multilatéral sur lequel nos 2 pays ont longtemps compté est mal adapté aux défis de notre temps. We both know that nostalgia is not a strategy, and that those who succeed in this new era will be those with the confidence, the ambition, and most importantly, the partnerships to build a more inclusive, sustainable, and prosperous future for all our citizens. And I believe the prescription for success in this new era is well exemplified by the theme of your G20 presidency in 2023, which I had the honor of attending. That theme, of course, one Earth, one family, one future. Because the challenges of our age cannot be solved by one country alone. And only by building on the principles of one Earth, one family, one future can we forge the partnership worthy of our countries. Reconnaissons que nous partageons une seule terre, nous renforçons notre collaboration en matière de climat et d'environnement. Le Canada prévoit de doubler son réseau électrique d'ici 2050 et d'accroître considérablement le déploiement des énergies renouvelables et du stockage de l'énergie. De son côté, l'Inde est une chef de file mondiale dans le domaine de l'énergie solaire à grande échelle. Les technologies de stockage d'énergie et d'autres formes d'énergie renouvelable. C'est pourquoi le Canada et l'Inde tiendront cette année un sommet sur les énergies renouvelables réunissant l'industrie, les investisseurs et les décideurs publics afin d'élargir et de diversifier le commerce des technologies propres. Et nous bâtissons à partir de maintenant un partenariat énergétique pour un avenir plus durable. India is a country whose demand growth for energy is projected to double by 2040. And to meet that demand sustainably, India plans to increase its renewable capacity by 500 gigawatts by the end of this decade, and to almost double the share of LNG in its primary energy mix over the same period. Canada is well positioned to contribute as a reliable supplier of the world's lowest carbon, responsibly produced LNG from our west coast. As India seeks access to critical minerals for its manufacturing, its clean tech, and its nuclear plans, Canada's resource base and world-leading companies position it as a strategic partner. As one example, the nuclear agreement, the uranium agreement signed today. As another, the fact that 40% of the world's mining companies are listed in Canada. Today, we are launching a strategic energy partnership with significant potential to expand bilateral energy trade. We've signed, as you've seen, a new critical minerals partnership spanning development, processing, and secure supply chains for clean energy, electric vehicles, and advanced manufacturing. We're deepening our cooperation in clean energy, expanding collaboration across wind, solar, and hydrogen. Because Canada has big plans as well. We plan to double our grid by 2050, and India can be a major partner in this expansion. As you've seen, the government of India and Cameco have signed a major $2.6 billion uranium supply agreement supporting India's nuclear ambitions and our shared commitment to clean, reliable baseload power. All of these agreements, under one planet, are beginning of a new prosperous relationship that will offer generational opportunities for workers and businesses in both our countries, and which will protect the planet for future generations. Secondly, we are one family. The greatest, most enduring strengths between Canada and India are the families who call our nations home. Nearly 2 million Canadians trace their roots to India, including leaders in business, science, culture, and government. Tens of thousands of people travel between our countries every year to visit friends and family. 400,000 talented Indians study in Canada. That is twice the number in the United States. It is 4 times the number in the United Kingdom. These students, these connections, deepen our ties. And so we're collaborating to build on those strengths. We've launched the new Canada-India Talent and Innovation Strategy with 13 new partnerships to deepen our ties in education. And this includes collaborations involving McGill, the University of Toronto, University of British Columbia, to work across artificial intelligence, health sciences, and digital architecture. Notre partenariat va propulser des centaines de chercheurs canadiens et indiens grâce à des projets de recherche conjoints de pointe. Nous lançons de nouvelles bourses et de nouveaux programmes de fellowship pour l'Indo-Pacifique afin d'accroître la mobilité universitaire et de former la prochaine génération de talents. Over the longer horizon, the Prime Minister mentioned a moment ago the $100 billion of investments already in India by our pension funds. Those pension funds have $2 trillion in capital. There are already some of the largest foreign investors here. Potential for significant growth, particularly given the scale of the infrastructure build in this country. And thirdly, we share one future. That's why we're forging deeper ties in frontier technologies from AI to space. At the G20, India and Canada signed a landmark trilateral partnership with with Australia on AI.
One year at the helm of SEBI, and Shri Tuhinkata Pandey has enacted changes that a lot of street would have been hoping for or waiting for, and I'm sure there are many more in the offing. So here we are at Team NDTV Profit at the SEBI headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today. Now, when you took over, sir, I would presume that the docket for change was fairly loaded, and you've enacted a bevy of changes. If I were to ask you to think of how would you rate your tenure on the first 1 year, what would you say? One or two things that have been landmark for you, and one or two things that you, on hindsight, you might think maybe you could have done it differently.
Okay, I think first of all, it'll be difficult for me to self-analyze, except to say that the year was quite a difficult one in terms of the challenges that it offered. Normally the markets do require a certain amount of stability of policy. Of course, markets are also used to all kinds of uncertainties as well. But particularly the year gone was particularly beset with huge amount of uncertainty arising out of geopolitical developments, not only the wars and crises, but also tariffs in particularly, which were actually impacting a big deal, vast segment of Indian economy, Indian capital. On top of it, we of course had, as I said, that this challenge of a perception that we are over-regulating, and therefore we also had to really clearly put together a collective strategy of, optimum regulation based on, as I said on the first day, 4 T's, which is transparency, trust, and technology and teamwork. These were certainly enablers to achieve this optimum regulation. And all that I can say is that the teams, that is internally, that SEBI, that we have, and also the teams outside, which is the committees and the market participants in the industry and the investors associations and the proxy advisors, all of them have actually helped to put together a series of reforms, which I can call it, while we had one of the best primary markets in 2025 as #1 in the world in terms of IPO, we also have year of reform in terms of regulations and simplicity and ease of doing business.
Just an extension or a related question, actually, wanted to ask that there is a perception that under your leadership, SEBI has taken a facilitative approach, of course, ease of doing business, clearing files faster, but critics, arguing that this may kind of build a latent risk. How do you want to respond to that?
So I think ease of doing business is not equal to more risk. This is a myth. Actually, the risk is the risk. Risk is to be measured in, the way risk is measured. Ease of doing business is where you are trying to achieve the same thing with less friction. So you are not really, reducing the goal. You are only saying that your goal can be very well done by a simpler way. If I may ask you a question, Like if you have something overlapping regulations, more intensive, more micro regulations, how does it help risk management? Because you may be only thinking that you are managing risk, but you possibly could be creating more risks.
True.
Because if you are micromanaging many things, you are not perhaps paying your attention to the more riskier things in hand, because you are busy micromanaging.
That's true. Sir, okay, let's try and focus on specifics. One of the things that always comes across when any average business journalist speak to the FinMin, to RBI or to SEBI would be, how is it that we can facilitate ease of investments by the foreign institution community? Because the big talking point of 2025 was that while EM saw a lot of fund flows in, India did not. Now, valuations may have been one of the reasons, but a lot of questions come about. I mean, this whole limit being taken from 25,000 to 50,000, some of the FPIs that we spoke to did say that it is maybe a bit onerous. Taxation may not be under your purview, but this certainly might be. And a lot of other factors. What is it that you reckon, sir, that SEBI can do and you would want to do in order to ease the processes for foreign portfolio investors?
So, one, we should avoid linking the FPI outflows to merely saying that what are the XYZ measures that they face. Because the outflows are contingent on several factors.
Agreed.
And even if sometimes the conditions and processes are very tough or very cumbersome, but if a lot of money is to be made, people will still come in there, right? So I'm only looking at the structural factors, where whether or not what is the current FPI position is, we should be easing business. And when we say easing business, it's easing businesses everyone without diluting risk. For example, if you are taking too much of a time for registration, you are not doing particularly very much due diligence because you are taking time. Because documents would be the same, the examination will be the same. The process itself may be problematic. Suppose you were to wait for wet signatures and apostille documents and so on and so forth, and then wait for a postal delivery. And on the other hand, you can have a digitized registration, digital signatures, which will actually instantaneously deposit all those documents. Now, what has changed? The time is changed, this thing is changed, but the risk remains the same. So therefore, registration as a process where we look at it should be easier, and that we started looking at very closely and made enormous progress working with the FPIs themselves. Then the second one is there were certain other key structural constraints which they have been facing, and for many years. Like, for example, the block deal framework, where block deals were not really, framework was not so favorable in order to actually buy on a particular level. So that was facilitated after due consultations, of course. And the third was the closing auction mechanism. And there again, a structure is in place because this issue has been on works for a long time. And at some point, we had to reconcile between how the domestics feel and how the FPIs feel, and bring about a more, reconciled approach and working out a mechanism which actually was required. The fourth is on the FPI netting. This is a consultation paper. This is something which they have been again asking, why should I be asked to, do it on a gross basis when I have a certain, I'm doing buying, I'm selling, and there's a money that I am going to get, and there's a money I have to pay. So can I do it on the net basis, which is actually like save you on cost. Your capital is more efficiently utilized. These are the kind of things that we are looking at now in the consultation paper, and very soon will you get to it. So the registration and the structural processes, and the fact that we also gave clarity on the T+1 settlement, that T+0 is not something that we are looking at, are kind of measures which actually gives a, medium to long term certainty on how the things are going forward.
So you are going to keep the T+1 settlement going forward also. There is no rethinking on T+0 is what you are saying. Also, just a small clarity needed, as you said, that consultation paper in the works for more measures for the FPI, especially when we see the additional mandatory disclosure requirement increased to 50,000 crore from earlier 25,000 crore. Some more measures are coming, in your regulation of that sort?
That is again an ease of doing business, because, the 25,000 crore limit was getting onerous for them. And so therefore we had to keep a higher limit. Certainly we should be really looking at, in fact, I forgot to mention our initiative on Swagat FIs. And two more things. Swagat FIs is one where we say that long only funds, sovereign funds, and retail funds with a widely, like UCITS and others, which are well regulated, insurance funds, pension funds, these can be given a Swagat status where we have a much better, much elbow room for them to operate, longer license, the single license they can operate, and much less requirements. This has also been put in place. And then we have also better facilities for those which are exclusively dealing with government securities, and so on.
So you also recently talked about reviewing the portfolio management regulation. What's the thought behind that?
The thought is that whenever we have regulations which are there for 5 years or 10 years, and we are looking at it, what are after the experience, what are the difficulties which have cropped up, or whether some things can be made simpler, or some of the other newer areas have come in which can also be put it at. For example, there is a demat issue, like if you have portfolios, when you have a portfolio transfer from X to Y, you can actually transfer the portfolio, but you have to open another demat account. So then it will amount to actually squaring off your position and then buying another set of positions. So if we say that on the demat account we have change of power of attorney, because the securities in any case belong to the investor. The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक concept नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. Firstly, let's look at what's on the show today. Firstly, we'll be speaking with the management of Krishna Defence and Allied Industries. The company recently migrated to the NSE main board. The order book stands at close to 142 crore, and given the geopolitical scenario that we are seeing currently, what could be the growth prospect going forward is something that we'll discuss with the management on the show today. Secondly, sticking with the geopolitical issue, a lot of companies are gaining in trade like Deep Industries, Jindal Drilling, HOEC, Antelope Solar, and this is largely on the back of the fact that crude prices have increased, and this in turn could be beneficiary for these companies. So how is it beneficiary? How will it benefit these companies is something that we'll discuss on the show. Apart from that, a lot of travel companies or travel ancillary companies like Yatra, Ixigo, Ease My Trip, Thomas Cook, RateGain are down in trade. What is the reason behind this? Obviously, airspace closure is one of the reasons, but why this number is big is something that we'll discuss on the show. When it comes to Fino Payment Bank, that stock is seeing strong volume action after the overnight news that has come in. Over the weekend, the news that came in related to the MD and CEO was arrested under GST evasion case. Varsha will be giving us a detailed outline of what has happened so far and what the management said on the conference call. And lastly, Idea forges one counter that's gaining in trade. Volumes are nearly 10 times. Stock was up nearly 11%. What could be the potential reason behind this is also something that we'll discuss on the show. Now, if you look at the market, the Nifty was down nearly 500 points in trade. It's trading way below its 50, 100 and 200 DMA, trying to find some support around the 24,650, 24,700 level. Currently, it's below the 24,700 level, which was one of the crucial marks. Now, it might find support around the budget day low of 24,571. When it comes to sectoral indices, Nifty Pharma and Nifty Metal are the only two indices which have declined less than 1%, though they're down in trade, but less than 1%. Nifty Index, Defense Index is also down in trade, but again less than 1%. But when you look at Nifty Auto, Nifty Consumer Durable, Nifty Intra, all these indices have declined more than 3%. In fact, even if you look at the Nifty Small Cap Index, there also the losses are close to around 3%. But what are the stocks that have been buzzing when it comes to the small cap space, Varsha?
Well, you know, overall, if you see the sector is down, no doubt about that, mirroring a benchmark. But let's see which are the stocks which are gaining in this market. You have Bhaganagar India, wherein the stock is gaining. This is, of course, the volume. If you see, the volume stand at around 2x of its 30-day average. You have Stallion India, Fluorochemicals also. The stock is up almost 5%, if I'm not wrong, in trade today. There you go. Actually, it's down. It has come off, so it's down almost 2%. Where Idea Forge, Jindal Drilling, Deep Industries, these are the stock which are, you know, in focus as oil drillers are in focus on the back of, Iran-Israel war. While on the loser side though, you have Dish TV, you have Sajal Glass and Vishnu Chemicals, which are under pressure. This is of course on the back of volumes and overall the sentiment that we are seeing into the small cap. So the Vishnu Chemical is down almost 3%, Sajal Glass and Dish TV are also under pressure. So overall, Somit, not interesting as such is happening when it comes to small cap sector, though if you see the losses have come up, but still the sector is in pain.
Well, thank you, Varsha, for that extensive small cap market check. Moving on to our first management on the show, Ankur Shah, the Managing Director of Krishna Defence and Allied Industries. Firstly, to start off with, sir, in the third quarter, we have seen a huge improvement in your PAT margin. Is this number sustainable even going forward?
Yes, surely the number is sustainable, but this is just, we are a defense company. To categorize us as a quarter-to-quarter base might not be the true picture that is there. You have to look at it from a longer-term perspective because we have long-term working capital cycles. But the product mix is improving. We are trying to get on high-value products that is there. So we see this growth continuing and continue to go forward.
Hello Mr. Shah, this is Varsha this side. Well, the order book is standing at around 143 odd crore now. My first question related to order book is, what are the timelines when it comes to this order?
These timelines are typically that we have to execute that is about close to 6 months time from the day that we've got the orders that are there. So most of them should be executed within 6 months time.
Understood. And you were also expecting a H2 order inflow of around 100 to 150 crores. Any updates on that? How much of it has, come on still in Q3?
Some of the orders have come in, but some of the orders are in tender pipeline, yet to be converted to PO. So we'll see more action coming on the quarter 4 towards the order book that is there.
Right. So with that, what's the target for the order book, by 26, that is March 26? How much of additional order book or order are you expecting, and with that, where your order book will be? I don't want the exact number, of course, the ballpark range where you see your order book at the end of the year.
How we look at it is, the revenue that we are projecting at about a 30% growth for the next 3 to 5 years at a CAGR perspective. We will continue to maintain that momentum as we go forward. With the current scenario, how things are, priorities change. We are living in a very difficult world right now. So very difficult to put an exact number to what is the new order inflow that will happen. But I can surely say from a long-term perspective that we continue to grow at a CAGR about 30%. That is what we have projected earlier. And we continue to deliver on that performance.
Did you say 50% of revenue growth in FY27?
No, I said 30%, 32 in that range, 30% plus, yes.
Okay. So just wanted clarity on one thing here. You started the year with, I believe, an order book of close to 260 crore, right?
Yes.
And currently it's at 142. So it clearly shows that execution has been going on. But what about incremental order inflow, sir?
That is coming through. Please remember, we had Operation Sindoor happening earlier this year. The priorities of the government were on emergency procurement and other things. So these the products that we supply are used for shipbuilding, for tank building, which are long-term projects. So there was kind of a delay in all those things, which are now starting to convert again.
So any timelines that you could give, say over the next 6 months, how much order inflow are you expecting, or for how much amount of order you have placed bid, you might win those orders, or you're in the L1 category? Some details on that front.
Very difficult to put a number around that. And I'll go back to my answer earlier that, the growth that we projected at the 30% plus, that is that we continue to achieve in those growth in terms of revenue that we see. We are pretty confident on that.
I completely understand it's very difficult to state a number of how much orders you would win, but at least you might have the number of orders which for which at least you have placed bid. If you could share at least that number.
Those numbers and the range of about close to 100, 220 odd crores that is there, which are still in pipeline per se.
Okay.
Right. And also, Mr. Shah, just, stretching this on the revenue growth, you said 30% CAGR. Now I'm assuming that won't be linear, for the next 3 years, because if you see the CAGR growth of yours has been 58% now, and I understand because of low base also. But are you being conservative on the 30% of CAGR growth that you have envisaged?
We are being more realistic there, Zed. This is something that we are very confident of achieving, and that's the number that we are showcasing and telling investors. This is a number that we feel confident of going forward. Of course, the effort will be there to increase on that number, but this we can confidently say that we should be able to achieve.
Understood. And also on the autonomous underwater vehicle, you're betting big on this. Just wanted to understand what is the capex plan and when are the commercialization timelines and revenue contribution. If you could, give us details on that.
In autonomous underwater vehicle is a very high tech thing involving several technologies. The product is under development stage right now. So the first target is to be able to successfully prove the prototype developmental model, which should be closer to the year end of this financial year, to December 2026. We see that coming in, and then we will talk a number. So the focus right now is to successfully build the product as per what the naval requirement is there.
The bulber production capacity, I believe you have expanded that to around 4,000 to 4,000 tons per annum in FY26. Any other capital expenditure plan that you have envisaged for, say, for FY27?
Not major, not to this tune, that is it, but we're working on a couple of projects that are there. If those projects fructify, then we will be looking at doing some capex even in the upcoming financial year.
Okay. Also, if you could just help us with this, the current infrastructure capacity that you have, how much revenue can it be, how much revenue can these infrastructure capacities generate, or how much more scale is there when it comes to revenue growth here on your existing product base?
Yeah, so the revenue growth in terms of capacity installed that is there, assuming the same product line that we are working on, is in the range of about 400 to 500 crores that is there, which will involve some way of mechanization, automation that we will look forward to take on to. But with the existing product range and the capacity that we have, we see moving the ante to about close to 400 to 500 crores.
So, Mr. Shah, on that JV with the Netherlands-based company, any capex aligned to that, and when can you see that contributing to your top line?
Capex for that has already been initiated around the basic, because the testing and all those things we have completed. We see that adding to our revenue systems somewhere around Q2, Q3 of FY27.
And Mr. Shah, so you won't be doing any major capex in FY26 and FY27 as well?
FY27 we'll be doing, but not any major capex. But if we are working on a couple of projects with the Navy right now, and if those projects take off per se, then we may be looking to do. But we are waiting for to move forward on those projects with the Navy and one with the Army too.
I believe you also have a few stake in multiple other companies, 20% stake in Conceptia Software, 40% stake in Wave Optics. What is your plan here? Do you aim to increase your stake more to around 51% in these companies, and going forward, what are the plans with these companies that you have?
Let me just brief you on what both the companies do. So Conceptia has been in existence for over 15 years. It's a ship and a submarine design company. For us, it was more like a backward integration. So it was a natural tilt to have a design element in our company. So we were not only delivering just a steel or a product that is there, but we had the capability to deliver a complete platform or a product. So that was the idea behind taking that company. There is consistent growth happening on the marine side and the shipping side also. So we see a lot of business coming in if you're able to both design and make the product forward that is there. That is the reason to work with Conceptia. Whether to increase stake and all will be dependent as you move forward. It's more of a strategic investment that we wanted to do. With Wave Optics, it's a defense electronics company that is making modules for conversion of radio frequency to optical fiber and vice versa, which has several applications that we are taking forward. We have about 40% stake, and at the right time, if permissible, we would want to try to increase the stake going forward. But that all depends. There's nothing that has to be done immediately for now.
Understood. Well, thank you so much, Mr. Shah, for answering all the questions, and it was great having conversation with you. Thank you so much.
Thank you. Thank you very much. Thank you. Thank you. Appreciate it. Thank you very much.
Thank you. Well, this was Krishna Defense outlining 30% of CAGR growth for the next 3 to 5 years. But with that, let's also invite the guest for our show, Mr. G. Chokhalingam, who's the founder and MD at Economics Research. Mr. Chokhalingam, you heard the management of Krishna Defense. What are your views on the same? What should investors do considering the 30% CAGR of revenue growth that the company is expecting for the next 3 to 5 years?
Yeah, definitely they have done extremely well in the last 3-4 years. But that is in the price. Stock is trading at around 49 PE. So therefore, I would suggest that as stock keeps rising, one can book profit. There is only one concern. In FY23, the fixed asset was just 12 crore and FY26 September month, it was around 22 crore, just 10 crore addition of fixed assets, but the revenue almost tripled. So I'm not able to understand, with such a marginal addition to fixed assets, how they achieved such a phenomenal. But one should congratulate the way they have performed very well. Just I would go by the valuation multiple in this stock market. So therefore, I would give sell call as stock keeps moving up.
Right. A sell call coming in from Mr. Chokhalingam on Krishna Defense. Moving on, before we talk about the next small cap stock, let's get in Puneet to understand what's been buzzing on the F&O side.
Well, thank you for that. Well, largely the Sensex continues to be under pressure today, and Larsen and Toubro has continued to be under pressure, and that has actually increased as we've gone through the day. So now stocks down 6.65%. Indigo as well as Maruti, Adani Ports, Asian Paints, and some of the other ones that are down and out today, given what we see in the global uncertainty across the Israel-Iran war now. Barring BEL as well as Sun Pharma now also in the green, you're seeing a red screen across the board. And when you look at the BankX also, that also is not giving too much confidence at this point of time. So you're seeing SBI, Federal Bank as well as Bank of Baroda continuing to be in the downtick today. And with SBI, the 1200 mark touched. Since then, we've seen a sell-off. And while not a deeper one, continues to be a stock that's under pressure today as well. But when you look at stock-specific action, the longs largely, when you put the build-up on the defense names, do prop up, as well as the safer plays like Hindustan Zinc. So Solar Industries is up almost 2.5%. In terms of the shorts covering as well, we've seen Muthoot Finance as well as BL come on the fray as well. So a similar story playing out in the defense way, where longs are being built on and shorts are being covered as we speak. In terms of the long unwinding, Samvardhana Motherson is seeing a stock that's done decently for its investors in the recent time, but hit that high and now seeing selling pressure there. And NBCC is also the other one. The larger infra companies are definitely bearing the brunt, but the mid-cap ones are also not showing any sign of progress or growth at this point of time, and that's visible in the stock prices as well. Finally, in terms of the short build-up, you're seeing L&T there as well as RVNL now also that's propped up on the list. So these are some of the other key stocks that are seeing build-up of shorts, but largely this is the stock-specific action, seeing the effects of the Iran-Israel war on all of these stocks and more.
Right. Thank you so much, Puneet, for all the details. Well, viewers, let's split into a very quick break. We'll be back with other set of small cap stocks on our radar. To stay tuned.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life.
Well, a host of stocks that we need to keep an eye out for, given the fact that the geopolitical issues have a bearing on them. Firstly, if you talk about the travel proxy trades like Ixigo, Yatra, Ease My Trip, Thomas Cook, RateGain, SpiceJet, all are trading down in trade, down more than 5 to 10% in trade, and this is largely because of the geopolitical issues that we have been listening. Firstly, the Dubai International Airport sustained major damages and it has been shut. The airport in Abu Dhabi and Kuwait were also struck. Thousands of flights have been cancelled across Middle East and at least 8 countries have shut down their airspace. There is Iran, Israel, Iraq, Jordan, Qatar, Bahrain, Kuwait and UAE all have declared that their airspace has been closed. So this will definitely have a bearing on all the online travel companies and also on airline companies, because Gulf region is the primary corridor linking India to the Middle East, Europe and North America as well. And just to give some number, in FY25, a total of 74 million passengers travelled from or to India from various cities, from various international cities, and of this 74 million people, nearly 36 million passengers, that is nearly 49%, were from the Middle East nations like UAE, Qatar, Saudi Arabia, Oman, Kuwait, Bahrain, Iraq and Iran. So this just gives you an idea or perspective that what number of passenger could get impacted if this shutdown continues to remain in force for the next few days or next few months. We are still not clear on that front. So that is one thing, and that is one of the reasons why these stocks are down. On the flip side, stocks like Jindal Drilling, Deep Industries, HOEC and Antelope Celan, these counters have been gaining in trade because largely they are beneficiaries of rising crude oil prices. Now Brent crude is trading near $78-79 per barrel, which is the highest level that we have seen since June 2025, and this is because of the geopolitical issues. Now Iran's oil production might be on the lower side. They contribute just 3% to the global oil number, but they control the Strait of Hormuz, and because of that nearly 20% of global oil and gas passage happens through the Strait of Hormuz, and because of the current tensions we have seen a surge in crude oil prices. So how does this higher crude oil prices benefit? Firstly, companies like oil explorers like HOEC and Antelope Celan. Higher oil prices leads to higher realization, and higher realization means higher earnings for both these oil explorers. When it comes to oil drillers, there won't be any immediate benefit that could come in for these companies, but sentimentally it's positive because usually higher crude prices lead to improved drilling activity, and improved drilling activity leads to higher offshore rig rates, and if the rig rates improve going forward, then these companies could tend to benefit out of that. However, at this moment there won't be any financial impact, it's just sentimental, but when it comes to oil explorers, yes, there could be an immediate financial impact that could come in. Mr. Chokhalingam, the stocks that we discussed, firstly on the travel agency sides, and then if you look at drilling companies and oil explorers, how are you looking at these counters? This current fall, is it a time to buy online travel agents like Ixigo, Yatra, Ease My Trip, anything that you find interesting here?
Among travel companies, I find Thomas Cook very interesting. It has got a very good durable business model. It has also got a lot of research and fixed assets. There is a great value inside this company. So I would prefer Thomas Cook among all these. But I would not prefer any oil-related company because I may be wrong, but I believe this is only a temporary tension. It is unlikely to last for very long. And also oil outlook, I have a very negative in the medium to long term.
Right. Well, moving on, Fino Payments Bank. Let's see what that stock is doing. That stock though recovered there you go. The stock is down almost 0.8%, but the shares of a bank fell sharply in early trades. Now this is because of arrest of MD and CEO Rishi Gupta, where the stock later, we are seeing a good recovery there. Well, the reason for the panic was, of course, we all know that CEO was arrested under GST Act and the investigation was linked to business partners though, and the company says that this is not related to bank's own GST compliance. And there was a clarification, and hence we are seeing this recovery. Well, the probe pertains to program managers linked with multiple banks, no involvement of bank officials, and a quick recovery shows limited panic after clarification. And special board meeting has been conducted wherein Ketan, a merchant, was appointed to oversee day-to-day operations, which ensures business continuity. And management did come on con call and clarified all those things, and hence we are seeing this recovery in the stock. Let's see what are the con call highlights, wherein the bank and Mr. Gupta have no role in program managers, do not foresee any financial impact right now as said by the management, and bank has not issued any fake invoices, and they doesn't maintain any current account of program managers, and there's no GST evasion by the bank, and GST evasion is on program manager side. So no impact on company and no impact on financials. Well, Mr. Chokalingam, though the stock has recovered, what will your advice be to investors in such stock?
I would avoid, there are so many stocks out of 4,000 listed stocks to look out. I would stay away from, when such issues arise, I would avoid.
Thank you, Mr. Chokalingam. Thank you for joining us and giving us your perspectives on the host of stocks that were discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me is, of course, Mahima Vachrajani, and it's a tough day for the markets today. Sensex is down almost 1,800 points at this point of time. The Nifty also under pressure and relenting as we speak, because we've seen the pressure intensify actually in the last hour or so, and there you go, because we are maintaining 24,600 now. When I said 24,600, because we've been consistently talking about the 25,400 mark we maintained. We're now very close to the level that we were when the budget session had happened. We hit the low at that time of 24,600 to become a very, very crucial level, down almost 560 points at this point in time. Let's pull up the heat map for the Nifty 50 and show you stocks such as Larsen and Toubro, which are under pressure today. A lot of order book coming in from the Middle East for the company, and hence stocks under pressure today. You're also seeing Indigo, Rani Post, Jio Finance, Maruti, and as well as Tata Motors PV down. And the auto sales weren't that bad. They weren't half that bad actually, barring a couple of names like, which you were seeing slow growth. You're seeing almost a 20% growth for Mahindra and Mahindra, 30% growth for TVS, but stocks not showing that one bit at this point of time. And you also look at the advanced decline ratio. Before I toss to Mahima for the broader markets, you continue to see that it has been a broader market pain essentially, and that has built out to almost just 200 stocks that are advancing in trade today, and almost 2,400 which are declining. But Mahima, the pain clearly visible, and if you also look at it's a broader market pain in that sense, unrelenting to say the least.
Yeah, unrelenting to say the least. I mean, 200, have you ever seen that number? I don't think I have in my career so far seen that 200 number on the advances versus that of such a big decline number. Just before I talk about the mid cap and the small cap, the VIX, Puneet, look at the way it is moving right now. It's almost 30%. If you can quickly pull that up, 29.3% at the highest point, and that indicates the volatility in markets right now, and that's reflected to the way the markets are reacting, right? The mid cap 150 is also down by about 2.6 odd percent. The small cap 250 almost now down by about 3 odd percent, 2.92. So both at their day's low point. So it's not looking very good when it comes to the broader end of spectrum. The BSE 500, if you can try to pull that up, I mean, I'll be surprised if there is any stock which is, except for Tejas Network, which is, unarguably the stock of the day. But Sterlite Tech is Muthoot Finance. Of course, all of this, Muthoot Finance on the back of gold prices going up because of this war. Solar Industries and Phenolics Cables are some of the counters which are in the green. But on the flip side, you have all of these names, Easy Trip, you have something like Redington, Relaxo, L&T, MMTC, Birla Corp, Asahi India, all down in that range of 6 to 8% odd. So, I mean, bloodbath could be, the least, scary word that I can use for the market position right now. But with that, let's also welcome in, our guest for the day, Lancelot Dicuna, CIO of ValueX Wealth Connect LLP, and Rajesh Paravia, SVP Technical and Derivative Research at Axis Securities, joining us now. Rajesh, before I take on, the queries, I think your perspective for the markets right now is of the utmost importance.
Hi, good afternoon. So it's carnage on the street, and looking at the breakdown below 200-day moving average, and again, all the baskets, all the sectors are witnessing a sharp selling in today's session. Now Nifty is almost trading almost near to this budget day low. So I think 24,550 would be the next level to watch for. If it's break, then I think another 200-point down move can open from those level. At this juncture, we are in oversold trajectory. So maybe some pullback would be there, but again in the pullback 24,750, 800 are the area where again shorts are still there. Looking at the call put concentration data, also the major call writers are now at lower strike at 24,700, 24,800 strikes. So these levels are likely to act as a supply zone for any minor pullback if it's come. But looking at the overall setup, we believe that if we continues to trade below 24,800 level, minor pullback should be used as a shorting opportunity. We could see further lower level towards 24,300, 24,200 level also. So structure is now damaged on the near term, short term. Bank Nifty has also broken the important support area of 60,000 also. And looking at the call concentration now shifted at lower strike, which is also showing that whatever minor pullback if we get in Bank Nifty also, here also we may see a supply pressure and possible down move towards 59,000 we could see for Bank Nifty also. So structures are damaged for near term to short term also.
Got the view, Rajesh, and thanks so much for that view. But continue to take stock related queries at this point of time. If you haven't already, do start sending them on the WhatsApp number. You can also call us, talk to us as well as our experts directly for your stock related queries. Both numbers on the top of the screen right now. But the first one coming in on Emphasis, our viewer Ramesh has bought 27 shares at 2,772 odd rupees. He is currently sitting on a loss, asking what he should do with this counter. But Lancelot, let me come to you. Welcome to the show. What would you recommend him to do? What would you recommend Ramesh to do at this point of time with Emphasis?
Good afternoon, Puneet. I think, if you look at Emphasis, it has been hit by two things. One is, of course, the AI theme that is playing out. And based on that, the stock is down. And if you look at, and obviously now based on the situation in the Middle East, which while may not affect their business directly, but indirectly they will have an impact as the economic fallout of this situation is felt across the globe. So if you look at it from a valuation perspective, the stock is trading at about 23 times its earnings. And given that we may see earnings downgrades, going forward, because of a variety of reasons, partly related to AI and partly related to the situation, it may be better to wait. Even if you want to average out into this stock, maybe better to wait for maybe another drop. And at that time, one can look at accumulating, because the IT space and some of the companies and many of the companies in the IT space are going to take a long time to turn around and to see earnings growth again. It's going to take a while, and that means that the stock will not get re-rated for a long period of time. So one should be rather cautious than buying, especially because you're looking at it from a long-term perspective.
Okay, all right. So that's the view coming on Emphasis. The next question that we have is from Sankara Rao, who's writing us from Vijayawada, asking about Anant Raj, and he wants to know if this is a good time to enter this counter. Rajesh, this counter also, kind of rallied because of this whole AI data center boom, of course. But do you think it's the right time to make an entry?
So looking at the weekly structure, stock is holding the multiple support area, which is placed at around 500, 490 zone, which is very important and crucial for near-term, short-term perspective. If at all stocks manages to hold 490 level in this kind of volatility, then yes, there is a possibility that stock may show some pullback action from the current level itself. So if you want to buy here, keep strict stop loss of 490. On the higher side, once stock able to take out above 550 zone, then yes, we may see some rally towards 600 level also. So you can buy, but keep stop loss of 490.
It's also important, to see on such days what is actually doing well, and surprisingly, MCX is one of those plays. Sunil from Pune is actually holding shares at 2,500. Let's pull up the stock. MCX is what I'm talking about, and he's holding 56 shares. Stock's up 2.5% on a day like today, and so he's bought it at very close to the current market levels. But Rajesh, he's asking a short-term view on the stock. It has been under pressure as well, but what would you recommend?
So MCX is in uptrend across all time frame. Yes, from days high, some profit taking we have seen in this counter. But if we analyze on the long term perspective, stock is holding the strength. Stock is almost trading near to 20-day moving average support area. So still trend is on the bullish side. 2400 needs to keep as a stop loss. Once stock able to take out about 2570, then possible really towards 2751, 2800 we may see in the MCX. So hold the position with stop loss of 2400.
In fact, it's also, I think, up because of your crude, your
gold, yeah.
silver, etc. trading
right.
at higher prices and volumes going up for something like an MCX. Just to take a follow-up query on this entire aspect, right? Crude. Sriram Raghuraman from Chennai is asking this question on Oil India. Now, this is one of the companies that probably stand to benefit from elevated crude prices. She's bought 50 shares. He's bought 50 shares at the average price of 172. Wants a one-year view on this particular counter. Lancelot, what's the view like?
So Oil India is engaged actually in the in assistance as far as the oil exploration company is concerned. So they provide engineering services for oil exploration. Now, just because prices may have gone up in the short term, it doesn't mean that exploration activity is suddenly going to get increased and you'll find orders, coming to them. And second is most of their orders are domestic. So in that sense, nothing has changed perceptibly on the domestic side. And so the stock is already factoring in all the positives that were there from their earnings as well as from their future outlook. And if you look at valuation wise, it is still relatively a little expensive. So there could be, whenever there's a correction, you could see a re-rating of the stock on the downside. So one should be a little cautious and probably wait for lower levels to add to the stock.
We were also showing these numbers coming in from Force Motors. Now the auto pack largely not showing so much reactions, and it's been a decent set of numbers. But look at the Nifty auto, and you might think otherwise, but that's largely the state of the market where we're in, because sell-off even in areas where there are good profits made is a theme that's visible today as well. But decent numbers from Force Motors, 8% growth in its domestic sales. But let me go across, take the next caller for today from Bengaluru. Rita has a stock query for us. Rita, good afternoon. Welcome to the show. What's your query?
Yeah. So since some of the stocks have corrected today, so I'm looking for long-term investment. So is it good to buy GMR Airports or Anantraj or L&T? I mean, which one to enter in this lower level?
Got it. Well, well, Rita, opportune time, opportune question as well. But Lancelot, between GMR Airports, Anantraj as well as L&T, what would you recommend Rita to look at right now, and would it be in a staggered manner, or is it a good time to enter according to you?
I think from the three stocks that she has given, probably L&T offers the most a fruitful risk return benefit, because while the order book, almost 37% of its order book does come from the Middle East, and that could get hampered in terms of implementation. On the other hand, they also do have a larger domestic business. And second is that, there will be more orders. If you're looking at an investment time frame of 3 to 5 years, then there will be more orders that will come in terms of rebuilding a lot of the infrastructure that has got damaged during this period of war, etc. So I think opportunities will be better for a company like L&T because of its strength in terms of being able to to sort of ride through this crisis period and then emerge stronger as the business again kicks in as compared to the other two companies.
Okay. In fact, Geeta also, who was calling us from Bangalore, had a query on L&T, and Lancelot has already answered that. So, Geeta, I hope that solves your query. But Rajesh, quickly, I'll take up L&T with you on charts as well. What is the technical setup looking like?
So long-term structure is bullish, but yes, on the near-term chart, some profit taking we have witnessed in this counter. Stock is almost trading near to its 50-day moving average support area, which is placed at around 4,000, 4,040 area. So I think if stock able to regain above 4050 level, I think here we may see again continuation of uptrend. Overall structure is bullish. Buy and accumulate would be the strategy. On the downside, keep a stop loss of 3950. And if your horizon is for long term, yes, we do hold bullish view for this counter.
Okay, the next one is on ITC Hotels. Ashish from Delhi is asking. He's holding 2,000 shares at the levels of 202. He says that it's moving towards its 52-week low. Should he average out and buy at that levels? ITC Hotels is the stock. Lancelot, what is your view? I mean, it's not that it's not been performing well. The fundamentals, the operational metrics look strong enough, but the stock is not moving. What's the view like?
I think as far as ITC Hotels is concerned, you have two issues. One is obviously the business is going to get impacted because if this war gets prolonged and does not get settled, in the next couple of months, there could be a large number of cancellations for foreign tourists coming into India. People from the Middle East may not be traveling. There could be disruption as far as weddings and conferences and other things are concerned. So all of which are actually feeding the hotel business. So definitely this will have an impact on its profitability. Second is there is still a bit of an overhang on the stock as far as British America Tobacco Company, who's a major shareholder, has been liquidating part of its investment over time because they do not want to remain invested in hotels because that's not their core business. And every time they need to liquidate, there will be pressure on the price. So that also will add to it. But if one is looking at, you can accumulate the stock at, from current levels downwards in small lots, because over the next 3 to 5 years, definitely the business will grow and you will see significant growth coming in here, and valuations will then move up as things normalize.
That's the view on ITC Hotels, but we have Mansingh calling us from Andhra Pradesh. Mansingh, you have a question on translated lighting, I suppose.
Yes, ma'am.
Go ahead.
I'm holding one shares, ma'am, at the rate of 620 rupees. And fundamentally, it looks very sound and a good order book.
Right.
Should I wait for average, or should I start accumulate here more? Should I add more number of shares here, or should I wait?
Got your question,
I want to know the
Mansingh.
technical view from Rajesh Palve.
Okay, Rajesh, translate lighting, your quick view on this one.
So stock is in corrective mode, and in this pullback, stock has witnessed a major supply pressure at around 600 level, which is very important to cross on the higher side. Once stock able to take out this 600 level on a weekly closing basis, then we may see some pullback action towards 650, 670 zone also. So at this juncture, in this correction, if your horizon is for little longer term, so yes, you can buy and accumulate. On the downside, the major support area for this counter is placed at around 490, 475 zone. So use this volatility as a buying opportunity in this counter if you want to buy for long-term perspective.
Time now for the rapid fire round in this edition of Fast Profit. Just as we are seeing a 150-point recovery on the Nifty in just the last 17 minutes, but Rajesh as well as Lancelot, you know the drill. The first question, it's on CMS Infosystem bought at 320. What would you recommend, Lancelot?
I would recommend, one can exit at this price.
Okay, Asian Paints is the next one. Rohit wants to know if this is the right time to accumulate. Lancelot, your view?
Yes, Asian Paints one can accumulate.
Shriram Finance, is it a right time to enter is what Anil Singh is asking. What would you recommend, Rajesh?
Yeah, one can buy at current level also.
NTPC is the next one. It's dropped 2.5% today, but for the next 5 years, can I continue to hold? Lancelot, your view?
Yes, one can continue to hold NTPC for future as well.
IRFC should Sridhar continue to hold or sell out, Rajesh?
No, avoid at this juncture.
Okay, Paytm, will it be good to increase position right now? Ashish from Cuttack is asking this question. Rajesh, your view?
If your view for 6 months, yes, you can add in this decline.
The next question that's coming in is on MRF, bought at 144,000. A short-term view, Rajesh, is what Anita is asking. What should she do?
MRF, continue to hold it. 1,30,000 needs to keep as a stop loss.
Okay, Canara Bank is the next one. 200 shares bought at the levels of 148. Divya wants to know if she can average. Rajesh, your view?
Yeah, she can average out at current level.
Crompton bought at the current levels by Anuj. Should he continue to hold, Lancelot?
Yes, he can continue to hold.
Okay, Lemon Tree is the next one. 140 shares bought at the levels of 117. Should I hold or book profits? Arun from Hyderabad wants to know. Rajesh, your view on the charts?
No, I think exit as a stock has broken the support area.
Canara Bank bought at 148. Lancelot, should Divya continue to hold this counter?
I think one can exit this counter even at this price.
Okay, the next one is on Reliance Industries. From long-term perspective, can Pawan Kumar go ahead and buy right now? Your view on this, Lancelot?
Yes, one can look at adding in small lots.
Okay, all right. So that's the view coming on Reliance. But with that, viewers, completely out of time. Lancelot as well as Rajesh, thank you so much for taking out the time and of course helping us answers, on a day where it's much more required. So thank you so much for that. With that, viewers, completely out of time. Do stay tuned. India Market Close up next.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome, you're watching India Market Close, and it's one of those sessions where perhaps investors will be happy that the market closes. It's been a really tough day. Any kind of recovery that was hoped for after markets opened gap down seems to have evaporated. Although at 2 o'clock this afternoon, if you look at this line graph here, you have seen some amount of relief coming in. Now, what happened here between 1:45 p.m. and 2 p.m.? It started becoming clearer and clearer that fighting is only intensifying, and oil refineries in Saudi Arabia are now being targeted. Here's what's happening. Quick snapshot for you on what's happening in the markets this afternoon. The Nifty is struggling around the 24,700 mark. It's seen its worst year-to-date start since 2020. For the month of March, you've seen a 533-point drop on an intraday basis for the Nifty. But remember, budget day was actually worse. That was a 749-point drop. So through the day, budget day was even worse than today. But on a year-to-date basis, it's been the worst drop since 2020. Over 1/4 Nifty stocks have fallen between 2 to 7%. That's how deep the cuts have been. And 95% Nifty mid-cap 150 stocks have declined in trade. It's the broader markets that are hurting even more. And if you look at the small cap, you will see what I mean. 90% Nifty small cap 250 stocks have declined in trade. Support levels, remember, on budget day were at a low of 24,571. And for the bank Nifty, support levels are at 59,000. What is gaining? Let's show you some of those safe havens that are gaining, and where investors can really hide for some kind of cover. Muthoot Finance has seen a Morgan Stanley upgrade. So, some relief was seen there at the earlier part of the day for Muthoot Finance. Hindustan Zinc, because of higher silver prices. Select defense names were also there in place. Remember, markets are closed tomorrow for Holi, and the Nifty weekly expiry has been shifted to Monday. That's also what you're seeing. That compressed time frame is where you're seeing all of that volatility. I wonder if you can pull up the India VIX before I show you the charts for the day. And India VIX is nearly 27% higher. I mean, this is astonishing at 17.5. This is showing you where the fears of the market are. Let's pull up the Nifty heat map for you very quickly and just give you a sense of where we stand. And it's quite a bloody day, to be honest. There was some hope that things would be better than expected, but it has been quite harsh. Of course, Indigo, flights cancelled, crude prices, no brainer, 6% down. Larsen and Toubro, fair amount of exposure in the Gulf region, which is why that crisis. Adani Ports, anything to do with logistics, will suffer right now. So you're seeing that through and through. On the winning side, Bharat Electronic, Hindalco, ONGC, obvious choices, crude prices go higher, are doing okay. But European markets have also been hurting, which is why you're seeing this escalating pain point everywhere. I'm just going to pull up the BSE 500 gainers and losers before Hiral comes in and tells you about the factors of the morning. I mean, Tejas is in a parallel universe. There's a parallel Marvel universe going on when it comes to Tejas, which is why it's another 10% up. But we told you about Muthoot Finance. That has been working well. Solar India, and some of those stocks, they're few and far in between, because if you look at the advanced decline ratio, it's quite dismal. On the losing side, easy trip. I mean, people are not really excited about traveling right now, and a lot of travel coming in from India happens in this region, which has impacted Indigo, L&T we spoke about, and there you have quite a few pain points, Hiral. I'm sure the advanced decline ratio is also looking pretty poor at this point.
Yeah, I mean, you can see that from where we started off, we've still slightly, in terms of the advances, Tamanna, we've improved, but in terms of the declining, we are absolutely where we are.
Yeah.
So no major changes coming in on that front. But what's interesting is that recovery that you spoke about as well. So I think that little bit of certainty that's coming in to some extent is telling you where we are right now. Still, the cuts are deeper. Let's not forget that. How further down we will go is the key question. In fact, let's quickly look at few of the factors that we are watching out for. You know, we'll quickly swipe them through, because you're talking about the escalating geopolitical tensions in West Asia, which have triggered that further sell-off. Now, the operations at Aramco's refinery in Saudi Arabia have been suspended post the drone attack. Now, Aramco refinery, if you go to see, is one of the largest, and it is integrated with the Ras Tanura port, and that's why it becomes very important. When you talk about what goes from Ras Tanura port, that is crucial, because it's an outlet for Saudi oil for Asia, Europe and the US markets as well. So even India comes in, you know, in consonance to this. Now, moving from here on, if you see in terms of Nifty, Tamanna was talking about the support level. Now, 24,700 has been the key support that everyone was watching out for from a psychological perspective. But now we've again retraced back above the 24,700 mark. But on the downside, two levels that you should be watching out for is 24,600 and 24,500 if there is a further correction. In fact, in today's session, almost close to 7 lakh crores of wealth erosion is what investors have seen so far. Moving on, if you see in terms of the rupee movement is also very important. We've weakened to a 1 month low, and this is because high oil import bill is something that is weighing on the sentiment. In fact, you know, in the month of February, we were talking about the kind of improvement that rupee has seen since October. Lastly, if you see in terms of the US dollar, there you're seeing 0.5% move coming in there. The 10-year GSEC yield, that has risen to almost 6.69%, and this is on the back of the potential inflationary pressures that could be coming in from energy costs. So this is what you're watching out for in terms of, you know, the factors in today's session, which talks about sectors and macros. Over to you, Tamanna.
Okay, you know, we'll get back to some more of those. Himain Kapadia is with us this afternoon, as is Lancelot Dikuna. Welcome to both of you. Himain, I want to start with you first. I mean, are you seeing something at the end of your chart with the way markets are falling? What really are the levels that you're looking at?
A very good afternoon to you, Tamanna.
Good afternoon.
Thank you for having me on the show. It's always a pleasure.
Yeah, likewise.
Very well, frankly speaking, we should have been given a holiday because India qualified for the semi-finals, and we wouldn't have been put through this torture. But anyway, on a serious note, Tamanna, thing is, we are at, I won't say crucial, but reasonably important levels. Just give me 30 seconds. Nifty made a low of 24,605 on 1st October. Nifty made a low of 24,571 on 1st February. Nifty makes a low of 24,603 on 2nd March. The reason for giving you these data points is this is the third time we have come back to this level. Once we briefly broke through 20 and reached 24,344. This is besides the 3 points that I told you. There was a bullish gap. I spoke last time that needed to get covered up. Now there's a bearish gap. So firstly, if 24,588 breaks, I really, at the risk of sounding utterly bullish at this point in time, I think not. Like you mentioned, VIX is at 17.5. If you go back in history, many time bottoms have been made on the highest possible VIX, Tamanna. So we've come to this previously tested level for the third time after a precipitous sell-off. I say this holds for 48 hours. Things should simmer down. And this bearish gap that we have seen, by the time we speak next Monday, I think we would have covered that up. So things don't look good, but I'm not that bearish after what has happened. This level is crucial. If it holds, I'd say, I'm not telling you to buy, do anything, but not panic. It's okay. We've been here, done that. Tamanna.
Been here, done that. You know, you said you should have had a holiday on Monday. Tuesday anyway is a holiday. Wednesday is actually supposed to be Rang Panchami. So basically, you want the week off. Let the world come to its senses. Pretty much is what you're asking for. But since we have to work and, wishful thinking won't cut it, what would be your picks?
Well, sorry for dragging it further, but China has 6 days holidays. Why can't we see the semi-final and Wankhede on Thursday and then start the market anyway?
Oh, okay. So Friday straight. Yeah, it makes sense. If you're going for it, then end to end.
Yes. Okay. Now, seriously, I mean, it really doesn't make too much of sense in doing anything. But yeah, I mean, these are small trading buys, Amanna. Firstly, a buy call on ITC. Oversold, positive divergence, downside limited at strong supports. So it's a trading buy at 310, stop loss 295, target 340. Second one is Infosys. I believe the IT thing has been hammered. Everybody left, right, and center is bearish. Classical times for a bottom being made. So as of now, I'm looking at a short-term revival. I think this could convert into something on the medium term. It's really, really overdone. Buy Infosys at 1280. Stop loss 1240, target of 1360. Once again, same logic applies. At strong supports, oversold, positive divergences are coming. Oscillators are giving crossover buys. Tamanna.
Okay. Infosys is an interesting pick that everyone's watching out for, because if the reversal is overdone, probably this would be a good opportunity as well. But let's quickly take all the viewers through the stocks that we will be discussing during the day, at this hour, I would say, and what's on our watch list. L&T, the top loser in today's session on the back of the exposure that they have to West Asia. Oil marketing companies could see fuel margin pressures, and that's what is, you're putting that pressure on BPCL, IOC and HPCL. ONGC, Oil India and Reliance Industries also on the back of the geopolitical premium are in focus. Your shipping companies on the back of the tensions in the Strait of Hormuz are putting pressure there. Aviation stocks again on the back of jet fuel prices and a lot of your cancellations that do come in. So it's a double whammy when it comes to aviation counters, so watch out for this space. Online travel companies, your B2B travel companies all are under pressure. Titan Kalyan, again, it's the exposure when it comes to West Asia. Defense companies, it's interesting because sentimentally it becomes a positive, but now you've already started seeing profit booking coming in that space as well. Hindalco, where the UBC scrap prices have surged, so that counter is in focus. Tejas Network, a couple of days ago, they did see a 5G order win. That stock is up 55% in the last 3 trading sessions, and that's the reason why that strong surge there. In fact, that's the stock of the day as well. And CleanMax, a weak market debut, Tamanna, that we've watched out for on this counter. The subscription levels itself for a CleanMax were very low. So something that was anticipated, but really, I mean, a bad day for them.
I think CleanMax also gets a little bit of a reprieve because din hi itna kharab hai, so maybe it's a bad day. But we'll have to wait and see if it actually recovers. Just want to take a quick look at what's happening on the F&O side, and Puneet joining us with that BSE F&O setup. Good afternoon, Puneet.
Well, good afternoon, Tamanna. It's largely been a down and out day. Just seen some buying, in the latter half of the last 30 minutes, but continuing to see a very theme-specific action even on the F&O side. So defense as well as the safer plays like Hindustan Zinc is seeing build-up of longs currently in the system. When you also look at the short covering, you are seeing stocks like Muthoot Finance, largely the gold rally continuing and boosting, some shorts being covered in this particular counter, while BEL also continuing the defense theme, where it is seeing short covering today in the system. When you also see that in terms of the longs being unwinded, Samvardhana Motherson actually, is one of the key counters, has hit that high in the last 6 months and come back and retreated yet again this time around. So seeing longs being unwinded for Samvardhana Motherson, and NBCC largely joining the list of infra companies that the market just doesn't want a flavor of at this point of time. Finally, in terms of shorts being built up in the system, there's L&T that features on this particular list. 37% of the company's order book coming in from the Middle East, and hence a down and out day for this counter. While RVNL is back again in terms of the build up of shorts after the budget yet again, and all of these counters in focus largely on the back of the Israel-Iran impact, but certain specific actions like L&T seeing that pressure on the stock as well.
Okay, L&T, no brainer. Over there with that kind of exposure is going to see some pressure. Neeraj joining in as well on the closing show. Neeraj, what are you really picking up? That nervousness, the swings that we're seeing up and down is clearly showing that the overall sentiment is very negative, but we've seen a fairly decent recovery from lows in the last 20 minutes or so.
Yeah, and good afternoon to all of you. And Tamanna, I would love to know how you are thinking about the geopolitical angle of it. I heard Hiral speak a lot about those individual stocks as well. So very interesting there. But just a couple of things that I picked up when I was speaking to a few market experts in the last 30 minutes or so. One, that save for the Australian markets and the Shanghai markets, almost everything else has been penalized today. Europe is not starting off well, and Dow futures as we speak are down 600 points because Iran reportedly has rejected those US stocks as well. And there is a Saudi Aramco refinery which has been hit. So crude, which we were talking about as not having a very rocky start, currently WTI above 72, 73, Brent above 79. So clearly the pressures are showing. It'll be very interesting to see how large is the FI sell number in the session today. Everybody's eyeing that because 3 people that I spoke to, guys, over the course of the last half an hour, everybody was unequivocally clear that for today's session in the near term, you'll probably see large FI sell numbers as well. And nothing quite looking constructive. Sure, there are individual pockets that Puneet highlighted, in zinc, etc., but nothing looking very constructive. And lastly, because we have a holiday tomorrow and the expiry today, I think most people are penciling in that people want to err on the side of caution and not quite go home with any kind of long positions because who knows what tomorrow might bring and they might not be able to square their positions. So I think that's probably the tactical plays that are getting played out. But, same question to you, and I have a question for Hiral too, but Tamanna, to you. Now, because you looked at politics so closely, right? And you would have spoken to people, you would have analyzed it. This seems protracted in nature, or is it difficult to call right now?
No, some things have clearly become worse and visibly worse. So the statement from Qatar saying that US warplanes have been shot down in Qatar, but no one is hurt, that tells you that it's protracted. The Iranian security chief has said no to negotiations. They don't want to have any conversations with the US right now. So that is a big negative. What's happened in Saudi's Aramco unit, and which Hiral also spoke about, that is a negative, though they're now saying that it's being contained, etc. So some of those things are pointing towards escalation. Plus, today there are more reports of loud blasts heard in Dubai and Abu Dhabi as well. And it could be anti-drone missiles staving off any attacks and then debris falling. That could be the source of the blast. But the fact that Dubai and Abu Dhabi, a very, very visible area in the region, is being targeted is telling you that Iran is trying to send a message and it's not done yet. If we think this is going to be 1 or 2 days of fury and then it ends, that's looking unlikely, and that's what's really escalated since this afternoon. I want to go to Lancelot Dikuna and get his view on this as well. Lancelot, is the smart money saying stay safe right now? Or are we seeing enough optimism to boost that kind of recovery? Because there is a fair bit of recovery from the day's low across the board.
So I think, Tamanna, there would be some fall in valuations which would have prompted some amount of investment at lower levels. Given the steep fall that we saw, there's bound to be some accumulation at that levels. But like you said, this is not likely to be resolved in a couple of days. And I think the indication is that it could even take a couple of months. Now, the economic impact of a prolonged war, which is stretching over 3-4 months, is going to be significant across the global economy, and it will impact India and Indian companies as well. It is not merely looking at it only from an export perspective or an import perspective. When the economies of Middle East get impacted, companies which are related or even people related in India will get impacted, and that could have already we were having a little weak GDP growth, and corporate growth was just coming back, due to the improvement in situation with companies, as well as, because of the GST cuts, etc. We were seeing some demand improvement taking place, and all that could get sort of negatively impacted if this continues for the next 2-3 months. So I think from a smart money perspective, one should make some small investment, but definitely one needs to keep a lot of investment ready. If this does correct further, there could be a very sharp and deep correction. Then at that time, valuations would become really attractive.
No, fair point. I think and that's a fair assessment too. But Himen, I want to bring to your notice the fact that there is a bounce that is happening now. Could it be because of expiry-led things, part one? But part two, I heard you say at the start of the show that you are maybe contra bullish. So in some sense, from the low point of the day, your call has worked out well. The question is, because it's a holiday tomorrow, are you taking home long positions? Or would you square off any intraday profits that the Brave may have made?
Very, very valid point, Neeraj. But I would also go with half of you already, I think, answered your question yourself. If there wasn't a holiday, I would be slightly more copacetic about holding on for a day more. But like you said, I mean, the holiday things could, worsen. But I just, like I mentioned, you must have heard, I mentioned with Tamanna, price points. This is the third time we've come there. So unless I don't say this, but unless there's some real massive escalation, I hope that doesn't happen. I think this whole, but yeah, coming back to your main question, will I hold on for Wednesday? No. If I'm making money and was brave enough to buy at this point, I'd book intraday and go home.
So book intraday and go home is what Heyman is talking about. But stay with us. In spite of all of this negativity, there is one stock which has been skyrocketing in a weak market. In fact, if you see the 4 or 5 day performance, stock is up nearly 55 to 60% in the last couple of days. And we're talking about a Tejas network. What's working for them all this while? Because Q3 was pretty weak for the company. But in spite of all of that, a good buzz around it. My colleague Jasmeet joins it to tell us more. Jasmeet, I mean, we've picked Tejas Networks as a stock of the day, but lots brewing there. If you could just take us through, what are you picking up?
Well, thank you for that. As rightly said, the stock has surged nearly 55% in last 3 trading sessions. Well, this thing comes after the company has received an NEC order from a Japanese corporation to supply the 5G manufactured and supplied units for telecom company. Well, in terms of overall stock performance, the stock is still down 48% when you look at a 52-week low level. So though we have a surge, but the stock at a low base is still trading below its 1-year average. Now, in terms of the key trigger, the first one is the strategic 5G deal that the company has signed with NEC. While this deal is to extend, manufacture and supply the overall massive 5G radios. While this deal also helps the company expand their base, given NEC is a global telecom body and has access over 75 countries, this deal will help company to gain revenue but also increase the global presence and be a good alternative for Chinese product. Now the second trigger is the overall strong volume. The current volume which we see are roughly 14 times the 20-day average, which is pulling the overall stock price up. Now third is the PLI scheme. While the company is a big beneficiary when it comes to the overall PLI scheme which they get under the 5G and the broadcast radar, so which the company has been receiving in the terms of the refund from the government. The company recently received 70 odd crore in the month of Feb on the back of the same PLI scheme. While the fourth one is the Tata factor. While the company is backed by Panatone Finvest, which is a subsidiary of Tata Sons, and Panavest currently owns 53% stakes in the company, which is also a positive key trigger. Now, what is next? What to expect going forward? Firstly is the inventory risk. Do we have also some concern areas for this particular stock? The inventory risk, current inventory stands at 2,200 crore, while this is on the back of the delayed BSNL deal. Given the BSNL deal which company signed back in 2024 is still not executed, which is creating overall pressure on the overall company's inventory level. The second is the execution risk. The net debt stands at 3,300 crore. This is again on the back of delayed deal where they haven't paid the money back to the debt holders, and further that's what creating the pressure on the overall balance sheets. Well, third is the high cash burn. Company is currently funding its operation by the reserves they have. While the fourth one is the CEO position is still vacant and the company has no further commentaries on that. They're still looking for the right candidate, which in turn makes an overall direction weak for the company going forward. While the key triggers which can be going forward with the BSNL expansion, once they receive the PO order BSNL deal, that will be a key expansion for the company given the revenue flowing for the company, and company has been loss making for last 4 quarters on the back of the similar things of high debt and high inventory risk. Lastly, the company is pivoting towards a 5G model where they're getting international orders. Currently, international revenue forms 15% of the revenue, where the management targets 50% going forward. Well, that's some trigger which will be watched out carefully going ahead.
Okay. Thank you, Jasmeet, for that. In fact, Lancelot, I want to take a question with you on this one. Fundamentally, things were not really very strong when you talk about a Tejas network. Do you think this order could be a turnaround story and all the woos that the company has been sitting on will get negated because the surge is nearly 60%? Or would you say just book profits and get out now?
So I think if one has bought it earlier and if you were sitting on 60% profits, I would look at booking profits at this point in time. The reason is that while this order seems to be very good and healthy, implementation of the order and the actual earnings that will come in post the implementation of this order is what will actually drive earnings. Then second is about sustainability of future orders going forward. This again could be a challenge because there are not that many manufacturers or people who are putting up 5G networks in the country or even overseas. So the market is also relatively on the smaller side and the investment is also large. So I think when you look at all these things together, I think it's better to book profits and take the money off the table. I'm sure you will be able to get the same stock at lower valuations at some point in time.
Okay. Just so Tejas is one bright spot, but I just want to focus a bit on the recovery that we are seeing across the board. And let's just pull up some intraday charts to get you those details. I mean, look at the Nifty. Yes, about 300 points down even now, but almost inching up towards the best part of the day as we go into close. I want to pull up the small cap because the small cap index is the one which was the worst hit through the day, and look at whether there's some recovery there. There's some recovery there as well. The advanced decline ratio will also give you a clearer picture. So we are going off the low points of the day. If you look at the sectoral heat map, and I wonder we can show you that broader picture as well of what is recovering the best at this point. You'll possibly see metals are showing a good recovery actually, not bad. Defense stocks anyway were doing decently. So that's also showing a bit of recovery, as are pharma stocks. I'm going to go across to Neeraj as well for a quick take on this. Neeraj, do you think that this is just essentially a technical recovery we're seeing, or some of those fears are fading?
No, I would reckon, my personal view, Tamanna, that it is, and based on the conversations that I've had, that it's a bit of a technical recovery.
Yeah.
Too much uncertainty, right? And some of which you highlighted very well, some of which Hiral highlighted very well. So technical recovery, maybe some expiry-led things, and just maybe because we were sold down so badly, much more than what the rest of the markets was. I mean, ASX, for example, ended in the green. So in some sense, some bit of that. But I would reckon the same logic of not going into the holiday with very large long positions would hold true for the short side as well. You don't want to go with extreme short positions because you don't know what will happen over 48 hours, since so much is happening in 24 hours itself. So I would suspect that to be the case. See no other reason except for just that sharp sell-off recovering a little bit. Let's see what happens in the next 40 minutes though.
Yeah, the next 40 minutes are going to be very interesting, if there is a reversal from these levels or not. And I think IT also is a sector which is coming into as a contributor, and the shorts probably that are getting covered ahead of the holiday tomorrow. But let's actually head across to my colleague Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, the question over here is anything that you're picking up in terms of the recovery that's happening in the markets right now from the lows?
Well, as Neeraj was mentioning, it's most likely a technical recovery because Nifty seems to have found support near the 24,600 level. Now, do remember that the earlier support zone was close to that level at the budget day low. That was 24,571. That was the original support level coming in for Nifty. And around that level, yes, Nifty has found some support, and we have seen a strong recovery of around 200, 250 points odd in trade. But what dealing rooms are indicating is that there is not much of an optimism in the market. It's not that people are going ahead and buying stocks in a big quantity, in a big way, because they're quite bullish on the long-term perspectives, given the fact that there has been a lot of volatility and a lot of uncertainty globally that we have seen. But few stocks that dealers have highlighted in trade. Firstly, it's Vedanta. There are buy flows on institutional desk for this counter. At least what dealers are indicating is that the stock is currently best placed in the current situation, given the fact that commodity prices continue to increase, and Vedanta is could be one of the biggest beneficiary of that, given the fact that it has exposure to aluminium, silver, zinc, and also oil as well. When it comes to L&T, the stock is down in trade, down around 5%. This is largely because of its exposure towards Middle East. But post this fall, A few large HNIs have started to accumulate this counter at lower levels because they see long-term opportunities that could come in going forward as and when the situation settles in the Middle East. And lastly, a few stocks that are there on the DI desk that are seeing buying action in the DI desk: Shree Cement, Kalyan Jewellers and Sona BLW. All these three counters are seeing some buy flows coming in on the DI desk at lower levels. So keep an eye out for these counters as well.
Okay. Buy flows on DI desks at lower levels. I mean, they're sitting with cash to deploy, I suppose. Pankaj Murarka joining in this afternoon, CIO at Renaissance Investment Managers. Pankaj, thank you so much for taking out the time and speaking with us. Are you getting a TGIM feeling? Thank God it's Monday and tomorrow's a holiday. Whatever happens, at least, we can try to get some breathing room to deal with it. Is that the sentiment coming in? And what do you put down this mid-afternoon mild recovery to?
Well, clearly, I think, Tamanna, meaning it's very unsettling in terms of where things are playing out. But from whatever data and information that I am seeing, I don't think so that this conflict will sustain for a long period of time, given that in a very short period of time, US has been able to decapitate their leadership, including the supreme leader. Clearly shows that they have a very high upper hand. So I think my view is that I don't see this lasting for a longer period of time. More importantly, I've been saying this for a long while, that India, there are very few economies in the world like India, which are significantly insulated from external macro shocks. And we are at a point of time where all the four balance sheets, the Government of India's balance sheet, RBI balance sheet, banks balance sheet and corporate balance sheet are very, very resilient. So I think India has the ability to deal with any external shock at all levels of the economy, very comfortably. The only spillover effect to India and to the global economy is going to be through oil prices. But I don't see a significant dislocation in oil production either. So I would still think that probably in the next few trading sessions, we should get over this and probably the world will look much more normal. The geopolitical influence and impact of that is much deeper because it's a very significant event that has happened. But I think that will play out over a period of time. So I think, and also I must say, after a long time, I find a lot of pockets on a bottom-up stock picking basis where I find a lot of companies where valuations are reasonable or very attractive. So I firmly believe for a longer-term investor, given that the kind of fear that exists in market is throwing up a lot of value in the market. So it's time to probably invest selectively, go and buy into some of these names, take a 1 year, 2 year view and buy into some of these names.
Which ones? Like which ones? What is looking attractive right now with a longer term view? I mean, there's no choice right now, think about it, but to take a longer term view.
India has always been a great story from a longer term view and long term investors have been extremely rewarding. So I think it makes economic sense to be a long term investor in India. India is a paradise for growth investors who've been invested for a longer period of time. The larger banks looks very attractive because they are in a great shape, and with cyclical recovery in credit and uptick in the economy, I think valuations are extremely attractive. So we own HDFC Bank and ICICI Bank and we like them. So I think a correction is a great opportunity to buy into them. I find opportunities in some consumer names as well and some of the beaten down IT names as well. So I think, and obviously there are stock specific mid and small cap companies as well. So I find a lot of opportunities now on a stock specific basis because we're coming out of a cycle where over the last 18 months, the index has been flat. We've had some earnings growth. More importantly, the earnings outlook going forward is much better than what it has been in the last 12 months. Trade headwind, India's, the penal trade, whatever duties that US has imposed, tariffs US had imposed on India was a big headwind on growth and on macro factors, including currency. All of that is behind us. So I certainly believe the next 12 months from a growth perspective, both for the economy and from an earnings growth perspective for India will be much better than what the last 12 or 18 months has been. And given the fact that markets, the large cap index, Nifty is flat and a lot of mid and small cap are down 20, 30, 40%, I find a lot of pockets of value in the market. So I think as the classical saying goes, one should be greedy when others are fearful and there's blood on the street. I see some of those signs here today at this point of time. So I think it's time to invest into this market and not run away from these markets.
Okay, so Pankaj, I'll just take that point forward. Where you're seeing value, how are you looking at a L&T very quickly? Because it's corrected more than 10% from the highs if you talk about the company. Now, with the exposure that they have in the Middle East, everyone's talking about the kind of impact it would see. But once things cool down, that's where the opportunity will lie for them as well. Then would you take this opportunity to start accumulating L&T?
I think L&T is a very reasonable, meaning investment even now. I know they have a very large operations across Middle East, and the fear is that that could get impaired, and there could be some short-term impact on projects because of whatever is going around in Middle East and so on and so forth. But from a slightly more medium-term perspective, I think L&T is very well poised across all the growth investment sectors in India, across data centers, whatever is happening on the semiconductor side or on the power side. So I think, meaning one should use this correction to buy into L&T if you, and a caveat, we are holders of the stock. So I think the reaction on the stock price is a bit overdone.
Yeah, in some sense, if you look at BHEL, by the way, that has not corrected at all today. In fact, was up about a little bit and currently to about 1%. And Pankaj, two questions for you. One is micro and one is macro. On the micro, the metal counters are exhibiting a lot of strength. Bottom up, we've seen individual plays like Sterlite Tech, Tejas Networks, etc., do very well on a rocky day like today as well. But are metals, because of the cycle that they are in, looking a good investment candidate, or is it too cyclical for your liking?
You're right, Neeraj. Metals have done phenomenally well over the last 18 months. There's been a whole trade around de-dollarization or the weakening of the dollar in the last 18 months. And consequently, we have seen a very sharp move in commodity prices, including metals, both largely non-ferrous and also in precious metals across gold, silver, and so on. And likewise, I think, but large part of gains are priced in. I am not in the camp of whole de-dollarization. I still think that dollar remains the prime currency for the world. And I think probably, if at all anything, we are in for a stronger dollar going forward from here on. So I think probably it's not a bad idea. While there's underlying strength in commodity prices in these stocks, but for people who've been invested, it's not a bad idea to take some profits off the table. And I find more value for the other pockets of the markets, as I said.
I hear you. Pankaj, I have one more question. Today, two of your peer sets, we spoke to Sameer Arora in the morning, who said that he believed that 2026 will see the return of the FI money. Then we had Mark Matthews of Bank Julius Baer, who mentioned the same thing, that he believed 2026 because FIs will now start questioning the valuations of markets like Korea and some of the others. And India, because it's not performed and earnings growth will be strong, will come back. You do a lot of these global checks and meetings with global money managers too. Do you reckon people will be enthused to invest into India? Are your connects telling you that they want to start looking at India again?
I think so, Neeraj, because what has essentially happened is India is now globally labeled as recognized as a reverse AI trade. Last 18 months, all the capital flows into equity markets have singularly gone into AI companies or the AI as a theme across semiconductors or the hyperscalers or companies which or utilities which are supporting them and so on and so forth. But we are clearly seeing early signs of peak out in the AI rally in stocks across the whole AI basket across hyperscalers, semiconductors, and so on and so forth. Last week, Nvidia declared its results. The results were clearly blown out. They gave a guidance for the next quarter, which was far ahead of the upper end of the street estimate, and the stock was still down 10% because markets are clearly recognizing the fact that some of these companies might have a strong growth trajectory for the next 4 quarters, but clearly they see a slowdown coming beyond that. So we are clearly seeing a trend where money is being taken out of AI names because these stocks have done phenomenally well, and valuations from a medium-term perspective are very rich, and moving money going back into sustainable growth stories. And which is where I think India really comes into play. So India has had a biggest underperformance versus all the emerging market peers and versus the benchmark MSCI emerging market in the last 15 months. But I think all of that is I think that will reverse this year. And as the AI trade reverses, I certainly concur with some of the other guys that money will come back to India because India is a more secular growth story versus a theme-based or a cyclical growth story for a period of time that has been driven by AI trade.
Okay, so we're talking about the AI trade. Pankaj is talking about how resilient India could be from here on and an investment destination as well. But thank you, Pankaj, so much for joining in. Always a pleasure to speak to you. But before we slip into a short break, let's quickly address the European markets as well, because if you see in terms of opening, it's a very interesting open with major cuts coming in that range of 1% on the FTSE. You have CAC and DAX, both of them are down nearly 1.75 to nearly 2%. And if you see in terms of the US futures as well, all trading under pressure from Dow, S&P to Nasdaq with cuts of over 1% coming in there. We'll take this conversation forward as well as to what next for us. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The calls of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a
Alright, you're watching India Market Close, and there's of course pain in the market, some recovery but large pain. Now one of the reasons is what's happening in the Strait of Hormuz. Now you will be hearing people speaking unendingly about the Strait of Hormuz. We thought we'll show you real time what's going on right now. So this is a website which gives you satellite imagery of real time traffic in the seas, and you have to zoom out and look at what's happening here when it all kind of goes blank. Now this is that area, Hormuz. Bandar Abbas is one of the key Iranian ports, and this has been under a lot of firing and attacks as well. You can look at some traffic. All of these dots are actually vessels. Now, if you zoom out, you will see that the traffic sort of just ends here. It just completely ends here. After this, there is no way for people to get out, and then you have maybe some of it recovering over here. Now, this huge patch and this sort of traffic jam in the seas that you're seeing is where everything is stuck. The rest of the space gives you a sense of how this is more or less normal. But here is where things start getting stuck, and then you have open seas. Now, this is what the problem is. And why is it? Because this is the only sea passage from the Persian Gulf to the open ocean. It's one of the most important choke points and a primary export route for Gulf producers. 20% of the world's daily oil consumption depends on it. The percentage is even higher when it comes to India. And it links the Persian Gulf to the Indian Ocean. Any blockade will drive oil prices up. And like I said, over 2/3 of India's oil imports pass through it. Now, technically, there is no blockade. The Iranian agencies have come and said, we haven't blocked it. But when it's so unsafe, no one's going to insure it. And we heard from Maersk. Maersk is one of the world's largest sea liners. And we heard from them. And they also talked about how, as a precaution, they have decided not to let anything pass over here because insurance has just gone through the roof. It's not become feasible. It does not remain feasible for Maersk or any other major liner to come in and actually move their ships through here. In fact, Maersk has said they're suspending all vessel crossings at the Strait of Hormuz until further notice. They've paused future trans-Suez sailings through the Bab el-Mandeb Strait as well, and they have rerouted around the Cape of Good Hope. Here's where it gets tricky because obviously you're sailing for more time, the cost of transport becomes much, much higher. So this is where the pain now emerges, and you can real time see that no matter what anyone is saying, this part going blank is showing you that there is effectively a blockage at the Strait of Hormuz right now. Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, joining in for more on what we can see. And in fact, Jyoti tracks the defense sector. As we're speaking about the geopolitical impact, there's many aspects to it, Jyoti. There's freight, there's insurance, and of course there is defense. Now, the thought is that defense spends will go up. From the Indian perspective, is there more scope in terms of valuations or upside for Indian defense stocks?
Good afternoon, Tamanna, and thank you so much for having me on the show. So, see, if you isolate this war from the general business as usual for the industry, I think the index is currently 10% off the peak. We believe that there could be selective buying interest, particularly in the defense stocks with exposure to missile systems, drone, anti-drone technologies, precision strikes, and surveillance capabilities. However, the sustainability of this buying momentum will largely depend on the longevity and intensity of the conflict. Now, if tensions escalate or persist, it could support continued investing interest in companies linked to missiles, UAVs, and advanced defense electronics. If the conflict de-escalates quickly, we may not see a significant or sustained wave of buying beyond short-term tactical trades. Additionally, we expect Q4 earnings results to play a key role in driving investor sentiment. Strong execution, order inflows, and export commentary in Q4 could provide a more durable trigger for the next leg of sector performance. So, if you ask me, is there a headroom for further growth? Yes, there is.
Okay. So, Jyoti, you're talking about, further opportunities that could lie for these Indian companies as well. Now, my question to you is, what happens in terms of execution? Because you talk about order books, but the key concern comes in when execution is delayed. Do you think Indian companies do have that bandwidth to execute at this level, so that they are able to actually convert this order book into revenues?
Of course. In fact, I would rather say that 20s, in fact, from 24 onwards, it's a takeoff stage, and FY27 would be the starting of the year where you'll see a lot of companies actually picking up pace of execution. So, as far as I know, the way the companies have scaled their production capacities over the last 1 year, in fact, 15 months, it's been is admirable. And I'm sure that the kind of orders that they're sitting in, current orders itself, which are quite large, they should be able to execute over a period of 3 to 5 years.
What are your top picks, Jyoti, in the defense pack? Because that really is the only space which has seen, some, I would say, spots of green.
So my topics have since the start of financial year FY26 has been HAL, BEML, data patterns, and solar. Now, if you see, data patterns has already touched our targeted price of 3,000. So I think we should. I think we could sell off and re-enter maybe at a better point, starting point for data patterns. But this company is exceptionally doing well in terms of the way it is IP driven. So I see a lot of potential for data patterns. HAL, of course, you've seen a lot of negative, incidents happening and has actually brought down the stock. So actually, at this price point, I see HAL great, an entry point for HAL. In fact, people are concerned that whether execution would still be a concern. I think second half of FY27 would actually see much better, execution. In fact, the engines, while the company says 20 engines, I think 12 to 14 engines we should be able to receive. We should receive in the second half, and therefore execution should not be a concern going forward for HAL. And quarter four, I'm a little optimistic that possibly the company would give a good numbers in the fourth quarter. BEML, of course, they will deliver some 9 trains by the end of this financial year. So we should expect some 4-5 train sets being delivered. And next year, I think the pace of execution should. Actually, it will pick up pace for BEML. So yeah, BEML overall I see doing very well. And solar, I think it is something which has been delivering consistently. So I think more of a stable scenario for solar. But Bell is one which is long-term compounder. I must say the way they are executing and the pace that they have, the stable pace that they have maintained for execution is remarkable. So this is another stock which I'm very positive on in terms of any entry point for Bell is a good point.
Okay, interesting names there in terms of topics, but thank you so much, Jyoti, for joining in. Always a pleasure to speak to you and get your views. And I think in multiple conversations, Tamanna, everyone has spoken about BEL as one of the topics when it comes to defense, when it comes to execution today as well. So I think that's going to be one of the counters that is seeing good amount of accumulation. But let's also get in Amit Goel. And we have Siddharth Khemka who are joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Amit, my question at this hour is, with the kind of recovery that has come in terms of markets, one, any quick reason that you have as to what's leading to this recovery? And number two, what would your top picks be in terms of BTST, STBT? I know tomorrow is a holiday, but from a Wednesday trade perspective.
So my BTST would be to play Holi tomorrow and not carry any long or any short trades and enjoy the season. I mean, this is one festival that one should enjoy without a worry what is happening in the markets. So yeah, having said that, on a lighter note, see, if you look at the broad market and if you look at the history of war and conflicts versus equities, I have done a small study which I'll quickly give a summary. Anticipated and unanticipated conflicts have had very, very different and stark results. So anything which was anticipated, which was already in the news or sort of baked it into the price, and once the bomb has actually dropped, there is a phenomenon called, buy the bomb drop. So in my opinion, in my understanding, if the budget low holds, which is 24,587, if those levels hold, this is a good opportunity, good entry point for anybody who was waiting for a dip into the market. This is that dip. If this and the price action also kind of validates my point. So this anticipated conflict is an opportunity for the markets for investors to try and go long if the budget low holds. So this is the broad view on the markets. In terms of if somebody still wants to buy some stocks for BTST sort of a trade, MCX and Nalco are the two stocks which are on my radar. If you were to see the kind of price action on both on Nalco specifically, technically speaking, it is a Morobozu candle, which is essentially open low and close high. So it is trading near the high of the day with positive gains of about 2.5%. With very strong volumes on the relative strength as well. So keeping a stop of about 341, one could look at targets of about 385, 390 and thereabouts. This is on Nalco. The final stock, which I feel is a good entry point, is MCX. I mean, with this uncertainty in the short term, one could expect increased volumes on the bourses of MCX on account of gold and silver, which gives us a good opportunity for us to enter MCX also. Even this is moving up strongly with about 2.5% gains and with strong relative volumes. So a stop of below 2,400 and a target of nearly 2,600 would be a call on the BTST.
Got it. I mean, very quickly, 30 seconds though. I heard you say it's a good time to try and go long. Are you going long or are you not?
Yeah, we are advising our clients to go long at this point.
At the current point of time. Okay, good to know that. So, well, this strength is being bought into. Amit Goel is actually saying that. Keep in mind, tomorrow is a holiday. Other markets are on. So, be into the Nifty trades if you are not a too risk averse a trader. Siddharth, I wonder what is the dealing room or what is the view been at the dealing desks of Motilal Oswal? Have people largely been shying away from buying, or was there some frenzied buying at the lower levels because the markets have recovered really smartly in the last 40 odd minutes?
Yeah, hi, Neeraj, good afternoon. So I think if you look at our dealing room, there were nervousness in the morning when the market opened a little lower. I think there were interest from a lot of large clients asking for our top picks and any opportunities to buy on dips. But there was not any frenzy buying that we have seen. I think it has been just the start of the war and people are still cautious. We don't know how things will turn. And there has been a lot of interest, especially in the sectors that benefit out of this. For example, I think you have been discussing a lot about the defense space. That is where a lot of buying interest has been there. The upstream oil companies, I think ONGC, Oil India types companies there has been some interest there. I think barring that, we have also seen interest for some of our top picks, largely domestic names, domestic focused themes or sectors where people are looking to add gradually in this decline.
Okay, that's the point. How do markets deal with war? And unfortunately, this is not the last one. It's not the first one. It won't be the last one, possibly. I'm going across to Somit, who's put together this fantastic data on how every time there's been a war in the last decade, equity markets have responded.
So we have seen the data for the last 4 events that we have seen so far. Now, if you get the graphics, crude here is one factor where we have always seen an increase in the prices whenever there's a war type event. Libyan civil war back in 2011, crude prices increased by 25%. Iran nuclear sanctions, crude prices increased by 14%. Abkhaz attack that we had seen, that time also crude prices increased by around 15%, and when Russian invasion of Ukraine started, that time also crude increased by 32%. For all the other variables that we have seen, be it the Nifty, Indian rupee, FI flows and VIX, there have been divergent flows, but when it comes to crude, they have increased in all moment. Now if you look at Nifty 50, the first 2 events, that is Libyan civil war and Iran nuclear sanction, Nifty was up around 6 to 7 odd % in both the cases, and rupee also appreciated around 1.8 to 3.3% in both the situation. When the attack happened in one of the Aramco refineries back in 2019, Nifty had fallen around 1 odd % for a brief period of time. Rupee had depreciated by around 0.9%, and when the Russian invasion of Ukraine started, Nifty had depreciated or had fallen by around 6 odd %, while Rupee had depreciated by around 3 odd % during that period of time. Now if you look at the FI flows and how the volatility index was, FI flows, again in the first 2 events, there were buy flows, $6 billion of buy flow coming in when Iran nuclear sanction was imposed, $2.6 billion of inflow when Libyan civil war started. And when it comes to the volatility index, that was up 25% during the Iran nuclear sanction. When there was the Libyan civil war, that time we had seen a decline in the volatility index coming in by around 10 odd %. But when the Abkhaz attack happened, That time we had seen a very minimal FI outflow, just 0.1 billion US dollars. But when the Russian invasion of Ukraine happened, that time the FI outflow was massive, around 6.4 billion. But that was not only because of the war event, there were also multiple other factors that led to this FI outflow during the Russian invasion of Ukraine. And when it comes to the volatility index, 6% uptick during the attack, and Russian invasion led to 16% uptick in the India volatility index. Now, we also went to the sectoral index performance similar to the benchmark. Major negative impact was seen only when the Russian invasion of Ukraine started. Consumer discretionary and financials dropped the most, while IT and utility were the only two indices that managed to stay in green during that time period.
IT and utilities. And, you know, we were speaking this morning when Samir Arora said the AI threat is still the biggest one of all the threats that he's seeing. Siddharth Khemka, you know, you said in the beginning of this conversation that you got calls from clients saying, what can we buy? What were you telling them?
So yeah, Tamanna, I think two factors. A, in the near term, we are looking at sectors which benefit from the war, as we said, the defense names and the upstream oil companies. But from a long-term perspective, what we are looking at is A, domestic themes that are not impacted by this geopolitical issues that we are seeing globally. And B, there is, rightly said by Samira, that there is a big threat of AI which has not gone away. And last week also we had seen market under pressure despite the war not being started. So there are certain sectors which are definitely benefiting out of the AI, which is where we are positioning for the next few years. So metals, we believe, because power demand is going through the roof, there will be a strong demand for copper, aluminium, and that is where supply will be a big challenge. And some of these companies which are fully integrated, I think that is where they will benefit. So copper-based industrial metals like copper and aluminium, that would be a key stock to look at from the next few years perspective. Power stocks, I think that will benefit a lot from this. And some of the domestic themes which are largely unaffected by AI, for example, you have the banking, financials, insurance, auto stocks, largely domestic focus and untouched by the AI names, I think, the AI theme. So these are sectors and stocks where we believe one should position from the next 2-3 years perspective.
Okay, so, you know, interesting picks that you're giving in. In fact, Jefferies has also given their top picks in this kind of a market along with the Morgan Stanley. If you just quickly look at all the topics coming in from Jefferies, again, the metal pack continues to be there. A lot of your energy names are there. Your cement players, auto players, Bharti Airtel, these are a few of the names that Jefferies has. And on a Morgan Stanley, names like Trent and Lenskart are making it to their list. Varun Beverages as well, probably it's the summer. L&T at lower levels, Prestige, Adani Power, these are a few of the other topics coming in terms of Morgan Stanley as well. But moving on, we're talking about the aviation disruptions as well that are deepening amid West Asian tensions. The kind of flight cancellations that we've been hearing about when it comes to Indigo, even for that matter, Akasa Air has extended its Middle East suspension. Let's get in Danish, you know, to tell us more. Danish, a double whammy coming in for aviation companies. On one hand, it's a loss of revenues, and on the other hand, it's the escalation of costs on the back of higher jet fuel prices. What are you picking up?
Well, that's correct. We are seeing that the entire global aviation industry is impacted because of the airspace closure over key parts of the Middle East as well as certain other areas. So because of this, like you very rightly mentioned, that it is a big double whammy for the Indian Airlines, not only for the global airlines, but if we talk about the Indian Airlines specifically, on first March, we saw that in fact the ATF prices have also been increased by 5,000 rupees per kiloliter on an average. So much before the overall impact of the crude as a whole, we are seeing that already the ATF prices have started to go up. But as far as diversions are concerned, over the past 2-3 days, Indian Airlines have cancelled over 1,000 flights. And if we talk about a specific few airlines, for example, Indigo has not only cancelled its operations to and from the Middle East, but also on select key European routes like London and Istanbul. Similarly, Air India is also cancelling certain key European routes as well. So one of the reasons why this is being cancelled is the fact that because of the whole Russia-Ukraine crisis, already the airlines were using another route to go towards Europe, but even that is impacted because of the entire Middle East tensions that we are seeing. So due to this, we are seeing that it is a very huge impact for the airlines. And as far as passenger facilitation is concerned, airlines are doing whatever the best they can. They're trying to accommodate passengers in hotels, but it is a big impact for the Indian airlines, because if we talk about India, Indigo and Air India, these two airlines have big, deep aspirations to become global carriers, but their global expansion is happening at that point in time when there is a lot of airspace closure. And let's not forget that the airspace closure between India and Pakistan is also there. So because of that, it is a huge challenge for the Indian airlines. Over the next few days, it is expected that the flight cancellations are expected to continue. So it's a big problem for the entire global aviation industry.
Sure, absolutely it is. But we'll have to wait and see till what extent it's impacted. Now, as far as Indian tourism is concerned, maybe airlines, as well as look at what was happening with Ixigo, Yatra Online, some of those counters also taking a beating today, because a lot of Indians do travel in this region as well. Though some recovery now in an Ixigo. And Indigo, of course, seeing that pain. Yatra 10% down. I want to pull up a SpiceJet, the only other listed player, though we already saw Indigo about 6% down. Would you see any recovery, Amit, in any of these counters in your travel kind of space?
Hi, Tamanna. No, I would not, attempt doing any sort of a value pick in these counters. SpiceJet has its own set of problems, so this is something I would avoid with a barge pole. The other airline stocks or the travel stocks for the time being are showing a lot of depression. I would not venture any sort of a value buying here. Nothing on these stocks. I would stay away for the time being.
Amit, can you hear me? Yeah, what would you stick your neck out and buy?
No, is my voice going on?
Yes, I can hear you.
All right. Yeah, so no, I would not venture out and buy and be adventurous in this sector and theme, that is the airlines and the tourism stocks. Maybe some of the tourism stocks, maybe some of the hotel stocks which are domestic focused, but nothing which are outward looking. Especially not SpiceJet, because of the kind of, it has its own set of problems. So with the other global geopolitical tensions also, it is adding on to its problems. So I would not touch the airline stocks. I would not touch the ticketing stocks, but maybe some of the hotel stocks could, be a value pick in this entire theme.
Any favorites?
No favorites. In fact, this is not a sector that I'm really very bullish on.
So what I'm getting from you, Amit, is that you don't want to buy anything right now. You're saying, "Mujhe Holi khelne do." Why is she asking?
Holi khelne do? Yeah, but I would, if you were to ask me about IT or about pharma, those are the places where I am looking to buy.
Name one pick for Wednesday.
I've already mentioned MCX and Nalco from the BTST space.
Okay.
So coming back to Nalco is something which has shown very strong momentum today. Morubozu candle closing near the day's high, relatively strong volumes. So this is my pick of the day. This is something where I would look to make some benefits.
Okay, thank you so much, Amit, and thank you so much, Siddharth. Have a great Holi. Say Holi hai, bura na mano Holi hai. Well, maybe that's what the markets are telling us as well. Don't feel too bad, we'll recover. Let's pull up where we're closing on the Nifty. Okay, 1.5%, nearly 330 points. 24,900 was lost in the carnage today. Some would say 1.5% is not too bad, considering that the hostilities have actually expanded. Iran has ended up bombing in some way or the other 7 sovereign nations. So considering all of that, maybe 1.5%, not too bad. The advanced decline ratio, though, showing you the bearish mood on the markets. Let's pull up the Nifty heat map as we see the closing bell details coming in. It's pretty much the same. Bharat Electronics is the only winner. Defense stock obviously takes it away. You're seeing metals doing okay as well. Sun Pharma, because pharmaceuticals always a safe space. ONGC, because of crude prices, even that has actually come off from where it started off the day. On the losing side, Indigo, double whammy, right? Your crude prices, which is a major input, gets more expensive, and on the other hand you have to cancel a bunch of flights because of what's happening. Larsen & Toubro, Macquarie note outlines very clearly what the hit is to Larsen & Toubro, because they have been expanding rapidly in this region and you're seeing that pain throughout. This is a tough market. Nifty contributors will give you a clearer picture as well on how markets have been pulled down massively by Larsen & Toubro, Reliance and HDFC Bank. HDFC Bank has actually recovered from its lows. BEL, Hindalco and Sun Pharma on that other side. Broader markets also seeing the pain, the mid cap and the small cap coming in, you're seeing broader markets not really doing too well either. So the mid cap nearly 2% down and the small cap index also nearly 2% down. The BSE 500 will also show you a picture of largely losers. Of course, there's some winners to talk about. Sterlite, Tejas seem to be, like I said, in some alternate universe of their own, and Muthoot Finance as well. Easy Trip, Reddington, Birla Corp, some of the top losers.
And I think the key over here was, Tamanna, everyone was of the opinion that in spite of the weakness, the correction that we are seeing in the markets, this would be an opportunity to buy. So don't be very sad. It is Holi and it is going to be time for us to celebrate as well. So I think all the viewers, Bura na mano, Holi hai, and try making your profits also pretty well in trade.
You have returned the favor. So I suppose all said and done, we have to find a way to celebrate even in tough times for the markets. Maybe the color we come back with on Wednesday should be green.
Green, yes, it should be green. Right now we've reused orange, which is still very neutral, but hopefully we come back with the green on Wednesday with things cooling off, and I think that's going to be something we should be watching out for. But coverage in terms of the war situation, the tensions, the impact not only from a markets perspective but even from a humanitarian perspective is something that will continue.
Continues. But thank you so much for watching India Market Close, and a happy Holi to all of you.
Year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Program now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Program. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most
Morning Market Express with me, Shreyanti Singh, and this is the show that's going to get you a snapshot of everything that is happening right now, be it headlines or what's happening with the top buzzers of today. But let's first talk about markets in terms of West Asia tremors that were felt on the Lal Street today as benchmarks saw sharp cuts in trade amid heightened volatility. Nifty found crucial support. When you talk about that 25,600 level to bounce back from lows to end near 25,900 as well. When you talk about Sensex, that's also tanked over 1,000 points, while broader markets also saw deep cuts coming in. India VIX also saw a strong move as the volatile index hit the highest level since June 2025. Let's also talk to you about the sectoral picture then. That was largely a weak day of trade that you're looking at. You do have war volatility that is really driving your headlines and the markets right now, impacting the key sectors as well. So travel stocks were the biggest drag, followed by oil marketing companies, which were under pressure as well on the back of elevated crude prices, which we will be talking about in just a bit. But on the winning side, on the flip side, you did have defense stocks that outperformed in a rather weak market amid war sentiment. And speaking of the war then, explosive developments across West Asia as the Iran-Israel conflict widens sharply. The IDF has released new videos of strikes on targets inside Lebanon, underscoring that particular expanding front as well when you talk about Israel. Meanwhile, in the Gulf, you do have Bahrain that has reported a massive explosion, and that is moments after authorities confirmed a ballistic missile attack launched by Iran. Now, across the region, what you're looking at right now is a shockwave that is really continuing with blasts lighting up Dubai and Doha as well, signaling just how rapidly this particular war right now is spilling across borders as Tehran's retaliation intensifies and US-Israeli operations as well continue. The Middle East now finds itself in one of its most volatile moments in decades, and the commentary coming in from leaders is very clear in that there is not going to be any resolution to this conflict anytime soon. Let's also talk to you about aviation disruptions back home then that are deepening amid this particular tension as well, this particular conflict that we're talking about. Indigo has cancelled about 162 flights, suspending all services and to and from the region that I'm talking about till noon, including London, Heathrow and Istanbul and Manchester as well. When you talk about Akasa Air, that has extended its Middle East suspension as well till March 3rd. And SpiceJet that has also extended flight cancellations till 3rd of March. Let's also talk to you about West Asia's skies remaining thick with the dark clouds of widening war as well, because you do have Israel-US strikes and Iran's sweeping retaliation continue to redraw the region's fault lines. And today, you do have Tehran's first forceful political response since the killing of its supreme leader. Senior Iranian statesman Ali Larijani emerged as the face of defiance, and speaking to state media, in fact, he's delivered a chilling warning, calling the assassination an assault on the nation's very soul. They stabbed the heart of the nation, and I quote him here, their heart is going to be stabbed to, end quote. This is the pledge coming in from him, and he's also signaled that Iran's counterstrikes across Kuwait, Bahrain and Qatar were only the beginning at this point in time, dismissing reports that Tehran sought talks with Washington. Larijani, in fact, declared bluntly that Iran will not be negotiating with the United States under fire, raising fears that this conflict, already regional in scale, could veer into an even more dangerous phase. Let's also talk to you about who's named as the interim successor at this point in time, because you do have Iran that has named Ali Reza Arafi as the interim successor to long-time Supreme Leader Ali Khamenei. And when you talk about Ali Reza Arafi, he's been named to an interim leadership council that includes the president and head of the judiciary to be at the helm of the country until a new permanent leader is selected. It came after the United States and Israel claimed to have killed Khamenei in a wave of strikes on Saturday against targets in Iran, which sparked swift retaliation, of course, by the Islamic Republic. Let's also talk to you about a historic power vacuum after the killing of Supreme Leader. When you talk about Iran, attention is now fixed on a handful of men who could shape the country's future at this point in time. So at the top of that list is Mojtaba Khamenei, the Supreme Leader's 56-year-old son, a behind-the-scenes power broker with deep ties to the IRGC, but lacking senior clerical rank and facing strong resistance as well to a father-to-son succession. Now, another contender that you're talking about that we just mentioned earlier, Rafi, you're talking about the head of Iran's seminary system and former Guardian Council as well. You are talking about a respected figure in terms of his administrative skills, but not considered a political heavyweight at this point in time within the security establishment, of course, and also in the mix is Mohammad Mehdi Mira Bagheri as well, a hardline cleric. You're talking about him who was in his early 60s known for ultra-conservative views and deep opposition to the West, and Hassan Khomeini, the grandson of the Islamic Republic's founder, carrying revolutionary legacy but little political influence and previously barred from high office as well. Back in 2016, as the Assembly of Experts deliberates behind closed doors, you do have Iran entering a period of uncertainty with the balance of power between clerics and the IRGC likely to decide the country's next supreme leader. Let's also talk to you about a major escalation of the regional conflict then. Saudi Aramco has shut down its Ras Tanura refinery after the facility was hit by a drone. Now, a little bit of background for our viewers when you talk about this particular refinery. It's one of the largest refineries in the Middle East with a capacity of 550,000 barrels per day. The bottom line is, built in 1945, Ras Tanura is not just an industrial complex. It is the heart of Aramco's export system, a real-time barometer for global oil flows, and one of the most strategically critical energy assets anywhere in the world, the largest in what the West calls the Middle East and what we call West Asia. Let's also talk to you about an important update pouring in right now. IRGC claims to target Netanyahu's office. Fate of Israeli Prime Minister is currently unclear, and that is the commentary coming in from IRGC. IRGC is also claiming to target Israel Air Force commander, and those are some very important developments that we're looking at unfolding right now. We'll keep getting you some more details when it comes to this one, but for now, what is clear is that there's a claim being made by the IRGC in terms of targeting Netanyahu's office, and the fate is something that we'll be getting you some more details on as and when they unfold, but that's the latest coming in. Let's also talk to you about PM Modi saying that the situation in West Asia is deeply worrying and India firmly stands for peace and stability. Speaking alongside visiting leaders, he's also stressed that all conflicts must be resolved through dialogue and diplomacy, not escalation. Now, the Prime Minister has also said that the government is closely tracking developments and working with countries in the region to ensure the safety of Indian nationals, and that's some key commentary coming in as far as the Prime Minister is concerned. Let's also get you an update when you talk about prices. Take a look at oil first, because oil markets are in full-blown turmoil, with crude posting its biggest surge in the last 4 years as traders assess the fallout from the effective closure of the Strait of Hormuz. Now, you're talking about the world's oil artery as well. The narrow corridor that moves nearly 20% of the world's oil is the Strait of Hormuz for you. The Brent crude, that's rallied as much as 13% to its highest level since January 2025. Later paired some of these gains, but still trades more than 9% higher on the day. The spike comes as OPEC Plus agrees to raise output quotas by roughly somewhere close to 206,000 to 260,000 barrels a day next month. And this is a move that was slightly faster than expected when you talk about the pace as well. Though spare capacity remains confined to Saudi Arabia and the UAE, limiting how much the cartel can offset disruptions. Quick check on the disruptions that I'm talking about as well. More than 40 supertankers carrying millions of barrels are idling inside the Gulf as insurers pull war risk coverage, underscoring just how fragile global energy flows have become as conflict escalates. Let's also talk to you about global shipping giant Maersk that has halted all vessel crossings through the Strait of Hormuz indefinitely as security concerns escalate across the Gulf. The company has also paused trans-Suez sailings via a key route, and you do have them rerouting key services including ME11, MECL as well, around the longer Cape of Good Hope, while cargo acceptance at this point in time for the West Asian area remains open. You do have this particular shipping company warning of delays and schedule changes at Arabian Gulf ports, and they're also saying that crew and cargo safety is paramount at this point in time. It will resume normal routes only when conditions allow. And even as markets stumble, global brokerages stay confident on India. Jefferies remains overweight on 22 stocks backing leaders. So you're talking about HDFC Bank here, Axis Bank, SBI, Bharti Airtel. Those are some of the counters that make it to their radar. The brokerage also sees strength in industrial and energy names. So you're talking about JSW Steel here. Something like an Ultratech Cement, Coal India as well makes it to their radar. And alongside, you do have Morgan Stanley. The message is in fact clear. Use the dip to focus on quality, not panic. Let's keep it going with brokerages. Morgan Stanley also remains firmly overweight on India. The brokerage flags 10 high conviction names on its focus list, cutting across autos, retail, banking and infrastructure. From consumption plays to core industrials, the message is quite clear right now. Quality leaders remain the preferred bet even in volatile markets. Let's also talk to you about UBS initiating coverage when it comes to Grow with a neutral rating, and a target price of 185 rupees is what you're looking at here. The brokerage calls Grow a compelling platform and India's largest retail investing APP. But just that the current valuations, when you zoom in on those, they limit near-term upside as well. And they are also expecting non-broking revenue streams to power the next phase of growth really, while operating leverage could steadily lift margins. Moving on then, Adani Enterprises steps up its defense push. Its arm, Adani Defense and Aerospace, is going to be acquiring a 14.2% stake when it comes to Airworks India Engineering. Now, the company has also signed a business transfer agreement with Punch Lloyd to also acquire its defense unit at Malanpur. And this particular move, when you talk about this one, it's strengthening Adani's presence in aerospace and defense manufacturing as well. Let's also talk to you about Rain Industries, that has posted a sharp year-on-year profit improvement in the third quarter, even as sequential numbers soften. When you talk about their consolidated revenue, in fact, you're looking at a rise of about 17% thereabout to somewhere close to 4,300 crore, with EBITDA more than doubling as well to about 504 crores. Margins expanding nearly 5 percentage points. The advanced material segment struggling with the EBITDA down about 60%. Due to seasonal softness and higher labor costs as well, while cement volumes are affected by extended monsoon in South India. Let's also talk to you about Tejas Networks, that has rallied 55% in just 3 sessions after 6 months of underperformance this one. Now, even though it remains down nearly 50% from its 52-week high as well, this is a surge that you're looking at that follows a strategic 5G deal with Japan's Corporation as well. And strong trading volumes is what you're looking at when you talk about Tejas Networks. Incentives under India's PLI scheme backed by Tata's Panaton Finvest as well. The company is aiming for global 5G contracts while also managing inventory and execution risks. Let's also talk about the shares of Fino Payments that fell sharply in trade after MD and CEO Rishi Gupta is arrested under the CGST and SGST Acts as well. The panic eases after the bank clarifies the probe relates to certain program managers, not the bank's own compliance. Now, a quick board response and management, in fact, that really helps steady sentiment, but it was quite a fall that you were looking at when it comes to this particular counter. Let's also talk to you about Mahindra Group, that is rationalizing its global portfolio at this point in time. The company is exiting its agri-machinery business in Japan as part of a sharper capital allocation strategy. Mahindra will step away from Mitsubishi Mahindra Agricultural Machinery and plans to cease operations by the first half of financial year 27. The group says that the move reflects a disciplined approach to long-term value with a structured transition and continued support when you talk about its customers in Japan. Let's also talk to you about Bharti Airtel, that is signaling growth and shareholder focus at its investor meet. The company is planning to steadily increase dividends and invest heavily in data centers, targeting over 1 gigawatt capacity. It also aims to scale up its financial services business to reach millions of subscribers while keeping strategic control of its Africa operations. Now, when you talk about Airtel, they're expecting average revenue per user or ARPU to rise, and says that competition remains limited given the steady sector growth at this point in time. Let's also get to the brokerage verdict when you talk about Bharti Airtel. Citi is maintaining a buy rating when you talk about this counter with a target price of about 2,380 rupees. In fact, the brokerage is saying that the chairman's strategic vision is making Airtel a compelling long-term story, while near-term catalysts, when you talk about this one, are going to be limited due to tariff uncertainties. The stock's recent underperformance offers an attractive buying opportunity at this point in time. Positive implications are also expected for Indus Towers. Let's also talk to you about some more brokerage notes pouring in when you talk about today. JP Morgan is staying bullish when it comes to Dixon Technologies, even as the stock has slid over the past months. Now, the bank maintains its strong outlook and targets, saying that uncertainty around the mobile PLI 2.0 is not a major worry anymore, and much of the risk is in fact already baked into the buy priced in. It also sees potential upside if the PLI support is extended or refocused on local component manufacturing and exports. Let's also talk to you about Hindalco Industries that is facing margin pressure as the used beverage scrap prices in fact jumped nearly 20%. Prices moved to around $2,586 a ton from somewhere close to $2,100, squeezing margins to $500 per ton from the previously $670. Now, notably, you do have Novelis, Hindalco's key unit that uses over 60% of recycled aluminium in its production, making it sensitive to scrap price swings. Let's also talk to you about DGTR launching a countervailing duty probe into PVC suspension resin imports from China after complaints by domestic manufacturers. The investigation alleges Chinese exporters benefit from government subsidies, potentially leading to retrospective duties. Now, India imports over half its PVC resin from Beijing, and domestic PVC prices, when you talk about them as well, they bottomed somewhere close to December 2025, having rebounded and are expected to remain firm from here on, offering a positive outlook as well when it comes to local plastics pipe makers. Let's talk to you about the two-wheeler sales in the month of February, showing strong momentum with major players reporting strong growth as well. Now, Hero MotoCorp leading with just that nearly 44% growth coming in. TVS Motor Company posting over 30% growth. Eicher also contributing with heavy double-digit gains as well, reflecting strong consumer demand across the segment. Let's also talk to you about some more details that are pouring in right now, because you do have a bunch of updates that are pouring in terms of the headlines when you talk about Iran as well. But when you talk about the PVs, when you keep going with Motown as well, you're looking at passenger vehicle sales also maintaining a healthy growth trajectory in the month of February. Maruti Suzuki growing about 7%, Tata Motors and Mahindra posting gains of about 35% and 19% respectively. Hyundai, when you talk about this one, also seeing steady growth, highlighting a broad-based recovery across private vehicles. Let's also talk to you about commercial vehicle sales that are maintaining a robust growth in the month of February, reflecting post-GST rate cut momentum. Tata Motors on gear, while VECV as well is posting somewhere close to 23% growth as well. The data suggesting sustained demand in freight and logistics segments when you're reading the fine print. Onto the primary markets then. CleanMax Enviro Energy Solutions made a weak debut, listing at a roughly 10% discount to the IPO price. The stock opened at around 960 rupees, and that's on the NSE, and 952 rupees on the BSE, compared with the issue price of somewhere close to 1000 rupees per share, meaning that initial investors faced an immediate notional loss that you're looking at, and the IPO itself, when you talk about that as well, so muted subscription with particularly weak retail interest. The listing suggests that investors are turning more valuation sensitive. Let's also get you some more business news then. India and Canada have inked major agreements covering critical minerals and uranium supplies. Bilateral ties continue to warm. The pacts aim to secure long-term access to minerals essential for electric vehicles, batteries, semiconductors, and clean energy tech as well. On uranium, the deal could also bolster India's nuclear fuel basket, supporting power generation really, and also energy security. Officials from both sides in fact describe the agreement as forward-looking and mutually beneficial, reflecting deepening cooperation beyond those traditional trade lines. Onto Amazon Web Services that has temporarily shut down one of its data center zones in the UAE after unidentified objects hit the facility, causing sparks and a fire. Now, power was cut as firefighters moved in and services linked to that zone went offline. This comes at a time when the region is already on edge after Iranian missile and drone strikes across the Gulf. When you talk about Amazon Web Services, they're saying that other zones are operating normally and restoration work is underway. On to some national news then. Kashmir is under strict restrictions after large protests broke out over the killing of Iran's supreme leader. Authorities, in fact, have sealed key areas in Srinagar, including Lal Chowk, and tightened security across several districts. Mobile internet speeds have been reduced. And when you talk about schools as well, they've been shut as a precaution. Officials, in fact, are saying that the curbs are temporary at this point in time, aimed at preventing any flare-ups as emotions run high in the valley. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Turmoil in West Asia intensifies as Iran's IRGC claims to target Netanyahu's office. Meanwhile, Israel's IDF says it has eliminated the senior member of the Iranian Ministry of Intelligence and the main intelligence body of the Iranian regime. Prime Minister Modi reacts to tensions in West Asia, says it's a matter of deep concern, adds that India supports the resolution of all disputes through dialogue and diplomacy. Market ends over 1% lower. Nifty closes below 24,900 after recovering over 260 points from day's low in the last hour of trade. Broader markets underperformed the benchmarks today. Oil prices rise sharply on the West Asia turmoil while Brent trades at $79.4 per barrel. WTI crude climbs more than 8.5% to over $72 per barrel. Government calls for an urgent meeting with the shipping sector to discuss the impact of war on logistics and freight rate, as they are expected to go up by 20 to 30% in the view of West Asia situation. Airlines cancelled 2,500 flights globally amid tensions in West Asia. Over 1,000 flights suspended by Indian Airlines since the 28th of February. SEBI Chairman Tuhin Kanta Pandey tells NDTV Profit that the recent regulatory measures on derivatives need to be evaluated through data before any further action. Says the concerns must be seen in context by hyperactivity in weekly index options being the key focus. India and Canada sign a $1.9 billion of uranium supply deal as India tries to expand its nuclear power generation. Also signed 3 MOUs on critical mineral cooperation, promoting the use of renewable energy and cultural cooperation. A very good evening to all our viewers and welcome to NDTV Profit. This is Nisha Podar and you're watching Profit 360. Today we start with focusing on the US-Iran tensions. The violent tension between the two countries has affected international relations, alerted the central government and pressured the domestic markets. We'll give you details from all three perspectives, but first let's start from the latest on the war. Well, Iran continues to reel from the US-Israel strikes. While there is no official assessment of the losses or the operational impact, Ayatollah Ali Khamenei's Iran's supreme leader was killed, remember, on Saturday. That was a big development. However, this has only intensified tensions and retaliatory measures from Iran. This has, in fact, added to the fears that the conflict could spread as Tel Aviv launched the attacks on Lebanon and American air base in Kuwait, as well as vessels in the Indian Ocean. Now, over the weekend, on the Middle East countries were attacked, including those of Bahrain, Qatar, the United Arab Emirates, Kuwait, Jordan, and even Oman. Let's go across to my colleague from NDTV, Disha Bagchi, on the latest developments coming in from the Middle East tension.
Breaking news coming in, absolute huge development, an escalation in the tensions that we're seeing in the Middle East, where now the Iranian Revolutionary Guard is claiming to have targeted and struck Israeli Prime Minister Netanyahu's office, as well as the location of an Israeli Air Force commander. Now, this is absolutely a huge development in this conflict that we've been seeing since Saturday. Now, after a day after Israeli strikes successfully targeted and killed Iranian Supreme Leader Khamenei, now Iran's Revolutionary Guard has claimed to have targeted Israeli Prime Minister Netanyahu's office, even going as far as to claim that the fate of Israeli Prime Minister Benjamin Netanyahu remains unclear. Now, this is a big statement and a big claim coming from the Iranian Revolutionary Guard. However, we must take this claim with a pinch of salt, because let's remember that these are claims that are being made by Iran and Israel. Across the last couple of days, we've been seeing multiple claims being made, but it is important that these claims are also verified. So far, we do not have any confirmation or verification through visuals of whether indeed Iran was successfully able to target the Israeli Prime Minister's office, because remember, Israeli Prime Minister's office is a well-guarded area in Jerusalem, while we have been seeing that Iran has been targeting various locations in Jerusalem over the past couple of hours. Even when I went to Jerusalem earlier last year in December, we saw that how strongly guarded Israeli Prime Minister Benjamin Netanyahu's residence and Israeli Prime Minister Benjamin Netanyahu's offices. So it is definitely a very difficult target to strike. However, now the Iranian Revolutionary Guards have claimed to have successfully struck Israeli Prime Minister Benjamin Netanyahu's office. However, we need to still confirm this. They have also said that they have targeted an Air Force commander from Israel. We are yet to understand who this Israeli Air Force commander might be, but definitely now heightening the stakes in this escalating conflict in the Middle East that we've been seeing over the past couple of days.
All right, that was Disha Bagchi reporting on the latest developments coming in the Middle East tensions. Now, Prime Minister Narendra Modi has taken a clear stand on the ongoing tensions in the Middle East. During his India-Canada joint press conference today, he emphasized on promoting peace and stability. Adding to this, he also said that the government will continue to work closely with all the countries to ensure the safety of all Indian citizens in the region. Let's listen in.
विश्व में चल रहे अनेक तनावों को लेकर भारत की सोच स्पष्ट ही है। हमने सदैव शांति और स्थिरता बनाए रखने का आह्वान किया है और जब दो लोकतंत्र साथ खड़े होते हैं तो शांति की आवाज और भी सशक्त हो जाती है। पश्चिम एशिया की वर्तमान स्थिति हमारे लिए गहरी चिंता का विषय है। भारत डायलॉग और डिप्लोमेसी के माध्यम से सभी विवादों का समाधान का समर्थन करता है। इस क्षेत्र में मौजूद सभी भारतीय नागरिकों की सुरक्षा के लिए हम सभी देशों के साथ मिलकर काम करते रहेंगे।
All right, Prime Minister Narendra Modi there emphasizing the need of dialogue as well as diplomacy for global stability. Let's now take a look at also the Indian markets which closed lower today. The benchmark indices were battered and beaten as Nifty ended below 24,900, down over 1%. The losses were largely dragged by Interglobe Aviation and L&T, both stocks plunging about 5% in trade. The broader markets tanked furthermore and underperformed the key benchmark indices today. On the sectoral front, Nifty Auto led the pain with just defense, metals and pharma ending in the green. Remember that last hour of recovery really abetted the situation. Otherwise, the market was weakish throughout the trading session. In fact, let's take it straight across to my colleague Jasmeet for a roundup on today's market action. Jasmeet.
Nifty ends in red, closes below 1% in today's trade amid the US, Israel and Iran conflict globally. While in terms of the overall benchmark, we see that the benchmark and broader market both have seen pressure in today's trade. While Interglobe Aviation and L&T are the top Nifty 50 losers, down about 5% in today's trade. Small cap 250 and mid cap 150 are also in red, down about 1.5% in today's trade. While 3M India and Rail Vikas Nigam are the top losers in Nifty mid cap 150, when you look at the small cap angle, we do see that Railtel Corp and Eddington down over 6% in Nifty small cap 250. In terms of the sectors, we see that most of the sectors ended in red, barring Nifty Metals and Nifty Pharma, the only two sectors in green. While Nifty Auto is a top losing sector, down about 2% in today's trade, while Motherson and Uno Minda both down about 3.5% and becomes the most losing stocks in Nifty Auto in today's trade. While in terms of the overall trend, we see that Nifty Auto is in red for the second consecutive day in a row, while Nifty Realty and Nifty PSU Bank are in red for second consecutive day as well. While in terms of overall other angle, that's Nifty Energy, Nifty Bank and Nifty Pharma, even those ended in red note today. While Nifty Financial Services in red for the third consecutive day, while Nifty IT tanks in trade again and snaps its 3-day gaining streak and ends in red in today's trade. All in all, we see a negative picture in today's market as market ends on a negative note.
All right, market today ending in a negative note, and there was a lot of volatility throughout the trading session. Now, sounding off the alarm on the potential long-term impact on Indian stock markets, well, Samir Arora of Helios Capital told us simply that he is not worried. He said in his experience, conflicts like the Iran-US war have settled within a few days and that the markets are cold-blooded, meaning that they recover fast without much pain. Listen into a brief portion from our conversation that was held earlier today.
Broadly, I would think that this will end plus minus a few days, or at least there will be negotiation. And negotiation, I think President Trump has tweeted or said that already, I don't know who, but in the hierarchy, somebody is already asking for a new round of discussions. So I don't feel this is, super bad from a stock market point of view. And if it is bad for a few days, it is very difficult to sell today and then buy back 2 days later or 4 days later. Believe me, I have tried this all my life. I've been a hedge fund manager for 20 years. These things don't work.
All right, so that was about the market. Another impacted space is the crude space, and oil prices, they jumped sharply today after US and Israel attacks on Iran disrupted the global energy supplies. Brent crude rose 9% to 79.41 barrels per day, and this highest in 7 months, remember. US crude called WTI, remember, climbed 8.6% to 72.79 per barrel. And the primary reason is that the war has effectively stopped ship traffic through the Strait of Hormuz. Remember, this is a key route for about 15 million barrels of oil every day. And Iran has also fired missiles in response, hitting US and Israel sites and even attacked 2 ships in the strait. So US President Donald Trump said that the strikes on Iran will continue until all goals are met, and they could last for weeks. Experts warn that without quick peace, oil prices will stay high or rise more. Now, this is already pushing up the costs for petrol, food and goods worldwide. Listen into a comment made by Jonathan Barrett, the CIO of ETO Markets, from a conversation we had earlier today.
Looking at the price of the inputs, because you have India, which is reliant on imports, you have China, you also have Japan. So the discussion and the strategy from the states is trying to get the states to be, and Donald Trump said it, to be the #1 in the world. So this is more, in my mind, a strategic move for Trump to become and maintain #1, and also to deflect interest away from the US domestic market, where we know there are problems. So protracted supply, Straits of Hormuz closed, this will go on for some time.
All right, so the oil prices remain as a big concern, but also remember that the Strait of Hormuz is a key oil checkpoint linking the Persian Gulf to the Indian Ocean. Over 20% of global oil and 2/3 of India's imports really pass through it, and that is a key connecting point. Hence, the disruption in this particular strait is really spiking the crude oil prices for us. Let's take it straight across to my colleague Tamanna with more details on this impact.
You will be hearing people speaking unendingly about the Strait of Hormuz. We thought we'll show you real time what's going on right now. So this is a website which gives you satellite imagery of real-time traffic in the seas. And you have to zoom out and look at what's happening here when it all kind of goes blank. Now this is that area, Hormuz. Bandar Abbas is one of the key Iranian ports, and this has been under a lot of firing and attacks as well. You can look at some traffic. All of these dots are actually vessels. Now, if you zoom out, you will see that the traffic sort of just ends here. It just completely ends here. After this, there is no way for people to get out, and then you have maybe some of it recovering over here. Now, this huge patch and this sort of traffic jam in the seas that you're seeing is where everything is stuck. The rest of the space gives you a sense of how this is more or less normal. But here is where things start getting stuck, and then you have open seas. Now, this is what the problem is. And why is it? Because this is the only sea passage from the Persian Gulf to the open ocean. It's one of the most important choke points and a primary export route for Gulf producers. 20% of the world's daily oil consumption depends on it. The percentage is even higher when it comes to India. And it links the Persian Gulf to the Indian Ocean. Any blockade will drive oil prices up. And like I said, over 2/3 of India's oil imports pass through it. Now, technically, there is no blockade. The Iranian agencies have come and said, we haven't blocked it. But when it's so unsafe, no one's going to insure it. And we heard from Maersk. Maersk is one of the world's largest sea liners, and we heard from them. And they also talked about how, as a precaution, they have decided not to let anything pass over here because insurance has just gone through the roof. It's not become feasible. It does not remain feasible for Maersk or any other major liner to come in and actually move their ships through here. In fact, Maersk has said they're suspending all vessel crossings at the Strait of Hormuz until further notice. They've paused future trans-Suez sailings through the Bab el-Mandeb Strait as well, and they've rerouted around the Cape of Good Hope. Here's where it gets tricky, because obviously you're sailing for more time, the cost of transport becomes much, much higher. So this is where the pain now emerges, and you can real time see that no matter what anyone is saying, this part going blank is showing you that there is effectively a blockage at the Strait of Hormuz right now.
All right, so that was about the Strait of Hormuz and its importance currently. Now, the government called an urgent meeting with exporters and the shipping amid escalating concerns over the Middle East situation. Commerce Secretary Rajesh Agarwal chaired this particular meeting with soaring freight rates and logistics disruptions topping the agenda. Now, exporters say that perishable shipments are already taking a hit, with major liners imposing conflict surcharges or suspending the bookings altogether. Let's take it across to my colleague Rishabh Bhatnagar to gather all the details from this crucial meeting and what are the measures being taken by the government to really contain the situation, Rishabh.
Right, the meeting, this very urgent meeting that was called over the weekend by the Commerce Ministry on, of course, the emerging situation out of West Asia. Happy to report that it started on time about 2:30. It has ended. We have spoken to one of the people that was in the meeting. Around 75 exporters as well as shipping sector representatives attended the meeting. What essentially this was a stock check and stock taking of what are the issues that currently are being faced by exporters. Of course, the issues that were pointed were that because of this spike in freight rates and the general routes and the usual routes becoming unsafe, what are the sort of measures that the government can now take? What exporters are telling us that the government is especially concerned about the cargoes, goods stuck around those sensitive areas, especially perishable goods such as fruit and meat. So the government is very concerned, and they have taken note of that. The government has also taken and sort of spoken to the vessels that are stuck and carrying energy, who are carrying crude oil as well as other energy supplies. Those have also been contacted, and their safety has sort of been talked about as well. What we're picking up is that, very importantly, an inter-ministerial group has been formed on this matter to sort of explore the way ahead for this. And what we're picking up is that another meeting could be called on a very short notice in a similar format. This was, of course, hybrid, and such a meeting can be called on a very short notice, given the fact that this is a very evolving situation and things are changing by the second. So a lot of important updates coming in from the commerce side of things for this war as well.
All right, Rishabh, thanks so much for all those important details. Government clearly taking proactive measures to avert untoward situations when it comes to our export market. And on the other hand, Inter-Ministerial Committee is going to really take cognizance of the matter. Rishabh also spoke to S. Ramakrishna of the Federation of Freight Forwarders Association in India. He told us that the government is working on mitigating the import-export through air, sea, and also listen in to the conversation on what really this means and the impact of it.
Fresh out of a meeting of the Commerce Ministry, talk to us about what the government is doing about the Middle East situation right now, especially to help exporters and shipping sector.
The Ministry of Commerce has just had a meeting with 63 stakeholders on offline, and 10-12 of us in the online physical meeting. Government is really concerned and they want to help the importers and exporters where their cargo is stuck, where the perishable cargoes are stuck, how to mitigate the problem of both imports and exports through air and sea. They are also creating an interministerial group where they have also given the mobile number and the email IDs where it can be they can be contacted, and it will be helpful to the industry. This is a very proactive mode. We are actually, it is generous of the government, and we are very happy about it.
So what was the conversation like when the impacted routes were being discussed in terms of the Strait of Hormuz being blocked or the Bab el-Mandab issue coming up? What are the sort of alternatives that the government is planning, and what are the sort of demands by the industry also coming up at this point in time?
As of now, they have taken the feedback from everybody, including the vessels which are stuck in the Gulf region, which is carrying the crude and energy. So they have taken the entire inputs. Now it is a question that they will all put their mind together and give kind of a solution. But one thing very good about is that they have realized there is a problem, and the problem has to be mitigated. That's a very positive approach.
So lastly, before we leave you, any sort of next measures or next meeting that has been called by the government in this order?
Not as of now. Probably they have created a WhatsApp group, and we are all part of that group. If there is on a very short notice, we will be called, and similarly hybrid as well as a physical meeting will be there. I think it will be a good thing to go forward.
All right, so that's the word coming in. But remember, a bigger impact is also that the global flight operations continue to feel the ripple effects of the spiraling West Asia tensions. With airlines worldwide forced to cancel and also reroute their services, Indian carriers too have scaled back operations, including the routes to parts of Europe. For a clearer picture of the scale of this disruption and what passengers can really expect, let's take it across to my colleague Danish for the latest. Danish, what's the latest that you're picking up? How many flights have been cancelled so far? I'm sure many Indians are stranded overseas.
Well, that's correct. Over the past 3 days, over 1,000 flights by Indian carriers to the Middle East and from the Middle East have been cancelled. Initially, the impact was only on the Middle Eastern routes, but now we have started to see that this is also spreading to routes of Europe. So because of that, Indigo has cancelled its flight operations to Heathrow and Istanbul. Similarly, Air India has also cancelled several flights to parts of Europe. And one of the major reasons is the fact that after the Russian and Ukrainian war, and after the India-Pakistan airspace has been closed, the other alternative route was through the Middle East. But now, even since that is shut, we are seeing that no flights are actually, flying over that particular region. So, as a safety and precautionary measure, the flights have been cancelled. And in the past 3 days, it has been like the total number of flight cancellations has been around 1,000. But now, if this continues for the next few days, we can expect the overall flight cancellations to go up as well. And earlier in the day, Akasa has come out with a fresh statement, and they have said that the flights to the Middle East and from the Middle East have been cancelled till the 3rd of March. But if we talk about two bigger airports, that is the Dubai airport and the Abu Dhabi airport, so even over there, the flight cancellations have been suspended till the 3rd March, 3 p.m. Local time. So all in all, if we see the gateway to the west, which is the Dubai airport and the Abu Dhabi airport, they remain to be shut. And even the Indian flight, the Indian Airlines are also cancelling flights to the Middle East and from the Middle East, and now also to parts of Europe.
Right, quite a chaotic situation when it comes to air travel globally. Thanks, Danish, for getting us all the latest. With that, it's time to wrap up on this edition of Profit 360, but do stay tuned to NDTV Profit. It's time to say goodbye.
year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji. Jingle, 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 jingle. Bas aaj ka. Jingle, 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 jingle. Chal kare thode. Single, 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 single. Kyunki tu hai. Single, 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 single. Baby, I'm your Santa. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सेप्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome to KYC, that's Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and focus on that one company that you need to have your eye on. It's a recent listing, True Alt Bioenergy as well, and it's an interesting one because, you know, not too much coverage in terms of analysts, but the space that it operates in terms of ethanol as well as the other key factors that the company might go into very soon, and we'll talk about that very, very quickly. But in terms of this particular very, very interesting stock, there are a lot of things to talk about. Now, EBITDA expansion is one of them. There are also multiple key expansions that the company is doing in compressed biogas, amongst others, that could be a key growth driver into the next 3 to 5 years. Now, ethanol as well as new verticals like CBG, as I spoke about, as well as SAF are some of the ones that the company is expected to be a key beneficiary of with what we've seen currently as well. Now, apart from that, the company's deleveraging roadmap continues to be one of the major things that we talk about, because the debt has increased going into FY25 until that time. Now, since they have one of the key factors looked at reduction of debt in this IPO, we'll continue to focus on that with the management. Now, strategic joint ventures as well as newer partnerships, what could be those as well, because the company has struck an important partnership as well, and this will be something that we ask them as well. But largely these are all the factors that we're looking at for True Alt Energy as well. When you move on and look at the other key factors about this particular company, since listing, it has had a difficult time, to say the least, because there have been some challenges, and we'll put focus on that in just a bit. But the company is engaged in the production of biofuels, with ethanol being one of the biggest factors in terms of the company's growth. Now, we've seen the revenue jump up quite a bit, but the primary focus is on this particular sector, and hence, given the national policies that we've seen, especially on the E20 as well for automotive sector, ethanol becomes a key growth driver, and True Alt, a key growth beneficiary, is something that we look at. The company is one of the largest producers of ethanol in India. Apart from that as well, we continue to monitor the newer spaces that they are going into as well. So compressed biogas is something that we look at, but for ethanol specifically, the installed capacity currently at 2,000 kiloliters per day. It becomes one of the highest ones in this space, and hence a lot more to focus and talk to the management on about all of this. Now, largely, of course, we will be speaking to Mr. Vijay Narani. He is the managing director of True Alt Bioenergy, and hence now a good time to talk about what would be some of the factors that we will be watching out for. Now, largely, income statement, balance sheet, cash flow, and if you are a regular viewer, you know this drill by now, and return ratios will be something we'll focus on. Also get you a focus on the shareholding structure, street cred, and unfortunately not very positive on this. Valuation as well as outlook are some of the key factors that we look at for the company at this point of time. But let's start with the income statement now. We spoke about the listing. It's not been too long since the company listed, just the last few months, but revenue accretion has been very, very strong for the company. Jumped from 762 crores all the way to 1900 crores. The EBITDA has also kept pace with, growing almost 3x to 309 crores. And profits subsequently have grown from 35 crores to 446 crores. When you also look at the Q3 performance, largely a very strong revenue base, but here you see the concerns. Now, EBITDA hasn't kept pace with the revenue in Q3 of FY26, and hence margins have slipped materially from 30% to 18.8%, while the profits have also dipped, and hence we've given this a neutral rating for now. While the history suggests that the growth momentum should continue, Q3 and the latest quarter shows you some concern, and hence we'll come to that in just a bit. The margin trajectory very visible in terms of the upward momentum, but Q3 should have seen a much higher accretion in that sense. So continue to monitor that and ask the management on the same as well. When you look at the balance sheet as well, let's look at this perspective very quickly, because you've seen that the cash levels has been something that the company has been targeting to increase as others as well. So from 23 crores, there's been a 10x jump in cash as well, but the borrowing number has been stable at roughly around 1500 crores. So what could be the deleveraging strategy will be something that we'll ask the management. The company's book value as a whole has grown by 7x, given by new capacity that has come in. So you've seen the revenue jump 7x. You've seen the book value also keep pace with that at this point of time as well. So that's largely on balance sheet. In terms of the book value, while positive, the borrowing number is something that we continue to focus on. Concerns on deleveraging is something that we'll talk about. So hence a neutral rating yet again. But on cash flow, that's the other key aspect. Now, because of the profits that have generated, that's clearly visible in the company's cash flow from operations as well. So it had that blip in FY24, big jump in FY25 yet again, with a profit of also around 146 crores in FY25 shows you that ratio of almost 200% on a steady state basis. Will this continue? Will be something that we'll talk to them about. Net cash flow has also materially jumped. So clearly a thumbs up from this standpoint for this KYC rating as well. Return ratios is the other key aspect. Now, in FY23, the company's return ratios were around 27 odd percent. That jumped to 28.2%. So hence, the return of equity is largely a big thumbs up from this standpoint as well. And hence, given this a thumbs up clearly. Shareholding largely stable at 70.5% as well from the management, because we've seen that there was, of course, the selling in this particular IPO, and hence the shareholding has come to 70.55%, very, very stable in that sense. But you see that there has been not too many foreign investors who bought into this story as of yet. Maybe a key domestic play, but the domestic institutional investor share also limited, and maybe because the promoter hasn't sold too much in this particular IPO is something that we continue to monitor, because the stock is down 25%, and hence public, the retail investors like you and me have bought into this counter right now. But largely something that we continue to monitor, and hence a neutral rating for now on the shareholding as well. The street cred is what I was talking about. Not too much since the company listed, not too much time that has passed, but stocks down up almost 3% in terms of the 1 month performance. But since listing, the stock's down almost 25%, and hence there's not too much in terms of for us to talk about in terms of the street cred at this point of time. Valuations become key at this point of time for the company as well. Now, it has peers like Balrampur as well as Triveni Engineering amongst others. So for all the three companies, you do see the valuation largely stable at the 22 to 26 times price to earnings. And hence we've given the company a thumbs up on this aspect, because while there has been a 25% drop in the company's share price since listing, now at this point of time with peers and a higher growth, this becomes a very interesting counter is what True Alt Energy is. In terms of outlook as well as the final key parameter is what we track. The company has specifically mentioned in terms of outlook that there are some key things to watch out for. Ethanol business, largely a very steady business. So you will see the all plants of the company are running at a steady state pace, and there will be no new capacity addition. So you should see return ratios improve from this point on as well. When you also look at the other key aspect, which is the compressed biogas, now that will drive the company's growth outlook going forward, and hence you should see those newer plants that are coming in be a next growth opportunity for the company. Apart from that, SAF is a big long-term project for the company. Returns will come later, so you might see that the benefit coming in from the ethanol business might be diluted at this point of time from SAF, but the share of ethanol should continue to boost the company's parameters. Fuel retail, very small business on a day-to-day basis, but expanding at a steady pace as well. So hence, largely is what we see, and profits should improve as plants run smoothly. Time now for the final ratings of what we give it in terms of the KYC. Neutral rating for both income statement and balance sheet, while cash flow and return ratios continue to show that positive momentum. In terms of the shareholding, that's largely stable and neutral in that sense at 70% shareholding from promoters, but lesser in terms of the foreign investors, and hence a neutral rating there. But valuation and outlook, the two big factors that we focus here on KYC, seems to be a thumbs up from that standpoint as well. So overall, we're giving the company a 5.5 out of 8 for KYC's stringent parameters in this show as well. But largely, let me welcome in the guest for today, Vijay Nirani. He's the Managing Director of True Alt Bioenergy at this point of time. Mr. Nirani, very good morning, sir, and thanks so much for joining in today. Largely, let me start off with, for quarter 3 specifically, because we did see that the margins came down in this particular quarter and the profits were impacted on a YY basis, while the revenue has kept pace with the growth. Could you give us some perspective of where do you see ending in FY26, both in terms of margins as well as in terms of profits? If you can give us some perspective of what investors should expect at this point of time.
At the outset, thank you so much for having us and for covering us. We are relatively a very young company, like you said. We just have about 2.5, close to 3 years of existence so far. And I think God has been kind. The markets have been kind. We have a very good business to demonstrate. Energy transition, and again, sustainability through social reforms, that is to empower farmers So we get to do all of that, which is very, very exciting. So in terms of the company so far, we had only the first business vertical that was in operation, which is manufacturing of ethanol. And in the ethanol space, we had 5 ethanol plants. The fifth one just got recently commissioned. I mean, it got the consent to operate as recently as December. So with that, we are now operating a full 2,000 kiloliters per day capacity. And if you remember, in the last Q2 of this current financial year, we had taken a conscious shutdown of the plants to integrate 3 of our 5 ethanol plants into grain field or making it dual feed. Now our capacities are fully geared up to operate on a 300-day basis. That is the expectation. And coming forward, we have other verticals also that should give us a lot of growth momentum. But to your question, sir, on the how we end this quarter and how we end the financial year, times have been good for us. The prices of raw material, that is grains, has gone down drastically because of the oversupply of grains and underutilization of capacities across the country. So that is giving us a lot of margin expansion. And we are looking at a peak operating capacity right now, and almost at a rated capacity into 80-85% of capacity use on 90 days is what we are projecting. So that is what exactly we should be achieving this quarter.
Got that, you, Ms. Nirani, and largely, very well explained as well that, in terms of dual feed, and I'll just come to that in just a bit. In terms of, where we've seen this year, in terms of the revenue profile of the company, you are roughly hovering around the 1,100, 1,200 crore mark, and last year you've done 1,900 crores. Now for quarter 4 in March 2025, you did about 900 crores in terms of revenue. So should we expect that this year you should at least end at roughly around 22 to 2,300 crores in terms of revenue? Would that be a fair estimate?
I would say our targets are a little higher than last year. And we are sort of on track to probably achieving that as on date. And we just left with another 30 odd days, and to be precise, 29 odd days. And we should be closing a little over the last year's last quarter mark.
Something that we will be working with, of course. And do you expect that now that all those plants have gotten commissioned, your 3 out of 5 plants have become dual feed as well? Do you see that we could see actually a margin surprise compared to last year, because you were roughly at around, in the same time last year, 17 to 18% margin in quarter 4 specifically. So could we see that quarter 4 could be a big jump, 25 to 30%, and hence you could see that margin growth for the year come back?
So 2 things. If you look at my last quarter, that is Q3's results, we only operated for about 58 odd days, close to 59 days, let's say. In that, we could achieve a good revenue growth as well as a margin of almost upwards of 15 to 16%. We had a lot of costs that we had to bear during the period, and a few of our capacities were also being commissioned. Now for Q4, all of them are done with, and our grain plants are also in operation as we speak. Especially on maize, the margins are much higher because we usually predicted maize price to be somewhere between 22,000 rupees a ton to 24,000 rupees a ton, whereas the market today stands somewhere around 18,000 rupees a ton. That's a huge delta which we never expected. That is going to demonstrate a big growth in the bottom line on the margin front. Without quoting a number of on what percentage of EBITDA we should be reaching, it should be somewhere on the let's say about a historic EBITDA so far that we've achieved. That's all because of the price of raw material.
Got it. So definitely that 4,000 rupee delta will be a big factor to watch out for in quarter 4. I just wanted to come back to the business now, because we've spoken about financials a little earlier than I anticipated. But on terms of the business, now you spoke about the dual feed aspect. Now 3 out of 5 plants are already dual feed now, as you mentioned at the end of quarter 3. Talk to us about the benefit and what it actually means for our investors, because while TrueAlt, a recently listed company, we've not spoken to you too often. So if you can understand and help us understand the meaning of dual feed and what it does for you in the future.
So typically we earlier operated on a single feed, that is the derivatives of sugarcane, that is sugarcane juice, B heavy molasses or C heavy molasses. So this is one family of raw material that we used to consume. Now we have added pre-fermentation. We've added a few equipments that allow us to consume rice or maize. So at any given time, I can consume sugarcane juice, B heavy molasses, C heavy molasses, or I can consume rice, maize, or any damaged food grains. So this makes it the family of grains and the family of sugarcane derivatives are considered dual in nature. So they're two different roadways to achieving ethanol. And we now can do both of them in three of our big plants.
And Mr. Nirani, in terms of the benefit, now you mentioned 3 out of the 5 plants can do the dual feed. So uninterrupted supply of raw material as well as some benefit of the volatility that you might have seen otherwise from just that single raw material, you get that benefit, and that's very well understood. What will it mean for the business in terms of financials? How could, if you can explain us that as well, because how the margins for all commodity businesses is very volatile. If you can give us some perspective of how we should look at that in terms of the benefit of dual field coming into margins.
Absolutely. So what we now have is the possibility to be flexible in consuming any kind of grains. And the biggest opportunity in ethanol business right now in the current framework is that ethanol has different prices and they're fixed for the whole year. So our finished good, there is no dynamics on the cost. So I don't have any, to stock up inventory and sell later. There's no problems like those. Whereas the raw material has a huge dynamic. I mean, there's a huge delta in the prices. Usually during the harvest period, the prices of rice, maize, or sugarcane is quite low. And during non-harvest period, the prices go up. So, and each year, if the rainfalls are very good, then we get good sugarcane and we get good rice. If the rain is less, we get a lot of maize. So every year the dynamics change, and by us being dual feed, we will have access to different kind of feedstock irrespective of rains or no rains, right? So that gives us the flexibility in terms of availability. Now, in terms of the pricing, each of these commodity has a different price structure during different months of the year. And for us to have that assessment and procure the right raw material at the right price is the skill that the operators will really have, because your cost of conversion is almost at a highest efficiency. Your finished good is at a fixed price. All that you're left with is your skill on procuring the raw material at the right price. So that's exactly what benefit that we get by being dual feed.
Got that view, and I appreciate you helping us understand that a lot easier as well. So I appreciate your understanding on that. But on compressed biogas, that's the next big opportunity, right? We've seen one of the leading players in terms of energy and the company with the largest market cap also opening a lot of CBG plants. If you can give us what is True Alt doing in that sense, and how far are we in terms of that coming into the revenue? So if you can give us some medium-term projection also, that could be fine. But what is the benefit of True Alt entering into this space? Because you have the benefit of the 5 ethanol plants. That's a steady state revenue. You are going into this new venture as well. So talk us through the rationale.
So CBG is the next big disruption that the government of India is fully geared to achieve. And True Alt wants to participate in that in a very big way. We have targets to invest close to upwards of about 1,200 to 1,400 plus crores in the next 2 years in the CBG space itself. And we have 2 joint ventures, one with Sumitomo Corporation and one with GAIL, Gas Authority of India. And both of the places where we've already commissioned the construction, 4 of our plants have now begun construction. 6 of the GAIL plants will begin construction as early as maybe last week of March or first week of April. That's the target that both GAIL and us are holding to achieving it. Now, CBG is a phenomenal opportunity especially for True Alt. In our perspective is that I have sugarcane press mud, which is absolute waste right now. And I've got spent wash, which is a byproduct of ethanol making. So both of these products give me a lot of flexibility on procuring or buying raw material. And that gives me the flexibility to run the plant at a big scale because I have assured feedstock available. And CBG is a very interesting business because we are achieving, substitution of 3 major products that we import. One, India is a net importer of fertilizers. We import close to 70% of our fertilizers through the CBG business, our residual waste after extracting methane becomes organic fertilizer, which we give to the farmers. And again, India imports close to 60% of its gas, and our per capita gas consumption is very, very low. So consuming these organic waste and converting it into CBG and into fertilizers is a very, very important subject for Government of India, and TrueVolt is participating it in a big way.
Got it. So there is, multiples to this step. So from organic waste, you will be going, of course, into manufacturing CBG, and from there also you can use that residue going into fertilizers. Got that point. How quickly is your timeline of those 6 plants with GAIL as well as the other joint venture as well? So if you can give us some perspective of when is it expected to operationalize, and also in terms of what it does for return ratios, because there will be some hit on the return ratios at the start, but your ethanol plants have also given that benefit and will give that benefit in FY27. So how should investors look at both these aspects?
So on the CBG, good thing for us is that we have been operating CBG since almost 4-5 years now, and we're one of the early movers. And if you look at our compressed biogases the performance in the last 3 quarters, we've been achieving an EBITDA of upwards of 60%. And we've been achieving a PAT of close to 45 to 50%, which is a huge thing, which I would only presume that very few or very limited sectors can actually give. So we had this, the benefit of early understanding on the project. A lot of the companies that are doing CBG, including the one large company probably that you referred, they're still in the learning curve. And we are now replicating the learning that we had in our first plant. So in terms of numbers, we have got 4 plants of 20 TPDs each. That could give us a revenue of somewhere close to about 300 to 350 crores at full capacity on an annualized basis, which will commission by July of this year. That is 2026. So Q2 of this year, we will start seeing some revenues from the 4 plants. These are under a joint venture with Sumitomo Corporation. And the ones with GAIL, these are 6 in number, and we're spending close to 470 odd crores of capex on those plants, and target to achieve somewhere about 400 crores of revenue on an annualized basis. But those will be commissioned only by the Q3 of next financial year, or November of 2026. So we'll have at least about 10 plants that will be commissioned, hopefully within this calendar year. That's the target that we carry. And one good thing here, sir, is that this whole business, the revenue or the capacity utilization or ROE, ROC entirely depends on your skill to sell. Because gas can't be stored. If you're unable to sell it, then you'll have to flare it, which is a revenue loss. So because we've got good partners like GAIL, who is who's the principal of all kinds of gas trade in India, they have assured us the offtake guarantees. So that gives us confidence that we will be able to achieve capacity utilization from year 1 itself.
Got it. So very important point that you talk about, Mr. Nirani, that you have that benefit of GAIL being as a partner. But just very quickly, dissecting what you told me, 300 crores of revenue at full capacity from the Sumitomo plant that will start in July of 2026. So could we anticipate at least 200 crores revenues in FY27 from this plant? Would that be a safe assessment?
So we wouldn't have that high of an expectation, but since it's year 1, we usually plan to have, target to achieve at least about 50% on the remainder days of operation. So, 50% of, let's say, by July, if we commission, we'll have about 270 to 80 days in hand, the number of operational days. On that basis, we would have somewhere about, we should target somewhere about 120 to 140 crores of revenue. That's the target that we would carry.
And when I look at the medium-term opportunity as well, Mr. Nirani, and that probably would be my final question, you've seen a very big jump in revenue from FY23 going into 25, where almost 900 crores. Now, largely a lot of that is coming from ethanol. So when I look at the medium-term opportunity for FY28, would it be safe to say that you will be clocking in at least double of the current revenue that you're doing, or at least a close figure? And margins will subsequently be at least at the level that we've seen historically at the FY25 level, given that you will have a couple of years, 3 years. So by FY28, do you anticipate roughly around 4,000 crores of revenue and margins of at least 25%. Would that be a fair assessment?
If you ask the entrepreneur in me, I am really doing this. I would tell you that we've been literally growing at a 55% growth rate since 2023, since our first year of operation. And from 723 crores in revenue to we grew to 1,240 crores in revenue the second year. Then we grew to almost 1970 crores in revenue the third year. So this year also we were actually in line to achieving that kind of a revenue growth, say 55% of revenue growth. But unfortunately, in the state of Karnataka, we had excessive rainfall during this monsoons, pre-monsoon, post-monsoon, and monsoon were quite heavy. So our construction time on the grain integration, it got delayed by close to 2.5 months. And a month I can achieve almost about 5.5 crore liters of ethanol. And that 2.5 months would translate into almost 12 crore liters of ethanol. So that disruption slowed down the growth for this financial year. But it was again a very conscious decision that we took, and it was a one-time delay that had happened. We are sure that the growth rate should be in tangent to what we've achieved in the last 3 years. That is the target we hold. And all these, the new revenue growth, or rather the business growth, will come in from 3 verticals in principle, rather 4 verticals.
Right.
One is capacity utilization in ethanol. 2 is the new CBG businesses that are coming up, almost 22 CBG plants, 23 CBG plants in the next 2 years.
Right.
And we'll have SAF giving us revenue starting FY28.
Right.
And right now we also have the fuel retail verticals. We, in fact, we are one of the, we got authorized as to be called as an oil marketing company.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
You're watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani. Now, over the last few years, investors have kind of poured money into themes, credit, hybrids, as well as tactical strategies. India's mutual fund industry is now going through a kind of reset for a lot of these mutual fund categories and rules. Now, from redefining credit risk to kind of tightening thematic launches and introduction of life cycle funds, SEBI's latest categorization circular kind of just doesn't tweak products, it kind of reshapes how portfolios will be built, marketed, and kind of understood as well. To decode exactly this and what this means for investors like you and me, I'm joined by Radhika Gupta, who's the MD and CEO of Edelweiss Mutual Fund, joining us now. Radhika, thank you so much for taking out the time. My first question to you is from a broader lens perspective, right? This circular coming in, is it more about risk control? Is it more about investor protection? Or is it the next phase that the industry maturity is going to see going forward?
I think the circular has I see the meta points of the circular as twofold. One is more focus on schemes being true to label, investor protection, and that is all reflected in how credit funds are classified, the whole overlap around sectoral and thematic funds. I think all of these are steps towards saying arbitrage funds, saying that do what you say and say what you do and be very, very clear about that. And the label should be the actual. So I think that is one lens. The second is I would call a opening up of the market to reflect, or opening up of the category to reflect new realities. So for instance, in many hybrid and equity categories, the residual portion now can be REIT, InvIT, gold, silver, etc. It just doesn't have to be fixed income. There's the introduction of a new life cycle class. So that second part, I would say, is a one-time reopening up of mutual fund categories to give additional flexibility to reflect new capital market realities. These are the two meta themes, I would say, that have come out.
So then, Radhika, I just want to get a sense. Would you put this, as SEBI moving from kind of product proliferation to portfolio discipline? Because I think there are multiple problems that, through this circular that SEBI is trying to solve, which is alpha dilution, mis-selling. There's also category cluttering that is happening. Do you think that reading is correct?
I would say it a little differently. I would say rather than product orientation, more solution orientation. So rather than just having a suite of products, being very, very clear about why individual products exist, what purpose they will solve, as I said, matching the label that they have, and really focused on a solution and need-oriented selling rather than just having products for the sake of products. I actually think the circular, if done right, can lead to a lot of thinking and a lot of innovation also.
Got it. There's also, just talking about, line item wise now, they've also said that you can now run both value and contra funds with a 50% overlap cap. Does that create a genuine style differentiation? Or do you think this is just, kind of branding separation that, they're kind of trying to do? How does it, make this different?
So they've done it in two places. They've done it in the value and contra category. They also used to have either balanced or aggressive hybrid. In the hybrid category, they've said you can run both. But what they've very clearly done is define the amount of overlap. So in value and contra, you can have 50% overlap. Now, theoretically, if you want, value and contra can be run as very different strategies. Value is really picking up peak value companies. Contra is trying to do something that's against market cycles, and those don't have to be traditionally value-oriented companies. So while there can be similarity, if you were to run it differently, I think there can be differences of approaches. The critical thing here is, I think 50% overlap is a very, very good criteria. So that will make sure that you run your value and contra fund differently. Again, the criteria for aggressive hybrid and balanced hybrid is also very, very clear. So that will make sure that you run them with a different risk return profile.
With regards to the limiting of thematic launches to an kind of AMFI notified list is what they've said. Now, this, do you think, is an attempt to curb the narrative-driven product launches during the bull cycles? Is that the aim here?
So, I think it's an attempt to simplify, because finally, themes can be themes. Anything can really be a theme. But the idea is to make sure that if one is launching a thematic fund, and there's nothing wrong with not launching thematic funds, I have them, the industry has great thematic funds. It is something new that you're bringing to market. It's not a copy of something else that you have. So I think the spirit is extremely well intended on thematic launches. Too many funds from any AMC or from multiple AMCs, especially now so many AMCs, also makes things extremely confusing for the consumer. So I think it's an attempt to simplify the number of options for the consumer, and also force asset management companies to say, if you're putting out something new, is it truly distinct from the basket you already have?
Got it. The introduction of sectoral debt funds with 80% in AA plus, and this I want to and above, right? Do you think is kind of encouraging credit segregation to prevent another credit event spillover? Do you think that's the aim here?
I think it gives you more categories in debt, although if you were to ask me my honest opinion on this, beyond liquid and money market, I think post-credit crisis, I don't think you've seen any growth in fixed income category, particularly after the change in taxation. So while it's well and good that we have a few more categories, how much these categories will be structurally used, I'm not sure. And I think even with the fact that we have more categories finally, given the liquidity of credit markets in India and the fact that you run daily liquidity open-ended structures, is this suitable? Is there, an ALM comfort here? I think that time will tell, and is there investor demand? So I think on this time will tell.
Understood. For hybrid funds, they are now allowing exposure to InvITs. There is exposure to ETCDs, also gold and silver ETFs as well. Do you think this is more towards multi-asset standardization? And I think it will make it more dynamic?
I think this one is particularly fabulous because historically for two reasons. One is historically, if you wanted real ETCD exposure, you only had the multi-asset category really to do the use of gold and silver. And it's not really fair that one category is the only one where you can take commodity instruments. I think bullion now is a very, very mainstream asset class. So the ability to put it into multiple hybrid funds basically means that everything is kind of a multi-asset fund in nature. I think the restriction on gold and silver, the flexibility on gold and silver is not just for one category, it's for the whole hybrid category. There's also, an interesting element of bullion or commodity-based arbitrage that can be explored in many of the hybrid fund categories. I think REIT and InvIT is a class that is growing. The government has talked about it. The regulator has talked about it. And I think this class really lends itself well to hybrid funds because REIT in itself is a hybrid instrument. So all of us already use them given the limits in our hybrid funds, but now we have a little more flexibility.
Got it. They've also introduced life cycle funds with fixed glide paths. Now, when I was trying to understand this from a lot of people, there were mixed reviews. I want to understand your viewpoint here. How are you viewing this as a product and what are the pros and cons that you're seeing?
Our view is not mixed. I think our view is clearly positive. We've been talking for a number of years about the introduction of this kind of category. We already had target maturity funds, which we started at Edelweiss MF, so why not target date funds? I do think retirement is one of the largest goals in India. And beyond retirement, I think life cycle funds now focus on goal-oriented investing. So many investors that I meet say, I want to invest, when do I redeem? And I think we have to, as a nation, orient investors towards more goal-driven investing. So with these 5-year, 10-year, 15-year, 20-year funds, investors can pick a time horizon based on their goal, and the fund will automatically rebalance your asset allocation from equity-heavy down to fixed income heavy. Say you want to educate a child in college 10 years later, you can pick a 10-year life cycle fund, start your goal very aggressively, and as that college education comes closer, the life cycle fund will be conservative, and all of this will happen in a tax efficient way without consumers needing to worry about rebalancing. So I think this is a great category. It really orients us towards goal-driven investing.
But the other side of argument for life cycle funds is that the idea of lock-in for this fund, right? The whole idea about mutual funds is with regards to liquidity. And secondly, these I believe would tend to be slightly more expensive. So how do you differentiate this from the other fixed asset classes?
So I would say two things. One, I don't think they've imposed lock-in. They have said exit load. Now, exit load is actually a very, very good thing. And I think they've only said 3-year exit load. Anyway, if someone is an equity investor, they should be talking 3 years, 5 years, ideally 7 years. So I am actually, and nobody is saying these are closed-ended funds, so people can remove money. But here we are talking about someone who's investing for 10, 15 years, and we just want to make sure that there's a little bit of cushioning at the beginning so that they give the corpus that time to grow, because equities can be volatile over 3 years. We all know that. As far as expenses, I don't think the expense structure here is going to be different from a regular equity or hybrid fund. I'm sure it's going to fall into the current equity or hybrid caps, and as these funds scale with PER, the size is going to come down. So I don't think it's going to be more expensive than a regular equity and hybrid fund. And given the features and the fact that you save so much in terms of taxation on rebalancing, I think this ends up being very good for a consumer.
Understood. Okay. Got your point on that, Radhika. For foreign securities, they've said that they'll not be treating this as a separate asset class. What is SEBI exactly trying to signal here? I mean, what is it that they want to, kind of try to do here?
I assume that line is in the context of multi-asset funds or funds where they're saying you need to have at least 3 asset classes present. Now, one argument could be my asset classes are domestic equity, domestic fixed income, and foreign equity. SEBI is saying here, no. Foreign equity or domestic equity, you're still equity. So if you need a third asset class, that has to actually logically be commodities. So I think it's a small point to signal that. Anyway, by the way, the foreign limits for mutual funds have been closed for a long time because of RBI restrictions.
Got it. One last question to you, Radhika. If you were to design the next core category under this framework, what would you see as the biggest structural opportunities? Is it life cycle funds, sectoral debt, or disciplined hybrids?
Life cycle.
All right, Radhika, thank you so much for taking out the time and helping us understand this particular circular and helping us decode that. Thank you so much.
Thank you.
Okay, so we did talk about the new mutual fund categorization with Radhika Gupta. Now, shifting focus to another topic, which is also a very interesting one, because everybody today probably have a gold or a silver ETF in their portfolio, and there's a change happening there. Now, SEBI has gone out and changed the way how mutual funds will now value physical gold as well as physical silver. Now, what does this actually mean for investors, and what does this actually mean in terms of valuation? To understand all of this, and to help us in fact understand all of this, we are now joined by Vandana Trivedi, who is the head of Passive's Access Mutual Fund, joining us now. Vandana, always a pleasure speaking with you. Thank you so much for taking out the time. My first question to you is this development coming in. Help us understand as to, first of all, what is exactly that is SEBI said, and what are they trying to do via this?
Sure. Thank you, Mahima. Thanks for having me. What has SEBI said with respect to valuation of physical gold and silver held in various schemes? This does not apply only to gold and silver ETFs, but also to various hybrid schemes and multi-asset funds which are investing in gold and silver. So SEBI has said that while valuing, for the purpose of calculating NAV of these funds, while valuing the gold and silver, now you have to refer to the domestic spot prices which are issued by recognized Indian stock exchanges. So that's the requirement that SEBI has brought about. How is it different from the practice that is being currently followed by fund houses? So even now, when fund houses have been valuing gold and silver, what we have been taking is gold and silver prices, but these have been international benchmarks, which are provided by what we call as the LBMA, which is the London Bullion Market Association. And then we would overlay that with Indian realities, which is what is the landing cost finally in India, which means that we start with the international benchmark, then we layer it with import duties, other various landing taxes, currency conversion, importantly. All of this would get layered over the international price benchmark. Now, SEBI has said, listen, let's not do that anymore. And you value it at domestic spot prices, which is published by recognized Indian stock exchanges. So that's the change, Mahima.
So, Vandana, I'm just trying to understand here as to why this move. I mean, what is the kind of aim that SEBI is trying to achieve through this? And how does this, kind of change things for somebody who's already invested in these ETFs or hybrid funds or any fund that has exposure to gold?
Sure. Okay. So what SEBI has tried to achieve via this change is what SEBI has been trying to achieve via everything that they're doing for the investors in the mutual fund industry, which is to bring about transparency, to bring about standardization. So essentially till now, while valuing gold and silver, we had the LBMA prices, and then we would layer that with a number of fees and taxes, and also put in our own estimation of the premium or discount that was prevailing in the Indian markets, right? Which meant that different AMCs could end up having different types of assessment while layering all of these additional costs over the physical gold or silver cost. However, now when SEBI has mandated that we move to the prices published by recognized Indian stock exchanges, what SEBI is doing is that it is standardizing all the Indian realities with no flexibility of assessment that's left anymore with any single fund house. So that's as far as the impact of it on, say, how the calculation will go on from now and how mutual funds will have to respond to complying with these new regulations, which are effective the 1st of April 2026. Now, most important question is, what does it mean for investors? What does it mean for you as an investor if you're already an investor? The earlier system was not flawed. Okay, the earlier system was as good as it could be. We are just standardizing with this new regulation or requirement as mandated by SEBI. For the investor, what does it mean? Does it change the number of units that you're holding in your gold ETFs or silver ETFs? No, it does not. Does it change any taxation element for you? No, it does not. Does it change your cost of acquisition for investments that you've already made? No, it does not. So for the investor, nothing changes. What it changes or what it helps the investor is, in future when you're comparing, say, two ETFs, then the NAVs that you're seeing for the two ETFs is standardized. There is no discretion element involved in terms of layering or arriving at the NAVs. So it is transparent, more transparent now, more standardized now, and therefore you can say it's also more comparable now. To compare between two ETFs, also, if you want to analyze the tracking error of any ETF, which is, as you would appreciate, is a very important concept that investors should be aware of while choosing ETFs to invest into. This gets the denominator in a way gets standardized, so it's far more easier and standardized to compare. So that's the change for an existing investor. It just does not mean any action that's warranted from them. It does not change the risk profile of these asset classes. It does not change the use case as a hedge of these asset classes. It has just standardized the process of calculating NAVs. That's all.
Vandana, I just want to understand, is there going to be change in terms of the holdings? Because the difference, I believe, will be kind of taken into consideration. Just because, you would be kind of tracking as to how the spot market in India is versus internationally. What percentage of change can one expect in their portfolio because of this for both gold and silver?
Okay, so let me put it this way. So when you're using the NAV to value your portfolio, right, the change that usually comes in versus when you want to compare the Indian prices to the international prices is the change that is brought about due to certain standardized factors. For example, import duty would be standardized, right, across all parties. Currency conversion metrics is standardized because currency is the same, right? It's USD versus, say, INR. What could change, however, is the seasonality element. For instance, Indian markets behave differently during certain phases. For example, when there is a wedding season in the country, when there is festivities like Diwali, Dhanteras, etc. in the country, when there is an India-specific premium that comes about in the Indian markets. Now, those are the times when there would probably be a difference in how the NAV is calculated. But I just want, for the benefit of your viewers, to share a very important distinction here. Now, when you as an investor, you want to add or buy, say, gold ETF in your portfolio, you're not doing it at NAV, Mahima. You're actually going to the market and buying it at current traded prices of that particular gold ETF that you're choosing, right? So essentially, your buy or sell decision on an ETF is at the ETF prices which are traded in the market. NAV has nothing to do with it. NAV is important from the standpoint of comparison is comparative analysis between a couple of ETFs in the same space or for the purposes of tracking your errors. So from the investor standpoint, to value your portfolio, you will use the NAV, and there that process has got standardized, but it isn't really changing the value as such of your holdings. Because even today, again, for the sake of, at the cost of repetition, even today, when we have been calculating NAVs for ETFs, we have been taking the Indian reality. We've been overlaying it to the international benchmark prices that we've been getting, right? Now, SEBI is saying that instead of you individually overlaying or estimating those cost overlays or the cost additions, if I may call it more simply, there is a standardized price that now you start using, which will be published by recognized Indian stock exchanges. So your buy and sell decisions are really not going to get impacted because of this. Your valuation just becomes a little more standardized. I hope I've been able to clarify this for you.
Understood. I think now it's very crystal clear for me. Vandana, thank you so much, in fact, for that comprehensive answer. The other aspect, and I'm sure about this, but I'd still like to confirm from you. Do you think there will be any taxation change? I suppose not, because this will not take into consideration any of the factors that we consider for kind of taxing these ETFs or hybrid funds.
Not at all, Mahima. You're absolutely right there. There is absolutely no change to taxation, cost of acquisition, and nothing at all.
Okay, got it. Now, the other aspect is that, do you think that because of this whole development coming in, ETFs, bullion ETFs specifically, will see more inflows because of probably, I cannot put it as more transparency, but I think an easier way now to evaluate ETFs, right? Do you think there will be more inflows coming in?
Frankly, Mahima, if you ask me, I'm not sure that this is going to attract more inflows. If anything, it just gives more comfort while you're comparing or valuing your portfolio, right? But, I would only urge that, gold and silver or ETFs or any asset class for that matter has to subscribe to a certain asset allocation model that works for you. And therefore, to that extent, whatever allocations will come will keep coming. Just one other important thing that's happening in the world of gold, at least, is that there is seems to be a structural change that's underway because of various tensions across the world, etc., which is making people look a little more closely at these asset classes, which we may not have to manifest possession of these asset classes via the financial products route, which we haven't done very seriously as as an investing community so far. So to that extent, these bullion ETFs do now occupy an even more important space. So far it was in theory, in academics. Now it's actually getting executed by investors. And I think I'm just very, very glad that the regulator is working really hard to make this entire investment mode far more transparent and far more standardized, which is very important in the interest of the investor. So to that extent, it just gives a lot more comfort, I would think, to the investing landscape.
Got it. Vandana, thank you so much for helping us understand what this means for investors, as well as actually helping us decode as to what this move from SEBI was. So thank you so much for taking the time and speaking with us at NDTV Profit.
Thank you. Thanks a lot. Bye-bye.
All right, so there you go. We talked about two very important things: mutual fund categorization, as well as the new update coming in for SEBI with regards to how physical gold and silver will be kind of evaluated for these ETFs and hybrid funds. Now, the other aspect that we need to consider, of course, is the war going on, right, in the Middle East. Now, because of that, a lot of commodities are seeing spikes. Crude is up today, was up around 10% at that $78 per barrel. Gold and silver also will see ripple effects of markets being under pressure. Now, to help us understand as to what's the outlook looking like for all of these commodities, we're joined by Shreyansi, who will give us the whole picture of the commodity space. Shreyansi, over to you.
Well, absolutely. A lot of headlines that you're looking at when it comes to commodities, and let's make sense of the prices right now. When you talk about oil, first things first, you're looking at an uptick of about as much as 13% as far as oil is concerned, to the highest since January 2025 as well. And when you talk about Brent as well, that has spared some of the gains, but still an uptick is what you're looking at on the back of the closure of Strait of Hormuz, which is about 20% of global oil supply. When you talk about other factors to watch out for, there's OPEC Plus in terms of the kind of commentary pouring in from them. So they're talking about that 260,000 barrels a day raise in terms of their quota as well. And they're also sparing the production capacity that is confined to just about Saudi Arabia and UAE. So that's a little bit of a caveat, the fine print that you're looking at when it comes to this particular OPEC Plus quota raise. But nonetheless, it's important to track more. Oil tankers are also gathering pace in the Persian Gulf as well. So you're looking at least 40 very large crude tankers as well, and that are still stuck in the Strait of Hormuz. Now, other than that, more than half of the world's largest insurers as well when it comes to the entire maritime space, they've in fact scrapped war risk insurance as well, given the kind of situations that we have at hand right now. Other than that, when you talk about gold prices, you're seeing quite the surge there as well, and no points for guessing that this is safe haven surge that you're talking about here. And it's advancing for a fourth straight day. When you talk about gold prices, investors are flocking to safe haven assets, and that's something that's important in terms of what it should be suggesting to you in terms of technical levels. It's the 14-day period that you're looking at in terms of the relative strength index that is close to 65. So that basically means that the overbought region is somewhere close to 70. And it is nearing that overbought territory, and that's what gold was doing in terms of the technical indicators as well. But all in all, oil prices surging and gold and silver as well soaring.
All right, Shansi, thank you so much for giving us that perspective with regards to where, of course, the commodities space go. But with that, completely out of time on this edition of Your Money Matters. But do stay tuned. More news and updates on the other side.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Sound check हो गया? Visuals ready? Lights okay? Everything is ready? Wait, are you ready? ये सिर्फ एक कॉन्सर्ट नहीं है. This is my life. This is my story. One night, no repeats. Book your tickets now.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
1 year at the helm of SEBI and Shri Tuhin Kata Pandey has enacted changes that a lot of street would have been hoping for or waiting for, and I'm sure there are many more in the offing. So here we are at Team NDTV Profit at the SEBI headquarters, talking to the man himself about how does he think of the year gone by and what does he think of what's going to come in store. With me, Neeraj Shah and Shrimi Chaudhary, the man himself in the hot seat. Sir, thank you so much for being with us today. Now, when you took over, sir, I would presume that the docket for change was fairly loaded, and you've enacted a bevy of changes. If I were to ask you to think of how would you rate your tenure on the first 1 year, what would you say? One or two things that have been landmark for you, and one or two things that you, on hindsight, you might think maybe you could have done it differently.
Okay, I think first of all, it'll be difficult for me to self-analyze, except to say that the year was quite a difficult one in terms of the challenges that it offered. Normally the markets do require a certain amount of stability of policy. Of course, markets are also used to all kinds of uncertainties as well. But particularly the year gone was particularly beset with huge amount of uncertainty arising out of geopolitical developments, not only the wars and crises, but also tariffs in particularly, which were actually impacting a big deal, vast segment of Indian economy, Indian capital. On top of it, we of course had, as I said, that this challenge of a perception that we are over-regulating, and therefore we also had to really clearly put together a collective strategy of, optimum regulation based on, as I said on the first day, 4 T's, which is transparency, trust, and technology and teamwork. These were certainly enablers to achieve this optimum regulation. And all that I can say is that the teams, that is internally, that SEBI, that we have, and also the teams outside, which is the committees and the market participants and the industry and the investors associations and the proxy advisors, all of them have actually helped to put together a series of reforms, which I can call it, while we had one of the best primary markets in 2025 as #1 in the world in terms of IPO, we also have year of reform in terms of regulations and simplicity and ease of doing business.
Just an extension or a related question, actually, wanted to ask that there is a perception that under your leadership, SEBI has taken a facilitative approach, of course, ease of doing business, clearing files faster, but critics, arguing that this may kind of build a latent risk. How do you want to respond to that?
So I think ease of doing business is not equal to more risk. This is a myth. Actually, the risk is the risk. Risk is to be measured in, the way risk is measured. Ease of doing business is where you are trying to achieve the same thing with less friction. So you are not really, reducing the goal. You are only saying that your goal can be very well done by a simpler way. If I may ask you a question, like if you have something overlapping regulations, more intensive, more micro regulations, how does it help risk management? Because you may be only thinking that you are managing risk, but you possibly could be creating more risks. True. Because if you are micromanaging many things, you are not perhaps paying your attention to the more riskier things in hand because you are busy micromanaging.
That's true. Sir, okay, let's try and focus on specifics. One of the things that always comes across when any average business journalist speak to the FinMin, to RBI or to SEBI would be, how is it that we can facilitate ease of investments by the foreign institution community? Because the big talking point of 2025 was that while EM saw a lot of fund flows in, India did not. Now, valuations may have been one of the reasons, but a lot of questions come about. I mean, this whole limit being taken from 25,000 to 50,000, some of the FPIs that we spoke to did say that it is maybe a bit onerous. Taxation may not be under your purview, but this certainly might be. And a lot of other factors. What is it that you reckon, sir, that SEBI can do and you would want to do in order to ease the processes for foreign portfolio investors?
So, one, we should avoid linking the FPI outflows to merely saying that what are the XYZ measures that they face. Because the outflows are contingent on several factors.
Agreed.
And even if sometimes the conditions and processes are very tough or very cumbersome, but if a lot of money is to be made, people will still come in there, right? So I'm only looking at the structural factors, where whether or not what is the current FPI position is, we should be easing business. And when we say easing business, it's easing businesses everyone without diluting risk. For example, if you are taking too much of a time for registration, you are not doing particularly very much due diligence because you are taking time. Because documents would be the same, the examination will be the same. The process itself may be problematic. Suppose you were to wait for wet signatures and apostille documents and so on and so forth, and then wait for a postal delivery. And on the other hand, you can have a digitized registration, digital signatures, which will actually instantaneously deposit all those documents. Now, what has changed? The time is changed, this thing is changed, but the risk remains the same. So therefore, registration as a process where we look at it should be easier, and that we started looking at very closely and made enormous progress working with the FPIs themselves. Then the second one is there were certain other key structural constraints which they have been facing and for many years. Like, for example, the block deal framework, where block deals were not really, framework was not so favorable in order to actually buy on a particular level. So that was facilitated after due consultations, of course. And the third was the closing auction mechanism. And there again, a structure is in place because this issue has been on works for a long time. And at some point, we had to reconcile between how the domestics feel and how the FPIs feel and bring about a more, reconciled approach and working out a mechanism which actually was required. The fourth is on the FPI netting. This is a consultation paper. This is something which they have been again asking, why should I be asked to, do it on a gross basis when I have a certain, I'm doing buying, I'm selling, and there's a money that I am going to get and there's a money I have to pay. So can I do it on the net basis, which is actually like save you on cost. Your capital is more efficiently utilized. These are the kind of things that we are looking at now in the consultation paper, and very soon will you get to it. So the registration and the structural processes and the fact that we also gave clarity on the T+1 settlement, that T+0 is not something that we are looking at, are kind of measures which actually gives a medium to long term certainty on how the things are going forward.
So you're going to keep the T+1 settlement going forward also. There is no rethinking on T+0 is what you're saying. Also, just a small clarity needed, as you said, that consultation paper in the works. for more measures for the FPI, especially when we see the additional mandatory disclosure requirement increased to 50,000 crore from earlier 25,000 crore. Some more measures are coming, in your regulation of that sort?
That is again an ease of doing business, because the 25,000 crore limit was getting onerous for them, and so therefore we had to keep a higher limit. Certainly we should be really looking at, in fact, I forgot to mention our initiative on Swagat FIs. And two more things. Swagat FIs is one where we say that long only funds, sovereign funds, and retail funds with a widely, like UCITS and others, which are well regulated, insurance funds, pension funds, these can be given a Swagat status where we have a much elbow room for them to operate, longer license, the single license they can operate, and much less requirements. This has also been put in place. And then we have also better facilities for those which are exclusively dealing with government securities, and so on.
So you also recently talked about reviewing the portfolio management regulation. What's the thought behind that?
The thought is that whenever we have regulations which are there for 5 years or 10 years, and we are looking at it, after the experience, what are the difficulties which have cropped up, or whether some things can be made simpler, or some of the other newer areas have come in which can also be put at. For example, there is a demat issue, like if you have portfolios, when you have a portfolio transfer from X to Y, you can actually transfer the portfolio, but you have to open another demat account. So then it will amount to actually squaring off your position and then buying another set of positions. So if we say that on the demat account we have change of power of attorney, because the securities in any case belong to the investor, and that will make it that much easier. It will make it efficient also. So these are the kind of measures, when we do a comprehensive review, we can look at what else can be done. This we did for stockbrokers regulation, we did it for mutual fund regulations. We are going to do the same thing for LODR regulations. We are going to do similar thing for settlement regulations. And we are also adding PMS regulations as another one to have a comprehensive review rather than a piecemeal review.
Okay. Now, just to follow up on the same line, that when we could expect that regulation, because I'm assuming you will come out with a consultation paper followed by the final regulation. So
yeah, of course. So therefore there will be a, as I said, varying kind of timelines depending upon. So the issue is that, that ease of doing business, and this is not something a one-off kind of measure. It's a continuous basis. We should keep looking at it and seeing to it that the policies keep evolving to a level where the newer things have come in. A lot of, for example, is something to do with the new markets, new market development, the new products which need to come, something about corporate bond market. So that will lead to a newer set of regulations too, or maybe simplification of regulation or newer measures to do that. Like in terms of derivatives, for example, that if RBI and SEBI are working on the corporate bond indices and index derivatives around it. So therefore, you will have the newer products coming to the market, like we had electricity derivatives which were introduced in the two exchanges. Then in commodity derivatives, the two working groups, the agriculture groups, and the third working group on non-agriculture will bring about several issues which are, which we can address and make trading more efficient, and also, allow the derivatives to develop more fully.
Okay. So we have maybe 12 or 13 more minutes. I'm going to try and take the liberty of asking you a little bit about the derivative space. Now, any study that SEBI would have done or anybody else would have done would make the measures that have been thought of, taken, implemented, etc., seem to be a no-brainer. I would love to understand from you, sir, whether you believe the entire ecosystem in general and not just SEBI in particular, the measures that have been taken to try and curb F&O volatility as well as maybe to an extent participation from retail, are they truly proving to be effective, or do you reckon more needs to be done?
So first of all, I would say that I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is.
Okay.
So F&O is a very huge space. There's futures and options, and futures we nobody talk. Let's not drag futures into it.
Fair call, sir.
And let's have an options. Options also. Let's not drag all options into it. Or let's have weekly options. That's okay. Weekly options, index options, where you have high hyperactivity of derivatives on the expiry day. Well, that's an issue, and therefore and linked to that, the market regulation measures were put in place, first in October 24 and then May 25, set of 6 kind of measures. The last one was kicking in on December 6, I believe. So therefore, let's give it a go and then look at impact, look at data analysis, and then let us chew it, and then let's see what way we should move forward, if at all we have to move forward.
Okay. Sir, but I'm sure, whatever little one can gauge of you in your first term, you are thinking multiple years ahead as well. Do you sense that if the data doesn't prove to be conclusive enough that participation of the 89% or 92% of the people who are losing money trading options is improving, would more stringent measures be in the offing?
So what we have to really look at it, that eventually, when you create markets, we should not jump to, kill the markets. True. And there is a market development that we call it, and there's a lot we can learn from the markets on how to regulate it. There is for example, this data which was put out. Now, this data was actually a matter of education as much as a means to jolt ourselves into some action. It was an education because individually you would know that I am trading. You would know collectively how in this product everyone is making money. By putting a collective data together, we created an awareness that this is one segment where the people were losing, and then people actually started discussing why they are losing and finding really rational basis for why they would be actually losing if they are not really prepared for it. On the one hand, you had an influencer market which was developing on its own post-COVID and giving a situation, and I would say a utopia or a pipe dream to the people, to the young persons, that here is a panacea, here you make money overnight, and here is a way you can, and those were based on very false claims, and they were based on pretensions, misleading claims, and therefore, there was such a kind of an hyperactivity which was also being propelled. The people were paying first in order to learn how to do the options, and second time they were losing when they were actually playing options. Now, but then there was also a learning for them. And we can't say also that they didn't learn about the stock markets while doing this. So the question is, how do we really create investor awareness? Because many a time investor awareness is on doing things, and you can't just lecture it and say that this is the way to do and that's what. So I would say that we have to see what effective measures can be taken to decide first what are the distortions are there in the market. But there are people in the market, like there are markets where everybody is not a win-win. There will be some people lose and some people win.
No, sorry, just to follow up there, sir, very quickly, but could the measures be of another nature in that if there are more stringent measures coming, in that maybe the definition of, an accredited investor allowed into derivatives, or instead of taxation, which is anyways not under your ambit per se, but maybe increase the size of the option to kind of curb participation?
So, there are several suggestions. There are several suggestions on different sides. There are people who said it should be banned. There are people who should have regulated better. There are people who say that nothing should be done about it. So all these different inputs, they keep coming to us in thousands of emails. And the more this media discusses about this particular issue, the more hyperactive the system of inputs also becomes. So it has to be, we have to basically be patient, look at the data, analyze it, find out what possible measures, if at all, needs to be taken, discuss it and move forward. And we should not be really jumping into, we did take a set of measures, thoughtful measures after consultation, and we should not be really jumping to, just like that, to another set of measures so soon.
So can we assume that a consultation paper is in work and it will be put out soon? Can we say that safely?
No, I mean, it will be, we will certainly put out the data soon.
Okay. Moving on to a topic which I would like to know about on the Jane Street, when we could expect the final adjudication order in that case, and what is the status of that matter? We all know that Income Tax Department is looking at from the tax perspective, but from regulatory perspective, when we could expect the final order in the matter?
So I'm sorry to say, no specific case, especially the one which is sub judice.
Sure. I can ask on the NSE as well, just a clarity needed, because they just got the go ahead and the no objection from SEBI, and but there are back and forth on the settlement amount because there is no clear final order on that aspect. When we could expect the final settlement order for NSE so that they can start working on the IPO?
So there is a process within SEBI of arriving at settlement, and there is a committee process, and it will go through as per that, and you'll come to know.
Okay, you're not getting many answers. Okay, last two questions, sir, and I think we'll be well within our time. The recent moves, and I know it might be difficult to really change, but I think we spoke to a host of brokers when this prop trading regulations were being spoken about. And I think one ask was that can it be in a measured way so that the jolt to the business is not too sudden? Any thoughts on that, sir?
I think there is already a timeline there. These measures are going to kick in, at a certain point of time,
April,
not immediately.
But sir, since brokers are under, your purview, just wanted to understand, are you, because they made representation to you flagging the concern on the liquidity, etc. Are you considering, any sort of that concern which they raised recently?
No, see, it's an RBI's purview, not SEBI's purview in the first place, bank lending. But RBI had put it out as note on all the capital, funding to capital market intermediaries. And there were various issues, acquisition financing, this financing, and different kinds of financing. And then the inputs were sought, and I believe the inputs were given by the industry to the RBI. They received it from different quarters. And then there was a final, what was the decision and the final advisory. Now we got it in last Friday, NM, a representation from NME. And we said that, okay, we will look at it. Look at it from the point of view of not that we have the regulatory mandate on it, but to say that whether we need to talk to RBI on this issue. But the fact is that, on one case, it was made out that as if some of these measures were like a bolt from the blue, and they were actually not in the consultation papers, and they just came up after the consultations was done. We saw that, and that was not the case. It actually was there in the paper, and so therefore it was, rather initially it was banned, and then it was given with 100% collateral. So I think that, there's no cause for us to intervene.
Quickly on the SME IPO, sir, because recently the regulation has been tightened. Just wanted to understand what's the thought process behind SME IPOs. Do we see more regulation, more curbing coming?
No, we have no regulation coming. We have looked at the SME IPO framework some time back, including there was a tightening of the framework. There were certain new measures were brought in. Those measures seem to be working. We are monitoring, and exchanges are also doing far more due diligence in the process. So that's it.
No, but any case study, any cases which you observed in past few years, and why only the SME IPO? Why not the main board IPO? Because the concern is kind of same there as well, as far as valuation is concerned.
No, I have replied on valuations earlier also. We don't get into the valuations. It's market discovered, and all what we say is that there should be more disclosures and more particular disclosures, and those disclosures should be as legible or as favorable to investors as possible in terms of readability. And that is how we are going also for a new concept called draft abridged prospectus at the draft stage also, so that the people are able to see more important information in a short time.
Got it. Sir, as we wrap up, just 1 minute more. What is top of your agenda, sir, if you can just spell it out over a minute, for the next year, when we come to interview at the same time next year?
I think life goes on. From one day we move to the next. Thank you.
Okay, well, I guess that is about the answer that I was expecting, but I tried any which ways as a journalist. But thank you so much, sir. Lovely talking to you today. Congratulations on one very successful year. We've been privy to some of the best things that SEBI has done, and look forward to one more fabulous year, sir, at least.
Always pleasure speaking to you, sir.
Thank you
so much, sir.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji. Jingle, 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 jingle. Bas aaj ka. Jingle, 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 jingle. Chal kare thode. Single, 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 single. Kyunki tu hai. Single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot.
Good evening, I'm Vikram Oza, and this is the big question on NDTV Profit. Tonight we start at the world's tightest energy bottleneck, if I can call it that. We're talking about the Strait of Hormuz. Now that is that narrow blue ribbon that you're seeing over there. Yes, this is the part between Oman and the UAE on one side, and Iran is on the other side. And yes, that is the most critical oil choke point on the planet. This is the one connecting the oil-rich Gulf to Asia, to Europe, and to North America. That's the important bit. Now, here's the squeeze, only 33 kilometers. At its narrowest, it is only 33 kilometers. Shipping lanes barely have 2 to 3 kilometers wide in each direction when they're moving. And yes, Tehran has often used it as that geopolitical pressure tool. So that is that important bit between Oman and UAE on one side, Iran on the other, which is why this is so crucial. The sliver of sea matters so much. It is the only sea passage out of the Persian Gulf carrying roughly a fifth of the world's daily oil and about 20% of global LNG, with nearly 80% of those cargoes headed towards Asia. Now disrupt that tap and prices, they don't just wobble, they jump, because insurers talk about shippers, you talk about traders. Oil price is the risk. Now for India, this is uncomfortably close to the bone. We import about 85% actually of our oil and nearly half of our crude and around 60% of our LNG. All of that sails through that important Hormuz Strait. With Russia flowing now, as far as those flows from Russia are concerned, yes, they're normalizing. Middle East barrels, they're back in the mix. More of India's crude has been coming through this particular corridor in recent times. So it is crucial again, which means a squeeze here could lead to a fatter import bill and also higher LPG, LNG sensitivity and freight and insurance spikes that show up in our inflation, in our household budgets. But yeah, you're probably thinking, we've seen this movie before. Wars push up oil prices, they go up higher first, then the market reroutes and then cools off. But it does not happen before a risk premium burns a big hole. So if you recall, during the Libyan civil war and also the upquake attack by the Houthi rebels in Saudi Arabia, crude oil prices they definitely went up. And during Russia-Ukraine, oil prices ripped past $120 a barrel before it started retracing. So even now, the headlines of Iran targeting oil flows, and that includes the Ras Tanura complex, they're enough to light a fire under Brent. From limited retaliation to the direct hits on Iranian infrastructure, from a Hormuz disruption to a broader regional conflict, the price ladder of oil is pretty clear. First, you add $5 to $10, then about $10 to $12, then you go past $90, and then in the worst case, you go past $100 a barrel. And every rung means a wider CAD, a current account deficit, will widen. There are tighter margins for oil marketing companies. The oil marketing companies definitely take the hit, and costlier aviation fuel, don't forget, that has a pain point of its own. Also pain for paints, for tires, for chemical companies, for cement. Any industry that is connected with crude derivatives is going to feel the pinch. Which is why tonight we're asking the big question, which is right up front on the screen. Iran war is now escalating. There is no doubt about that. We are seeing it unfold. Some people are saying it could become worse before it gets better. If it does escalate, what does it mean for our energy security? Is India prepared this time for an oil shock? Let's ask this question in a debate form, which is about the big question, and we've got an excellent panel to take this across to. Let me introduce you to them. Well, tonight on the show, we've got a great panel, like I mentioned, and indeed, it is a panel that will be able to take this on very well. Energy expert Narendra Taneja is with us, along with a diplomat with years of experience. Ambassador Anil Trigunayat is here. Biswajit Dhar is also joining them. He is a developmental economist and he's the former professor at JNU. Also chief economist at Kotak Mahindra Bank, Upasa Bhardwaj is with us, along with Sonam Srivastav, founder and CEO of Right Research. Thank you, ladies and gentlemen, for making the time and joining us. Let's quickly do a quick round of questions. Short answers, please. If you can give me your elevator pitch view on India's readiness for an oil shock, given the escalation that we are seeing right now. Narendra Taneja, as someone who has tracked India's energy vulnerabilities now for decades, with half of our crude and most of our Gulf LNG passing through that Hormuz corridor, it's barely 33 kilometers at that kind of width when it's at its narrowest. Do you believe India is actually prepared for even a temporary choke in the Strait of Hormuz? What's your current risk reading right now?
Well, as I said, earlier, my worry is not, India's worry is not so much the movement of, oil through the Strait of Hormuz. Our worry is always the price. Oil is a globally, commodity and is benchmarked against the demand and supply of the globe. So number one, our worry is the price. Second is that the Strait of Hormuz has never, ever been closed. So I'm still think that, Strait of Hormuz, probably Iran is not going to move in that direction. Two reasons for that. Number one, they know that in that case, Saudi Arabia, and Iraq and Kuwait, etc., they will also get into the whole thing and against Iran and maybe even intervene physically, militarily, wherever possible. And second, very quickly, I don't think the American forces are going to let them do it. But yesterday only Iran's foreign minister said there is no plan. They are not going to shut down the Strait of Hormuz. China will be the worst country affected, which is very close to Iran, in case the Strait of Hormuz is closed, shut down, or mined.
What do you say, Ambassador Trigunayat? You've seen regional diplomacy from up close. You've done it for years. Given this latest escalation, the strike on infrastructure that is linked to Ras Tanura, do you think India has enough goodwill, enough leverage across Tehran and Riyadh and Washington as well to keep our energy lifelines shielded if things go downhill from here?
Well, I think it's beyond India now. We have goodwill. There is no doubt about it. But at the same time, they are in a war. And Iran is in the fight to finish at this time. And therefore, they will deploy every single tool in their kit to bring about or inflict damage on the region as well as on the world, and Americans in particular, and Israel. So I think that we have just seen the beginning. There is an attack on the refinery in Saudi Arabia already, and the 150 ships that have been stuck. One of the oil tankers was sunk yesterday. So the situation is not at all going to improve in days to come. Now, while the supplies may be restricted, and I feel that the prices have gone up quite significantly, and a $10 adds to roughly about $1 billion, a 10% increase in that. That is also the calculations which you have already yourself shown.
Yes.
And that will have a very big impact. Of course, we have about 45 days reserve with us. We can manage with them, but that is for other contingencies, not immediately for this. So we could perhaps bear this front. But the irony is that the Americans, they have been, forcing India to diversify from Russia, the oil.
Right.
And we started importing much more from Saudi Arabia in the meantime, or from the Middle East. And now they go and attack Iran and just constricting everybody else's. So you can buy from US, you can buy from Africa, you can buy from Latin America or Venezuelan oil, as they are talking about. But all that is also to pass somewhere. And those choke points are going to be pretty difficult for us, at least for going forward for 3-4 weeks. So that's a very difficult situation. Yes.
Correct. Biswajit Dhar, from your development and trade lens, these numbers are pretty stark because a 10% rise in crude can widen India's current account deficit by 30 basis points. Our import dependence still sits at 85%. So in your understanding, how exposed is India right now to the broader economic stability map? If crude holds above, say, $90 to $95 for a few weeks, how much damage can it cause?
No, I think this is going to be quite damaging for India because, for one, we have actually been able to bring our inflation under control. And that has actually helped our macro fundamentals a great deal. Now, if oil prices go through the roof, and there are expectations that it might go up to $100, $120 per barrel, now that is really bad news. Now, that is also going to put a lot of pressure on the rupee. We have already seen today there was considerable pressure on the rupee, and it's closed above $91. I think it hasn't happened for the past few weeks. So we are going to face this kind of a double warming.
Yes.
On the one hand, our rising current account deficit, and of course the inflationary pressures, and since we are so import dependent, the impact on the rupee, and unless RBI intervenes, and there are reports that RBI has intervened today, if RBI is not able to intervene effectively, then there is going to be another impact that the economy is going to be facing.
Let me ask Upasana Bharadwaj if she agrees. Upasana, the macro impact, it's generally the kind that shows up fast. Even a $1 rise in crude can add about $2 billion to our import bill. And then there is the LPG, LNG sensitivity, which is even higher. So in the current environment, all this global volatility that we are seeing, and it is rising, do you feel India has the monetary and the fiscal buffers right now to cushion a sudden oil spike without derailing the inflation trajectory?
A couple of things, Vikram, as you highlighted, there are different scenarios to work out with right now. It's just the beginning. We don't know whether it's going to last for 7 to 10 days or maybe more. Now, the question is, if it is a temporary phenomena, then I don't think much changes for the Indian fundamentals. But of course, if it does get overstretched and if the crude oil prices sustain above a certain level, then it's not just about the price, actually. It's about the supply side disruptions. At this point in time, we can talk about the strategic reserves which are adequate, which can take care of our requirements till a certain point in time. But I think the supply side disruptions, the logistic cost, the insurance cost, the risk premium attached to that, along with that, the cost of input prices going higher because of the supply side disruptions and the pass-through. And as Professor Dhar was also talking about, it's a double whammy. So we're talking about higher costs, not just of energy, but other input prices.
Yeah.
Along with that, rupee weakening.
Yeah.
So there is a double impact coming into the picture.
Yeah.
So obviously, as we go through, and if this lasts, then clearly this does have significant adverse impact across the board, from current account deficit to inflation to overall GDP numbers. It will have a bearing.
Sonam, from the markets sense, we've moved sharply, of course, the markets have. Brent has jumped nearly 9% on the latest headlines. You're tracking sentiment in the markets. From where you're sitting, is this the start of a sustained risk premium phase for oil markets? Or do you think this is a classic fear trade that could unwind just as quickly if the tensions stabilize?
See, I think, we definitely expect the impact on the markets to be short-term in nature. If you analyze the impact of previous few wars, right? You would see that, okay, there's initial reaction that happens in the market, but then such corrections that happen in the market tend to be short-term, right? So we expect the market to stabilize soon, given this correction. But yeah, I think there are bigger worries coming because of the escalation of crude prices, the impact on growth in India, inflation rising up, and currency depreciation. That would sort of play around with the market sentiment. So I won't say that the market sentiment would improve in a week or so, but yeah, I think it would stabilize sooner.
Now let's deep dive a little bit. Narendra Taneja, what do you say? I'm just getting news about Qatar Energy, and this is one of the world's top natural gas producers. And they are saying that they are going to halt their LNG production because of the Mideast war. Now that it's raging on, they are talking about the pressures, which is why they are ceasing production of liquefied natural gas, of LNG and associated products. Do you sense there is going to be more of this? Let's get the core risk over here. If we see a limited weeks-long disruption in Hormuz, what does it convey to you? There is the slowdown insurance premium that goes up. What's your base case on how much crude actually gets delayed and for how long before rerouting any of this? Anyone, of course, from the panel who agrees, disagrees, please raise your hand to rebut. But I would like to get a view first from Mr. Taneja.
You see, there are two big issues here. Number one, that unless and until Iran decides to kind of, force closure of Strait of Hormuz, I think I'm not worried too much. And secondly, if Iran decides in terms of retaliation to move its boots, the army, into a neighboring country, let's say for the sake of discussion, which many people are talking about since morning, Kuwait, then of course the landscape changes. Then it means that Iran is basically prepared for a long-drawn war. So far, if you go by the statements and the movements, it appears that Iran is not prepared for a long-drawn war. And the US certainly is not, and Israel is not. So in such a scenario, my own sense is the next 7-8 days are going to be tough in terms of the war. American and Israelis are going to do the maximum possible damage to Iranian infrastructure, electricity, water, and overall infrastructure, and try to do as much as possible. Then leave it to trigger a kind of a response from the people on the ground to go for a regime change. Take 6 months, 1 year, nobody knows. In such a scenario, I think we don't need to worry too much. My own sense is oil prices may go up, may even touch $95, $100 per barrel, and so on and so forth. But after that, they will go back to where they should be in terms of demand and supply fundamentals. So I'm not worried. I'll wait for 7-8 days. My own sense is, first and foremost, American economy, President Trump himself and his party, they cannot afford oil prices to touch 90 or 100 and stay there for a longer period. Politically, his party is facing elections very soon, and they just cannot afford it. And my sense is they have done their geopolitical mathematics, which is basically 8 to 12 days window. Within that, they are going to manage the oil prices, gas flow, and so on and so forth. At the same time, make sure that the whole thing does not escalate. So that's the assessment most people have in the circle that I move in, globally, in energy geopolitical circle. But as far as Qatar is concerned, those fields, as you know, ExxonMobil is the biggest investor in the field you're talking about, the LNG. And the second thing important to remember, that a refinery has been already bombed, but that is a small refinery. I've been myself there several times. Not too so much worry so far. Oil is flowing. Oil wells across the region are functioning well. The only disruption is the tankers are not able to. Not that there is any kind of, has been shut down, no such thing, but they're just precautionary, because Iranian forces send a radio message to all the tankers around, don't try to cross, otherwise we'll bomb you. But they have not bombed any ship so far.
Not bombed any ship, but if tensions do rise, as they seem to be, Ambassador Trigunath, do you think India can get some quiet assurances from Riyadh, from Abu Dhabi, from Doha, and Tehran perhaps, to prioritize Indian liftings? Or do you think the great power dynamics are going to overshadow the kind of bilateral goodwill we have been able to generate? What is India's best back channel lever at the moment?
Well, I think we have been talking to all the people there. Dr. Jaishankar has spoken to Iranian foreign minister and all the foreign ministers of the region. But that was mainly in the context, of course, energy security, but on the context of the safety and security of about 10 million Indians who are there.
Correct.
So I think that has been one of the immediate priority for India. And therefore, what India wants essentially is to de-escalation, dialogue and diplomacy. That's precisely what we are trying to push for. The Prime Minister himself has spoken to Netanyahu as well as to the UAE. So all these countries, they have to sell their oil. And I believe the OPEC might go in for increased production as well. But the problem of passage, and I hope that what Mr. Thareja has said could be true, and let's hope it remains that way. So 7-8 days, 10 days, 15 days can be managed. But beyond that, I think it is going to definitely have an impact. As far as Iran is concerned, it needs an off-ramp. Now to be able to, they might look for some kind of an adjustment or, for example, just calming down. But for that, the Americans are also in a lot of problem at the moment. Firstly, they waged this illegal war. It is internationally illegal as well as illegal domestically, for the US Congress has not authorized it. So they are trying to call it as some kind of a special anti-terrorist operation and all that. So this can't go on when the body bags start reaching. So the Americans will be under greater pressure to de-escalate also. So let's hope that good sense eventually prevails.
Correct.
We have not seen that very much.
Yes. So the hopeful version of this is that there will be a de-escalation, because the US cannot afford to keep this going from a political standpoint and not keep oil at elevated levels around $100 to the barrel. But Biswajit Dhar, assuming that Brent stabilizes in that region of $90 to $95 a barrel, and if that happens for a few weeks, then what is the impact? How does that filter into the current account deficit? How much pressure does it build on the rupee and the imported inflation in the near term? How much of this could actually percolate? And if you are going to tell us that it does have a big impact, then what's the one macro buffer that India should lean on first?
No, look, if the oil prices today, Brent is about $82 a barrel, and if it goes up to $100 a barrel, then there is surely going to be an impact on oil prices and therefore inflation in India. And if that happens, I think all the calculations that RBI has, the inflation targeting and and all other things follow. How to manage the inflation and whether interest rates will then be impacted and all. Then you go into a whole sort of a tailspin, and you're looking at a scenario where the RBI was actually gradually bringing down the interest rates and trying to provide some impetus to private investment. Now that is going to be seriously impacted. Now look, the kind of exposure that we have to imports, and if you look at the way our import dependence on China, for instance, has been continuously increasing, and this year is going to be crossing $100 billion. The deficit is going to be more than $100 billion. And with all these free trade agreements which are happening, the first impact of these FTA is going to be increase in imports, and then exports usually follow rise in imports.
Correct.
So we are going through a situation of adjustment already, and on top of that, we have this sort of imported inflation that you talked about.
Yes.
Which is going to be a tall ask for our macroeconomic stabilization.
Exactly. Upasana, do you want to weigh in on this? If crude pops $10 to $12 from this point, do you see the Monetary Policy Committee's reaction function changing? Hawkish rhetoric, extended pause, perhaps a bias to shield growth given supply side nature right now? What's your CPI glide path risk right now?
Okay, so just two things. I think on an average, if you look at the expectations on crude oil prices before this crisis, across the markets were in the range of $60 to $70.
Correct.
That was a range of assumption that mostly markets were going with. So from there, we are already $10 ahead, right? Now we're talking about another $10. So if you're talking about an average crude oil prices going up by a $20 a barrel, then that clearly brings in a very big risk, because we're talking about 0.8% of an impact on CAD. This is only the first leg. The second is when excessive current account deficit pressures build up, and when crude oil prices go higher, then whatever small amount of FPI inflows have started at the margin, we do start seeing a significant risk there as well, because flight to safety starts again. I mean, we've already started seeing that impact on silver and gold again.
Correct.
So I think here it is again a double problem. We're talking about a balance of payment deficit worsening from the current levels. That's one. Having said that, I think we should keep in mind a couple of things, that if it doesn't really go beyond a couple of months, this problem, then I don't see too much of a risk persisting. I think we will revert back to normalcy.
Okay, fair enough.
Secondly, there is an excise duty cut. There is an excise duty cut which the government can use as a lever. Of course, it does put pressure on the fiscals, but one of the institutions have to bear the brunt of it.
Right.
So I guess the government, if a pressure is arising, will take that onus on itself, and the government could potentially go ahead with a excise duty cut, to ensure that we don't really see a pass through to the consumers as much. So somewhere the monetary policy could get that kind of a leeway,
right?
Coming to there.
Yeah.
Overall, the roadmap on inflation at the moment is comfortable. We can afford a little bit of spillover, of course, depending on the sustainability of this problem.
The sustainability of the problem is the big ask. And Narendra Taneja, one wonders if one has to change our sourcing mix. Russia flows are variable. Middle East barrels, they are the dominant piece. Is it time to re-diversify? Are we to look at West Africa, the US Gulf Coast, Latin America, even at higher freight, just to reduce the risk of that choke point, which is Hormuz? What's the realistic remix that you see possible in the next 90 days? And very quickly, if I may ask you, since we're running out of time.
Well, we have already done that. Today, we are importing crude oil from 41 different countries, including from Guyana. We even import from northern Norway in the Arctic region. We have done all that. I think that the issue right now is that I don't really think, I'm looking at basically two ways. The next 10 days, my own sense is things are going to get back to more or less normal. Oil will start, flowing through the Strait of Hormuz under military or without military. We'll have to wait and see. But I think the flow will start. I really don't see. And then the oil prices will go back to where they should be. If you go by demand and supply fundamentals, oil, Brent today should not be more than $60 per barrel. There is no supply disruption as of now at this stage. So I'm not too worried. Let's allow us 10 days. And I think 10 days, if things will, my own senses will be sorted, will sort out. And if that does happen, if Iran decides to retaliate in different ways, closing the Hormuz or moving boots into the other countries, then the very different scenario. And if in that kind of scenario, oil prices may go beyond $120 per barrel, not only in India, the world is not prepared for it.
All right, so one needs to kind of figure out what's the kind of worst case scenario right now. Maybe a three-step emergency playbook for India, whether it's diplomacy, it's logistics, it's about finances. Getting that piece organized is going to be something that India will have to do. The Hormuz risk is real, and that is really primary. But time-bound disruptions can be managed with diversified sourcing and disciplined approach to our reserves. 2, of course, the shock transmits fastest through inflation and the current account. So targeted and temporary cushions, they could beat the blanket fixes. And 3, of course, markets will overprice risk first, but portfolios can be smartly reset while policy leans on diplomacy and on logistics. My thanks to Narendra Taneja, Anil Trigunayat, Biswajit Dhar, Upasa Bhardwaj, Sonam Srivastav. Thank you very much for joining us with your insights on the big question. And that about wraps it up on this edition. But of course, our eyes and ears are all peeled towards what happens next when it comes to the trouble in West Asia. How much damage can it do to the global economy and indeed the growth path that India is on? That's a piece that we are tracking very closely. But for the moment, here's where we're wrapping it up. I'm Vikram Oza from me and the team. Thank you. Good evening.
The year was quite a difficult one. I think ease of doing business is not equal to more risk. I think we should not really club the whole thing as an F&O and F&O volatility without really getting into where the problem is. We should not jump to, kill the markets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Watching Market Express with me, Shriyanti Singh, and this is the show that's going to get you a snapshot of everything that is happening right now, be it headlines or what's happening with the top buzzers of today. But let's first talk about markets in terms of West Asia tremors that were felt on the Lal Street today as benchmarks saw sharp cuts in trade amid heightened volatility. Now, when you talk about Nifty that ended at the 24,800 level to bounce back from lows, Sensex also tanked over 1,000 points. And when you talk about broader markets as well, you're seeing deep cuts coming in there itself, and India VIX also saw a strong move as the volatile index also hit the highest level since June 2025. Let's also talk to you about the sectoral picture then. That was largely a weak day of trade that you're looking at. You do have war volatility that is really driving your headlines and the markets right now impacting the key sectors as well. So travel stocks were the biggest drag, followed by oil marketing companies which were under pressure as well on the back of elevated crude